Hello CA Inter students, elevate your corporate and other laws subject preparation with our CA Inter marathon classes. So these marathon lectures are perfectly designed for January 2025 or any other attempts of 2025 year. These marathon lectures are recorded by our top rated faculty CA N Srinivas sir, having 10 plus years of rich teaching experience. And we recorded this in a very detailed manner covering 12 hours. That means almost every important concept is covered in this 12 hours of marathon lecture. And for your convenience, we even provided you with the timestamps and check the description. And here is the breakdown of all the areas that we covered in this 12 hours of marathon session. So whatever the conceptual clarity that you gain by watching this marathon lecture, you can definitely help you to achieve 60 plus marks, that is exemption range of marks in this law paper. So take your law very seriously because it's very easy to score exemption range of marks in this paper. So it's better to watch these videos in the same order in which we recorded, and also I suggest you to watch it in the same speed. So because you need to assimilate whatever you are learning, you need to assimilate, which will take some time. And we have not extracted these videos from already recorded law lectures, and we have not even recorded them in recording theaters. So we conducted face-to-face marathon revision classes, and more than 250 students have attended that face-to-face marathon class. In that face-to-face class, we recorded these law marathon revision classes, and these classes are recorded in 100% English. So irrespective of the state to which you belong to, you can comfortably watch these videos. Exclusively for these marathon lectures, we even prepared one material, and that material is available for free download as well. If you really like this video, don't forget to press the like button, because once you press the like button, then YouTube will recommend this video to more number of students. If you really get benefited by watching this video, why don't you recommend the same to your friends also, so that they'll also get benefited. After watching these marathon lectures, don't forget to leave your feedback in the comment section, and definitely that feedback will help us to improve further, and it will also act as a motivation to our entire team, so that we can bring this kind of videos in for all your future attempts as well. So let us see how you can download the exclusive marathon material that we have created. So first you need to install our Android app Masterminds Online Classes, either in the Android mobile or an Android tab. As of now, our app is not supported under Apple devices, and you can find this app in the Google Play Store. So you need to give your mobile number and other details, and you need to sign up to the app. And in the home screen on the top left corner, you can see 3 horizontal lines. Please click it and you will find a pop-up menu. In that menu, please click the option free material. In that option, there is a tab called documents. Click on the tab, and in the tab, you will find a folder CA Inter Marathon Classes for January 2025. So in that folder, you will find a subfolder corporate and other laws. So in that subfolder, you will find the file, and once you click that file, you can open it either using an Acrobat reader or some other PDF reader apps. And after opening the file, either you can download it or you can share it with your friends, or even you can take the printout of the same. So get ready. Very soon we are going to upload the marathon revision classes of the remaining subjects of CA Inter as well. That too recorded in 100% English, and that too recorded in face-to-face marathon classes. So once we upload the video, if you want to receive a notification, then please subscribe to this channel, and also don't forget to press the bell icon. And now you can start enjoying the marathon video. All the best, my dear students.
Morning once again. So today we are here to discuss corporate and other laws. Quick revision, you know very well it is a marathon section, and you should understand, here we are not going to discuss all the concepts in the marathon, which are important in examination point of view, as well as we will revise quickly few topics in Marathan section, don't expect that the entire law subject will be discussed in detail in Marathan section. Okay. So this Marathan section is useful to the students day before examination to revise the subject in a less time. To revise the subject day before examination, this Marathan section may be helpful to you. Okay. So for that purpose only, you can use this Marathan section. So instead of regular coaching, don't play the Marathan classes, and by that don't try to learn the law subject from Marathan. This is the notice of disclaimer. Okay. And now we'll start with the corporate laws. What is the weightage of corporate laws? 70 marks. Corporate laws 70 marks. In corporate laws, how many topics are there? Company law and LLP Act. Other laws, of course, 30 marks. There are 3 topics are there. FEMA, General Classes Act, and Interpretation of Statutes. Excluding choice, what I am talking. Okay, excluding choice for other laws, how many marks? 30 marks. And for company, corporate laws, 70 marks. In that, company law having a weightage of 60 marks approximately. So, company law is very important to clear law subject. Okay. So, first we will start with chapter number 1. What is chapter number 1? Preliminary. Chapter means, I mean to say, chapters in Companies Act 2013. Chapter means Companies Act 2013. We are going to revise entire Companies Act section wise now. Not topic was section wise. We are going to discuss entire Companies Act section wise. Section number 1, 2, 3, 4, 5, 6. What are all the sections in your syllabus? Section wise we are going to revise the syllabus now. Okay. Already you have a knowledge of company law. So that I am taking the privilege to revise the company law section wise. Okay. Chapter number 1. You know very well, Companies Act 2013 is divided into how many chapters? 29 chapters. Out of that, only 11 chapters in our syllabus. Only how many chapters? 11 chapters. We'll go chapter number 1, preliminary. Chapter number 1, preliminary. Section number 1 and section number 2. 1 is not important for your examination. Short title, extent, commencement, applicability of the Companies Act. Companies Act is applicable to companies. I said some inclusions and exclusions are there for this statement. What is the inclusion? Even though it is not a company, you can apply Companies Act. Even though it is not a company. What is a company? What is the definition of company? Section 2 class. Section 2 class 20. What is the definition of company? Company means a company incorporated under this act or any other previous company law. So Companies Act is applicable to companies. Companies Act is applicable to companies. But however, sometimes even though it is not a company, you can apply Companies Act. So example is LLP. You can apply Companies Act to LLP also for director identification number, DPIN. Designated partner identification number, section number 153 to 159 of the Companies Act 2013 is applicable to LLP. LLP is not a company, but still we are applying what act? Companies Act. So LLP is a body corporate. So you can apply Companies Act 2013 to body corporates also if it is notified by the central government in the official gazette from time to time. In this regard, you should refer definition of body corporate, which is not important for your examination point of view. So body corporate includes company incorporated outside India but excludes cooperative society. We explain the logics also for this body corporate definition in our regular classes. Okay. In Marathan, it is not possible to explain the logics behind the Companies Act. That much time we don't have. We have very less time. So okay. So don't expect to explain the logics behind the sections or maybe provisions of the Companies Act now. Okay. Next, section number 2, definitions. We have no need to discuss the entire definitions. Which definitions are important in examination point of view, those definitions only we are going to refer. So first definition is private company. So these all definitions whatever we are discussing is grouped under the heading classification of companies. Classification of companies. So every attempt or attempt by attempt they are asking for 5 marks from this particular topic, classification of companies, especially private company, listed company, as well as holding and subsidiary company. These are all very important definition. Private company definition, you know very well. Private company, sir, is it required to remember the section numbers? Yes, of course. You should write the section numbers also in the law exam, at least section number. Don't try to remember classes, subclasses, section number, subsections and all. At least try to remember section numbers in the Companies Act and Limited Liability Partnership Act. Companies Act and Limited Liability Partnership Act, at least try to remember the section numbers. In FEMA, GC and IPS, no need to remember the section numbers. Okay. So section number 2, clauses, don't worry, even though you don't remember clauses, Please don't worry about it. Just write section number 2, private company. Okay, so what is a private company definition? Private company is a company having a minimum paid up share capital as may be prescribed, but so far nothing is prescribed about the paid up share capital. Means rules they have to prescribe in rules, but in rules nothing is prescribed so far. And in its articles of association contains limitations, restrictions, prohibitions. Limitations on number of members 200. This point is very important. There is a scope of asking practical question in the exam. While counting the limit, means while counting the number of members for this purpose, you should highlight while counting number of members for this purpose, employees or ex-employees come members are not to be counted. We explain logic also why they are not to be counted. They are the members, please don't misunderstand. So many students they are misunderstanding here. They are members. Their names are entered in the register of members, but still for this purpose they are not to be counted as a members. They are not to be counted as a member for this purpose only. For the purpose of definition of section 2, private company, section 2, class 68, for that purpose only, they are not to be counted as a member. Ex-employees and employees come members, and joint shareholders are to be counted as one member. That is what the points what you have to remember. And there are restrictions on transferability of its shares. There are restrictions on transferability of its shares. I explained Tata Sons Private Limited, Tata Sons Limited converted into Tata Sons Private Limited also. So to take an example, to explain the restrictions, what is the importance of the restriction on transferability of shares in the articles of association of a private company? You know very well, private company is nothing but replica of partnership firm. So companies at 1956, first time private company concept is introduced. Actually, it is introduced first time in companies at 1956 to encourage the partnership firms to convert into company, to do the business by way of incorporating the company. Company is a regulated business, regulated by the government. So government want to regulate, that's why they are encouraging, they are actually motivating the entrepreneurs to start their business by way of incorporating a private company instead of partnership firm. So if you observe closely, what are all the features of partnership firm? All those features are available in a private company. Partners also, if they want to leave the partnership firm, or new partner has to admit, existing consent of the partners are required. In the same way, private company also, if existing member he want to sell his shares, or maybe new member has to come to the company, so articles there will be some restrictions. Articles there will be restrictions, reasonable restrictions. What restrictions, man? Reasonable restrictions. Okay, and next one is prohibition. What is that? Prohibition. So private company is prohibited to accept the, to invite the public to subscribe its securities. So it's only a family business. It's nothing but a partnership firm, and you are not following all 470 sections of the Companies Act 2013. No, you are just complying around 200 to 250 sections only. That's why you cannot take the money from the public. If you are taking money from public, then immediately you should follow total 470 sections. That is what the private company definition. Next, public company is not that much important, which is not a private company having minimum paid up share capital as may be prescribed, but deemed public company is a fiction by the lawmaker to avoid some propaganda actually. So that's why deemed public company. What is a deemed public company, ma? So subsidiary of a public company is also deemed as a public company, even though it is a private company in its articles of association. Even though it is a private company in its articles of association. So this deemed public company concept is little bit important. Sometimes maybe it is important. They can ask a practical question also. Deemed public company. Subsidiary of a public company is also deemed as a public company, even though it is a private company in its articles of association. Sir, deemed public company cannot enjoy the privileges of public company, and they cannot avail the exemptions of a private company also. I am repeating once again. Deemed public company cannot enjoy the privileges of a public company, and they cannot avail the exemptions of a private company also. Sir, I am a private company now. Yes. Can I take the exemptions? No, it is not possible. You should complete total 470 sections. Sir, I am a public company. Yes, you only saying you are a deemed public company. Can I invite the public? No. Can you invite the public to subscribe our securities? No, because you have restrictions. You have prohibition in your articles of association. That's all. That is what the deemed public company fiction made by the lawmaker. Okay. Next one is next important definition is holding company. What is that, ma? Holding company, or maybe you can go for small company also. Private company is further classified into what company, ma? Small company. I just provided a comprehensive chart for classification of companies to all the students. Please go through once. Classification of companies based on number of members, based on relationship, or based on access to capital, or based on liability of the members. We just provide a comprehensive chart. So based on number of members, companies are classified into how many types? two types. One is private company, other one is public company. Private company is further classified into three types actually. One person company, small company, other than OPC and small company. Public company, again normal public company, deemed public company. So private company, next in subclassification of private company, small company is also important. Okay. So in 2021 actually, so companies specification of definitions, details, rules 2021 amended in 2021. As per that, small company means having a, so small company is only not a classification, it is a status. Keep in your mind, small company is not a classification, it is a status. Status may change from year to year. Status may change from year to year. Please don't think once the status is bestowed, that status can continue for 10 years, 20 years. No, every year you have to check. Every year means calendar year or financial year? Financial year. What is that? Every financial year you have to check whether your company is a small company or not. Small company definition is very important nowadays because of rule number 9B of the Prospectus and Allotment of Securities Rules 2014 as amended in September 2023. Small company definition, okay, it is now outdated. No one is asking questions from small company nowadays. But all of a sudden, small company came into limelight because of rule number 9B of Companies Prospectus and Allotment of Securities Rules 2014 as amended in September 2023. If you remember, I showed that rule number 9B also in your class. Okay, what is rule number 9B? Very simple. All companies except small company. Public company, listed public company, unlisted public company, private company, except small company, they should issue securities only in dematerialized forms from September 2024. From September 2024, all companies except small company, they should issue all securities. Equity shares, preference shares, debentures, bonds, commercial papers, whatever the security, everything to be issued in which form? Dematerialized form. So that's why all of a sudden small company concept again it came to limelight. So there is a chance of asking small company in your next attempt. Okay, what is a small company? So I said you should fulfill the criteria and you have to satisfy the conditions. What is the criteria, ma? Criteria means for this financial year, whether you want to check whether your company is a small company or not. What is the financial year? Current financial year. Can you please say what is the current financial year? 2024 and 25. What is the current financial year running? 2024-25. For this current financial year, if you want to check whether your company is a small company or not, how to check, ma? So preceding financial year data you have to check. Okay, 2023-24 financial year, what is the turnover for the 2023-24 financial year? The turnover should not exceed how much, ma? 40 crores. The turnover should not exceed means less than or equal to 40 crores. Please don't confuse in your exam. Intentionally they will ask turnover is 40 crores and paid up share capital is 4 crores, whether it is a small company or not. Okay, so even though it is a 40 crores, still it is a small company. Less than or equal to 40 crores, then it is a small company. Not only turnover but also paid up and turnover and paid up share capital. Turnover and paid up share capital. Turnover should not be means turnover is not greater than 40 crores, or turnover should be less than or equal to 40 crores, and paid up share capital should be less than or equal to 4 crores. Paid up share capital you should check on the last day of the preceding financial year, 31st March 2024 you have to check. Okay, turnover for the previous financial year and paid up share capital as on the last date of the previous financial year. If this criteria has been fulfilled, then you have to go for conditions. What is that? Conditions. What conditions I said by your running notes? Conditions. Here we don't have that much time to write on the notepad all these things. No, please don't expect all these things. This is only a quick revision. Whatever we discussed in the classroom, we are going to revise first. So maybe it will help you before the exam. Okay, that is what the object of this marathon. Please don't expect, sir. Please write once again in the notepad conditions, criteria, whatever we discussed in the classroom. Yes, already running notes is provided. Material is also here. You please refer once. Okay, please don't expect to write. So what is the conditions, ma? So not a public company, Intentionally I classified small company for private company. Subclassification of private company means it is very clear public company cannot be categorized as a small company. Even though turnover and paid up share capital is within the limits, still small company cannot be, public company cannot be categorized as a small company. It is not at all possible. Okay, criteria and conditions both you have to check in your exam, please. Okay, not only criteria, please don't stick to the criteria but also conditions. What is the conditions? Not a public company, not a section 8 company, not a holding company of any other company, not a subsidiary company of any other company, and not a regulated company. What is a regulated company? Banking company, electricity company, so insurance company. These companies are called what, ma? Regulated companies. Okay, these are all conditions to be satisfied to be categorized as a small company. So maybe this exam we are expecting, because from last 2 to 3 attempts they are asking continuously based on holding and subsidiary. They ignored private company, small company, listed company, unlisted company definitions. So this time we are expecting either private company or small company or listed company also. Okay, and next classification is based on the control. Classification based on control. Okay, so very important classification is holding and subsidiary company. What is that? Holding and subsidiary. Influencing and influenced companies also there, but that not that much important. We'll concentrate on what, ma? Holding and subsidiary. Holding and subsidiary, you know very well. One company controls other company, then that company is called holding, and that other company is called subsidiary company. Sir, how to control? Sir, it's not a natural person to control, it is a artificial person. Sir, how to control a company? There are two types of control: de facto control, de jure control. De facto control means by controlling the composition of board, not board of directors, composition of board of directors. What is that? Composition of board of directors. Controlling the composition of board of directors. And the second one is are controlling at least, not at least, more than one half of the total voting power. I am not talking about share capital and all. You should be in a position to control more than 50%, greater than 50%. Please, equations are very important. Greater than 50%. Small company, one equation. What is the equation, ma? Less than or equal to 40 crores and less than or equal to 4 crores. Private company, number of members is less than or equal to 200. Private company, number of members less than or equal to 200. So please write the equations for your quick revision. Private company equation, number of members less than or equal to 200, and small company equation, turnover is less than or equal to 40 crores and paid up share capital less than or equal to 4 crores. Then what is the equation for holding company? Holding company, voting power, total voting power. How much voting power you should control, ma? Greater than 50. Don't say greater than or equal to 50%. Or greater than 50%. 50% voting power, then half only, na? Half. You are saying yes and 50% equal, also saying no, na? Then how to control? It is not possible. If you want to control, you should have a voting power of greater than 50%. I am not saying you should have shares or you should possess the voting power. No, you should be in a position to control the voting power. You should be in a position to control the voting power, either directly or indirectly. Directly means directly you are purchasing shares in subsidiary company carrying voting rights, or indirectly through your subsidiaries or through nominees. Through nominees also. Beneficiary shareholding you have to count. What you have to count, ma? Beneficiary shareholding. Subsidiary of a subsidiary is also a subsidiary. Subsidiary of a subsidiary is also a subsidiary. I remember still I provided 3 or 4 examples to you to make you understand in which case it is a holding and subsidiary, how many relationships are there. Those cases only directly they will ask in the exam. Please refer those cases once again. Okay, I said 4 examples. How many examples, ma? 4 examples. Those 4 examples you please refer once again. And one of the example recently they asked in November 2023 exam also. Okay, so that is what holding and subsidiary company. Very simple, but some explanations are there for holding and subsidiary company. Company includes what, ma? Body corporate. Explanation to holding company definition as well as subsidiary company definition. Company includes what, ma? Body corporate. I asked 4 questions in this regard actually. I asked 4 different questions. I asked how many questions? 4 different questions in this regard. So company includes what? Body corporate. But company definition section 2 class 20, there is a conflict with section 2 class 20 and explanation provided to holding and subsidiary company. If any conflict in between explanation and definition, which will prevail? If any conflict in between explanation and definition, sir, all of a sudden you are going to GC Act, interpret, yes, my everything is linked now. This is Marathon, I can go to any chapter now. Okay. So if any conflict in between explanation and definition, then which will prevail? Fight in between explanation and definition, which will win? Explanation. Number definition is applicable to all Companies Act. It's a general. But explanation is only to that particular section only. Explanation is only applicable to that particular section only. So explanation is a specific one and definition is a general one. So general and specific, general and special, any fight in between general act and special act, or general provisions and special provisions, which will win, ma? Special provisions will. That is called harmonious construction. One of the rule in harmonious construction, interpretation of statutes. Maybe they can ask 5 marks from IPS, the same topic, and you can quote this example. You can quote this example. Quoting examples are very important in case of interpretation of statutes and General Clauses Act. You should pick the examples only from Companies Act or LLP Act only. Okay, very good. Now come to the next point. Holding and subsidiary is completed, and next one is government company. Not much important. A government is holding less than greater than or equal to 51% of total paid up share capital. Then it is called what company? Government company. Subsidiary of a government company is also a government company only. Here they said paid up share capital, but they provided an explanation to this definition. In case equity shares with differential rights, then paid up share capital to be constituted as a voting power. Okay, indirectly lawmaker intention is here also voting power only. Here also voting power only. Sir, is there any difference between voting power and paid up share capital? Paid up share capital is equal to voting power, or any difference is there? Paid up share capital is equal to voting power, any difference is there? I said one equation, 1 rupee paid up share capital is equal to 1 vote. Then total paid up share capital is equal to total votes. So there is no difference in between paid up share capital and voting power. But when difference will come? Equity shares with differential rights. ESDR. What is that? Equity shares with differential rights. Maybe ESDDR or ESDVR. Because of that only, maybe a difference will. Not only that, section number 47 and section number 106 and section number 43. Sorry, you said something, we don't know. I am just giving a statement, like this also, you can expect the questions from company law, but that questions they are not asking the exam, but to polish your subject actually. So, simple, total voting power is equal, paid up share capital is equal total voting power. Okay, do you agree or not? Yes, we'll agree, but subject to some exceptions. What is that, Section number 43. What is section number 43? Equity shares with differential rights. That is in section number 43 only, types of shares. Section number 43, first section of your share capital and debentures chapter, section number 43, equity shares, preference shares, and rule number 4 also there. Okay, as per that only, equity shares with differential rights. And next section number 47. What is 47? Section number 47, voting rights. What is that? Voting rights. Sometimes preference shareholders also will carry voting rights, and equity shareholders, they cannot exercise their voting power. And section number 106, restrictions on voting rights. Restrictions on voting rights. This many sections you should refer if you are asking this statement in your exam. This is called comprehensive knowledge and integrated, interlinking. If they are asking one statement, if you are quoting these 3 sections in your exam, value blindly by closing eyes, you will give the marks. And you will not read what is your further explanation also. Just you are keeping one heading reference, section number 43 and section number 47, section number 106. These 3 sections you are referring, then automatically you will understand he is having complete command on the company law. No need to read the further explanation also. Okay, simply you will allot the marks and will go to next question, because you are saving his time. Okay, and now come to the point. So government company, paid up share capital they used, but anyhow they provide explanation. Paid up share capital is constituted as a voting power in case company issued equity shares with differential rights. That is what their intention. What is the lawmaker intention in government company definition also? Not paid up share capital. What is that? Voting power. If government is in a position, either central government or state, but not local government, please. Either central government or state governments, they are holding more than 50%. More than 50 or less than or equal to 51%. Less than or equal to 51%. Greater than or equal to 51%. Sorry. Greater than or equal to 51% paid up share capital. Greater than or equal to, one more equation please write somewhere, government company greater than or equal to 51% of paid up share capital, brackets voting power. Okay, that's all. That is what government company definition. Okay, next. Now we are going to access to capital. Very simple definition, but because of rule number 2, which is included in the year of 2021 in company specification of definitions details rules. What is it, company specification of definitions details rules, rule number 2A of company specification of definitions details rules as amended in 2021. Because of that listed company definition, all of a sudden it is important. Otherwise listed and unlisted company definitions are very simple. Which securities are listed on stock exchange, that is a listed company. And other than a listed company is called unlisted company. So no need to spend the time for this definition also. But why it is significant now? Because of this rule number 2A. I clearly explained why this rule number 2A has been included by the lawmaker in the year of 2021 in your classroom actually. Okay. So I explained how to become a member in a company. How to become a member in a company. How to become a member, ma? Even private company definition itself, I explained how to become a member in a company, because in private company restriction, limitation on number of members. In that regard, I asked a question, who is a member and what is the difference between member and shareholder? All members are shareholders, but all shareholders are members. Like that, I asked some questions to get the to give the clarification. I said whose name is entered in the register of member is a member, and in that regard, I explained further how to become a member in a company. You don't know what is I discussed in the classroom, but I know very well. I remembered. But that is not important to remember by me, but you should remember, because it is helpful even in your exams, not for me. Okay, how to become a member, ma? In case of, I just divide companies into two types: company having share capital, company not having share capital. In case company not having share capital, by giving guarantee can become a member, and we are not concentrating on the companies not having share capital. We are concentrating company having share capital, because majority of the companies limited by shares only in India, and your syllabus also concentrating on limited by shares only. That's why I'm not discussing classification of companies liability wise. No, that is unimportant actually. So in case of company having share capital, how to become a member, ma? I just again classified into two types: at the time of incorporation, after incorporation. At the time of incorporation, by subscribing memorandum of association, you can become a member. Immediately after incorporation, your name will be entered in the register of members by the directors. Directors has to give a declaration to ROC. Yes, sir, subscribers becomes the members. Can I start the business? Like that, you have to inform to ROC within 180 days, section number 10A. Section number 10A. And after incorporation, so primary market, secondary market. Primary market, actually, whenever company invites, you can make an application and company will allot the shares, then you will become a shareholder. By that, your name will be entered in the register of members, you will become a member. So primary market, again two types: public offer, public invitation, private invitation. Company may invite the public at large, or maybe company will invite personally, private invitation. Then section number 23 to 42 you have to discuss for public offer and private placement. That is what the third chapter. Next, if company is secondary market means you are purchasing shares from the existing shareholder. That also again divided into two types. Directly you can enter into a contract with existing shareholder, or otherwise you can purchase the shares through broker. Broker again is classified into two types: authorized means regulated broker, stock exchange, other than stock exchange. And if company is inviting public to subscribe its securities, then company has a mandatorily they have to list the securities in stock exchange. So when it is mandatory for company to list its securities? When it is mandatory for a company to list its securities? When it is mandatory? When company is offering its securities to public. When company is offering its securities to public, then only it is mandatory for the company. What is the advantages of listing of securities? Why it becomes mandatory? Why government saying a company should list the securities on stock exchange? Why it is mandatory? Because of advantages of listing. What are the advantages? I said three advantages. One is marketability, liquidity, and profitability. Advantages to company, advantages to investors. Advantages to investors. By that, investors are encouraged to invest in the securities of the company. So I said securities of the company is a financial asset. So government can regulate the investments so that government is encouraging. So because of that only government is making it mandatory to the company to list the securities on stock exchange if it is offered to the public. This is what the story what we discussed. Okay. So it is mandatory for a company to list the securities when it is offering its securities to the public. Otherwise it is not mandatory. But even though company want to list the securities voluntarily, what is pulling back the company, ma? Compliance cost. What is pulling back the company? Compliance. Because if you list your securities on stock exchange, you are treated as a listed company. What company? That is what the definition here. Listed company definition. What is the definition of listed company, ma? Company which securities are listed, then it is called a listed company. What will happen if it is a listed company? What will happen if it is a listed company? Company has to comply not only Companies Act, but also SEBI Act, SCRA Act, Depositories Act. Not only Companies Act 2013, 470 sections, SEBI Act, I don't know how many sections, SCRA Act and Depositories Act. And rules and regulations of SEBI, SCRA, Depositories. Companies Act itself is a very big headache. And after that you are adding SEBI. SEBI is maybe 10 times than the Companies Act. After that SCRA. Even we also don't know what is SCRA. And Depositories Act. Again NSDL, CDSL, SEBI, RBI also, and RBI will not come, company MCA. These many regulatory authorities will regulate the company. It is a very big headache, and compliance cost will increase by 10 times also. Normally compliance cost is 1 lakh rupees for our company. Because of this listing the securities on stock exchange voluntarily, we are also treated as a listed company. Because of that, compliance cost will be increased. So to reduce the compliance cost, one small rule has been added. Rule number 2A. What is rule number 2A? Even though you are listing your securities on stock exchange voluntarily, you are not treated as a listed company. So one statement, which securities are listed, it is a listed company, but exceptions are there. What is it? Exceptions. So far I discussed what is the logic behind the exception, but we don't have that much time to discuss the logic in detail. Okay, but you should remember the exception. In exam they will not ask what is the logic behind the exception, but they will give a practical question to remember whether you remember the exception or not. What is the exception, ma? Even though you listed your securities on stock exchange, you are not treated as a listed company. For that we divide into two types: public company, private company. Public company, there are 3 points. Private company only 1 point. What is public company? 3 points. Please tell me public company 3 points, ma. Which listed its non-convertible debentures issued on private placement basis. Issued on what basis? Ma, if it is issued on public offer, there is no doubt it is mandatory. They have to list and it is treated as a listed company. Okay, so you have no need to write private placement basis also. But anyhow, they just provided non-convertible debentures which are issued on private placement basis. Even though you are listing these NCDs on stock exchange, you are not treated as a listed. You are not treated as a listed company. Then you have no need to follow SEBI Act, SCRA Act, Depositories Act. But still you are providing facilities to your investors. You are providing facilities to your investors, but you have no need to comply SEBI, SCRA and deposit. Without compliance cost, you can provide facilities to investors. For that only this rule has been added. Okay, and next point for public company, non-convertible redeemable preference shares issued on private placement basis. And third point, what is the third point, ma? Listed its shares on any other foreign stock exchange. What is that? Foreign stock exchanges. That's all. This is what for public company. Private company, only 1 point, non-convertible debentures issued on private places. No need to write private place. Private company can issue on public offer, but unnecessary lawmaker over cashes. Okay, is writing private placement basis. Private company, already you know, it is prohibited to invite the public to subscribe its securities. So private company always issue the debentures only on private place. Not only debentures, equity shares, preference shares, everything is private placement only, na? But why unnecessarily you are writing that? Maybe over cashes. Okay, so that is what listed company. Unlisted company definition is very simple, ma. What is unlisted company definition? Other than a listed company. Listed company definition, I am saying once again, rule number 2A is very important. There is a scope of asking rule number 2A. Okay, by this we completed classification of companies chapter. Now we are going to chapter number 2. What is chapter number 2? Incorporation of company. What is chapter number 2, ma? Incorporation of company. So you know very well, section number 3 to section number 22. Section number 3 to section number 22 of the Companies Act 2013. That is what incorporation of companies. So there is a scope of asking 5 marks from this chapter. See, Companies Act is divided into 3 parts as per your weightage. Companies Act is divided into how many parts, ma? 3 parts. What is the 3 parts, ma? Division 1, Division 2, Division 3. Division 1, chapter number 1, 2, 3. And Division 2, 4, 5, 6. Division 3, 7, 8. Division 1 is 1, 2, 3, 4. And 5, 6, 7, 8, 9, 10. Chapter number 22. Companies incorporated outside India. Each division is having maybe 14 marks. Approximately 14 to 20 marks they are asking. Okay. Last division is very important. What is the last division, ma? Chapter number 8, 9, 10 and chapter number 22. That division is very important. Ma, if you observe na, from last attempt, you know what is the last attempt? September 2024 attempt, companies incorporated outside India, they asked from 14 marks, I think. Only from companies incorporated outside India, they asked for 10 marks or 11 marks. And LLP Act, they asked for 16 marks. That's why as an examination strategy, this Marathon is not only revision of company law, but also your preparation strategy also. Okay. I am suggesting to the students sincerely, okay, so don't leave chapter number 8, 9, 10 and chapter number 22 of the Companies Act 2013 at any cost. Chapter number 8, 9, 10, 22. Each and every line you please read in the material. Each and every line you should read in the material. Chapter number 8, 9, 10 and chapter number 22 and LLP Act, FEMA Act. That's all. So if you have a complete command on these chapters, Foreign Exchange Management Act, they asked for 14 marks. LLP Act, they asked for 16 marks. And companies incorporated outside India, they asked for 12 marks or 11 marks. And general meetings also, they asked for 5 marks plus including internal choice, 5 plus 5, 10 marks. So like that they are asking. Declaration payment of dividend, a small question they asked for 5 marks. Interim dividend, I said interim dividend, if any loss, cumulative loss, then condition is applicable. Last 3 years dividend, more than that you cannot give it. That point they asked for 5 marks, simple question. And accounts of the companies, they asked again books of accounts. What is that, ma? Again books of accounts. Even May 2024 also they asked books of accounts only. This time also they asked books of accounts. Inspection of books of accounts. May 2024 they asked maintenance of books of accounts, where to maintain branches books of accounts. And the same section number 123, 123, yes, 123. Again they asked for 5 marks. Inspection of books of accounts. Directors they can inspect directly, but no other power of means authorization will be given. No agent, no representative can inspect the books of accounts. So small points they are asking for 4 or 5 marks from accounts of the company. This time audit and auditors they asked only for 2 marks. I don't know. Again, it is not there in your auditing subject. In company law also, corporate laws also, they asked for only 2 marks. Audit and auditors. The weightage has been reduced for audit and auditors chapter this exam. I don't know, but next exam we are hoping for 5 marks. So first preference, maybe whatever you can say, category A chapters, high priority, less priority, whatever terminology you are using or you are assigning it, but I am strictly recommending all the students, please, including everyone, average, poor, above average, excellent, I don't mind about every student, please have a complete command on chapter number 8, chapter number 9, chapter number 10 and chapter number 22 and Foreign Exchange Management Act and as well as Limited Liability Partnership Act. General Classes Act, interpretation of statutes. So that is your good luck. That's all. Okay, if you have a luck, maybe you can write this General Classes Act, interpretation of statutes. They will ask for 20 marks from GC and IPS, including choice. Maybe they can ask for 22 marks, 24 marks also. But MCQ point of view, it is not that much important. But if you know what is the advantage to you, they are giving MCQ question paper also nowadays to the students. Have you observed September 2024 MCQ? Yes, okay. Maybe you got an idea what is the pattern of MCQs asking by the institute. So that is also advantage to the students. Maybe from now onwards, biggest advantage to the students, MCQ paper also they are giving to students. Okay. So you can take the MCQ paper and we can review the MCQ question paper also, and those MCQs we can add to our material, means MCQ question bank also. That is also very good advantage to you, the students. Okay. Now come to the point, chapter number 2, incorporation of a company. How many sections? Section number 3 to section number 22. In your examination, at least refer chapter name. Sir, I am unable to remember the section number, sir. At least try to remember chapter name, chapter number 2, incorporation of a company and incidental aspects thereof, section number 3 to section number 22. In this chapter, section wise we are going to go. Section number 3. What is section number 3? Formation of company. I provided one table for formation of company. I know that you remember that table. Okay, private company, 1-person company, public company. Section number 3, table has been provided. Please revise the table once again. How many minimum number of members required for 1-person company? 1 for private company, 2 for public company, 7. Maximum number of members for 1-person company, 1 private company, 200, public company, unlimited. And for which purpose you can incorporate, you can form a company? Very simple, for any lawful purpose. And you can form a company either limited by shares or limited by guarantee or unlimited also. This is what section number 3. But in section number 3, there are some additional points for 1-person company also. Section number 3 itself covers some additional points for 1-person company. You know very well, 1-person company concept is introduced in Companies Act 2013. It is a replica of sole proprietorship. If you observe stage by stage what government is doing, in Companies Act 1956, they introduced what concept? Private company concept to encourage whom? Partnership firms. Baba, you don't do the business by way of partnership firm. You please start a company. Sir, company 470 sections. Okay, private company will give exemptions. Sir, for company 7 members are required. No. 2 members you can start a private company. Sir, in partnership firm, our family business, sir, outsiders cannot enter. Okay. In your articles, you can restrict the transferability of the shares. Like that, they are just convincing the partnership firms, partners to start a business by way of private company. After that, in Companies Act 2013, they initiated one person company concept. In Companies Act 1956 also, private company concept first time it is introduced in India. Nowhere in the world private company concept is there till 1956. And 2013 they introduced what concept? One person company. Even now also, nowhere there is a one person company concept. A company means only companies together, come together. One person company is defeating the very purpose of the company. Okay, but anyhow, government want to encourage the sole proprietors also to start their business by way of incorporating one person company. Few more exemptions actually. One person company, almost management administration chapter is not applicable to one person company. Chapter number 7, management administration is not applicable to one person company. And financial statements also, there are so many exemptions. Everywhere there are lot of exemptions for one person company when compared to private company. One person company is also a private company, but having more exemptions, actually. So one person company, you know very well, some additional points are applicable for incorporation of OPC. So from incorporation of a company chapter, if they want to ask for 5 marks, there is a scope of asking for OPC or Section 8 company. For one person company or Section 8 company. This reservation of name, incorporation, section number 7 and section number 10A, consequences of providing wrong information, these are all outdated topics nowadays. If they want to ask any question, maybe they will ask from one person company or Section 8 company. One person company or Section 8 company or section number 19. What is that? Section number 19. What is section number 19? Holding and subsidiary company cannot hold shares in its holding company. In September 2024 also they asked for 5 marks. Section number 19 and read with section number 2 definition, holding company and subsidiary company. Deemed public company also they can add. Okay, in May 2024, November 2023 also they asked for 5 marks, same section number 19. Section number 8, they asked for 5 marks in May 2024. So repeatedly they are asking at least one question from incorporation of a company chapter, especially from the section number 19 or section number 8, maybe to some extent section number 3, one person company, and rule number 3,4 of the company's incorporation rules 2014 as amended from time to time. Section number 7, 4, alteration of MOA, alteration of AOA, equally important, but those are outdated, not contemporary topics. Examiner is not concentrating on that. Alteration of name class, alteration of situation class, alteration of object class is a full bore actually. Repeatedly asking only alteration of name class, alteration of situation class, object class. Already special resolution to be passed, informed ROC will issue face certificate. Oh, this is common procedure nowadays. So he is concentrating on small points. Even he is asking from authentication of documents to deeds and negotiable instruments. He is asking from service of documents, section number 20, 21, 22. Small points. He is asking even from section number 10. This section number 10, binding effects of MOA and AOA. MOA is agreement in between company and its members' interest. No stranger cannot sue. If you observe, if you go to your material, regular material, not in the marathon material, regular material, there are around 5 to 6 illustrations are there in your institute material. The same illustrations are provided in your material also on section number 10. On section number 10. So we don't know. Maybe this attempt, there is a possibility of asking on section number 10 also. What is section number 10? Binding effect of MOA and AOA. Members are liable to company and companies are liable to members. So members and company, there is a contract. What is the contract document? MOA and AOA. Members, everyone has to sign MOA and AOA. Na? Deemed to be signed. What is that? Deemed to be signed. You are signing Constitution of India. Na? Even though you are not signing Constitution of India, you should abide by the Constitution of India. Na? So it is deemed to be signed. Like that, members also, if your name is entered in the register of members, then you deemed to sign MOA and AOA. So maybe that is also important. No stranger cannot sue. Only who are the parties to the MOA and AOA? Company members, that's all. Not directors, not officers, not employees of the company, or not creditors, not suppliers of the company. Who are the parties to the contract? Only company members. Who can sue? Company can sue the members, members can sue the company, not outsiders. Outsiders also can sue, but not by referring MOA and AOA. Not by referring MOA and AOA. This is what very important. Section number 10 also, we don't know. So we'll start with section number 3 is completed, but OPC, some additional points are there. What is the additional points for OPC? Who can become a member? Who can become a member? For one person company, who can become a member? only a natural person and the Indian citizen may or may not be a resident of India. It is an amendment in 2021, may or may not be a resident of India. Otherwise, resident of India or otherwise. Who is a resident of India? No definition is there. But what is provided? Explanation is provided. What is provided? Explanation. What is explanation? At least 120 days he should stay in India for the preceding financial year. Financial year or calendar year? Financial year. For the preceding financial year, if he stayed for 120 days, then he is a resident in India. But nowadays, resident in India definition is explanation is not that much important because of amendment in Companies Act 2021. Even though you are not a resident of India, you can incorporate a one-person company. Only condition is you should be a natural person having a capacity to enter into a contract and you are an Indian citizen. You are an Indian citizen. In this regard, I ask two questions. All citizens are not residents and all residents are also not citizens. I explain what is the difference between residents and citizens. Not only in Companies Act, even LLP Act also explained. LLP Act also for designated partner, there is a condition is there. At least one designated partner should be resident in India. For that also explanation is there to section number 7, subsection 1, who is stayed for 120 days in India during the financial year. They didn't say preceding financial year, but even though they are not saying preceding, we will interpret as a preceding financial year only. Same definition, same explanation is there in the LLP Act also. There itself I explain what is the difference between citizenship and residential status. What is the evidence for citizenship and what are the types of citizens? Okay, you know very well. And other than Indian citizens, non-residents actually we are classified into 3 parts. We will see in LLP Act, not now. Okay, so we can go anywhere now. This is a subject discussion. We can go from anywhere to anywhere. Not only from companies to LLP Act, GCA to IPS, wherever I want I can go, but not for accounting subject, FM subject. Okay, only last subject it is okay. It is permitted. Okay, now come to the point. And section number 3, some additional points for one person company, who can become a member and who can become a nominee. Same points are applicable to nominee also. And there are some restrictions. One person can become a member in only one OPC and he can act as a nominee in another OPC. If I remember, I just provided 4 scenarios to you. For one person company, I just provide how many scenarios? 4 scenarios. Case 1, case 2, case 3, case 4. Which is possible, which is not possible. And one person can become a member in only one OPC. And what are all the exceptions to this rule? That also I asked a question. And for that answer also provided by you. What is the answer, ma? Maybe if he is a member in one OPC and he is a nominee in another OPC. But in another OPC, if member died, this nominee will become a member. So for 180 days, he can act as a member in both the OPCs. But after within 180 days, he has to take a decision which OPC you want to continue as a member. Okay, that is an exception to the basic condition. What is the basic condition? One person can become a member in only one OPC. Boss, you are starting only one sole proprietorship. That's why you are allowed to start only one company. You are a sole proprietor, but I am giving a company status to you. You can enjoy all the privileges of company, separate legal entity, limited liability. What is that? Limited liability. Just you are changing the name. You are adding OPC Private Limited at the end of your name. You are getting so many exemptions. What is so many privileges? What is the privileges, ma? Limited liability is the biggest privilege, which will attract all the sole proprietors to start what company? One person company. You start your business. If any loss, you are nowhere related to that. You only starting business, you are only doing business, you are only managing the business, and you are the only member in that company. And in case of any loss, you are nowhere related to that loss. Your liability is limited. Sir, I spent 10 lakhs rupees, that's all. Don't ask any money and you cannot recover anything from my personal assets. That is a shield. That is a shield provided by the company side. Because of that shield only, everyone is starting company. In spite of some demerits of the company, still everyone is attracted because of this shield given by the company side. But some people, they will misuse the shield. That's why some additional points has been added to section number 3 and rule number 3, rule number 4. If any question has been asked in your exam for one person company, you should refer section number 3, rule number 3, rule number 4 of the Companies Incorporation Rules 2014 as amended from time to time. So reference is very important. I am saying once again. Okay, what is rule number 3, rule number 4? So one person can become a member in one OPC and he can act as a nominee in another OPC. That's all. That is very clear. Okay, and if I am not a member in any OPC, there is no restrictions for me. If I am not a member in any OPC, then there are no restrictions for me. That's why I clearly explained with some scenarios. Okay, now come to the point. Nominee. One person company, not only a member, he has to appoint a nominee in the memorandum of association. What class? Nominee class. In which class? Nominee class. Along with his consent, you have to inform to ROC. That is the additional points for one person company incorporation. And rule number 4 is their change of nominee. What is that? Change of nominee. It is also divided into 3 parts. Three scenarios, three cases. I said, by taking one example also, I clearly divide into how many points? Three cases. Nominee can withdraw himself, or member can change the nominee at any point of time. Member can change the nominee, or nominee also can withdraw the consent, or because of death of the original member, nominee become the member, so new member can appoint a new nominee. This is what the three cases. In any case, you should appoint a new nominee along with consent of the new nominee within 30 days. Within how many days? 30 days appointment, and inform to ROC also maximum how many days? 30 days only. For member, how many days are available? 15 days. For company, 15 days. That is what the criteria. Okay. So please refer once. Rule number 4, change of nominee. That much important in examination point of view. Okay. Now we are going to section number 4. 3 is completed. And in between 3 and 4, one more section is there. What is section number? Section number 3A. What is that? Section number 3A. In Companies Act, section number 3A is not that much important, but in LLP Act, section number 6 is important. Sir, why you are linking section number 3A of the Companies Act to section number 6 of LLP Act, sir? What is section number 6 of LLP Act, ma? Minimum number of partners. And what is the consequence of reduction in minimum number of partners in section number 6 itself? In Companies Act, section number 3A, reduction in minimum number of members. What is the consequence of reduction of number of members? What is the consequence in reduction number of members? Company can continue business for how many months, ma? 6 months. Within 6 months, the existing members who are aware of the fact, they have to increase the number of members to statutory limit. Otherwise, his liability will become unlimited for the contracts entered by the company after expiry of 6 months from the date of reduction of number of members. Is it clear? I explained this section number 3A with a practical question also, and section number 6 also in LLP Act with a practical question. And in Companies Act, section number 3A is not important nowadays because outdated, but LLP Act section number 6 is very important. In your September 2024 also, they asked section number 6. And in your May 2024 also, they asked section number 6. I said it is very, very important, even my classroom discussion also. Okay. Now we are going to section number 4. What is section number 4? Memorandum of Association. For incorporation of a company, you should prepare some documents. What are the first document? Memorandum. And the second document is Articles of Association. If you remember, I provided a comprehensive chart. Which persons are required for incorporation of a company, which documents you have to prepare for incorporation of a company, and which details you have to provide to ROC for incorporation, what is the procedure to be followed, and what are the miscellaneous topics what you have to cover for incorporation of a company. Is a broad view of your incorporation of a company chapter. Which persons are required for incorporation of a company? Promoters. So leave about the promoters. No, it is not important for examination point of view. And next one is subscribers, who will become the first members, who agree to become the first members if company is incorporated. Who are the subscribers? Who agree to become the first members if company is incorporated, and they have to provide their details of subscribers to the ROC. Names, address, occupation, nationality, everything you have to provide, and how many shares they want to purchase. They agree to purchase how many number of shares. At least how many shares they have to purchase? One share if company is having share capital. If company is having share capital. If company not having share capital, they will give only guarantee. They will give only what? Guarantee. If company is having share capital, then at least they have to agree to purchase at least one share. They are not purchasing now. After incorporation, they will purchase. Because how they will purchase shares before incorporation? No. Who has to allot the shares? Company. Company will came into existence after incorporation or before incorporation? After incorporation. That's why they are just agreeing to purchase one share. At least based upon their promise, ROC will give a certificate of incorporation, and you should make sure after incorporation, subscribers, they purchased the shares as agreed, and they paid money to the company, and company allotted shares to the subscribers. Their names are entered in the register of members. Then only you can start your business. All these things should be done within how many days? 180 days. This 180 days is having a link to section number 3A. 180 days having a link with what is it? Section number 3A also. What is the link? Section number 3A, how many days the company can survive with less number of members? 6 months. Within how many days you have to write subscribers name in the register of members after incorporation? 180 days. So within 180 days, even though there are no members for the company, company can survive. So within 180 days, you are not writing your names, means subscriber names are not written in the register of members. Then ROC, by giving a notice to the company, they strike off the name of the company. Means certificate of incorporation, they will throw on your face. That's all. Get lost. Get out. I just issued a certificate of incorporation to you by believing your promise that subscribers will purchase the shares and their names will be entered in the register of members. But you break your promise. That's why I'm cancelling what? Certificate of income. That's why certificate of incorporation is not a conclusive evidence as per Companies Act 2013. Even though there is a marriage, divorce may happen anytime. So that's why even though company is incorporated, certificate of incorporation is given by ROC, but you are not fulfilling the conditions subject to which the certificate of incorporation is issued, then ROC will tear the certificate of incorporation and he will cancel your name, strike off the name directly. ROC has a power. Section number 4 he has a power. And section number 10A also has a power. In which sections ROC has a power to strike off the name of the company? Section number 4 and section number 10A. Maybe they can ask MCQ under which section ROC has a power to strike off the name of the company, or they will ask one small point, certificate of incorporation is not a conclusive evidence, comment. Simply was saying, I am commenting. What is it commenting? What you are commenting? No comments. Okay, don't write no comments, I am commenting. Okay, and all these things just you have to refer section number 4, section number 10A and section number 7 also. What is section number 4? You are reserving the name. Section number 4 is MOA, Memorandum of Association, having how many clauses? Normally 6 clauses, sometimes maybe 7 clauses, sometimes maybe 5 clauses. I just provide a table to you, clauses at a glance. Clauses at a glance, MOA, how many clauses are there, which clause is mandatory, which clause is voluntary, and which clause can be altered, which clause cannot be altered, and which section you have to follow to alter the MOA. Everything I gave on comprehensive table. Please revise the table. Your running notes is very important. Please revise your running notes before the day of examination, including this marathon video. One side you please watch the video and other side you just read your running notes. By that your revision will be completed with less time. That is the objective of this section. Okay. So just before examination 2 times. How many times 2 times you can do all these things. You can watch to section number 4 MOA. How many clauses 6 clauses. And name clause 4 points I said. What are the 4 points What should be the name of the company? What should not be the name of the company? And reservation of name of the company. And what are the else? What else? Consequences of providing incorrect or incomplete information at the time of reservation of name. For name clause, I discussed 4 points. What are the 4 points? What should be? Means limited, private limited, OPC, private limited, suffix to the name. And exceptions are there. Section 8 company, no need to use limited or private limited. And government company, even though it is a private company, they will use only limited at the end of its name. Okay. And what should not be the name of the company? I said 4 points. One is, your name is not identical with the existing company name, or not resembles too nearly with the existing company name, or undesirable in the opinion of the central government, or maybe creates an impression that you have does not constitute any offense under any other law for the time being in force. And 5th point also you can add, that is in the rules. Actually I provided one small slide to cover all these points, right? Here clarity is missing for undesirable names and resembles too nearly. For that the rules has been provided. What is provided? Rules has been provided. Not in your syllabus, don't worry about it. Just you should remember all these 4 points. Okay. And I provided clearly what are all the rules for undesirable names and as well as resembles too nearly with the existing company. Okay. And what is the consequence if you are incorporating a company with contravention of section number 4? Means you are incorporating a company in contravention of section number 4. What is the consequence? It is provided in section number 16. Where it is provided? Section number 16. What is section number 16? You should remember all the sections. What is section number 16? Rectification of name of the company. What is section number 16? Rectification of name. If company incorporated with a name which is identical or resembles or undesirable, there are constitute any offense, then consequence is provided in section number 16. What is section number 16? Rectification of name of the company. Okay. And one more point in section number 4, very important. Consequence of providing incorrect or incomplete information at the time of reservation of name. What is the consequence? What is the consequence? If company is not incorporated, cancel the reservation and fine up to 1 lakh. If company is incorporated, ROC may strike off the name of the company, or ROC may issue the direction to company to change the name of the company by passing OR. Company has to change the name within 3 months, or ROC may make an appeal to tribunal to wind up the company. In which case company will go, ROC will go for strike off. In which case ROC will go for winding up. That is also explained to you. If business is not started, strike off. If business is already started, then go for winding up. What is that? Winding up. This is what section number 4, name clause. And next one is situation clause, only name of the state, and object clause, main objects and subsidiary objects, and capital clause Actually, only having share capital class is required. Liability class, either limited or unlimited, you should clearly state in the liability class, and as well as subscription class, name of the subscribers, details of the subscribers, and how many shares they are agreed to purchase. These are all will be subscription class. Nominee class in case of one person company covered in rule number 3, rule number 4 and section number 3. That is what section number 4, memorandum of association. Section number 5, articles of association. So maybe not that much important, but 2 points are very important. One is model articles versus framed articles. When model articles is applicable, when model articles is not applicable. If I remember, I gave a comprehensive chart actually when model articles is applicable. If there is no framed articles, model articles is applicable. If there is no framed articles, model articles is applicable. Sir, I framed my articles at my own. Yes, there is a choice. You can frame your articles. Yes. Where model articles, ma? Where is model articles? Schedule 1 to the company, table F to J. Table F to J of to schedule 1 to the companies at 2013. Model articles are there for limited by shares, limited by guarantee, having share capital, not having share capital, and unlimited having share capital, not having share capital. Like that, 5 different articles are really available at companies at schedule number 1. If you don't know how to prepare articles, happily you can adopt the model articles. No, sir, I will prepare my own articles. Yes, you can prepare, but even though you prepared your framed articles, sometimes you can apply model articles. If your framed articles is silent with respect to some rules and regulations, then you can apply model articles, unless otherwise you are specifically excluding model articles. I clearly showed the examples of Reliance Industries Limited or Tata group companies articles of association. They write clearly table F is excluded because they don't want to apply table F at any cost. They will cover everything, but there is some consequence. Without covering all the points you are writing table F is excluded, then there is effect on ESDR or maybe some other. Okay, that is also I said already. Okay, now we'll go to entrenchment provisions. I said it is a powerful tool to the promoters to direct the company even though their shareholding is less, even though their shareholding is reduced. Why their shareholding will be reduced? Because they have to procure the funds. For that, they have to issue the equity shares to the outsiders. Because of that, their ownership will be diluted. Even though their ownership is diluted, still they can direct the company with this tool. What is that tool, ma? Entrenchment provision. So how to entrenchment means giving protection to the regulations of the articles. Normally articles can be altered by passing what resolution, ma? Special resolution. But you can protect one regulation, maybe 90% consent or 100% consent or 80% consent. More protection will be given to the provisions of the articles. That is called entrenchment provision. Fencing. What is that? Fencing. You are fencing one regulation of the articles. Yes, you can include entrenchment provisions at the time of incorporation or after incorporation. At the time of incorporation, there is no procedure is there. That is your wish. You are writing your articles. You can include whatever you want, but you had informed ROC in Spice INC 32. You had informed ROC where, ma? In Spice INC 32 actually. And next, or otherwise after incorporation, if you want to include entrenchment provisions in the articles, then you have to private company or public company. Private company by taking consent of all the members, public company by passing special resolution. You have to inform the ROC in a separate form. Sir, one more question from the students. Generally they are asking, is it required to remember the farm numbers and penalties and fines? It is not at all possible to remember. Even though you try to remember, then you will become unsound minded. Better, even though you try to remember, you will become what, ma? Unsound, because there are so many penalties and fines are there in the company side and forms are there. Okay, I just highlighted some fines and penalties. Those fines and penalties try to remember. LLP Act, please remember each and every fine, each and every form number, everything. LLP Act, because it is 14 marks and very simple act. So forms maybe 10 to 12 forms only there in the LLP Act, and fines also only section number 9. I clearly explained what are all the provisions stated fine in the LLP Act, everything. So please try to remember the fines in the LLP Act. Which one? LLP Act. But Companies Act, please don't try to remember, because it is not possible to remember all the fines and penalties and as well as all form numbers also in the Companies Act. It is not possible. Okay. So that's why please ignore about the form. No, sir, I will remember form numbers also at your wish. You are always welcome. Okay. Not only cashew nut, sir, I will add this gunner pop also. Okay. Your wish. Okay. Next. Article section number 5. Articles and MOA together constitutional documents of the company. MOA said what to do and articles will say how to do. That is what 4 and 5. And section number 6. Overriding effect of a Companies Act on MOA and AOA. I said this is a unique section. This is a unique section, having superiority as well as inferiority also. Notwithstanding anything contained in MOA and AOA, Companies Act will override, but save as otherwise provided in the Companies Act. That is what section number 6 speciality. Normally, if any fight in between AOA and Companies Act, which will prevail, ma? If any fight in between Companies Act and AOA, which will prevail? Companies Act. But if Companies Act allows to win, then AOA will win. That's all. Okay. So that is what section number 6. Section number 7, incorporation of a company, procedure for incorporation. Very simple. Subscribers, directors, promoters, professionals. They have to prepare MOA and AOA and one more declaration. One declaration by all subscribers and all directors. What declaration they have to provide? They are all very good persons. They are not been convicted for any offense involving formation and management of company or any fraud or misfeasance, whatever it may be, during preceding 5 years. During preceding 5 financial years or 5 years. Preceding 5 years or 5 financial years. Huh? Don't take any chance. What is there here? 5 years, yes, during preceding 5 years, not financial years, 5 years. So take 5 years rest, then you can incorporate another company and you can do another fraud. That is what the facility provided by the Companies Act 2013. So every 5 years you can do the fraud. At least take 5 years gap, cooling period. It's called what? Cooling period. Last 5 years only you are not convicted for any offense. Okay. And moreover, not only that, all subscribers, all directors, they have to give that declaration. And what are all the information provided is correct and complete. That is also they have to add. And one more declaration by one professional and any one director. What is that declaration? They have been complied all the rules and regulations which are required for incorporation of a company. Incidental to incorporation and precedental. Incidental means reservation of name. Precedental means precedental means reservation of name. Incidental means commencement of business during the incorporation, before incorporation, after incorporation. What are all the rules and regulations? Companies Act, companies rules, forms, fees, details, everything we complain like that. You have to give one declaration. And one more declaration in case of regulated companies. One more declaration in case of regulated companies, that they will get the license from the regulatory authority. Okay, that is what the declarations. And MOA and AOA and details, details of directors, details of subscribers and consent of directors, because directors are not signing MOA and AOA. Their names are mentioned in the articles of association. They are not signing. That's why separate consent will be given by the board of directors and DIN number, everything, and their interest or maybe their consent, everything you have to provide. That is what the directors details. And address for correspondence. What is that? Address for correspondence. We discussed a lot about address for correspondence. Why address for correspondence? Because complete registered office address you cannot provide before incorporation. So there is a facility provided by the lawmaker. You just provide the address for correspondence for now. And after incorporation, within 30 days, you have to provide the complete registered office address. Okay. After incorporation, within 30 days, you have to provide what? Complete registered office address. That's all. That is what they said. Okay. And very well procedure, reservation of name. And already we discussed how to reserve existing company if they want to reserve the new name in run form, and new companies they want to reserve the name. Spice INC, Spice plus INC 32. What is that? Spice plus, not Spice now. Spice plus INC 32. And how many days name will be reserved? For Spice plus INC 32, 20 days. And by paying fees 1000 rupees additional fees, they will extend 20 days. 2000 rupees additional fees, another 20 days. And run 60 days. Run what is 60 days. That is what, very simple. And what is the consequence of providing wrong information at the time of reservation of name? Already we discussed. So that we completed procedure. Reservation of name, signing of MOA and AOA, filing documents and providing details to ROC. ROC will give a certificate of incorporation. But one small point which is very important. Consequence of providing incorrect or incomplete information at the time of incorporation. Section number 7. Okay. What is the consequence? Very simple. Company is not incorporated. Persons are liable under section 447 fraud. If company is incorporated, then tribunal will take the action on the company also and as well as persons also. Persons are liable under section 447 who are giving wrong information and the company also they will take action, either change the management of the company, make the liability of the members unlimited, or direct the company to change its name, or maybe wind up the company or strike off the name of the company. Whatever the tribunal deem fit, they will do. They will pass a order. That is what section number 7. By this we completed section number 7. Now section number 8. What is section number 8? Section 8 company with charitable objectives. Very simple, I can say. So section number 7 also you have to comply, and in addition to section number 7 you have to comply section number 8 also if you want to incorporate a company with charitable objectives. See, all options are available in the Companies Act. Sir, I want to do business alone, sir. OPC. Sir, I want to do business with my wife, sir. Private company. Sir, I want to do business with at large, sir. Public company. Okay. Sir, I want to, not for business, sir, non-economic activity, sir. I want to do social service. Any activity, alternatives are available in the company. Do whatever you want, but provide information to us. That is the government's motive. Do whatever you want. Nowadays, like that only. FEMA Act also like that only. Earlier, FERA Act, they are saying don't do anything. Nowadays, parents also like that only, na? You do whatever you want, plus just inform us. The generations are changed, that's why lawmaker is also changing. Earlier, what our parents used to say, don't do that, don't go there, be in your house only, don't go some other that side outside, don't use mobiles, all these things. They will say all these things. But nowadays, what parents are saying, do but inform. Do what, go wherever you want, but inform us at least. Okay. Government also like that. FEMA Act. What is FEMA Act? Don't do any cross-border transactions, no foreign exchange transactions, don't do. All are prohibited. All are prohibited. Whatever I said, only that 2 points only how to do. That's all. Eat food, only sleep. That's all. Don't do anything. That is FEMA Act. But FEMA Act, do whatever you want, but through authorized person. Through what person? Authorized person. See, the means the attitude of the lawmaker is also changing because of change is the law of the world. Change is the law of the world. If lawmaker is not changing himself, then lawmaker and law both will be outdated. No one will follow. No one will follow. Change is the law of the world. I said law is the living subject. Law is the living subject, but change is the law of the world. You should update yourself. You should update yourself. Okay. Now come to the point. Section number 8. So if you want to start a company with a charitable objectives also, you just make an application to central government for getting license under section 8. What are all the special points you should keep in your mind for section 8 company? Advantages, disadvantages, merits. You have no need to use the words of limited or private limited at the end of your name, and a partnership firm also can become a member in the section 8 company. And what are the demerits? You cannot distribute the dividend. Prohibition of dividend. You cannot pay the dividend to your members directly or indirectly. And if you want to alter any MOA and AOA, you have to take the approval from central government. For any alteration of MOA and AOA, you have to take the approval from where? From central government. That is what the extra point for section 8 company. Keep in your mind 4 marks. 4 points, 4 marks. And how to get the license under section 8? It is prescribed in the rules. You please refer once. You have to make an application to central government. All points in section number 7 is applicable. But one more point is income and expenditure for the next 3 years you have to provide to central government. That's all. That is the only extra point. Declarations, MOA, AOA, everything is same. Profession has to give a declaration. Directors has to give a declaration. Subscribers has to give a declaration. These are all same. Points are same. But one small point extra you have to write income and expenditure statement for next 3 years. Projected income and expenditure. No, don't say P&L account. What is that? Income and expenditure account. Okay. That you have to provide to central government for license. Okay. Yes. After giving license, if in case you are not satisfying the conditions subject to which the license is granted, or you are contravening the provisions of Companies Act, or you are not carrying out the object stated in the memorandum of association, then by giving a notice, opportunity of being heard, central government may revoke your license. Not only revocation of license. If what will happen if license revoked? You are a normal company, not a section 8 company. You have to use limited or private limited at the end of your name. Not only revocation of license. I said sometimes revocation is not a punishment. I said get out. That's not a punishment actually. Maybe he want to go out of the class. I said get out. Okay, it is a privilege to him. Like that, myself, I want to convert my section 8 company into normal company. There is a lot of procedure is prescribed. Not in your syllabus. Don't worry about it. But central government all of a sudden saying, no, your license review. Thank you, sir. Punished, even though you are giving punishment, it is not a punishment, it's a privilege. Okay. So that's why central government not only revocation of license, if required, in the public interest to do so, by giving opportunity of being heard once again, central government may pass an order of amalgamation or winding up. Amalgamation with another section 8 company carrying similar objects, or maybe winding up. In any case, surplus cannot be distributed to the members. Please don't expect anything from the section 8 company. You started section 8 company for what purpose? For charitable objects. So whatever the money, whatever the surplus, whatever arising out of the activities, again you have to utilize that surplus only for those activities. You cannot take even single rupee also from company, section 8 company at any cost. Sir, I will wind up my company. Yes, you can wind up your section 8 company, but surplus you have to transfer to some other section 8 company. No, sir. No section 8 company is not there for carrying similar objects. Then transfer to insolvency and bankruptcy fund. Okay, that's all. That is what you should remember. These points you write for section 8 company. That's finished. Now section number 9 is nothing but no need to discuss. What is section number 9, ma? Once company is incorporated, separate legal entity, came into existence, can continue to contracts in its name, can be sued. All these things are unnecessary. Okay. Section number 10, binding effect of MOA and AOA, just now we referred. And section number 10A, commencement of business. So even though you got certificate of incorporation, you cannot start your business unless you satisfy 2 conditions. What is that, ma? You have to give a declaration. Directors has to give a declaration to ROC. Subscribers become the members within how many days? 180 days. And in case of regulated company, they should get the license from the regulatory authority from within how many days? 180 days. Then only can start your business. If you are failed to do so within 180 days from the date of incorporation, then ROC by giving notice, they will strike off the name of the company. Simple. Okay, that's all. Next, section number 11 is not there, omitted, and section number 12 is registered office address. Earlier section number 12 is very, very important. They used to ask at least one question from section number 12. Nowadays, maybe they got bored. They are not asking any question from section number 12. What is the section number 12? Registered office address. In this, what points we discussed? Verification of registered office address. At the time of incorporation, there is no registered office address. You are giving only address for correspondent, name of the state in the situation clause of MOA. But complete registered office address, including door number, everything you have to provide within 30 days from the date of incorporation. 30 days is very important. Within 30 days from the date of incorporation, you have to provide complete registered office address to ROC. So if you are not providing, then ROC will strike off the name of the company. Simple. Always divorce only. You are not doing anything which is promised at the time of marriage, divorce. Finish. Okay. So at the time of incorporation, you said, I will provide complete registered office address within 30 days. You are not providing, ROC will strike off the name of the company, and fines and penalties extra. Both fines and penalties you have to pay, and as well as ROC, if he requires, by giving notice, he will strike off the name of the company. Okay. And if you are giving declaration, then ROC will come verify physical address physically. ROC will come and verify the address physically. That is what rule number 23A. If I am not wrong, maybe that is the rule number. New rule has been introduced in 2021 to avoid shell companies, bogus companies, suitcase companies, and all these companies, fake companies. ROC has to go and verify the registered office address physically. Okay, not in your syllabus, don't worry. And not only that, we discussed the publication of name and registered office address in section number 12 only. I just provide one small table. Please refer. That is not much important to discuss in Marathon section. And next one is change of registered office address. What is that? Change of registered office address. I just explained in 4 cases. How many cases? What is that? 4 cases. 4 cases. Okay. Fourth case will leave in section number 13. In section number 12, 3 cases. One place to another place within the same city. Let me see that chart here. Chart has been provided for you. This one. Okay. Within the same city. Within the same city and within the same ROC and within same state, and from one state to another state. Within the same city, one place to another place, only board of directors resolution, and within same ROC from one city to another city, general meeting special resolution, board of directors resolution informed to ROC. One ROC to another ROC, it is possible only in 2 states, Tamil Nadu and Maharashtra. So for that, you have to get the approval from regional director. And how to get the approval from regional director is not in your syllabus, don't worry. But from one state to another state is not covered in section number 12. It is covered in section number 13, alteration of MOA. Now we are going to section number 13. What is that? Alteration of MOA. What is alteration of MOA? Clauses. My MOA is a dynamic document, not a static document. Means you can alter your MOA clauses. Which clauses you can alter? I just provided the information. Name clause you can alter, object clause you can alter, situation clause you can alter, capital clause you can alter, liability clause also you can alter, but you cannot alter subscription clause. It is not possible. And nominee clause alteration is not covered in section number 13. It is covered in rule number 4. Nominee clause alteration is not covered in section number 13. It is covered in rule number 4. How to change the nominee? 3 cases I said. Okay. So that is not covered in section number 13. And first we will go for the alteration of name clause. Section number 13, subclass 1. No, I don't know. Okay. No need to remember subclasses and all. I am not recommending you to remember subclasses and all. Don't waste your time. Section number 13, alteration of name clause. Yes, company can change its name at any point of time voluntarily by following the procedure prescribed. What is the procedure? In brief procedure, board of directors resolution, general meeting special resolution, and you have to get approval from central government, inform to ROC, and ROC will issue a fresh certificate of incorporation. That's all. 5 points you write, 5 marks. And not only that, you should write prohibition. Sometimes it is prohibited. When it is prohibited? If they are in default in filing financial statements or annual returns, or payment of interest or repayment of amount principal for deposits or debentures. Okay. Sir, any default, what you have to do, sir? Just rectify the default and immediately can go for alteration of name clause. That is called subsisting default. What default? Subsisting default. Okay. That is what name clause alteration. Now we will go to situation clause alteration. Yes, you can change from one state to another state. Okay. What is the procedure? Board of directors resolution, general meeting, special resolution, and as well as you have to take the approval from the central government. You have to take approval from where? Central government. What is the procedure to get the approval from central government is in your syllabus. Please refer once. Rule. Okay, rule number 30. What is that? Rule number 30. Section number 13, rule number 30. Rule number 30 that you have to refer. I just provided one small slide for that, and you please refer that slide. In more than we are not going to revise. Very simple, central government, you have to submit some documents and some declarations. List of creditors, debenture holders, and with outstanding balances, and whatever the declaration is provided, whatever the details are provided is correct, and you have to make an application to Chief Secretary of the State, acknowledgement of the application, copy of the Chief Secretary of the State you have to provide, and you have to give advertisement in newspapers, and no one is raising any objection. If any objections are raised, you have to give the means you have to resolve the objections. If no objections, no hearings, within 15 days central government will give the approval. If hearings are there, maximum within 60 days central government will give the approval, and you have to inform the ROC, both the ROCs within 30 days, and ROC will issue a certificate of incorporation within 30 days. That is what the rules. You please refer once. Okay, maybe there is a possibility to ask in least case, maybe there is a possibility to ask the last case. What is the last case from one state to another state? Otherwise it's not much important. Nowadays it is outdated concept. Now we'll go into section number means alteration of object class. Little bit important. Object class, I said two types. So company is not procuring money from public, and company is procuring money from public. If company is not procuring money from public, then very simple procedure ma. General meeting, board resolution, general meeting, special resolution, and informed ROC will issue a certificate of change. But only thing what you have to remember, memorandum of association, any clause you can alter only from prospective effect, not from the retrospective effect. And after alteration only you have to enter into the contracts. Before alteration you are entering, and after that can I ratify? It is not possible. So this object clause is having a connection with the doctrine of ultra vires, but doctrines I am not going to discuss here. It is not important for your CA inter. Maybe CA foundation they might have asked, but not in CA inter. Okay, so now we'll go to object clause. If you are procuring money from the public, alteration of object clause, you are procuring money from public. If you are procuring money from public, and whatever the money you are utilized already, then same procedure. But you are not utilized, then only extra points. What is that extra points? You have to pass a special resolution through postal ballot. What is postal ballot? Remote voting without meeting. What is I said? Remote voting without meeting. You please cast your vote from your home itself. You have no need to go to the meeting. This means you are giving opportunity to each and every person to participate in the voting without any efforts. Without any efforts actually. Okay, remote voting without meeting is nothing but postal ballot resolution, and you have to give an advertisement in newspaper to create the awareness to the members to participate in the resolution, means voting, and as well as dissenting shareholders. What is that? Dissenting. Who says no? Who says no? It is actually individual rights will be affected. I gave money to the company for one purpose. Now you are changing your purpose. Yes, you can change, even though I am saying no, because only special resolution is required, not anonymous resolution, 100% consent. No, special resolution. I said no. I said what? No, but still you are changing your object. Okay, but individually my rights will be affected. So this is called oppression of minority by majority. Oppression of minority by majority. So companies at 2013, one of the objectives is to protect the interest of the minority. So because of that only in companies at 2013, section number 13, they added one small point, dissenting shareholders exit option. What option? Exit option means give back my money. That's all. I paid 1 lakh rupees to you. I said maybe you are investing in construction, but you are changing to IT now. I am not liking that IT. But even though I am saying no, special resolution is passed, and you are employing my 1 lakh rupees for IT, that's I don't like. So give me 1 lakh rupees back. Exit option. Who will give 1 lakh rupees? Company. No. If company is giving, that is called buyback. No, it's not a buyback. Promoters are controlling shareholders. They will give the money back to the existing means dissenting shareholders. That is a secondary market. What market? Secondary market. Dissenting shareholders exit option will be given by the promoters or controlling shareholders. Please don't drag buyback here. It's not a buyback. It's not a buyback. No need to apply section number 68, 69, 70. No need. Okay, please don't apply here. Next, that is what very important. And remaining alteration of memorandum of association is not in your syllabus. Don't worry about it. So section number 13 is completed. Section number 14 is alteration of articles of association. Section number 14, to alter any regulation of articles, special resolution is required, but having some exemptions. What is exemptions, ma? Exceptions. What are the exceptions actually? Entrenchment provisions may be special resolution. More than special resolution is required. What is stated in the entrenchment provision that you have to follow. And in case of conversion of public company into private company, you have to take the approval from central. Not only special resolution, you should take approval from central, because you are degrading yourself. All of a sudden 470 sections you are complying so far. All of a sudden you want to comply only 200 sections, then it is degrading. So you have to take the approval from central government. And your articles, you can alter your articles, but not inconsistent with Companies Act and MOA. Not inconsistent with Companies Act and MOA. These are all the points subject to which you can alter any regulation of the articles by passing what resolution? Special resolution. Okay, that is what alteration of Articles of Association, section number 14 and section number 15. What is section number 15? Not in your syllabus. Section number 16, rectification of name. Not important in your company law, but is important in LLP Act. In LLP Act, what section ma? Sir, why sir always you are asking Companies Act, LLP Act? Both are corporate laws only na. Section number 17. What is in LLP Act ma? Rectification of name. Section number 17. 19 is voluntary change of name. You don't remember section numbers andala? Okay, ma, section number 16, rectification of name in the what act ma? Companies Act, not much important because outdated now, but which is important in LLP Act. In LLP Act, recently September 2024, they asked for 4 months or 5 months, section number 17 of LLP Act, section number 6 of the LLP Act, section number 7, section number 9, section number 10, very important, 32, 33, very important. Contribution, obligation to contribute and assignment of partnership interest, they ask for 4 marks. In LLP Act, small points they are asking from 4 marks for LLP Act. Okay, LLP Act, don't leave it as a choice at any cost. Each and every point you please read in LLP Act. Okay, now come to the point, section number 16, rectification of name. Very simple ma. If you are incorporating a company in contravention of section number 4, name class, then by making an application by the aggrieved party to the central government, who is aggrieved party? May be a company, may not be a company. If the aggrieved party is a company, without any time limit they can make an application. But other than a company, then within how many years ma? Within 3 years they have to make an application. This 3 years time limit is very important. There is a possibility of asking practical question on this 3 years time limit only. Okay, and after getting application, then central government may issue direction to company to change its name by passing ordinary resolution. Highlight ordinary resolution. Okay, and company has to change and inform the ROC. ROC will issue a fresh certificate of incorporation. These are all common process. If company is failed to change within 3 months from the date of issuing direction by the central government, then central government will allot a new name. That is what rule number 33A. That is a new rule actually. Central government will allot a new name by itself to the company. The new name will be ORDNC plus year, serial number plus CAN number. That is what rule number. Maybe there is a possibility of asking 2 marks MCQ. This combination of new name will be allotted by a central government to the company. Rule number 33A. Okay, that's all. That is what section number 16 and section number 17. What is section number 17? Not in your syllabus. 18, not required, not much important. Section number 19 is very important. I said 2 statements in section number 19. One is subsidiary company cannot hold shares in its holding company. Subsidiary company cannot hold shares in its holding company. Okay, that is what one statement. But the one exception is there. What is that? Before becoming a subsidiary, if any shares are purchased, they can hold still, but they cannot access voting rights. Based on this point, they asked 3 times. Very, very important section number 19. You please refer the running notes, material, practical questions on section number 19. Everything ma, very important. Don't think sir, already September 2024 they asked na sir. So January 2024 they might not ask sir. Same. So many experts they said same thing for September attempt also. But May 2024, whatever the topics they asked, from the same topics they asked 28 marks in September 2024. So many experts, so many faculties, so many others, they said these topics already asked in May 24. Don't refer in September 24. You can straight away, you can leave it as a choice. If you are following that statement, then September 24 may be a critical, difficult. Nowadays, don't please expect any pattern of the exam. Point, section number 19, first statement. What is first statement ma? Subsidiary company cannot hold. In this regard, I just gave an example of TCS and Infosys with some dates also. Finally, on 14th February, there is a relationship is established between TCS and Infosys. That is what holding and subsidiary. After establishing relation, subsidiary company cannot purchase shares in the holding company. Then what about already purchased shares, sir? Already purchased shares, yes, you can hold, but you cannot access voting rights. Here, lawmaker intention is, I am saying once again, section number 19, lawmaker intention is subsidiary company cannot exercise even 1% voting power also in its holding company. I am not talking about holding shares, all these things. They cannot exercise 1% voting. It cannot control 1% voting power also in holding company because cross control is not possible. If you are allowing cross control, then holding and subsidiary relationship will be diluted. Holding and subsidiary relationship will be diluted. Then ROC will be in a confusion who is holding and who is a subsidiary company, who is controlling whom. Okay, to avoid that situation, section number 19 is introduced. As per section number 19, subsidiary company, of course, after relationship is established, holding company cannot allot any shares, cannot transfer any shares to subsidiary company. It is void. It is void. But what about the shares already purchased by subsidiary company before becoming a subsidiary? That shares they can hold, but they cannot access voting rights. And as a trustee, as a representative, subsidiary company can purchase. Means as a nominee, as a on behalf of others. Subsidiary company is not purchasing, subsidiary company is purchasing on behalf of others. Subsidiary company is purchasing on behalf of others. Yes, it can purchase, and it can access voting rights also. Sorry, you said subsidiary company cannot access voting rights. I am purchasing shares on behalf of others. Even though I am saying yes, who will decide whether I have to say yes or no? Not others only. I am not deciding myself. I am not controlling the holding company. Someone is controlling through me. Someone is controlling through me. I am just a tool. That's all. I am just a nominee. I am just a trustee. I am just a representative. Someone is purchasing shares in the holding company through me. That's all. That is okay. That is allowed. And you can exercise the voting rights also. Okay. That is what section number 19. And second statement, you know very well, holding company cannot allot or transfer any shares to its subsidiary company. If any allotment or transfer, it is void. It is void. I said some exceptions are there. And in this regard, I introduced the harmonious construction rule. One of the rule later will prevail than the earlier. This is asked for 4 marks in your May 2024. Which one will prevail later or earlier? In Telugu, one famous proverb is there. What is that? ముందొచ్చిన చెవుల కంటే వెనకొచ్చిన కొమ్ములు వాడి. Just remember that proverb. That's all. 5 marks. Which you will get first, ears or hands? Not for you. For you, hands are not there. Normally for animals, what will be there? Hands will be there. First they will get what? Ears. Hands will get later, but hands are sharp than ears. They will use hands only to protect, not ears actually. Animals will protect with hands or with ears. What if lion is attacking, they will say ears like this. No. They will use what? Hands only. Okay. Hands are sharp than ears. Okay. Like that, harmonious construction, one rule is there. Any conflict in between two provisions of the Companies Act, means same act or any different act, some rules are there to resolve the conflict. Harmonious construction rule is very important. They will ask at least one question from harmonious construction. There are so many points in harmonious construction, but you should quote examples because that is only a small point. They will not give you 4 marks for the small point. You should write what? Example. Then only valuer will feel happy. Okay, he has some knowledge, so he will give 3 marks or 4 marks. Simply you are writing later will prevail than earlier. They will give 4 marks. What? This is what? Degree exam or CA exam? Sir, you said CA exam volume is not important. Content is important. Content also important. Volume also important. For 4 marks, you should write 4 marks volume. You should write 4 marks content. Simply you are writing 4 marks question. Gender, male gender includes female gender also. They will give 4 marks. You should write some example. Sir, example in GC Act, IPS Act? No. Example is in Companies Act, LLP Act. So you should correlate what are the examples you want to pick from Companies Act or LLP Act for GC and IPS. Or GC, IPS, I will straight away leave the choice. Sir. Sometimes GC, IPS only will protect you. Small points they will ask 4 marks. Male gender includes female. Singular includes plural. Okay. Power to appoint includes power to dismiss also. 4 marks. Measurement of distances. Horizontal plane. 2 marks. Measurement of distance what? Horizontal. Last attempt they asked definitions. Means includes. Means exhaustive definition. Includes means inclusive definition. Okay. Means and includes exhaustive. And includes and whatever it may be, something is there and they had to include. That is also inclusive definition only. Like that they ask 4 marks. And what is the importance of definition? 4 marks. Very simple to write. Sometimes GC and IPS also maybe they can improve your means number of marks in your law. Please don't ignore GC and IPS. Section number 19 is already completed, but there is an exception to second statement. What is the second statement? Holding company cannot allot or transfer shares to subsidiary company, but no exceptions are stated in section number 19. But there is a conflict in between section number 19 and section number 62 and 63. So directly went to 60 to 63. What is 60 to 63? 62 is right shares, 63 is bonus shares. Ma Infosys purchased shares in TCS before becoming subsidiary. Possible or not possible? Possible. They can hold the shares or not? Yes. Now for that shares, whether TCS has to give bonus shares or not. Ma TCS is issuing bonus shares to all the shareholders, uniform basis. Now Infosys also will get bonus shares or not? You are saying allotment of shares is valid, void. Ma what section number 19 says? Allotment of shares is void. Then how holding company can issue bonus shares or rights shares to subsidiary company? There is a clear-cut conflict in between section number 19 and 62 and 63. That's why which will prevail? 19 or 60 to 63? 62 and 63. Not only that, you should uphold the intention of the lawmaker. What is the intention of section number 19? Subsidiary company cannot exercise any voting rights. Even though I am issuing bonus shares, they cannot exercise voting rights on that. And because of bonus shares, the percentage of shareholding will not be increased. Because of issuing bonus shares, percentage of shareholding will not be increased. So, intention of the lawmaker is upheld. That's why not only provision, you should try to understand intention of the lawmaker. When it is very important, if any conflict in between provisions or any new case has been came to the court, then only you should know how you are going to interpret the act. What is the intention of the lawmaker? That is what we are going to discuss in interpretation of statutes. Okay. And section number 20, service of documents, we will discuss in management administration chapter. 21 and 22, what is that, ma? Authentication of documents, deeds, negotiable instruments. One slide I have been given to you. Please read that slide. Don't think this is unimportant. Maybe sometimes they will ask who can sign the deeds, who can sign the documents, and who can sign the negotiable instruments. I am explaining once again. I am expecting question from this section number 21 and section number 22 from this January 2025. January 2025. Sir, who can sign the documents or contracts or proceedings? I divide into three parts. Documents, contracts, proceedings. Deeds, negotiable instruments. Documents, contracts and proceedings can be signed by KMP or any other officer. Any officer. And deeds can be signed who is having power of attorney. Who is having power of attorney? Mr. X, Mr. Y. Even though I don't have any relation with the company, I can sign deeds on behalf of the company if I am having a power of attorney. Who has to give the power of attorney? Company only. How a company will give power of attorney? In that case, we divide into two cases. Having common seal, not having common seal. If company is having common seal, company will issue the power of attorney by affixing common seal. If company is not having common seal, company will give the power of attorney by two directors, company secretary or one director. If company secretary not there, two directors. That's all that you have to understand. And negotiation instrument, who has to sign negotiation instruments? Who is having express or implied authority? That persons will sign the negotiable instrument. This is what section number 21 and 22. By that we completed chapter number 2. So after break we'll start chapter number 3, prospectus and allotment of securities. Okay, I hope that chapter number 2 you got an idea, complete idea. So now we'll go to chapter number 3, prospectus and allotment. So shall we start? So we'll recap of chapter number 1 and chapter number 2. Section number 1, short title, extend commencement applicability. Section number 2, definitions, private company, 200, public company, deemed public company. So government company greater than or equal to 51% of total paid up share capital. Small company, what is small company equation? Less than or equal to 40 crores and less than or equal to 4 crores. And holding and subsidiary company greater than 50% of voting power. Composition of board of directors. These are the section number 2. And section number 3, 1 to 7. What is 1 to 7? OPC, private, public. Section number 3. Section number 3A, 6 months members are liable for the contracts after expiry of 6 months. And section number 4, MOA, 6 clauses. Name clause, 4 points. What should be the name, what should not be the name, all these things. And section number 5, articles, entrenchment provisions and model articles, framed articles, applicability. Model articles versus framed articles, applicability. And section number 6, overriding effect of Companies Act and MOA and AOA. Section number 7, incorporation of a company, like persons required, documents to be prepared and details to be provided, procedure to be followed for incorporation of company, and the consequence of providing wrong information at the time of incorporation, and including section number 4 also, consequence of providing wrong information at the time of reservation of Name ROC has a power. Here tribunal has a power. And section number 8. Section 8 company. Yes, it is company with charitable objects, revocation of license and issue of license. Section number 9. Ignore. And section number 10 is binding effect of MOA and AOA. 10A is nothing but commencement of business, 2 points. And section number 11 omitted. And 12 is registered office address, verification, publication and change of registered office address. And section number 13, alteration of MOA. Alteration of MOA, alteration of name class and alteration of situation class and object class you should refer. And section number 14, alteration of AOA special resolution. And 15 is not there. 16, rectification of name of the company. And 17 is not required. 18 is also not required. 19 is holding company, subsidiary company, shares. That is about 20, 21, 22 is okay. Authentication of documents, deeds and negotiable instruments. So by this, chapter number 1, 2 is completed. Now we are going to chapter number 3. Chapter number 3 is prospectus and allotment of securities. You can expect 5 marks question from this chapter, prospectus and allotment of securities. So in this we have to cover section number 23 to section number 42. How many sections we have to cover? Section number 23 to section number 42 we should cover in this particular chapter. From last 3 attempts they are asking continuously from section number 42. From last 3 attempts they are continuously asking from section number 42 private placement. What is that? Private placement. So including November 2023, May 24, September 24, from last 3 attempts, they are only asking from chapter section number 42 private placement. Even though there is no single question from section number 23 to 41. We will spend hours and hours to discuss section number 23 to 41, but they are asking question from section number 42, which is only 1 or 2 hours discussion private placement. That is what the pattern, what he is following, we don't know. And every attempt we are expecting question from 23 to 41 public offer, but repeatedly is asking only from private placement. So this attempt we don't know whether from private placement or public offer. So this chapter is divided into 2 parts, you know very well. One is public offer, other one is private placement. This chapter number 3, 4, 5, 6 is related to procurement of funds. What is that? Procurement of funds, not guiding the company to how to procure the funds, but some rules and regulations has been framed for procurement of funds by the company, either from public or from private persons, either by issue of equity shares, preference shares, bonus shares, right shares, ESOP, sweat equity, everything. I said clearly 8 ways are there to increase your authorized share, issued or subscribed or called up or paid up share capital. How many ways are available? 8 ways are available. All 8 ways are regulated by the company. Astadikbandhanam. What is that? Astadikbandhanam. All 8 ways are regulated by the lawmaker, Companies Act 2013. So with different sections. So in this chapter we are going to discuss only 2 ways: public offer, private placement. If company want to procure the funds, the best option is to by way of issue of securities. By way of issue of securities. So this issue of securities has been regulated by this chapter, chapter number 3, prospectus and allotment of securities. Securities include security shares, preference shares, debentures, bonds, commercial papers or like nature, anything. Don't emphasize on the securities definition, not required, because there is no definition in the Companies Act. It is in Securities Contract and Regulation Act, SCRA Act. Okay, so securities means anything, equity shares, preference shares, debentures, bonds. Then what is prospectus, sir? If you want to invite the public to subscribe the securities, then you have to issue a document. The document is called prospectus. To protect the, what is the object of this, all these chapters, chapter number 3, 4, 5, 6, what is the object, what is the preamble? To protect the interest of the investors. What is the first object? To protect the interest of the investors. And the second object is to not to curb the unauthorized flow of the money to the company. Unauthorized money should not be invested in the company by anyone. If you have a black money, you cannot invest in a company. So that practice they want to curb actually. They want to stop that practice. That's why they are introduced 3, 4, 5, 6. Okay, and the acceptance of deposits by companies, as well as section number 42 private placement, especially for second point. Section number 42 and as well as section number 73 to 77, acceptance of deposits by companies, especially for what purpose, ma? Especially for what purpose? For stop this practice only. So investing unauthorized money in the company. That's why nowadays they are concentrating on these sections. Sir, why sir they are concentrating on section number 42 and acceptance of deposits chapter? Acceptance of deposits chapter is least important 2 years back. 2 years back, acceptance of deposits chapter is the least important. Even we leave it as a choice in Marathan also. We didn't discuss acceptance of deposits chapter in Marathan section. And students also straight away they will leave the choice, acceptance of deposits, registration of charges, and as well as this debentures topic, they will leave it as a choice. But nowadays they are asking 5 to 10 marks from these 3 topics. Acceptance of deposits continuously they are asking from last 4 attempts for 5 marks. Registration of charges they are asking for 5 marks. Debentures they are asking for 4 marks. But this time they didn't ask from debentures. They asked from share capital chapter only. Not share capital topic only, not for debentures. Okay. So deposits and 42 private placement is especially included in the Companies Act 2013 to curb the practice of investing unauthorized money in the company by the investors. Maybe that is the one of the reason why they are concentrating on these sections nowadays, because it is a contemporary topic. What topic? Contemporary. For government also it is contemporary, and that's why examiners, maybe the paper setter is adding this section number 42, is asking repeatedly. Now we'll go to first prospectus. If you want to invite the public to subscribe your securities, then you have to issue a document. The document is called nothing but prospectus. No, prospectus is an invitation document. Prospectus is a invitation. Like for your marriage, you are distributing invitation cards, na? Like that, company is distributing what? Prospectus to the prospective investors. Prospectus to the prospective investors who would like to invest in the company. They are circulating this prospectus, but it is a public offer. They don't know who is going to invest. That's why they are distributing this prospectus to public at large. They are offering their securities to the public at large. This is not a specific offer. This is a general offer. What offer? General offer. So section by section we will discuss, not in general. Section number 23. What is section number 23, sir? Section number 23 is means how to procure the funds by the companies. How to procure the funds. There are two options for the companies. One is public offer, other one is private placement. Which company can go for public offer? Only public. So for public company there are two options, public offer or private placement. For private company only one alternative, and that is what? Only private placement. That you have to remember. And types of public offer is 4 types. What is that? 4 types of public offer. Initial public offer, first time after incorporation of a company, if company is inviting public, it is called initial public offer. And the second time and subsequent time it is called further public offer. And offer for sale. What is that? Offer for sale. This is not a primary market, this is a secondary market. I clearly explained by showing you LIC prospectus, IE Silks prospectus, and nowadays few more prospectus also there to show you. That is a recently Ola Electricals also came, Bajaj Housing Finance also came for the public offer. Nowadays weekly once one company is coming for public offer in India. Okay, so your biryani or your bhaji cost is a public offer to one company. Okay, so one Sunday biryani 1000 rupees you are investing in a company, then company can procure 1 lakh crores. One company can procure for every 1 week from India 1 lakh crores. Okay, so maybe 100 crores people are there, 100 crores into 1000, 1 lakh crores. You are sacrificing one day biryani. One company can procure 1 lakh crores in India, like through public offer. That's why every company nowadays they are coming for public offer to get out of this COVID-19 pandemic situation. Because of this COVID-19 recession, how India is going coming out of this COVID-19 pandemic, so companies they are reducing their debt. Companies they are reducing their debt by way of procuring money from the public. Simple. Companies are reducing their debt obligations. They are reducing their financial risk by way of procuring funds from the public, because equity shares are very less risky to the company. Na? For companies, equity shares are very less risky. Okay, that's why they are procuring money from you and they are reducing the debt. They are redeeming the debt. They are redeeming the debt. By that, they are decreasing the financial risk. Decreasing the financial risk. If risk is decreased, then return also they can decrease. Already return is already decreased because of COVID-19. That's why India is going out of this, coming out of this COVID-19 with one small technique, public offer. If you observe nowadays, every 1 week, one company is coming for public offer with not for 100 crores or 200 crores, so lakhs of crores they are procuring from the Indian public through public offer. So maybe it is a contemporary topic today. Okay, so today it is a contemporary topic. Public offer is a contemporary topic. So Bajaj Housing Finance came, Ola Electrical came, Sai Silks came, so many other companies which are we don't know, even names also we don't know. Every company is coming for public offer, and you are making application like anything. So all companies are oversubscribed only. All companies public offers are oversubscribed only, and we are making application at the cap price, not at floor price. Even though they are issuing red herring prospectus, even though company is issuing what prospectus? Red herring prospectus. They are giving choice to the public itself to make an application at whatever the price they want, including floor and in between floor and cap price. For example, 200 to 206 or 208, and everyone is making application at what price? 208 and over subscription. Everyone is making an application at 208 and over subscription. To understand this prospectus and allotment of securities chapter, I will give 9 points. If you have a means if you understand these 9 points, then this chapter is completed. Public offer chapter is completed. Topic is completed. How many points? 9 points. Already in your running notes it is there. 9 points, but I will explain the points now. I am not going to write the points. It is not possible. Don't expect. Okay. So first of all, before going to that 9 points, let me explain you section number 23. That is what public offer and private placement and types of public offer. What is the fourth type of public offer? First one is we said IPO. Second one is FPO. Third one is what is offer for sale? Very important, and it is also a very trending topic nowadays. Offer for sale. If you observe each and every public offer nowadays, what companies are offering shares to public, every public offer includes offer for sale. Every public offer includes what? Offer for sale. IPO, OFS, or FPO plus OFS. With this combination only they are coming to you. 100% OFS best example is LIC. For 100% OFS. OFS means offer for sale. Best example is what? LIC. LIC 100% public offer is OFS only. What is OFS? Existing shareholder. Existing shareholder. They are selling their shares to the public through company. Existing shareholder, they are selling their shares to the public through company. Directly also they can sell. President of India is holding shares in LIC. So President of India can sell the shares directly to the public. Company is not required. Mediator is not required. But through company, through LIC, they are selling shares. That is called OFS. Means LIC is offering public. LIC is offering shares to the public of President of India. This is a secondary market. This is what market? Secondary. It's not a primary market. LIC is not going to procure even 1 rupee also from OFS. LIC is not going to procure 1 rupee also from OFS because I am the shareholder. I am selling my shares to you through company. Through company, I am selling shares to you. So you are purchasing shares. Means if you are making an application to purchase the shares, I will transfer my shares to you. That's all. Company is not issuing fresh shares. Company is not issuing fresh shares. No allotment, nothing. It's only transfer. Secondary market. What market? Secondary market. In secondary market, company will not procure even 1 rupee also. My shares I am transferring to you. I am holding 10 shares in TCS. Now I am selling these 10 shares to some other person. Company will get money, yeah? No. Then what is offer for sale, sir? Instead of selling directly, I am taking the help of the Tata Consultancy Services company to sell my 10 shares. Why, sir, you are taking help to create a demand? To create what? Demand. If President of India is offering to 10 persons, then demand is very less. If he is offering to 100 crores of public, then demand is very high. By that, he can sell his shares at more price. You know, very simple economics, demand and supply. That is the strategy nowadays all promoters of all companies they are adopting. Majority of the companies promoters, they are selling their shares to the public through company, through public offer OFS. What is that? Through public offer OFS. I started a company. Now company is its own reputation, brand name, goodwill. Everyone knows about my company. Hype has been created for that company. Then what I will do? Whatever the shares I am having in that company, that 1 lakh shares, so 2 lakh shares, so 3 lakh shares, so 10 lakh shares. Not 1 share, 2 shares I am having. Holding 10 lakh shares or 1 crore shares. I purchased 1 rupee per share. At the time of incorporation, company allotted at 1 rupee per share. That shares now I want to sell to the public through company. Sir, why sir company is acting as a mediator? Because I am the promoter of the company. It should act as a mediator. Sir, is it allowed in the Companies Act? Yes, it is allowed. The name is offer for sale. So company is inviting public to sell their promoter shares. To sell their promoters shares. So company is only broker. Company is only a broker. Sir, all these expenses for printing and publishing of prospectus, underwriting, broker's issue, registered issue, all these expenses are reimbursed by the promoters. Who is selling the shares, he will reimburse. That's all. That is called offer for sale, and it is a contemporary topic, trending topic actually. And next one is what? Fourth type of public offer is deemed public offer. What is that? Deemed public offer. Okay, so what is deemed public offer? That is not in section number 23. That is in section number 42. It's not in section number 23, it is in section number 42. In section number 42, what is deemed public offer? Private placement regulations are not complied, then that offer is deemed as a public offer. You are inviting more than 200 in a year, then it is deemed as what offer, ma? Public offer, DPO, deemed public offer. So that public offer how many types, ma? 4 types: IPO, FPO, OFS, DPO, deemed public offer. Okay. Now section number 24, not in your syllabus, don't worry. Section number 25. What is section number 25? Deemed prospectus. What is that? Deemed prospectus. Very, very important. See, I arranged your material also section wise. This is marathon material. Okay, because already you have a regular material and you have a knowledge of entire Companies Act, and for revision, better to go revision section wise, not topic wise. What is that? Section wise. 23 is completed. 24 not in your syllabus. 25 is a deemed prospectus. What is deemed prospectus, ma? Offer of securities for sale. This is opposite to offer for sale. Don't confuse in between. Offer for sale is different. Offer of securities for sale is different. Sir, what is offer for sale, sir? OFS. That is what I explained. What is OFS? For your understanding, I will give you a small example OFS, because students may confuse in between OFS and offer of securities for sale. This is difference. This is dealt with section number 25. This is dealt with offer for sale. 42. Why, ma? 23. 28. Section number 28. So offer for sale is dealt with section number 28, and offer of securities for sale dealt by section number 25. This is positive side actually, and this is the negative side. Okay, and here voluntarily company is complying section number 23 to 41. Ma, I am a shareholder. Please listen once again carefully. I am a shareholder of a Tata Consultancy Services Limited. I want to sell my shares. Company has to involve or no need to involve? No need to involve, but I am requesting company, please, can you please sell my shares as a broker? Company accepted. That's why company has to comply how many sections? 23 to 41. Otherwise, no need to comply. Why? Unnecessary prospectus, publishing a prospectus, filing with ROC, publishing a prospectus, receiving applications, brokers to issue, bankers to issue, application money, separate bank account, allotment of securities, registered issue. Why unnecessary cost only, na? For prospectus itself, you have to spend 2 crores or 3 crores. For preparation and printing of prospectus and publishing of prospectus, and you have to enter into contract with so many persons. For receiving applications, brokers to issue is required, and for book builders, book runners, bankers to issue, registered to issue, underwriters, so many people are involved. ROC, SEBI Act, SCRA Act, Depositories Act, Companies Act, Chartered Accountants. This money cost I have to incur. For what purpose? To sell my shareholder share. So I have no need to follow all these sections, but shareholders requesting me. If I am holding 10 shares, I request TCS, they will agree. I am holding only 10 shares. I went to TCS, can you please sell my 10 shares by issuing prospectus? For selling 10 shares, I have to issue prospectus to the public. I have to spend 10 crores rupees. Do you reimburse 10 crores rupees? 10 shares only value 1000 rupees, 10,000 rupees I will get. I purchase for 500 rupees. Now I will get how much? 5,000 rupees. I will get 10,000. What is the profit? 5,000. For that you have to offer to public. No. If I am holding 10 lakh shares. If I am holding how many shares? 10 lakh shares. Definitely I will make a request to TCS. I cannot, straight away I cannot sell these 10 lakh shares because there is no demand. That's why I will request TCS. TCS, can you please sell this 10 lakh shares to the public? You please issue the prospectus, then they will believe. Who will believe? Public will believe. Because who is issuing prospectus? TCS is issuing prospectus. Because they have to follow how many sections? 23 to 41. SEBI Act, SCRA Act, they have to file prospectus with ROC. That's why public may believe. So can you please sell my securities as a broker? Yes. But brokeration means the charges, whatever I am spending, that you have to reimburse. That is called offer for sale. So company has no need to comply 23 to 41, but company voluntarily acting as a broker. That's why company has to comply 23 to 41. That is a voluntary application. Lawmaker saying, no, you have no need to follow. Existing shareholder, let him sell directly. If I am selling my shares directly, I have to follow Companies Act. Why? I have to follow SEBI Act, SCRA Act. I am a shareholder. I am not a company. I am a shareholder. I am selling my shares directly to the public or private. I will give advertisement in theater. I am having 10 shares in TCS. If anyone want to purchase, please contact so and so number. Then I have to follow 23 to 41. This advertisement I have to file with SEBI, ROC. Why? Not required. Na? So existing shareholder, if you want to sell the shares directly, no need to follow Companies Act, SEBI Act, SCRA Act. But if you want to sell his shares through company to the public, then definitely company has to follow section number 23 to 41, not shareholder. Who has to follow? Company. Company is taking extra risk. Company is taking extra risk. For whose purpose? For promoters and controlling shareholder, because they are holding majority of the shares. Na? That's why they are taking extra risk. Okay. So voluntarily company is applying all these provisions so that lawmaker will give some privileges. Lawmaker will give what? Some privileges. Company, even though you have no need to apply, but you are applying what? 23 to 41, you have no need to comply, but still you are complying 23 to 41 voluntarily. That's why I will give some privileges, means some exemptions. What is that exemptions? We will see later in section number 28. Where in section number 28. Then what about section number 25? Offer of securities for sale to the public. Offer of securities for sale to the public. Sir, what is the difference, sir? Just one proposition is to this side, sir, to that side, sir. Their offer for sale, sir. Here offer of securities for sale, sir. For only changed, sir. For only change, but there is section number 25 here, section number 28. Here positive side, here what ma? Negative side. Company, they want to avoid section number 23 to 41. My first case, positive side. Company, they want to comply voluntarily. Array, company, you have no need to follow. No, sir, I want to follow for my promoters and shareholders. Okay, I will give some privileges, please. Enjoy. But second case is, company want to avoid. You are offering your shares to public. Primary market. Company want to offer securities to public. Then you have to follow how many sections, ma? 23 to 41. Not only Companies Act. Don't look at 23 to 41 of Companies Act. Look at SEBI Act, SCRA Act, Depositories Act also. And you have to list your securities. Once you are listing your securities, SEBI Act, SCRA Act, Depositories Act also, you have to follow. To avoid all these provisions, company is following some other route. What is that other route? I will give shares to you. You please sell the shares to public. Company will offer the shares to one mediator, and mediator will sell the shares to public. So he is existing shareholder selling shares to public. No need to follow Companies Act. And I am offering shares only to one shareholder. It is a private placement. It is a private placement, not a public offer. By that, I am avoiding provisions of Companies Act. So to avoid this type of propagandas, lawmaker, they just added one section, section number 25, that is what? Deemed prospectus, or you can say it is offer of securities for sale. If, for example, I am a company, TCS, don't take TCS for this example. We will take some Infosys, for example. Infosys Limited. Notice of disclaimer, this is only for example. Okay. Infosys Limited, they want to offer securities to public directly. What sections they have to follow? 23 to 41, SEBI Act, SCRA Act, Depositories Act. This much compliance is there. To avoid all this compliance, what Infosys Limited has planned, Infosys Limited will allot shares to one mediator. Mediator may be whoever may be mediator. And mediator will offer the shares to public. So Infosys Limited is offering or allotting shares to mediator. Only one person only, na? Only one person. This is called private placement or public offer. Private placement. For private placement, what sections you have to follow? One single section. Section number 42. No SEBI Act, no SCRA Act, no Depositories Act, nothing. No Companies Act 23 to 41. So happily Infosys Limited with very less cost, with very less compliance cost, with very less issue expenses, they offered securities to whom? One mediator. For example, you can say Mr. X is the mediator. Okay. X is the mediator. X may be a natural person, maybe a artificial person, maybe a company, maybe a partnership firm, maybe a LLP. We don't know who is the mediator. Just taking the help of the mediator. So Infosys Limited will allot shares or agree to allot the shares to Mr. X is only one person, then it is called what placement? Ma? Private placement. What placement? Private placement. Then which section you have to follow? Only section number 42. So Infosys Limited allotted how many shares? Ma? For example, 10 lakhs shares. Is there any rule that number of shares? No, you can allot any number of shares to any person, private placement. Only number of persons only rule is there. How many number of persons you can invite? Only 200. Then only it is a private placement. I am inviting only one person. I am allotting only one person only. How many shares? 10 lakhs. He has a money and I need money and I allot shares. What is your problem? I don't have any problem, sir. You followed section number 42? Yes, sir, I followed. So with his account only money came? Yes, sir. To whom only? Means to that only you have allot the shares? Yes, sir. And you file letter of allotment with ROC? Yes, sir. Okay, section number 42 complied? Complied, sir. Okay, no contravention. Now this Mr. X, what is doing? He is offering his shares to public. He is an existing shareholder. Which shareholder? Existing shareholder. Existing shareholder is selling his shares to public by giving theater advertisement or maybe newspaper advertisement or maybe social media, print media, electronic media, whatever the way, however he want, he can sell. No need to follow Companies Act. No need to follow Companies Act. Sir, existing shareholder, if he is selling his shares to others, then it is a secondary market. It is a secondary market. So there is no need to follow what act? Companies Act. They need to follow through stock exchange also they can sell, or directly advertisement in newspaper, or the address. Sir, I have 10 lakh shares in TCS. Now I want to sell. Yes, I can sell however I want. Who are you to say? I am not a company. I am existing shareholder. I am existing shareholder. I can sell my shares however I want. I have no need to follow any 23 to 41 and all. One small section is the transfer and transmission of shares. That is also for materialized form of securities. These securities are in which form? Dematerialized form. That section also you have no need to follow. From my demat account, I will transfer to other demat account. Who is sending money to my bank account? Who is sending money to my bank account? I will transfer my shares to his demat account. That's all. Transaction is settled. Simple. Okay. So I have to follow 23 to 41. No need. This is okay if two transactions are genuine. If these two transactions are genuine transactions, then agreed. Company issued shares to Mr. X and Mr. X. There is no restrictions on transferability of shares because it is a public company. What company? Public company. So existing shareholder, if you want, you can sell. No need to take the permission from company. No need to inform to the company also. After transfer only they will inform. If it is in dematerialization form, no need to inform to company. Company will come to know. Okay. NSDL, CDSL, they will maintain the records. By that company will come to know. Okay. That's all. We have to take permission from company. Yeah? No need to take the permission. Na? So I am selling my shares to whomever I want, I will sell. What is your problem? No problem, sir. If these two transactions are genuine, no issue. But to avoid this section number 23 to 41, if company is pretending to allot shares to Mr. X and Mr. X is selling his shares to public, then it is a deemed prospectus provisions will be applicable. Sir, how can you decide the genuinity of the transaction? Sir, that is what very important here. Sir, how do you know what are the intention of the parties? What is the intention of Infosys Limited? What is the intention of Mr. X? How do you know, sir? That intention is a question of fact. Intention is a question of fact. Sir, how can you decide this question of fact? That's why lawmaker, to simplify, he just added one more point. Very simple point. Sir, subject to two conditions. If any one of the condition is satisfied, then their intentions are mollified. Their intentions are mollified. Then I will deem it as a prospectus. What is deemed as a prospectus here? Mr. X is offering shares to public, na? For that, if he is using any document, any advertisement, any newspaper, anything, that is deemed as what? Prospectus. Then they will apply what? Section number 23 to 41, SEBI, SERA, everything. Anyhow, they are not compliant, they will levy fines, penalties, allotment is irregular. They will apply 447 fraud, and not only company, but also mediator also will go to jail. Not only company, Infosys Limited, and as well as this mediator X also will go to jail. If he is a natural person, he will go. If he is an artificial person, then partners of partnership firm will go to jail. Directors of company will go to jail. Whatever it may be. So additional conditions. What is that? Additional. You are doing overaction, that's why. You want to avoid 23 to 41, that's why not only company, but also who is liable? That mediator is also liable. Okay? Very good. So, what are the conditions subject to which deemed prospectus provisions you can apply? Time condition, money condition. Either of the one condition to be satisfied. What is that? Time or money. What is time condition? Within 6 months. So, date of allotment is 1st January. Within 6 months means on or before 30th June, if Mr. X is offering his shares to public, then it is deemed as a prospectus. Or what is the money condition? See, Infosys Limited allotted securities to Mr. X, right? For that, Mr. X has to pay money to Infosys. Na? That money, when he is paying actually, when he is receiving money from public. So there is very clear-cut case of nexus in between public and company. It is a deemed prospectus. Their intention is mollified. This is only intention to prove the intention of the parties to the contract. Okay. For that, any one of the condition to be satisfied. What are the one of the condition? One is either time or money. What is the time condition? Within 6 months from the date of allotment by the company, if mediator is offering his securities to public, then it is deemed as a prospectus. And or money. What is money? Unless otherwise the mediator is receiving money from public, is not paying money to the company, then also it is deemed as a prospectus. So this is common sense. It is a common sense. Either of one of the condition is satisfied, then it is deemed as a prospectus. Or what will happen, sir, if it is deemed as a prospectus? What will happen if section number 28 is applied? 25 is applied. Very simple. The document issued by Mr. X to public is deemed as a prospectus. They will apply 23 to 41 and SEBI Act, SCRA Act. Not only this, but also some extra points also. So Mr. X is also liable. Who is liable, ma? X is also liable. And contract in between Infosys and X, that is also you have to inform to public. So what is the contract in between Infosys and Mr. X? You are paying any commission to Mr. X for doing this task, that also you have to inform to public. That is what the extra. That is what extra disclosure. What is that? Extra. If you voluntarily you are applying provisions, then they will give exemptions. But you want to avoid the provisions, they will give punishment. They will give what? Punishment. That is what section number 25 and section number 28. Difference. Please identify the difference in between 25 and 28. 25 is what? Offer of securities for sale. Company is using mediator to avoid provisions of Companies Act. Okay. And what is 28? Company is acting as a mediator. Company is acting as a mediator and voluntarily company is complying section number 23 to 41, even though it is not required. Even though it is not required, voluntarily company is complying section number 23 to 41. That is what section number 28, and this is what section number 25. Now we'll go to section number 26. What is that, ma? Section number 26. What is section number 26, ma? Contents of the prospectus. Okay. What is section number 26? Contents of the prospectus. Not much important actually, because nothing is there in 26. What is there in 26? Nothing. Because what are the contents of prospectus? In section number 26 they said should be prescribed by SEBI. But SEBI so far nothing is prescribed under Companies Act. But until and unless it is prescribed by SEBI, you will follow SEBI Act. Which act, ma? SEBI Act. SEBI Act in your syllabus? No. That's why what are the contents of the prospectus? We don't know. Then if he is asked in the exam, what do you have to write, sir? Write the same thing. As prescribed by SEBI in Companies Act 2013. But so far nothing is prescribed by SEBI under Companies Act 2013 section number 26. For the time being, you should follow SEBI rules and regulations under SEBI Act. Since it is not in syllabus, I am not writing contents of the don't write like that. Okay, write only these 3 points. That's all. Write only these 3 points. Since SEBI rules and regulations is not in syllabus, who the hell are you to ask all these things in examination? You bloody idiot, stupid. Okay, grace marks you should allot. I will not attempt this question. Otherwise, I will file the institute. Okay, your paper will be EFM. You know EFM, na? Unfair means. What is that? Unfair means. Okay, don't taunt the institute. Okay, it is not. You can't. Okay, next. Now, come to the points, or what is there in section number 26. If you want to remember any points in section number 26, first you have to prepare the prospectus and you have to file with the ROC. Okay, along with the declaration. What declaration? Same declaration. Incorporation of a company. What declaration directors are filing, ma? We followed all the rules and regulations, has been complied. Same declaration here also you have to follow. Sir, we complied all the rules and regulations. Companies Act, SEBI Act, SCRA Act, Depositors Act, everything we complied, sir. All the rules and regulations. Like that, the directors has to give a declaration. Okay, all these things common only. Section number 26. Just take it light. Section number 26. But I will give 9 steps. How many steps, ma? 9 steps. Very important steps for entire prospectus. Better if you are not my student, then better to write this 9 steps. Okay. So what are the 9 steps, ma, to understand prospectus and allotment of securities chapter? Step number 1. Step number 1. What is step number 1? Preparation of prospectus. While preparing prospectus, make sure that contents of prospectus should be contents of prospectus as per section number 26. As per section number 26, contents of prospectus. What is it, ma? Sir, what are the contents of prospectus? Nothing is prescribed. Anything is prescribed? To be prescribed by SEBI. To be prescribed by SEBI. Contents to be prescribed by SEBI. Under which act, ma? Under Companies Act. Under Companies Act, who has to prescribe? SEBI has to prescribe. But so far, anything is prescribed? No. So far, nothing is prescribed. So far, nothing is prescribed. Don't expect separate time to note all these things. Writing extra in Maradana. Again, giving time to note down everything is not possible. Okay. So far, nothing is prescribed. That's why what you have to follow? How to prepare a prospectus? As per SEBI rules and regulations. As per which rules, ma? SEBI rules. Under which act? Under which act? Under SEBI Act. SEBI rules under what act, ma? SEBI Act. This is what? First step. Step number 1, preparation of prospectus. Sir, how to prepare a prospectus, sir? What contents to be included in the prospectus, sir? Okay. So, very simple, ma. As prescribed by SEBI in Companies Act, but nothing is so far is nothing is prescribed. So, for the time being, we should follow SEBI rules and regulations under which act? SEBI Act. Okay. Next. And for this contents of prospectus, one exception is there. Exception to contents of prospectus. That is very important. Maybe there is a possibility to ask in MCQ. Exceptions to the contents of the prospectus, section number 26. What is that, sir? Two cases, ma. First case, offering to, you are offering your securities to existing shareholders or debenture holders, whatever it may be. Existing shareholders or debenture holders. You are offering your securities to existing shareholders or debenture holders, then this contents of prospectus is not applicable. All the contents you have no need to, because already they know about the company. Especially how to say, na? Because already they subscribed the shares and all, they know about the company. That's why you are offering to existing shareholders and all, no need to follow these contents of prospectus. Second exemption is same class of security, same class, which is already same class of securities, which is already offered to public and listed on stock exchange. 1 lakh equity shares at the rate of 10 rupees face value each. This type of shares already issued to public, and those shares are already listed on stock exchange. 1 lakh equity shares at the rate of 10 each. This is called class. This is called what, ma? Class. This class of equity shares already offered to public, and those securities already listed on stock exchange. Now again you want to issue same class, same 1 lakh equity shares at the rate of 10 rupees each only you want to issue. Then no need to give all contents. No need to give all contents, because already this type of shares already issued to public, already it is listed on stock exchange. So information is available to everyone about these shares. So again I have no need to provide the information in the prospectus. Okay. These exemptions are very important. Okay. And next step number 2. Even though my students also, this is a little bit improvised to cover all the points. Okay. To cover all the points, I said for every batch I will improve my notes. So it's required actually. You should update now. I said change is the law of the world. You are not changing yourself, then you will be outdated. You will be outdated. So you should improve batch by batch. We don't know. It's a little bit improvisation. Anyhow, it is covered somewhere, but not in these points. Okay. Next, point number 2. After preparation of prospectus, what is the next point? It's a small point. Just file with SEBI for drafting. We are not going to do that because SEBI is not in our syllabus. Draft prospectus. What is that? Draft prospectus. You have to file with whom? For SEBI. SEBI is something they will do. We don't know. Please don't ask me. This is not my cup of coffee or tea or boost or Horlicks. Okay. Please don't ask me SEBI Act rules and regulations. And for you also not at all. It is required. You are not supposed to write anything about SEBI Act rules and regulations in your exam. Please don't do overaction. Please don't do overaction. Don't be over smart. Okay. Without asking, writing SEBI rules and regulations, valuer will fed up because valuer don't have a knowledge of SEBI. Then you are writing SEBI Act and all. So you are actually insulting the valuer. Okay. Please don't do all these overactions and all in your exam. Next, third step. File with ROC. What is the third step, ma? File with ROC. Our ROC, ma. Companies had MCA ROC. Okay. Registrar of Companies. Okay. Big admi. So with the ROC, you have to file your prospectus. Simple, sir. Third step. No, not simple. When you are filing with ROC, what you have to do, ma? Consent of, along with consent of directors, promoters, comma, experts, or any other person authorizing the issue of prospectus. Authorizing the issue of prospectus. Promoters, directors, you know very well. Expert, independent person. Who is the expert, man? Independent person who is giving his reports and all to be included in the prospectus. He is an expert. Maybe you are also an expert. So your reports, your projections, your P&L, estimated P&L, balance sheet, everything may be included in the prospectus. Then you are called an expert. Your consent also to be filed with the ROC. So yes, I am giving this report and this report can be included in the prospectus. I don't have any objection like that. You have to give your consent with ROC. That is what along with consent. Not only consent, but also declaration by directors. Who has to give, declaration by directors. What declaration directors has to give, that all rules and regulations has been complied with. That all rules and regulations has been complied with. One declaration has been given by the directors that all rules and regulations has been complied with, and you know very well whatever the information provided is correct and complete. That's all. One declaration to be given by directors that all regulations has been complied with. All regulations means what? Companies Act, SEBI Act, SCRA Act, Depositories Act, all regulations has been complied with. Like that, you have to give a declaration to ROC. Okay, right? This is what third point. Please follow my words and my whatever I am writing in notepad also simultaneously. Otherwise, you can't understand. నేను మాట్లాడేటప్పుడు మీ చెవులు మాత్రమే కాదు చేతులు కూడా పనిచేయాలి. ఓకేనా? నెక్స్ట్ థర్డ్ పాయింట్, ఫోర్త్ పాయింట్. వాట్ ఇస్ ఫోర్త్ పాయింట్? ఆఫ్టర్ ఫైలింగ్ విత్ ROC, what will do, ma? We prepared prospectus and we filed with SEBI for drafting. After drafting, we filed with ROC. What is the next step? What we will do? For what purpose you prepare prospectus? For offering, inviting public only, na, to subscribe your securities. Then you are filing prospectus with ROC, public will come to know, na. Then what you have to do? You have to publish the prospectus. Within how many days you have to publish? Publishing of prospectus. Publishing of prospectus. Any question from prospectus chapter, you can answer from these 9 points. Publishing of prospectus. Within how many days, ma? Within how many days? Within 90 days. Within how many days? 90 days from the date of filing with ROC. 2 marks MCQ they can ask. Even CMA they asked for 2 marks. Date of filing with what is the validity of the prospectus, ma? After filing with ROC, how many days prospectus is valid? 90 days. Within 90 days, what you have to do? You have to publish the prospectus to public actually. Shelf prospectus is having a life of 1 year. That is a different story. We will discuss later. Shelf red herring prospectus. Deemed prospectus already completed. So you have to discuss red herring and shelf prospectus. Okay. This is a different story. So normally prospectus within how many days you have to publish to ROC, ma? Means you have to publish within 90 days from the date of filing with ROC. How to publish? How to publish, ma? You have to give abridged prospectus. What is that? Abridged. Abridged prospectus to be filed. Abridged prospectus. What is abridged prospectus? Summary of the main. It is not possible to distribute 1000 pages of prospectus to each and every person. Pavala kodiki muppavala masala iddi. It is not possible. Okay. So you want to procure 1000 crores from public. For that you are spending 1 lakh crores. Then you are an idiot. You want to procure how many funds? 1000 crores. For that you are spending how much money, ma? 1 lakh crores. To distribute the prospectus for 100 crores of investors, it is not possible. Okay. That's why we are only giving what, ma? Abridged prospectus. Summary of the prospectus in 1 or 2 pages. Okay. Abridged prospectus along with application. Along with application form. And advertisement in newspaper. Advertisement in newspaper. This is called publishing of prospectus. Advertisement means entire prospectus you are going to give advertisement. No, ma. What is the date of offer? Opening the offer, closing the offer, how many shares you are offering, what is the price, bando, price, and what is the company name, objective, situation clause, means MOA, information of MOA, and as well as your information about your offer. That's all. That is what you are going to advertise in the newspaper, and you are going to provide application forms along with abridged prospectus at designated centers. Brokers to issue. Who is that? Brokers to issue. Applications are readily available. You can go to that broker and you can take an application and you can fill it and you can send to the, you submit to the broker. Broker will forward to the book builders or book runners. Book builders, book runners, they will book the they will prepare the summary of the applications received from the public after closing the offer. If it is a red herring prospectus, they will decide the final price. They will decide the final price. If it is a normal prospectus, already price is prefixed, so whether applications are received to cover the minimum subscription or not, that they will decide. If it is under subscription, then underwriters will subscribe the remaining shares, then they will allot the securities, and after that they will list the securities. That's all. That is what the process. So prospectus chapter is very easy if you have some general knowledge. Unlike incorporation of a company chapter, prospectus chapter is very easy if you have some common sense, general knowledge. Okay. Next, what is the next step, ma? Fifth step, after publishing prospectus, invitation cards also we distributed. What will happen, ma, if invitation cards are distributed for your marriage? Next marriage only, na? Relatives will come. Who will come, ma? Relatives will come. Here, who are the invitees here? Public. Who are the invitees here? Public. Then public, what they have to do? They have to come to your home, No, public has to make a application. Open the offer. First you have to do, open the offer. Open the gates of that convention hall. Okay, open the offer. You are giving invitation to subscribe. Okay, in which days I have to make an application. Open the offer. For what purpose you are opening the offer? Open the offer to receive applications. To receive applications from public to cover minimum subscription. Each and every point we are writing is very important. 5 marks question. To cover minimum subscription along with application money. Along with application money. Even though more than I am writing the points means you please understand the relevance of these points. Otherwise I will not write it. I am not supposed to write in more than. Okay. So open the offer to receive applications from public. Tell me how many days offer will be opened, ma? How many days the offer will be opened? How many days you have to wait to receive the applications to cover minimum subscription? Today we issued prospectus. Okay, offer is open. How many days the company will wait to receive the applications to cover the minimum subscription? So here first point is how many days company has to wait, or simply I can say duration of offer. What is that? Duration of offer. Tell me what is the duration of offer, ma? What is the meaning of duration of offer, ma? How many days company has to wait to receive the applications? How many days company has to wait to receive the applications from public? Tell me what is the duration of offer? What is the duration of offer? How many days company has to wait to receive the applications from public? Forever? 1 year? 2 years you will wait? No, ma. As per company said, 30 days. 30 days from what? From the date of publishing prospectus. From the date of publishing the prospectus. DOP means date of publishing. As per SEBI, as prescribed. I will not go into SEBI Act. SEBI Act also they will prescribe 3 days or 6 days or 9 days or 12 days. If you observe now, each offer is having some duration. 3 days, 4 days, 5 days. Okay. Then which act we have to follow? Companies Act or SEBI Act? Both acts, harmonious construction. Okay. What is harmonious construction here? Whichever is earlier. Whichever is earlier. Then you followed both the acts. No problem. No conflict. Please don't raise the conflict, resolve the conflict. That is what harmonious construction. Any conflict in between companies Act, SEBI Act, please don't raise the conflict. Resolve the conflict. So whichever is earlier means both acts has been followed. Na? As per Companies Act within 30 days, SEBI Act 9 days. Then you are following 9 days means Companies Act is also followed. SEBI Act is also complete. That's all. Whichever is earlier. So first point is duration of offer. How many days company has to wait to receive the applications? So as per Companies Act 30 days. As per SEBI, as may be prescribed. So whichever is earlier. Next, second point in this sub point. What is the second point, ma? Minimum subscription. What is the minimum subscription? Minimum subscription. Ma, I used 3 words here. One is to receive, open the offer. Open the offer. Okay, what is the, how many days you have to open the offer? That is what 30 days or SEBI, whichever is earlier. Then minimum subscription. Minimum subscription means we are going for 100 crores, means 10 lakh shares I am offering. Each share is 1000 rupees. 10 lakhs into 1000 means how many crores? 10 lakhs equity shares I am offering to public. Each share price is 1000 rupees. Can you please calculate 1000 into 10 lakhs? Law exam you are not bringing calculator. Please bring the calculator for law exam or law classes also. Calculator is required. Okay, 10 lakhs into 1000 how much? 100 crores. Offer size is 100 crores. What is the offer size? 100 crores. Tell me what is the minimum subscription? Everyone is saying 90% as per SEBI, not as per Companies Act. First of all, what is the minimum subscription? Minimum amount. For what amount you have to receive the applications. Means for how many shares you have to receive the applications from the public. That is called minimum subscription. What will happen if you are not receiving applications for minimum subscription? Your public offer is failed. Your public offer is failed. You want to procure the funds from public for some specific purpose. For that you are issuing prospectus, but public is not responding to your offer. Means your public offer is failed. Sir, what will happen, sir, if public offer is failed? Then just wind up that, sir. Not company, wind up the offer. Not the company, wind up the offer. Subscription. How much amount of minimum subscription as per Companies Act? Companies Act. Companies Act, what is the minimum subscription? Amount stated in the prospectus itself. I took an example in our regular classes. Okay, please refer the example once to understand what is the amount stated in the prospectus. But for the time being, in your examination point of view, please remember amount stated in the prospectus. Amount stated in the prospectus. Amount stated in prospectus. SEBI, as per SEBI, 90%. How much, 90% of issue size. What is the issue size in our example, 100 crores. 90% means 90 crores. But in prospectus, you should clearly mention for what purpose you are procuring funds. And how much money, minimum money you required, you are expecting from the public. So I said 1000 villas example, right? So 1000 villas example, you want to construct 1000 villas in Amaravati city. How much money you request? 1000 crores. For that you are investing 1 crore shares at the rate of 1000 crores. But out of this 1000 crores, 500 crores from bank loan, 500 crores from your public offer. You are expecting 500 crores from the public offer. If you are receiving that 500 crores, okay, is enough to complete this project. You are not receiving that 500 crores, then you cannot go ahead with the project. You have to refund the application money. So minimum subscription as per Companies Act, amount stated in the prospectus, or as per SEBI, 90% of the issue size. Then which you have to follow, Companies Act, SEBI, whichever is higher. Whichever is higher. So in this point itself, one more sub point, application money. What is that? Application money. How much application money they have to pay, Application money. How much application money they have to pay? As per company, along with application they have to pay what, Application money. Along with application they have to pay what, Application money. How much application money they have to pay? As per Companies Act, 5% of face value. As per SEBI Act, 25% of issue price. Whichever is higher. Both sections you have to follow. Whichever is higher. That's all. That is what point number 4. Very important. In point number 4, there are 3 sub points. Point number 4, how many sub points? Point number 5, sorry. Point number 5, how many sub points are there? 3 sub points. One is duration of the offer, very important. And minimum subscription, equally important. And now application money, that is also maybe MCQs. Very important for MCQs. All these concepts are important for MCQs. Okay, 5th point is completed. What is 5th point, Step by step, please revise all the points once again. First point, preparation of prospectus. While preparing prospectus, what you have to keep in your mind? Section number 26. What is 26? Contents of the prospectus. Please revise. Contents of the prospectus. Contents. What contents you have to include in the prospectus? Prescribed by SEBI. Nothing is prescribed. That's why you are following SEBI rules and regulations. That's all. And after preparing prospectus, you have to file with what, SEBI for draft prospectus, and after that you have to file with ROC. When filing with ROC, you have to keep in your mind 3 points. One is consent of all directors, promoters, experts, or who are the persons who are authorizing the issue of the prospectus, and directors has to give a declaration that all rules and regulations has been complied with, and whatever the information provided is complete and correct. And when this section number 26 is not applicable, contents of the prospectus, when it is not required to provide exceptions. Okay, you are offering to the existing shareholders or security holders or same class of shares you are offering, then this 26 contents of the prospectus is not applicable. Then next step is publishing of prospectus. How to publish? Along with abridged prospectus, along with application form, by giving advertisement in the newspaper within 90 days from the date of filing with the ROC. Then what is the next step after publishing prospectus? After creating awareness to the public that the companies are inviting you to subscribe the securities, you have to open the offer. So what is the duration of the offer? 30 days from the date of publishing prospectus, or as prescribed SOP, whichever is earlier. Within this duration, what you have to receive? You have to receive applications for to cover what subscription? Minimum subscription. Along with what money? Application money. What is the minimum subscription? Amount stated in the prospectus as per Companies Act, or 90% as per SEBI, whichever is higher, because harmonious conjunction, both sections you have to follow, both sections you have to comply. And what is the application money? You have to get 5% of the face value, or 25% of the issue price, whichever is higher. That's all. That is what point number 5. And this application money, along with application money, which is to be kept in a separate bank account. Can you please don't mind? Which is to be kept in a separate bank account. You cannot utilize money. You have to keep in a separate bank account. That point also I covered. See, I will not by heart anything, and I will not dictate anything here. Whatever I want to convey you, that I will convey to you. That's all. There is no pre-written notes here. Nothing. Okay. I want to cover all the points. Maybe the notes may differ from your original discussion also. May differ. That I already admitted my point there itself. Okay. From one batch to another batch also my notes may differ. But I will cover all the points. But maybe presentation, way of presentation may differ. That we don't know. That will improve. Okay. Next. Point number 6. What is point number 6, ma? After receiving applications from the public, what you have to do? Allotment of securities. Very simple. Okay. After receiving. But before going to point number 7, point number 6 is there to mitigate the risk of. What is the risk, ma? Bride elapse. Okay, that is what the risk, na? What is the risk here in public offer? Not receiving applications from public. After making all efforts, after spending all money, conventional fees also paid, decoration amount is paid, already everyone eat. Okay, so that expenditure also incurred, everything is done, but there is no marriage. Then how? Okay, that's why to cover this risk, company has to enter into underwriting to mitigate the risk of. What is the risk of? Risk of not getting applications. Risk of not getting applications from public. What we will do, ma? Enter into underwriting agreement. What agreement? Underwriting agreement. Enter into underwriting agreement. Should compromise. Next. Come to the point. To mitigate the risk of not getting application from public, enter into underwriting agreement. Okay. Agreement 2 types, ma. Absolute or conditional. What underwriters will do? You are entering into underwriting agreement. For what purpose you are entering into underwriting agreement, ma? To cover the risk of not getting applications from public. So if you are not receiving applications from public, what underwriters will do? They will subscribe. So how many shares are pending? That shares they will be subscribed. Who will subscribe, ma? Underwriters will subscribe. For that only we are entering into underwriting. Then why unnecessarily they are taking risk? Our risk. Ma, that is our risk. They are taking our risk. Why? So by paying what, ma? By paying what? Commission. By paying commission to underwriters. We are paying what, ma? Commission to underwriters. So how much commission you have to pay? That is the issue. That is what the point I want to highlight here. How much commission you have to pay to the underwriters? Commission in case of shares. In case of shares. In case of debentures. In case of shares, how much commission you have to pay, ma? 5% of issue price. Don't think 5% of face value, no. 5% of issue price are prescribed in AOA. Prescribed in articles of association. Whichever is less. Whichever is less. Whichever is less. Maybe 2 marks MCQ they will ask, ma. I am not saying they will ask 5 marks questions. Maybe they will ask 2 marks MCQ is very important. In case of debentures, 2.5% of issue price are prescribed in AOA. Prescribed in AOA. Articles of association. Whichever is less. How to pay commission, ma? Commission to be paid out of out of profits or issue proceeds also, whatever, however you want, you can. Out of profits, existing profits, or out of issue proceeds, however you want, you can pay underwriting commission. Okay, either from profits or from issue proceeds. Means you are taking money from public now, from that money also you can pay the commission, or otherwise, sir, I have already existing profits, sir, from that profits also you can pay the commission. There is no restrictions to pay the underwriting commission. From any source you can pay the underwriting commission. Okay, this is what about point number 6. Okay, so we are opening the offer and we are taking the applications from the public to cover the minimum subscription along with the application money. In case we are not receiving applications, we are entered into underwriting agreement, then they will subscribe the remaining shares. For that we are paying what, ma? Commission. And commission, how much commission you have to pay to underwriters, ma? 5% or prescribed in AOA, whichever is less. In case of debentures, 2.5% or prescribed in AOA, whichever is less. And I gave an example for calculation of underwriting commission. Please refer that example. It is not possible to give the example now. Okay, one practical example also I provided for calculation of underwriting commission. Sir, is it they will ask in the examination? So far they didn't ask. But the problem here is now in CA Inter accounts syllabus, underwriting chapter is not there. In your old scheme, CA Inter accounts, underwriting is there. But in new syllabus, CA Inter underwriting commission is moved to CA foundation maybe. So there is a possibility of asking underwriting commission in CA Inter law exam. Please, next point. What is the next point? My 7th point. Yes, we received applications from public. Next what? Allotment of securities. No, before going to that point, one more point. Okay, if you are not receiving applications from public to cover minimum subscription within the duration of the offer, what you will do? Sir, underwriters are there. Underwriters will not cover everything. You took insurance policy, medical insurance. Okay, very good. You paid premium to insurance company 10,000 rupees per year. You went to hospital. You hospitalized this year and you paid a bill of 1 crore rupees to hospital. Your insurance company will reimburse. They will reimburse only 5 lakhs. Because what is the insurance coverage amount? Only 5 lakhs. I offered 1 crore shares to public. I offered how many shares? 1 crore shares. But I received only one application from public. Remaining 9 lakhs, not 9 lakhs, 99 lakhs, 99,999 shares, underwriters will subscribe. Then he will become insolvent. How he will? It is not. That's why I said underwriting agreement is 2 types: absolute, conditional. Some normally conditional. What is conditional underwriting agreement? He will keep a limit. Sir, I will subscribe only 10,000 shares, sir, max. Or I will subscribe 20,000 shares only, sir. I cannot subscribe all the shares if you are not receiving application from public. Okay. So even though you are entering into underwriting agreement, still there is a risk of not getting applications. So bride sister also allowed. What we will do? It is not possible to marry some other. It is not possible. So bride, okay, bride not there, bride sister also already committed. Then what we will do? Okay. So there is no other alternative. Sir, for underwriters again we will enter into underwriting. Okay. Umbrella, raincoat. Okay. Everything you will carry. It's not possible. For protection. For entrenchment. No. Okay. Now come to the point. So this one, point number 7. If applications are not received, to cover positive side we will discuss later. First we will discuss about negative side. మన పెద్దోళ్ళు ఏమన్నారంటే కీడెంచి మేలంచమంది. మీకు తెలుగు సామెతలు తెలియవు, ఇంగ్లీష్లో అర్థం కాదు. Means if you want to take a decision, just think negatively first. What is the outcome of negative side of that particular project? Then only you will think of positive side of the project. Okay, so కీడెంచి మేలంచాలి. Okay, but positively you should think. But before thinking positively, what are the negative sides also you have to analyze. First you have to analyze the negative side. Okay, so if applications are not received to cover minimum subscription within the duration, what is the duration, ma? Within the duration, then what company has to do? Company has to refund application money. Sir, can we adjust with the applications received? No. You should receive applications to cover minimum we are expecting 90 crores from you, but we received only 80 crores from you. Can I proceed with allotment? Sir, we can proceed with 80 crores. No, you cannot proceed. You have to refund all 80 crores, it is not possible. For your project, how much requires? 100 crores or 90 crores, sir. But you received only how much, ma? 80 crores. How can you complete the project? It's not possible. No, sir, we will adjust with 80 crores. Then whatever the information you are providing in prospectus is not correct. So it is not possible. If you are not receiving applications to cover minimum subscription, either from public or from underwriters, then no doubt you cannot proceed with the allotment. You have to refund the application money. Public offer is failed. Public offer is failed. You have to refund the application money within how many days, ma? Within 15 days. Within how many days? 15 days. Otherwise, pay interest at the rate of 15%. Don't confuse in between private placement and public offer. It is a public offer, not a private placement. It is not a private placement. It is a public offer. Within how many days you have to refund? 15 days. From what 15 days you have to count? From what date you have to count 15 days? Everyone will say 15, 30, 45. The problem is from what date you have to count 15 days? After closing the offer. What is that? After closing the offer. When you have to close the offer? As per companies are 30 days. As per SEBI, we don't know. Whichever is earlier. You are opening the offer, you are closing the offer. After closing the offer, you are not receiving applications, and within 15 days, what you have to do? Refund. Otherwise, you have to pay what? Interest. From what date? From closing of the offer. Not from expiry of 15 days. From closing of the offer. There is no time to take the examples and to explain how to counting of dates and all. That is in general class at one date is there. From date to date. Okay. That we will see later. Next. Eighth point. Now positive side. After discussing all negative sides, we are going to positive side. What is the positive side, ma? We received applications to cover what? Minimum subscription. Then what you will do? Allot the securities. Allotment of securities. Within how many days you have to allot the securities? Allot the securities if applications are received. If applications are received to cover minimum subscription, MS. Minimum subscription. Tell me within how many days you have to allot the securities? See, we open the offer and we received applications. We close the offer and we received applications to cover minimum subscription either from public or underwriters. Everything is positive. Tell me within how many days you have to allot the securities? Tell me within how many days you have to allot the securities? Slowly I am going to regular classes. This is not Marathon. This is Marathon. Okay. Allotment of securities. There is no time prescribed by. No time prescribed in Companies Act. No time prescribed in which act, ma? Companies Act. So which act you have to follow? SEBI Act. Sir, how much time is prescribed in SEBI? Not my copy. Okay. Next. 9. After allotment of securities, what you have to do? What is the last step? After allotment of securities, what is the last step? Filing return of allotment. Filing return of allotment. With what, ma? ROC. Filing return of allotment with ROC within 30 days. Within 30 days. Within 30 days from the date of allotment. From the date of allotment. From the date of allotment within 30 days you have to file with ROC. Then only you can use the application money. Then company can use the application money. Until that, it should be kept in what account, ma? Separate bank account. This is the story of the prospectus. Please read all 9 points once again before going to exam. Not exam, even every day you can read. No issue. Okay. Daily 9 points, read and sleep. Prospectus chapter is completed. Now we are going to specific points. These are all general points to understand the prospectus chapter. These are all the general points to understand the prospectus chapter. Indirectly, I covered section number 39, section number 40 also, and section number 26 and section number 28. Okay, these are all the sections already I covered indirectly, but I will go section by section once again. Already we covered section number 23, 25, 26, and what is 27, ma? Variation of terms in prospectus. What is section number 27? Variation. You forget all section numbers, huh? I am saying section number 27. Oh, variation. Okay. Section number 27 is variation of terms in prospectus. No need to discuss separately because already object class section number 13, alteration of object class, taking money from public which is not utilized for the purpose for which it is procured. Same process here. Already we covered in section number 13, object class alteration. You are receiving money from public and you are not utilizing that money for what purpose it is procured. Same process. What is the process? Once again, can you please tell me? Board of Directors resolution, general meeting special resolution through postal ballot. Special resolution through postal ballot and advertisement in newspaper and dissenting shareholders exit option by the promoters or controlling shareholders. The same process in section number 27 equally important. Last attempt they asked variation of shareholders rights. Section number 48 maybe, if I am not wrong. Okay, variation of shareholders rights they asked. We'll see in share capital and debentures chapter. But maybe this time they will ask variation of terms in prospectus or alteration of object class. I am expecting. Okay. So this is section number 20. How much? 27. 28. Offer of securities for sale. Deemed prospectus. What is that? Deemed prospectus. Already completed. Now section number 29. What is section number 29? Dematerialization of securities. I am not going to write. So please. Dematerialization of securities. Section number 29. Dematerialization of securities. Okay. Sir, what is this dematerialization of securities? To be read with rule number 9, 9A, 9B of Companies Prospectus and Allotment of Securities Rules 2014 as amended from time to time. Section number 29, you should read with rule number 9, 9A, 9B. I will only explain the summary of all these sections. And this may not be asked in the exam because rule number 9B not notified by your institute so far. Rule number 9B is not notified by your institute so far. That's why it is not important for this attempt. For maybe May 2025 attempt, it is very important. Rule number 9B, section number 29. But I will give only summary. So as on today, what is the status? After reading 29, 9, 9A, 9B, very simple. All securities to be issued in dematerialized form. Dematerialization you can divide into two parts. Fresh issue, conversion. Already one chart is provided to you. Dematerialization of securities, section number 29. I divide into two parts. What is that? Fresh issue or conversion of existing securities which are already issued in materialized form. What is that? Materialized form. To understand this dematerialization of securities, section number 29, you please refer my chart. What is that? How to purchase securities through stock exchange. I said bank account, demat account, online trading account. Bank account for what purpose you are opening, demat account for what purpose, online trading account for what purpose, who is regulating bank account, which act, demat account, online trading account, what is the connection in between demat account and online trading account and bank account, how securities are to be converted into dematerialized form, depositories will issue ISIN number. What is that? ISIN number. All these things you should please revise to understand the concept. For examination not required, to understand the concept. And now I am not going to explain all those things. It is not a regular class, please. Okay. So I am just referring that table. Please refer the table once in your running notes. Okay. Now come to the point. Dematerialization means not in physical form. Not in physical form. Securities, equity shares, preference shares, debentures, all securities issued by the company after 30th September 2024. I am saying once again, after 30th September 2024 till not yet notified by your institute. Okay, after 30th September 2024, any company, private company, public company, listed company, unlisted public company, don't mind, one person company, anyhow they will not issue any shares, only one member is there. Okay, you will only take the shares. Even one person company also, even OPC also, they have to issue securities in which form? Dematerialized form only, except small company. Except what company? Small company. Except small company for the financial year 2023-24, except that company, all other companies, they have to issue securities only in which form? Dematerialized. Step by step, rule number 9, 9A, 9B. Now, what is the case now? What is the situation? All companies, they have to issue securities in what form? Dematerialized form. And what about already issued securities in materialized form, sir? They have to convert that, sir. By hook or crook, lawmaker is insisting you to convert all securities into what form? Dematerialized. That's so. That is a summary of section number 29. No more discussion about section number 29. Now we'll go to section number 30. What is that? Section number 30 is actually not there. Abridged prospectus something. So not in your syllabus. Don't worry. Now 31. What is 31? Shelf prospectus. From last 5 to 6 attempts, examiner is not asking any question from the shelf or prospectus or red herring prospectus or deemed prospectus. From last 5 to 6 attempts, there is no question from types of prospectus. Types of prospectus: shelf, red herring prospectus, deemed prospectus. Section number 31, section number 32 and section number 25. Okay, 25 is the deemed prospectus and 31 is the shelf prospectus and 32 is the red herring prospectus. 33 is the abridged prospectus. So they are not asking even one question also from these sections from last 5 to 6 attempts. Sir, why sir you are highlighting? It is unimportant you are saying. Important you are saying. You are saying, you are thinking one side, it is unimportant. You are thinking another side, important. Last 5 to 6 attempts they are not asking, means maybe next attempt there is a possibility to ask. Then tell me, sir, all important. This is not asking, that's why important. This is asking, that is important. If I am saying you have to read all the questions, then you will feel very bad. Other than that, what I will say, this is important because it is not asking in exam. And this is unimportant because this is also important because it is repeatedly asking. Right? Simple. Then students are happy. Oh, faculty is giving very good inputs. Okay, very good. He is saying very good inputs. What inputs? I am saying indirectly everything is important only. If I am saying everything, all questions you have to read, students will deny immediately. Sir, how sir? All questions you have to read. It is not possible, sir. This much syllabus out. And what you are doing from 9 months? Chakka bhajana? 9 months, what you are doing? Doing chakka bhajana? So last 9 hours before exam, someone will send a message, sir, how to clear law exam? Okay, very good, ra. Boom, bush. I will give one mantra, ra. Write that mantra in exam, ra. You will clear your law exam. Then I will not be here. I will consult one ashram like Sadhguru, what is that fellow? Nishana, Mashana, something, some ashram is there. Isha. Like that also I will start one foundation, Nisha Foundation. Why I will be here? Why unnecessarily I am wasting time for you? No, I will earn crores of rupees there. By starting one ashram here, mantras will be there for to clear the CA final exam, CA inter exam. So many people will come. Must come to the point. Shelf prospectus is very simple. Normally prospectus life is 90 days. But the companies who are going to public offer repeatedly, very frequently they are going for public offer. In 1 year they are going for 3 to 4 times. Normally it is not possible, but nowadays maybe it is possible. Normally company means in 1 year only 1 or 2, no, even in a lifetime only once they will come for public offer. But nowadays they are coming for every 1 month also they can come for public offer. Okay, so that type of companies who are recognized by SEBI, only prescribed by SEBI, that companies only they can avail this advantage. What is advantage of shelf prospectus? Prospectus shelf life is increased to 1 year. Shelf life is increased to 1 year. I just took an example of your main material and supplementary material to make you understand this shelf prospectus. Okay, so what is main material, supplementary material? Your institute, ICAI, your institute is actually last material they printed maybe August 2022. After introducing new scheme only, they released a material August 2022 edition. If I am not wrong, maybe August 2022 edition material. Still that edition only available. But that material is only applicable for next exam or next exam. Only for 2 attempts only that material. For next attempt, they will revise the material. No. They will give only what? 1-2 pages supplementary material they will provide. In the same way, 1 year, I am coming for public offer 3 times or 4 times. 1 year you have how many attempts in 1 year? 3 attempts. For every attempt your institute will release a new material. I am releasing material for May 2024 attempt. Same material you can read, but with some supplementary material for September and for January 25 also. Again for May 25 only I will give you new edition. Okay, same like shelf prospectus, simple concept. No need to confuse shelf prospectus. I am giving one prospectus which is applicable for May 2024 public offer. For September also I want to go for public offer, then no need to prepare the entire prospectus once again. Just I will give what? Information memorandum. What is that? Information changes in between first offer and second offer. Changes in between May 2024 and September 24. What are all the amendments came? That amendments only I will give the supplementary material. By that my purpose is fulfilled. And next January 2025 attempt also I will give one more information memorandum. That's all. But May 2025 once again I have to give a prospectus. So prospectus life is how many years? 1 year from what date? Everyone will say 1 year. That is okay. 1 year from what date? 1 year from the date of preparation of prospectus. 1 year from the date of filing with SEBI. 1 year from the date of filing with ROC. 1 year from the date of first offer after filing with ROC. After filing with ROC, first offer May 24 attempt, May 24 attempt. My institute is releasing material in January 2024 itself for the attempt of May 2024. So you will count 1 year from January 24 or May 24. No. Publishing date is January 24. But for what attempt this material is? May. First offer May 24. From that date you have to count for 1 year. Means next May up to May 25 you can go with the same prospectus. So you please be clear. If you have any confusion in relation to shelf prospectus, please go with your material. Okay. My institute is releasing material in January 2024 for what attempt? May 24. After releasing material, what is the first attempt? May 24. For that attempt, this is the material, final material. No supplementary material is required. Okay. Next, September attempt. Same material plus supplementary material. And for January 25 attempt, same material plus supplementary material. For May 25 attempt, new material, new prospectus. So this prospectus is valid for 1 year from the date of May 24. From the date of first offer after filing the prospectus ROC. That is what you have to remember. And I provided two equations to you. What is the two equations, actually? What is the two equation? For first offer, prospectus is equal shelf prospectus. For subsequent offer, prospectus is equal to shelf prospectus plus information memorandum. Sir, what will be there in the information memorandum, sir? Changes in between one offer to another offer. That's all, as may be prescribed. That is what shelf prospectus. Next one is red herring prospectus, contemporary topic, but no questions are asking from this. I don't know. Red herring prospectus actually with some missing information in the prospectus. What missing information, sir? Maybe price or maybe number of shares. I showed you LIC prospectus and even 197 communication limited prospectus, IE Silks prospectus, 3-4 prospectus. I literally explained the prospectus to understand you what is a red herring prospectus. What is a red herring prospectus, ma? With some missing information, not with incomplete information, with some incomplete information, red herring prospectus. Sir, why is red herring prospectus? To avoid the risk, means to mitigate the risk of overpricing or underpricing. Company don't know how public will react. If I am saying my share price is 200 rupees, na, maybe you think that is overpriced. If I am saying my share price is only 180 rupees, you think it is underpriced. Both are risk only. If it is underpriced, the company will lose. If it is overpriced also, company will lose. What is the consequence of overpricing? Ma public just they are thinking to invest only at 180 rupees per share for you. But you quoted what price, ma? 200. Then overpriced. No applications will be received from public. See, public is thinking how much price, ma? 180. But what is the price offered by you? 200. Then public will reject. That's offer is failed. Offer is failed. Okay. What is the risk of underpricing, ma? Public is ready to make an application for 200, but you are giving what price, ma? 180. Means you are losing 20 rupees per share directly. 10 crore shares, 10 crores into 20. 200 crores you are losing. So overpricing, underpricing, both is risk to the company. That's why to mitigate the risk of this overpricing or underpricing, sir, financial manager of the company, he can decide the price, na, sir. You know valuation of share and all. So okay, if I am thinking something different, and you are thinking different. You know, imperfect capital market. As per financial manager, value is 180, but as per you, value is 200. What I can do? As per my perception, 200, but as per your perception, 180. What I will do? There is a risk of overpricing or underpricing. To mitigate the risk of overpricing or underpricing, we will give range price. Floor price to cap price, 180 to 200. Make application at whatever the price you want. But 180 to 200 not possible. 180 plus yes, 20% is possible. 216 also. 180 plus 36. 180 plus 36 how much? 216. Yes, you can give a range price of 180 to 216, ma. Yes. Then you are giving option to public. Trial and error method. What method, ma? Trial and error. I am not giving the price. I am giving range price. That's all. Price range. You please make an application at whatever the price you want. But at what price public will make an application? No doubt cap price only. Because you are all sheeps. Okay, so company is offering share at 180 to 200. Normally, if anyone is having head on neck, they will make an application on at 180. But our public will make an application at what price, ma? 200 or 216. Never ever in the Indian history, no offer has been closed. No book built offer. If you are issuing red herring prospectus, that is called book built offer. What offer, ma? Book built offer. No book built offer has been closed at the floor price. Every book built offer in Indian history is closed at what price, ma? cap price only, because every public is thinking in the same way. So maybe they have a fear that application may be rejected by the company if you are making an application at floor price. With that thinking, everyone is making an application at what price? Cap price. So that is what red herring prospectus. Red herring prospectus, once again I will explain. You will issue a prospectus with some missing information, probably the price of the share and number of shares. Everything is left to the public only. Let them make an application. After that, we will decide the price and number of shares and issue size also. Everything we will decide after receiving applications from the public. Means after building the books. After building the books. That is called book built issue. What issue? Book built issue. You are receiving applications from company, and after receiving applications, I will prepare the summary. After preparing the summary, means building books, I will finalize the issue price and number of shares. That I will inform to ROC with the main prospectus, full prospectus. That is what the red herring prospectus. Okay, RHP. Then abridged prospectus is not in your syllabus. Then we are going to the last topic of prospectus chapter, misleading prospectus, 34, 35. What is that, ma? 34 and 35. And one small point we missed out, ma, in our 9 points. Last point, one point is there, 10th point. Listing of securities. Actually, in between 8 and 9, you have to write listing of securities on recognized stock exchange. How many stock exchanges you have to list, ma? How many stock exchanges you have to list? How many? Listing of securities on recognized stock exchange is mandatory. You are offering to the public. So if you want, after allotment only you are going for listing. After allotment only you are going for what, ma? Listing. But listing of securities in how many stock exchanges? At least one. At least one recognized stock exchange, or as prescribed in the prospectus. You said in the prospectus, I will list in 4 securities, stock exchanges. Okay. As prescribed in the prospectus. Whichever is higher. Very simple. In your prospectus, you said only one stock exchange. Okay, sufficient. But in your prospectus, you said, please apply for my securities. I will list in 4 stock exchanges. Okay. Then you have to list in how many stock exchanges? 4. If it is not listed, then what you have to do? Refund. Simple. If you fail to list the securities on stock exchange, refund the application money. No? Same within 15 days. Otherwise, along with interest of 15%. That is same. Okay. So similar. Now we'll go to next point. What is that? Misleading prospectus. What prospectus? Misleading. So far, from last 6 to 7 attempts, they are not asking from section number 34 and section number 35. Very short I will discuss. Misleading prospectus means prospectus contains misstatement or concealment of fact. Misstatement of fact, concealment of fact. Both are wrong. Both are misleading only. Either in form or in context. I took examples to make you understand what is in form, in context, true, fair. What is that? True, fair. Now I am not going to take any examples to make you understand the logic behind this form and context. In our auditing subject, true and fair opinion, all these are interlinked. Okay. So now come to the point. What is a misleading prospectus? If your prospectus contains misstatement or concealment of fact, then that prospectus is called misleading. Who are misleaded? Investors are misleaded. By whom? By company. How? By misstating the fact or concealment of fact. So that is what misleading. Sir, what is the consequence of misleading prospectus? Sir, I clearly given very simple notes for misleading prospectus. Who is liable? I just divided the liability into 2 types. Civil liability, criminal liability. 34 criminal liability, civil liability 35. Who is liable? Civil liability, company, directors, promoters, experts, or any other person who are authorized in the issue of the prospectus. For criminal liability, company is not criminal liable. You cannot send company to jail. So other than company means promoters, directors, experts. Promoters and directors are liable for entire prospectus. Experts is only liable for their statements or their reports. If their statement contains any misstatement, then only expert is liable. Otherwise, expert is not liable. Directors, promoters are liable for entire prospectus. Okay. So what is the liability? Civil liability. Aggrieved party may rescind the contract within the reasonable time and he can claim for damages. What is the civil liability? Aggrieved party. Who is the aggrieved party? Who is misleaded by the prospectus, which contains misstatement or concealment of fact, which is material in his point of view. Which is material in his point of view. So the aggrieved party can make an application and means he can rescind the contract within reasonable time, and means he can cancel the contract, he will take the money and he will claim the damages. Damages again I divide into two types, limited, unlimited. When limited damages the intention is the misstatement is unintentional. When unlimited damages misstatement is intentional. I took an example, don't number numerology something, so you please remind that example. Okay, next, sir, what is the criminal liability, sir? 447. Yeah, they all pay what 447. Simply directors, promoters, experts, they will go to jail. 447, 3 years to 10 years imprisonment, otherwise 1 to 3 times fine also they will levy. That is depend upon the high magnitude offense, low magnitude offense, having public interest, not having public interest. 447 is not in your syllabus, you don't worry, just it's a Bucci. So 447, just we don't know who is Bucci, but we'll say Bucci. Okay, 447, persons are liable under section 447. Okay, how to escape from the liability, that is what very important. Escape is very important for us. How to escape from the liabilities? I said 4 points. How many points? 4 points. One is you are not giving your consent. Okay, you are not giving your consent, you are not at all liable. Second point, even though you gave your consent, but you are withdrawing your consent. When you can withdraw, that is what very important. When you can withdraw? Before publishing, after publishing also. But before closing the offer. Before publishing the prospectus, just informed ROC, you can withdraw. But after publishing the prospectus, not possible to inform the ROC. So you have to inform to public, because already prospectus moved to public, actually published. So you have to give a public notice. You have to give what public notice. But before closing the offer, you have to withdraw your consent. Next one, third point, as per your belief and knowledge, whatever the information provided in the prospectus is correct. That is what 3 points. Fourth point is only applicable to directors and promoters, not to the expert. This fourth point is applicable only to the directors and promoters. What is the fourth point? Directors and promoters, they can escape from the liability by referring expert. By referring whom? Expert, sir. He is expert, sir. I am not an expert, so I believed in him. So whatever the information provided by expert, that contains misstatements, sir. For that I am not liable, only expert is liable. So by referring expert statement, by referring extract of expert statement, directors and promoters, they can escape from the liability. Don't waste time for this particular topic more than this. Not required. Unnecessary 4 or 5 questions, maybe 6 questions are there. No, don't waste your time. Okay. Next topic is, so by that we completed 34, 35, 36, 37, 38 is not in your syllabus. We didn't discuss. 36 means inducing persons to invest the money. So 37 personalization something is there. Now we are straight away we are going to what section number 39. What is that? Section number 39. So 39, allotment of securities. Already we discussed when you can allot the securities only after what? After receiving applications to cover the minimum subscription along with application money within the duration, and as well as after listing of security. Yes, for allotment of securities. Okay, allotment listing is simultaneous process. You cannot say which is first, which is last. First allotment, after that only listing of securities, but you have to fulfill all the conditions to allot the securities. Otherwise you have to refund the application money within 15 days. Otherwise pay interest at the rate of 15%. That is what allotment of securities. No need to waste your time. Minimum subscription already we covered, and we covered listing of securities with how many stock exchange you have to list, and how much time you have to wait to receive the applications to cover minimum subscription, and to cover the risk of not getting applications, you have to enter into underwriting agreement, how much commission you have to pay, everything is covered, even though it is not there in your material, Marathon material. Okay. Now section number 42, straight away we are going 42. What is that 42? Private placement. 39, 40 is related to allotment of securities, listing of securities on stock exchange. Okay. 41 is global depository receipts and all. That is I am not discussing, you please refer once, maybe it is covered in the FEMA also. I took an example to make you understand global deposit receipts, and I clearly explain what is the relevance of GDR. What is the relevance of GDR? In your FEMA also, maybe in sources of finance chapter, GDR is there, and in your chapter number 22, companies incorporated outside India, IDR is also there. What is IDR? Indian deposit receipts. So you please expect the question from IDR, not from GDR. Okay. Now next, section number 42. From last 3 attempts continuously they are asking from section number 42 for 5 marks. What is 42? Private placement. We completed section number 23 to 41. Once again, please recap. Section number 23. What is section number 23? Public offer, private placement, types of public offer. Section number 24, not in your syllabus. 25. Offer of securities for sale, deemed prospectus. If company want to avoid the provisions, means intentionally, how to assess the intention, how to come to a conclusion, modified intention or not, either time condition or money condition. That is what deemed prospectus. Then you will apply section number 23 to 41, and some additional points also you have to comply. And section number 26, contents of prospectus and procedure for issue of prospectus, all these things. Section number 27, variation of terms in prospectus, same section number 13. And section number 28, offer for sale. And this is the positive side of the deemed prospectus actually. And section number 29, dematerialization of securities. And section number 30 is not there. 31 is the shell prospectus. 32 is the red herring prospectus. 33 abject prospectus. 34 criminal liability. 35 civil liability. 36, 37, 38 we are not discussing. 39 is allotment of securities. 40 listing of securities. 41 GDR is not discussing. 42 private placement. Okay, so once you should recap everything whatever we are discussing, and you should continuously revise. After marathon again you are throwing the notebook aside. No, it is not means it is not advantageous to you. There is no value addition to you simply by listening marathon. Even though you are listening 10 times 20 times also, you are not revising. There is no value for this. You should revise everything. I am saying again and again, revise the running notes at least, and marathon video and this running notes both together you can revise. Okay, that is what your revision schedule. Okay, next go to 42 private placement. Very important, because they are asking from last 3 to 4 attempts continuously. Section number 42 private placement, because they are asking continuously. There is a scope of asking in your next attempt also. And 42 is very important contemporary topic also. Private placement, because of AP only this 42 is came in Companies Act 2013. 1956 there is no concept of private placement. 2013 only they introduced a separate part in chapter number 3 is called private placement. Very simple to say section number 42. Actually I provided 8 points for private placement in your running notes. 8 points, 7 points. So 9 points. Yes, again 9 points, but I have no time to write the 9 points for private placement. You should please revise the running notes or read the material once more. In short, I will discuss what is private placement, which is not a public offer. And simple to say, you are not offering to public, then it is a private placement. But all private placements are not you are not offering to public means it's not a private placement. There also one restriction is there. You should invite only how many persons? 200 persons. How many persons? 200% in a year. In a year means financial year, calendar year. Always this is a issue. Simply don't say year. In a financial year, company can invite maximum how many persons? 200% in aggregate. In a financial year for each class of security. One default is there. One loophole is there. For every one class of security, you can invite how many persons? 200%. For every one class of security, you can invite how many persons? 200. For equity shares, for 10 rupees face value, I can invite 200%. For 1 rupee face value, I can invite 200%. For 9% debentures, I can invite 200%. For 8% debentures, I can invite 200%. Convertible debentures, non-convertible, secured, unsecured, redeemable, irredeemable, preferential, different dividend rates, cumulative, non-cumulative, participating, non-participating. Like that, I can invite so many classes of securities are there. For each class of security, for one financial year, I can invite maximum how many persons? 200. While counting 200 invitees, 200 invitees, qualified institutional buyers and ESOP not to be invited. Logic I am not going to discuss now. Okay, just remember ESOP and qualified institution. Who is QIB? Okay, why ESOP is not to be counted? All these things we will see later. Not logics here. Okay, next. In aggregate, in a financial year, for each class of security, you can invite 200 persons. I am saying once again, I will provide you the authority matrix, comprehensive authority matrix. That will I will provide. I will write in the notepad comprehensive authority matrix. Already my students, they know very well comprehensive authority matrix covering public offer, private placement, means this debentures, equity shares, preference shares, ESOP, sweat equity, everything I will cover in the comprehensive authority matrix, including deposits also. Including what? Deposits. From no doubt, from this authority matrix, they will ask one question. So I will give you authority matrix after completing acceptance of deposits. Please remind me if I forgot. Okay, after completing acceptance of deposits chapter, I will give you the authority matrix which will cover all the scenarios of Companies Act. Okay, so public offer, private placement, preferential allotment, ESOP, sweat equity. Okay, everything I will cover. Convertible debentures, non-convertible debentures, deposits, public deposits to public, deposits from members, everything I will cover. Don't worry. Okay, this comprehensive authority matrix I will cover. Maybe tomorrow. Please remind me. That is very important. Comprehensive authority, not in your material. That's why I will give the running notes. Material is there, but some parts by parts. Okay, at one place I will give comprehensive authority matrix. And before this prospectus chapter, to complete this prospectus chapter, I want to tell you one small thing. 8 ways to procure the securities. I think that we will discuss in alteration of share capital chapter. What chapter? Alter. That also please remind me. That also notes I have to give. Alteration of share capital. I will tell you how to increase issued share capital, subscribed share capital, called up share capital, paid up share capital. How many ways are available, ma? 8 ways. And how these 8 ways are regulated by the Companies Act, Astadigbandhanam. Okay, this you please tell me. And 8 ways to regulate and means to increase the average share issued share capital. And 9 points authority matrix, 9 points. If I am not wrong, how many points authority matrix, ma? 9 points are there. 9 ways, 9 authority matrix points are there. And 8 ways to increase the issued share capital and called up share capital and paid up share. These 2 points I will give you notes, okay, for all the students, because all of these students are not from my class, na? Okay, and even YouTube viewers also, they should know what is that authority matrix and all. Okay, that is the purpose of it. Okay, next come to the point, private placement. Please, we'll complete private placement. Okay, then we will introduce share capital and debentures. At least 2 or 3 points we will cover share capital and debentures chapter. Okay, now private placement, why it is introduced? Private placement, the only purpose is, please keep in your mind while reading 42, section number 42, the only purpose of section number 42 is to curb the unauthorized flow of the money to the company. So I cannot invest my black money into the company. For that only section number 42 is included in Companies Act 2013. 42 purpose is not to protect the interest of investors, because private placement, government is less concerned. If public is involved, then only lawmaker want to protect the public, but not the private persons. Family members, so friends, so they are giving money to the company. Lawmaker has no need to protect the interest of the investors, because they know about the company already. Ma, if you observe now, in private placement, no prospectus, no contents of prospectus, no publishing of prospectus, no misleading prospectus, no civil liability, no criminal liability, nothing. So section number 42 purpose is not to protect the interest of investors. 42 purpose is to curb the unauthorized flow of the money to the company. Black money you cannot invest in the company either. Anyway, it is not possible. In that perspective only, you please understand section number 42. In that perspective only, you have to understand section number 42. What is section number 42? Very simple. You cannot invite more than 200 in a financial year, aggregate in a financial year. So today it is very important. Even last September 2024 also, they asked this 200 persons only. For this 200 persons only, they asked for 2 marks. 2 marks for 200 persons. Okay. Sir, while counting 200 persons, no, who has not to be counted, ma? QIB and ESOP. You are offering securities through ESOP, then no need to be counted in this 200. Okay, aggregate in a financial year means what? For example, 1 lakh equity shares, 1 lakh equity shares at the rate of 10 rupees face value, 10 rupees face value each, I am offering. Okay, I am offering on 1st January, okay, 1st April 2024, I offered to 100 persons. I invited 100 persons. I invited 100 persons for subscribing. How, what shares, ma? 1 lakh equity shares at the rate of 10 each. Again, maybe in 30th September 2024, again invited another 100 persons to offer the same shares, to purchase the same shares. Again, on 1st March 2024, I want to invite another 100 persons. Possible or not possible? Not possible, because same class of shares you can invite only aggregate in a financial year 200 persons only. Sir, can I invite 1 lakh preference shares at the rate of 100 each, another 200? Yes, happily. Okay, next condition, after completing one private placement only, you can go for another. Completion means what, sir? Either withdrawn or allotted. You are filing return of allotment with ROC, then only completed. You are filing return of allotment with ROC, then only it is completed. Okay, what is the completion of private placement, ma? You have to file return of allotment, then only it is completed. After that only you can go for another private placement. Any security. Sir, I offered 1 lakh equity shares on 1st April 2024. Okay, now I want to offer on 31st January, 31st April 2024, another 1 lakh debentures. Debentures only, yes, you can offer, but you have to complete this private placement, then only you can go for another private placement. Any security. Existing private placement you have to close, then only you have to go for another private placement. You please don't confuse in between these 2 points. Okay, that's why the examples I am explaining. Okay, after one private placement only, another private placement of any security. But while counting the number of members, number of invitees is 200. For class wise, you have to count. How to count, ma? Class wise and aggregate in a financial year. Aggregate in a financial year, you have to count class wise. That is what you have to remember. Okay. Next point is, you have to record the invitees list. You have to record the names of the invitees, and to them only you have to circulate the invitation, and it is not transferable. Only they have to make an application, and application money they have to keep. You have to receive only from their bank accounts. Application money you have to receive only from their bank accounts, and to them only you have to allot the securities. That's all. This is one check. Second check. What is second check? You have to record the names of the invitees, and to them only you have to circulate the invitation, and you have to receive the application only from those invitees only, and application money also only through bank, not by cash, only authorized channels only, through bank only, from their bank accounts only you have to receive the application money, and to them only you have to allot the shares. This is what another check, very important. Next very important point in private placement is allotment of securities. What is that? Allotment of securities. Within how many days you have to allot the securities, ma? 60 days. From the date of receiving application, you have to allot the securities within how many days? 60 days. Why, sir? This condition has been kept to avoid share application money pending allotment in your balance sheet. Before this private placement provisions, every company is keeping crores of rupees of money under the heading share application money pending allotment. Means we received application money, but we are not allotting securities. Is there any point in Companies Act 1956 that within how many days you have to allot? Nothing. That's why in 2013 they said within 60 days you have to allot the securities after receiving application money. Sir, within 60 days if I am not allotting the securities, what will happen? You have to refund the application money within how many days? 15 days. Okay. Sir, within 15 days I am not refunding the application money, what will happen? You have to pay interest at the rate of what? 12%. From what date interest? Okay, I will take an example because it is very important. 1st January applications received. Tell me, what is the last date to allot the securities? Okay, I started counting. 1, 2, 3, 4, 5, 6, 7. What is this? Tell me date. Last date. Theory is very important. Practical only difficult. बोलना आसान है, करना कठिन है. Tell me. What is the last date to allot the securities in case of private placement? I am not talking about public offer. Public offer, no dates are there in Companies Act as prescribed by SEBI. I am talking about what? Private placement. After receiving applications, within how many days you have to? 60 days. For private placement, the SEBI Act has to follow, na? Not at all. Private placement only Companies Act section number 42. Okay? If any contravention of section 42, then it is deemed as a public offer. Then you have to follow SEBI Act, all these things. Okay? Now tell me, what is the last date? 31st. March 1st. 1st March 2024. Okay, you are not allotting the shares within 1st March. Then what you have to do? Refund the application money. Within how many days? 15. Means 16th March you have to refund. If I am not refunding, I am refunding on 31st March or 30th March. Tell me, I have to pay interest at the rate of 12%. From what date I have to pay interest? From 1st March 2024 to 30th March. For these 30 days, I have to pay interest at the rate of 12% per annum. Means 1% per month. So that much calculations they will not ask in Lama, but maybe like me, if anyone is asking exam who is having FM knowledge also, I will ask this type of questions only, including compounding interest, simple interest, daily compounding also I will ask. Okay, that is what comprehensive problems. Okay, next important point in private placement which is asked in your May 2024 attempt on private placement is after allotting the securities, you have to file a return of allotment with ROC within 15 days. How many days, ma? 15 days. Don't confuse in between public offer and private placement. If it is required, please prepare a comparison table in case public offer and private placement, stepwise. Okay. So in case of private placement, within how many days you have to file return of allotment, ma? 15 days, including all the details. Details of applicants, details of receiving application money, details of allottees, everything, Aadhaar card, PAN card, date of birth, everything. All you have to provide to ROC. Nothing can be confidential. Everything is provided to ROC. That's why section number 42 is included. If you understand each and every provision of section number 42, only intention is to protect the, means to curb the unauthorized flow of the money to the company. You cannot invest your black money. It is not possible. Because you have to pay only through bank. And only invitee has to pay the application money. Only his bank account only you have to get. And within 60 days you have to allot. And the total details you have to provide to ROC. Then everything is open. You cannot hide anything. That is the problem. Okay. And after filing return of allotment only, you can utilize bank application money. This point they asked for 2 marks in May 2024 exam. After filing return of allotment only, you should utilize the application money. Even though you allotted securities, you cannot utilize. Only after filing return of allotment. That is what you have to take care of the private placement. Okay. So remaining, sir, authority matrix you didn't discuss, sir. What is that? Authority matrix. See here. Group of persons we covered already, 200. And the private placement shall be deemed to be an offer to the public. If any conditions are not satisfied, then it is deemed as what? Public offer. Then they will apply 23 to 41. SEBI, SCRA, depository, everything is already ready. Okay. Next. What is the next point, ma? Limit on fresh offer. Yes, one private placement you have to complete. Then only you have to go for Another private, this point they asked in September 2024 for 2 marks. Okay, next, multiple offers to same persons, yes, it is possible. And state the manner of issuing private placement. This authority matrix only I am saying, I will give you later. By covering all public offer, private placement, deposits, debentures, ESOP, sweat equity, everything I will cover. Okay, next, these are all normal things only. Filing, return of allotment, all these things you please read once. Manner of subscribing private placement. Time limit for this is what very important. So even from last 3 attempts they are asking these points for 2 marks, 2 marks, 2 marks. Okay, so allotment of securities within how many days, ma? Within 60 days, otherwise you have to refund the application money 15 days, all these things. Okay, by this we completed what chapter, ma? Prospectus and allotment of security. Do you have any doubts in this chapter? Can we go for another chapter, ma? Share capital and debenture chapter. Can we start share capital and debenture chapter? Time permits. GCA IPS. GCA IPS, no need to discuss anything in Marathon. I will give material, you please read the material, that's all. What is there to discuss? Nothing. Okay, now first we will go with share capital and debentures. Again section wise, not topic wise. Section number 43 to 72. Are you sure all these 3 chapters whatever we completed, you are having any doubts? Even though you have doubts, please ask personally after completing the section. In class it is not possible, but I hope I am convenient with that. Okay, so we revised each and every aspect to some extent what is possible. Okay, now completing, we are going to what chapter, ma? Chapter number 4, share capital debentures, section number 43 to 72. Biggest chapter in your company set. Debentures only section number 71, one section. Remaining all section 43 to 70 and 72 is related to share capital only. But from last 2 attempts they are asking from debentures. September 2024 attempt only, debentures there is no question, but they ask straight away from share capital. Share capital also what they are asking, we are discussing buyback, reduction, issue of redemption of preference shares, equity shares with differential rights, so many topics, utilization of security premium, section number 52, all these things we are discussing, but they are asking variation of shareholders rights, issue of bonus shares, section number 63. Straight questions they are asking, and variation of shareholders rights, section number 48. 48. That is that they are asking the same small points. But since they are asking small points, it doesn't mean that we will ignore the important topics. No. Ma, there is no question from buyback and reduction and ESDR from last 5 to 6 attempts. Equity shares with the differential rights, redemption of preference shares, utilization of security premium, and buyback, reduction, there is right shares 62. There is no question from these topics from last 5 to 6 attempts. Okay, last 3 attempts they asked from debentures chapter. Debentures, debenture trustees, what is that? Debenture trustees, simple topics they are asking. Debenture trustee, who can become a trustee, who cannot become a trustee, from that they are asking from last 2 attempts. And last 2 attempts they asked variation of shareholders rights and bonus shares, that's all. So we don't know whether it is important or unimportant, that you up to you. So first we will start with section number 43 as usual. What is section number 43? Types of shares. What is 43, ma? Types of shares. In section number 43 nothing to discuss. Preference shares, equity shares, you know very well what is preference, what is equity. Preference shares which is having a preference than the equity shares at the time of payment of dividend, at the time of repayment of the capital, that is what preference shares 43. But important is section number 43 read with rule number 4 of companies share capital and debentures rules 2014 is equity shares with differential rights. What is that? Equity shares with differential rights. To make you understand how equity shares with differential rights is a powerful weapon to the promoters to control the company with less shareholding, I explained with a very good example. Sir, yourself you are saving very good example, excellent example, that we have to say, sir. Okay, okay, no issue. One example has been given to you to make you understand how promoters are using this equity shares with differential rights as a weapon to control the company with less shareholding. Okay, the one of the difference in between paid up share capital and voting power is ESDR. One of the difference in between voting power and paid up share capital is nothing but ESDR. What is our equation, ma? Normal equation, 1 rupee paid up share capital is equal to 1 vote. What is the normal equation, ma? 1 rupee paid up share capital is equal 1 vote. This is the normal equation actually. This is normal equation. But if equity shares with differential rights, ESDR is two types. What is two types? My ESDR, one is ESDDR, one is ESDDR, other one is ESDVR. Equity shares with differential dividend rights, equity shares with differential voting rights. What is ESDDR? More dividend, less voting rights. More dividend, less voting. Like your retail shareholders, what they want? Only dividend, not voting rights. We are not interested to go on to attend the meeting and cast our vote, raising hands. No, we are not interested. We don't know what is general meeting also. Do you know what is general meeting? We are purchasing shares in a company through stock exchange. They know general meeting, management administration chapter, right to vote. All these things, they are voting by show of hands, voting by poll, resolution through postal ballot. All these things, they know. Quorum, chairman, proxy. We don't know all these things. No, sir. Sorry. We are very sorry, sir. We don't know all these things. Without knowing all these things, you are purchasing shares in companies through stock exchange simply by opening demat accounts and by watching some YouTube videos. That is what we are doing now. Right. Okay. I said already, if you want to purchase shares in company, you should read Companies Act 2013. You should read SEBI Act, SCRA Act, Depositories Act, and RBI Act, Banking Regulation Act. Okay. If you know all these acts, then only you should purchase the shares in companies through stock exchange. Without knowing these acts, ignorance of law is not a excuse. But wonderful activity what we are doing in India, all Indians, what they will believe is we will first purchase, after that we will learn all these acts. Yes. Okay. First we will get the driving license, then we will see how to drive a bike. How to ride a bike. Okay. Normally first you have to learn how to ride, then only you have to apply driving license. You should get driving license and all. But what our Indians will do, they will apply driving license by paying money, they will get driving license. After that on roads they will do experiments. Normally after knowing how to do surgeries, then only they will start practice. But what doctors will do, they will start practice, after that they will know how to do surgeries and all. Maybe one or two patients will die, that is a normal loss. Okay, that is okay, that is normal loss. Okay, normal engineers, what they have to do, engineers first they should know how to construct the building, after that they will get the engineering degree. But what Indians will do, first they will get the degree and after that they will learn how to construct the building. Maybe one or two buildings will collapse, that's all. Normal loss. You know, in cost accounting, normal loss. Okay. Like that, you know, this Puri Jagannath, he lost only 100 crores in stock exchange. What is the problem? You are always listening to successful stories. Please don't listen to successful stories. Maybe out of 100, only one person will succeed in the share market. Remaining 99% will lose. And a simple rule, if someone is getting profit means others are getting what? Loss. If one person is getting 100 crores profit means others are losing 100 crores in the stock market only. There is a giver, there is a receiver. Without a giver, how receiver will be? That is a secondary market. So you are only looking at that successful stories. Don't look at the successful stories and motivated to invest in securities. First should understand all these acts. Companies at least. Prospectus. If anyone is someone is making application through public offer, Bajaj Housing Finance Limited came for public offer. You are making an application. Okay, do you know what is prospectus? I don't know, sir. Prospectus, I don't know. Then how you are making applications, sir? Everyone is making, I am also making. What is wrong with that? Everyone will sell the shares in stock exchange if price is increased. I will also sell the shares if price is increased. That is only I know. That is what I am doing. Okay, don't do all this. Don't ask all these questions. Simple. Okay, now come to the point. Equity shares with the differential dividend rates means more dividend, less voting. ESDVR, more voting, less dividend. So who is attracted for ESDDR? Retail shareholders. Who is attracted to ESDVR? Promoters, because they want to control the company. They are not expecting any dividends and all. They have a long-term objective. They have to do the business. Business should succeed. Company should earn, and the company net worth should be increased. Company brand value, creditworthiness, goodwill should be increased. Then only the share value will increase and their net worth will increase. Okay, if company's net worth is increased, the market price of the equity share is increased, then promoters market value is also, net worth is also increased. That is what the long term thinking, wealth maximization, your FM. But this retail shareholders, there are profit maximization. Today we will purchase shares, tomorrow if it is 10 rupees they will sell. That is what retail shareholders, they don't expect about controlling company, taking decisions, appointing directors, removing directors, all these things they don't mind. They don't know what is general meeting also. That's why they don't want any voting rights. They need what? Dividend rights. But these are very less popular. ESDDR is very less popular. Why? Dividend is optional. Even though you have high dividend rights, but still company has to declare dividend, then only you will get dividend, right? So dividend is optional, discretion to the company's board of directors. Who will decide whether to pay dividend or not? Who will decide? Who is having voting power? Who is having voting power? Who is having voting power? Promoter. So even though you are offering high dividend shares, you will not get dividend until unless it is decided by the company. Company means promoters controlling shareholder. That's why this is very less popular in the market. Which is popular in the market? ESDVR, equity shares with differential voting rights. Means promoters, they will purchase shares with more voting rights and they will sacrifice the dividend rights. Normal equity shares, NES, normal equity shares, say equal dividend rights, equal voting rights. But ESDVR, maybe dividend rights are compromised, less dividend, maybe no dividend also, zero dividend, but voting rights maybe 5 times so, 10 times so. Means 1 rupee paid up share capital is not is equal to 1 vote. For ESDVR, maybe 1 rupee paid up share capital is equal to 5 votes or maybe 10 votes, 20 votes, 30 votes, 100 votes also. We don't know. That is the ratio they will prescribe. So that is what equity shares with differential voting rights. Who are very much interested to subscribe ESDVR? Promoters are controlling shareholder. Who want to control the company with lesser shareholding? Okay, please refer the table. Example I given. What is the investment made by the promoters and retail investors, and what is the shareholding percentage by the retail investors and promoters, and what is the voting percentage held by the retail shareholders and promoters. I gave one table. Please refer the table later. Okay, only for your understanding. If you are interested, otherwise no need. Okay, so for examination point of view, this discussion is okay. But you want more logics behind the equity shares with differential voting rights to make you understand the concept. Refer the examples what we are providing in the regular class, not in the marathon. Okay. Now come to the point, sir. How to issue ESDVR? No doubt, it is a powerful tool. It is a powerful tool to the promoters to control the company. Sir, same language used for entrenchment provisions also. Articles of association, entrenchment provisions also, same language, same sentence used, sir. It is a powerful tool to the promoters to control or to direct. That is to direct the company. Entrenchment provisions only direction, because articles only for direction, not for control. Okay. So I took an example, managing director, all these things for articles of association. So to direct the company, articles of association, entrenchment provisions. But to control the company, ESDVR. Directly to control the company, because you have what? More voting power, less shares. Less shares are having what? It is very simple. 1 lakh normal shares. Only one normal shares at the rate of 10 each. What is the paid up share capital? 10 lakhs. How many votes? 1 vote. 10 lakhs into 1? 10 lakhs votes. But I purchased 10,000 ESDVR at the rate of 10 each only. But equation is 1 rupee paid up share capital, 10 votes. What is the equation? 1 rupee paid up share capital is equal to 10 votes. Tell me, what is the voting power I have? 1 lakh, 10,000 into 10. What is the paid up share capital? 1 lakh. But 1 lakh into, what is the ratio? Into 1 or 10? 10. So how many votes? 10 lakhs. So I am holding how much voting power? 50% voting power. How much voting power? 50. But how much paid up share capital I am holding? What is the total votes? 10 lakhs to 10 lakhs. What is the total votes? 20 lakhs. How much voting power I am holding? 10 by 20 into 100. How much percentage? 50. How much paid up share capital I am holding? Here 10 lakhs, here 1 lakh. Means total paid up share capital 11. But I am holding only 1. 1 by 11 into 100. 9.09. With 9.09% shareholding, I am controlling 50% voting power. That is the power of the ESDVR. With 9.09% shareholding, I am controlling how much voting power? 50% voting power. I invested only 1 lakh. But I am controlling 50%. It is enough now for promoters. Because promoters cannot invest more money. Promoters are maybe 1 or 2 persons only promoters, or 7 persons. Or maybe 10 persons maximum. 10 persons, how much money they can invest? 10 lakhs. But company procured 100 crores, 200 crores, 300 crores, 1000 crores from public. So even though you are issuing shares to public to procure the funds, still you want to control the company. What is the first best weapon? ESDVR. So this weapon cannot be misutilized. This is a powerful weapon given to the promoters. Maybe there is a chance of misutilization. That's why lawmaker is prescribing the rules and regulations for issue of equity shares with differential rights under section 43 and rule number 4 of the company's share capital and debenture rules. So what is the procedure, sir? That is what you have to remember. Ordinary resolution. Very, very important. What resolution? Normally what resolution? Special resolution. But for ESDR, what resolution? Ordinary resolution. Again, it will be covered in your authority matrix. Comprehensive authority matrix. Again, I will give a note point, but for the time being, you please remember For ESDR, what resolution is sufficient ma? Ordinary. Normally what resolution is required? Special resolution. What resolution ma? Special resolution. But for ESDR, what resolution is required? Ordinary. Why ordinary? Promoters voting power is less. That's why they are taking ESDR. Promoters voting power is decreased. That's why they are subscribing what ma? ESDR. For that you require special resolution. How it is possible? Promoters are not in a position to pass special resolution. That's why option is given to promoters. By passing ordinary resolution, you can issue what ma? ESDR. Company can issue ESDR. But one more dangerous point. Authorized in the articles of association. What is required? Authorization. Specific authorization is required in the articles of association. I said one consequence of table F is excluded. This is one of the consequences. Promoters will kill you. Okay, ma, you are a chartered accountant. You who prepared articles of association at the time of incorporation of a company. You prepared articles at your own, framed articles, and you clearly write table F is excluded. Means don't apply model articles at any cost. But you forget to write ESDR point in your framed articles. You forget to write ESDR point in framed articles. You forget. Now promoters, they want to take ESDR because they are losing control on the company. They are losing control. Okay, what resolution is required for ESDR? OR. Yes, promoters can pass OR conveniently now. But going forward, maybe their controlling will be reduced to least. That time may be not possible. So, okay, OR they can conveniently pass. But articles authorization is required na? Articles, that point is there or not there? Not there. We can apply model articles? No, because you said specifically table F, get out, table F, get out. Okay, very simple. Very good. I will get out, sir, no issue. But in your articles, what is not there? ESDR not there. For that, what you have to do? First, you have to alter the articles. For alteration of articles, what resolution is required? Special resolution. Promoters are not in a position to pass special resolution. Gaya. Atam. What will happen? Promoters will lose their control. Company will go to winding up. Promoters will do suicide or they will kill you. Two options only. That's why be careful while preparing articles of association. Don't say simply by looking at Reliance Industries or Tata companies articles, table F is excluded. Okay, because they are there 10 chartered accountants, 20 chartered accountants who is having knowledge, they are preparing articles. You are only a just now qualified CA who don't have a comprehensive knowledge on Companies Act, SEBI Act, SERA Act, deposit, and without that you are just giving a build up to the promoters. Table F is excluded like Reliance Industries. Okay, wait and see. Okay, so what is required? Articles, what is required? Authorization is required. Ordinary resolution is sufficient, and limit is there. Maximum, what is the limit? 74%. I just gave a practical example also to calculate the 74% limit also. I am expecting that practical question from so many days. I don't know, but so far they are not asking that practical question to calculate the limit. What is the maximum limit they can issue ESDR? 74% voting power. Why, sir? You can control the company, but you cannot dictate the company with ESDR. So up to ordinary resolution you can pass, but special resolution you cannot pass. I am not giving that facility to pass special resolution with ESDR. Maximum voting power, how much voting power my ESDR shares can hold? 74% shares only they can hold. Okay, maximum 74% with ESDR. With ESDR. One example I just explained. What is that example for ESDR calculation limit? Existing capital structure. Tell me quickly, existing capital structure. 52,000 normal equity shares at the rate of 10 each, fully paid up. This is what the existing capital structure. 52,000 into 10 means what? 5,20,000 is the paid up share capital. And one more thing, 10,000 ESDVR. Yes, ESDVR at the rate of 10 each, fully paid up. Okay, 1 equity share is equal, 1 rupee paid up share capital is equal 5 votes. And tell me 10,000 into 10. What is the paid up share capital? 1 lakh. Now what question I asked? So how many new ESDVR shares can be issued by the company? How many new equity shares with ESDVR? Same class of shares company want to issue to the promoters. How many shares? Maximum how many shares they can issue to the promoters? Calculate quickly. Maybe other students who are not attending my class, you please calculate quickly later. Okay, this is what one of the practical question they can ask in the exam on the limit of the equity shares with differential voting rights. Maximum what is the limit? 74%. For ESDVR 74%. ESDR how much? 74 means for others. For ESDR 74 means for others how much? 26%. So normal equity shares voting power should not be less than 26. How many normal equity shares are there? 52,000. What is the paid up share capital? 5,20,000. So what is the voting power? 5,20,000 votes are held by the Normal equity shareholder means is equal to how much percentage? 26%. So remaining how much? 74%. How much? So 5,20,000 into 74 divided by 26. And tell me how much? Huh? 14 lakhs 80. 14 lakhs 80,000 votes. 14 lakhs 80,000 votes. You can give to whom? ESDR. Already how many votes are there? 10,000 into 10 into 5. So how many votes they are holding? 5 lakhs. So remaining how many votes you can issue? 9 lakhs 80,000. 9 lakhs 80,000 votes means you have to convert into shares. You have to convert into shares. 9 lakhs 80,000 divided by 50. 50 only na? 9 lakhs 80,000 divided by 50. How much ma? 19,600 new equity shares with differential rights you can issue to promoters or controlling shareholders. This is the example. Okay, in detail you please refer your notes later. Okay, next points for ESDR is prohibitions. What is that ma? Prohibition. What ordinary resolution and authorization in the articles of association. After that, prohibition. Prohibition is very important ma. Total how many points are there for prohibition? How many points I said ma? So there are 3 points, right? 3 or 4. So prohibition is there. First prohibition, no subsisting, no filing default. What is that? No filing default. So from last 3 preceding financial years, there is no default in filing financial statements or annual returns. Sir, if default is there, what I will do? Today, what is the financial year today? 2024-25 financial. What is the date? Today date? 16th October 2024. This is the date. Today I want to issue equity shares with differential rights. Can I issue? Yes, I passed ordinary resolution. It is authorized in the articles of association. Limit also I checked. That is within the limit only. Sir, can I issue ESDR? Yes, but subject to some prohibitions. What is that? Sir, for 2023-24 and 2022-23 and 2021-22. These are the 3 preceding financial years to the 16th October 2024. For all these 3 preceding financial years, you have to check whether you filed financial statements or annual returns within the time or not. Financial statements, annual returns. 129 financial statements, annual returns section number 92. Okay, so have you filed financial statements or annual returns so within the due date or not for the preceding 3 financial years? You have to check. Yes sir, I filed within the date, but 22-23 no sir. 21-22 yes sir. Can I file? Can I go for ESDR? No. First what you have to do? If any default, first you have to rectify the default. Immediately can I go for? No. How many years you have to wait ma? 3 years. Cooling period is how many years? 3 years. Like alteration of name class, here it is not possible. Alteration of name class, what they said, if any default, rectify and immediately can go for alteration of name. That is very less severe consequence. But here, no, lawmaker is not saying like that. If any default, you have to rectify and you have to wait for how many years ma? 3 years you have to wait. Okay, so last 3 years there is no default. There is no, sir, already I filed with due day, with delay. No, even though you are filed with delay, you have to wait for how many years ma? 3 years. That is what first condition. Second condition, what they are saying, no subsisting default. Subsisting default is very easy. As on today, there is no default in payment of dividend to preference shareholders or interest to debentures or deposit holders or repayment of deposit holders or debenture holders. That is very simple ma. Today there is no default. If any default, what you have to do? Rectify. Immediately you can go for ESDR. It's not issue. So second point is not issue. But third point, there is no default in payment of preference dividend as well as payment of repayment of loan or interest to the public financial institutions or scheduled bank, whatever it may be, or any employee statutory dues are transferred to IEPF. Okay, any default is there, first what you have to do? You have to rectify. First what you have to do? You have to rectify. Immediately after rectification you can go for ESDR? No. After that, how many years you have to wait ma? 5 years after, means after closing of that financial year, which year you rectified, from that closing of that date, closing date of financial year, you have to wait for how many years ma? 5 years. I will give an example also. The same date, 16th October 2024, you want to issue ESDR, but in 2020-21 financial year, you paid interest on loan delay. You paid. Okay, 2020-21 financial year due date is 31st March 2021. That is the due date to pay the interest. But you paid in 1st April 2022. 1 day delay. What is the due date to pay interest ma? 31st March 21, but you paid 1st April 2020. Okay, 10th April 2022. What is that? Maybe you said 3 days grace days, sir. Okay, 10th April 2022 you paid interest. 10th April. So delayed or not? Yes. Default or not default? Default, but still existing or rectified? We paid interest na? Yes, we paid interest. Sir, immediately we can go for ESDR? No. You have to wait how many years ma? 5 years. From what date 5 years? After expiry of the, means what is the, in which financial year you activate the default? 22-23. What is the last date of 22-23? 31st March 23. From this date, how many years you have to wait? 5 years. Means from 1st April 2028, you can issue SDR. See what is the consequence of a small mistake. By that time, promoters will lose their control. Company will enter winding up also. So sometimes small mistakes will lead to huge consequences. This is the best example. Section number 43, prohibition. So we try to perfect in Companies Act 2013. Don't take even small sections also light. That is not possible in Companies Act 2013. Sir, I filed financial statement 3 days delay, sir. Okay, you are paying 300 rupees fine. That's all. That is as per section number 92, annual return. Maybe 100 rupees per day of default, you have to pay 300 rupees. Sir, out of my packet, I will pay 300 rupees. But what is the consequence of the section number 92? Having consequence in section number 43. Now promoters, they want to issue SDR, but there is a default in filing annual returns for 3 days default. For that, they, how many years they have to wait? 3 years they have to. We don't know what will happen in 3 years. Promoters will, they will lose the control. Company will go to winding up. Then promoters will do suicide. Because of your filing financial statements or annual returns, 3 days delay. That is what the interlinking of the Companies Act 2013. That is the beauty of the lawmaker. Okay. Next, what is the next point? Not penalized. From last 3 years, there is no, you didn't pay any fine or penalty under any act. They are saying even Motor Vehicles Act also, our favorite act. Okay. Even you are paying fine under Motor Vehicles Act also, no. Okay. So you should be a very good corporate citizen. Then only you are allowed to issue ESDR, because you should give the confidence to the lawmaker. Promoters, for the benefit of the company only, they want to take ESDR, not for their own advantage. For the benefit of the company only, they want to take ESDR. They want to control the company in such a way to achieve the objects as stated in the Memorandum of Association. So that you have to build the confidence to the lawmaker. Yes, sir, we are following all the provisions. There is no default. Sir, why, sir, this many provisions are there? This is a powerful tool, ma. You will not get the tool easily. This is a powerful tool. Actually, that is one person is there na in Marvel Avengers. One person is there na, Thor hammer. Thor hammer is there na. Like that, yes, there is a tool actually. It can break anything na. That hammer, like that. This promoters ESDR is a powerful tool. To get that tool actually, you have to satisfy so many conditions. This is what about equity shares with differential rights. Now we are going to voting rights. Small section. By that we will end the section. Okay. Section means SC CTION section. Session means SC SSION section. Okay. You have to identify the intention of the lawmaker. Don't go for logical literal interpretation. You have to go for logical interpretation. Okay. So now come to the point. What is that? Section number 47. Voting rights. Very important, because 47 you have to read with 106. Sir, 106 where it is, sir? In Management Administration Chapter 106, restriction on voting rights. You should read with section number 6 also. Section number 6, 47, 106. Okay. So what is 47, sir? Equity shareholders when they have voting rights. Preference shareholders when they have a voting rights. That is what the section number 47, voting rights. 48, variation of shareholders rights. Okay. By that we will complete one section, 47 and 48. Okay. 47 is very simple, ma. I explained section number 47. Equity shareholders, they have a right to vote in proportion to their paid up share capital. Equity shareholders, they have a right to vote for every resolution of general meeting in proportion to paid up share capital. This is what section number 47. What is 47? Equity shareholders, they have a right to vote for every resolution placed at general meeting in proportion to their paid up share capital. Total paid up share capital 10 lakhs. I am holding 5 lakhs paid up share capital. So I can exercise 50% voting power for all resolutions placed at the general meeting. That is what voting rights. But some exceptions are there for the general statement. What is the exceptions? What is the exceptions, ma? Section number 43. What is section number 43? Equity shares with differential rights. So if I am having more voting rights shares, then maybe my voting right may be more, maybe less also. If I am subscribing ESDDR, voting rights are less. And I am subscribing ESDVR, voting rights may be more. Not in proportion to paid up share capital. Not in proportion to paid up share capital. Sometimes maybe more voting rights, sometimes maybe less voting rights. That's why one exception. What is another exception? Calls in arrears. What is that, ma? Calls in arrears, section number 50. You know the biggest, not demerit actually, that's a comedy, fun. Biggest fun in September 2024 exam, they asked 5 marks question from calls in advance, calls in arrears. Calls in advance, calls in arrears is important. 49, 50. Section number 49, section number 50. Ma, see, in Marathon material also I pasted 49, 50. This is 48, okay. 49, 50, see, I provide 49, 50. Why, sir? Because of September 2024 attempt. Ma, normally 49, 50 calls in advance, calls in arrears, I didn't discuss in regular class also. Regular class also I said running notes also not provided for 49, 50. I said these are all covered in CA foundation, not important. But they asked 5 marks. All of a sudden it become important. From next class I will provide running notes also 49, 50. Calls in advance, don't pay dividend, only pay interest if it is authorized in the articles. Interest is also, how much percentage of interest you can pay calls in advance, ma? 12%. If it is prescribed in the articles of so you cannot pay that point they ask for 2 marks, ma. Calls in arrears, 2 marks. So 3 marks. Total question 5 marks they ask. Question number 1 a compulsory question, I think. 1 A no, 1 B no. I don't know, calls in advance, calls in arrears also they can ask for 5 marks. That is how you are preparing the question paper. That's biggest comedy. September 2024 law paper is the biggest comedy. I don't know whether it will be repeated or not. If it is repeated, now you are all God gifted childs. If it is repeated, small points they are asking 5 marks. Okay, maybe sometimes maybe you are concentrating on very major points, na? It is a disadvantage, but you know, general knowledge, calls in advance, calls in arrears, that is, even though you are not referring material, you can read. Okay, now come to the point. What is next exception to the voting rights, ma? 50 calls in arrears. If you are having calls in arrears, you have no right to exercise the voting rights. People may misunderstand, students may misunderstand, ma, calls in arrears. For example, see, I am holding 10,000 shares at the rate of 10 each, 8 rupees paid up, calls in arrears 2 rupees. Normally fully paid up, but I didn't pay 2 rupees. Calls in arrears how much, ma? 2 rupees. What is the paid up share capital? 10,000 into 8, 80,000. What is the calls in arrears amount? 20,000. This is how you are going to present in the balance sheet. But I will get the voting rights. 1 rupee paid up share capital is equal to 1 vote, right? That is what proportionate, right? 1 rupee paid up share capital is equal to 1 vote. How many votes I will get? Tell me. 80,000, 1 lakh, 20,000, nil. 80,000 votes I will get, or I will get 1 lakh votes, I will get 20,000 votes, nil. Nil. If I are having calls in arrears, you are not at all allowed to vote. Even for your paid up share capital also, you are not allowed to vote. Not only this equity shares. If you are holding another class of equity shares also, on that shares also you cannot exercise voting rights. You are holding preference shares also, on that also you cannot exercise voting rights. Nothing. If you have any calls in arrears, even for one class, even for one share also, you are not allowed to vote. That is what the exception, section number 50. This is what the students may take maybe by mistake. Okay, please don't understand. If you are having a calls in arrears of any shares, that shareholder is not at all allowed to the vote. Actually, calls in arrears, section number 50. That is okay. That is section number 106 I am talking about. Section number 50 is calls in advance. Calls in advance, you are not exercising any voting rights. Even though you are paying money in advance, you cannot exercise voting rights on the calls in advance. Okay, that is 50. And related party transactions are there. What is that? Related party. Section number 188. Related party transactions not in your syllabus. Don't worry. So there is the 3 exceptions for the section number 47. What is the 47? Equity shareholders have a right to vote on all resolutions placed at the general meeting in proportion to the paid up share capital. 3 exceptions. One is maybe your voting rights are not in proportion to paid up share capital, maybe higher than paid up share capital or lower than paid up share capital. Section number 43. And another exception, even though you paid money, you cannot exercise voting rights. That is what calls in advance. And one more exceptions, related party transactions, you are not at all allowed to vote only for that particular resolution in which you are interested. Only for that particular resolution in which you are interested. Related party, interested party. What is that? Interested party transactions, you are not allowed to vote. This is what 47. Then what about preference shareholders, sir? Preference shareholders, they are not having voting rights at par with equity shareholders, but in 3 resolutions they have voting rights. What is that? Preference shareholders, they can exercise their voting rights in 3 resolutions. One is affecting their rights. Second one is reduction of share capital. Third one is winding up. In these three resolutions, they are also having a voting rates at par with the equity shareholders. Okay, this is what preference shareholder. But sometimes preference shareholders can exercise voting rates in all resolutions. When if they have a areas of dividend for continuously for how many years? 2 years. Continuously for 2 years they have areas of dividend. Then irrespective of the type of preferences, they will get the voting rates at par with the equity shareholders. Then they can pass. They can cast vote for all resolutions placed at the general meeting. So 47 is very important. This time I am expecting from section 47. 47 we are expecting. Okay. So we can start now. Section number 43 completed, right? Yesterday. Oh, section number 47 voting rights of shareholders. I said only one single statement. Equity shareholder, every equity shareholder, they have a right to vote for every resolution placed at general meeting in proportion to their paid up share capital. For this statement, there are three exceptions. What are those three exceptions, ma? Number one, section number 43. So, if you are holding ESDDR or you are holding ESDVR, maybe your voting rights are not means higher than your paid up share capital or maybe lesser than the paid up share capital. So, not in proportion to the paid up share capital. Sometimes maybe your voting rights are higher. Sometimes maybe your voting rights are less if you are holding equity shares with differential rights. That is one exception. Okay. And the second exception, section number 50. What is section number 50? Calls in advance. So, even though you paid call money in advance, for that money you are not going to acquire any voting rights. That is what calls in advance. Next one is 188 related parties. If you are interested in a particular resolution, for that resolution you will not acquire any voting rights. Interested means you are not interested as a member, not only as a member, you are interested in other capacity. You are interested in a other capacity, then you are not eligible to vote for the particular resolution. Interested parties. These are all the three exceptions. What about preference shareholders voting rights, sir? In general, preference shareholders, they don't carry any voting rights at par with equity shareholders. But in three resolutions, they have a voting rights. What are those three resolutions? One is winding up resolution. Company, if you want to wind up for that, you are conducting any meeting. In that meeting, preference shareholders also will come and join, and they have also right to vote at par with the equity shareholders. And the second resolution is reduction of share capital. What is that? Reduction of share capital. So you are taking a decision to reduce the share capital, then you should take the preference shareholders vote also. Third one is affecting the rights of the preference shareholders. You are taking a decision which will affect the rights of the preference shareholders, then they also have a right to vote in that particular resolution. So preference shareholders, they have a right to vote for three resolutions at par with equity shareholders. Other resolutions they have right? No. But if company failed to pay the dividend to preference shareholders continuously for 2 years, for how many years? 2 years, irrespective of the class of preferences, whether it is participating or non-participating, cumulative or non-cumulative, redeemable or irredeemable, or convertible or non-convertible, irrespective of the preferences classes types, if you are not paying dividend for preferences for continuously for 2 years, from the immediately after the expiry of second year, means after second year dividend due date, they will get the voting rights at par with the equity shareholders. That is what section number 47. Extension of section number 47 we should read in section number 106, restriction on voting rights. What is 106? Restriction on voting rights. Definitely this time I am expecting either from section number 43 or 47 or 106. 43 or 47 or 106. 43 is equity shares with referential rights, or 47 is the voting rights of the shareholders. 106 is the restriction on voting rights. So this is all sections related to only one topic. Now we are moving to section number 48, 49, 50. I am not going to discuss actually. Those are all calls in years and calls in advance. Even though a 5 marks question has been asked from section number 48 and 49 and 50, but that is not the topic to discuss in the marathon. Okay, you please refer once the calls in arrears and calls in advance. Only thing I can say, for calls in advance we have no need to pay dividend, we will pay only interest. Calls in arrears, directors can recover the amount from the members by forfeiting the shares also. They can exercise the lien right, and after that they will forfeit. Even though not only forfeiting the shares, but also if required they will recover from the members' personal assets also the call money, calls in arrears, because memorandum and articles is an agreement in between company and members. Members are deemed to be signed MOA as per section number 10. So every member has a duty to pay the call money whenever the directors make a call. If a member failed to pay the call money, then director has a right to recover the money from the members, even from their personal assets also. First thing what they will do, they will exercise the right of lien on the shares held by the members. After that they will forfeit the shares, and that is also not sufficient. They can recover from their personal assets also. That is what the right directors are having. And one more point what you have to remember, directors has to make a call uniform basis. They cannot make a call on selective basis. This is very important. So there are 100 shareholders are there related to one class. Class wise they can make a call. There is no rule that you should make a call for entire equity shareholders, no need. They can make a call class wise. We are discussing class wise na. Same subject I am discussing every class na. Right? Like that, directors also they can make a call class wise. Sir, what is a class, sir? You are all related to CA inter only, but maybe 1A, 2A, 3A, 4A, 5A, 6A, different classrooms are there. So for every class the same subject will be discussed, but anyhow the timing of the discussion may be differ. Right? So directors can make a call. At their discussion, directors can make a call entire shareholders related to a particular class. 10 rupees face value one class, 1 rupee face value one class, 5 rupees face value one class. Class means face value, paid up value, both are same. What is a class ma? Face value, paid up value, both are same. Both are same means face value, paid up value. So 10 rupees face value, 5 rupees paid up one class. Sir, 10 rupees face value, 7 rupees paid up. Separate class or same class? I am saying 1 lakh equity shares at the rate of 10 rupees, 5 rupees paid up. And one more section is there, 1 lakh equity shares, 10 rupees face value only, but 7 rupees paid up. Tell me, these are all two different classes, only one class? Two different classes. So either it differs in face value or differs in paid up value, it is related to a separate class. It is related to a separate class. Okay, that is what same class of shares. All shareholders related to a particular class, you have to make a call. Selective basis, you cannot make a call. Directors cannot make a call on selective basis. You please pay the call money, you pay the call money, you pay the call money. Like that, selectively directors cannot make a call. It is not possible. They should make a call on uniform basis. On this point only, they asked for 2.5 marks in your September 2024 exam. And calls in advance, whether you have to pay dividend or not, that is what 2.5 marks. Total 5 marks. On calls in advance, you have no need to pay the dividend. You should pay only interest. That is also authorized by the articles of association. These 4 points you have to write. For that you will get 5 marks. That is not the question paper of September 24. And still you have 48 variation of shareholders' rights. Yes, it is asked in May 2024 exam for 5 marks. Question number 1A. For 5 marks they asked variation of shareholders' rights. Sir, what is this variation? I said section number 13 and section number 28. Section number 28, no, 27. Section number 13, section number 27, now section number 48. There is a scope of asking one question from these 3 sections. Section number 13, alteration of object class procuring funds from public which is not utilized. And section number 27, variation of terms in prospectus. And section number 48, variation of shareholders' rights. Section number 13, section number 27, all are similar. Same process, no need to read 2 times. 13 to 27 similar process, but 48 is a little bit different. What is the difference, sir? Very simple. First of all, to vary the shareholders' rights, equity shareholders' rights, so preference shareholders' rights, so you are already issued, shares are issued. Subject to an agreement, you issued shares. After issue of shares, you want to vary the rights. For example, 10% dividend preference shares, 10% preference shares at the rate of 100 each, you issued already. Now you want to decrease the dividend rate. Variation only. Or you issued convertible preference shares, now you want to change into non-convertible preference shares. Or you issued redemption value something on 120 or 130 or 140, now you want to reduce the redemption value. Whatever it may be. Or you want to increase the redemption value, either enhancement or maybe whatever you want, variation of shareholders' rights. Equity shareholders' rights also you can vary. So equity shares with differential rights issued. 1 vote is 1 rupee paid up share capital is equal to 5 votes, he said. Now you want to reduce to 3 votes. That is also variation of shareholders' rights only. One class of shareholders' rights you want to vary. You want to vary one class of shareholders' rights. Yes, you can vary. But what is the procedure to follow? Yes, we have two ways. First of all, before variation, should go for authority matrix. I just provided different scenarios. It is not prohibited in MOA. It should not be prohibited in Memorandum of Association or Articles of Association, first of all. And it is not prohibited in the agreement. I am issuing equity shares na. So equity shareholders and company one agreement is there na. Subject to agreement only I am issuing equity shares. For example, prospectus. Public offer, what is agreement document ma? Prospectus. Okay. So prospectus or any private placement offer letter, that is what the agreement in between the company and the shareholders. So subject to some agreement only I am issuing shares. So for every class of shareholders, one agreement is separate agreements are there. I am issuing equity shares, one agreement is there. I am issuing preference shares, one agreement will be there. I am issuing debentures, one agreement will be there. Right? So by after reading the agreement only, they will subscribe the debentures, they will subscribe the preference shares, they will subscribe the equity shares. So individual agreement will be there for each class of shareholders or security holders. Memorandum and articles is a general agreement. That is a constitutional document. And these are the individual agreements. Okay. So it is not prohibited in MOA and AOA, and it should not be prohibited in the agreement also. It should not be prohibited in the agreement. If it is not prohibited in MOA and it is not prohibited in agreement, then only you can vary the shareholders' rights. Even though MOA AOA is silent, yes, you can vary. Even though agreement is silent, silent means nothing is specified in the agreement. So then also you can vary. No issues. So only one situation when you cannot vary is either it is prohibited in MOA and AOA or it is prohibited in individual agreement. You cannot vary the shareholders' rights. That is what very important authority matrix. If you remember, I provided a table for authority matrix. Different cases I covered. All are having my running notes, I hope, with you, right? Are you following the running notes also? Please follow. This is the revision, right? So running notes also you should follow. You should refer the running notes now itself. By that you can recap whatever we discussed in the classroom. Okay. Now next point is variation of shareholders' rights. First point what I said ma? Authority matrix. Second one is, so what is the procedure? You conduct the class meeting. You conduct the class meeting. So which shareholders' rights you want to vary? That shareholders meeting you have to conduct. That shareholders meeting you have to conduct and take their consent. Sir, how to take the consent, sir? Either you have to pass a special resolution or take consent 3/4. What consent you have to take, ma? 3/4 consent you have to take. Sir, what is the difference between special resolution and 3/4 consent, sir? What is the difference between special resolution and 3/4 consent, ma? Special resolution means votes casted favor to the resolution are at least 3 times greater than votes casted against to the resolution. And then what is 3/4 consent? Sir, there are 100 shareholders are there, 75 members, they have to say yes. But special resolution means we don't mind about the number of shareholders, we don't mind about how many shareholders attend the meeting and how many shareholders casted their vote. All these things we don't know. We need only votes casted favor, votes casted against. So sometimes special resolution is easiest than 3/4 consent. When special resolution is equal to 3/4 consent, if all the members present in the meeting and all the members participated in the voting, and whatever the votes casted by members are valid. Sir, votes also invalid votes will be there. You have a call scenarios. You have a call scenarios, ma, then your votes will be considered. No, even though you casted your vote, then what company secretary will do? Get out. Your vote is not valid. You are interested party for that particular resolution. Then your vote is not valid. Okay. So preference shareholders also, their votes will not be considered for all resolutions. Na? Okay. So that's why all members has to attend the meeting. Ma, there are 200 students in this class, for example. So all these 200 students should attend the meeting. And all these 200 students has to participate in the voting. And the votes are valid. Then only special resolution is equal to 3/4 consent. Otherwise, no, it is not equal. Okay. 3/4 consent means out of 200 students, I have to take 150 students consent. That is what 3/4 consent. 150 students consent, I have to take written consent. Special resolution means I have to call for a meeting. So please come for a meeting. Yes, all 200 students came for meeting. Only 150 students came for meeting. Out of that 50 students, they are not casted their vote. Only 100 students only they casted their vote. So 75 students they said yes, 25 students they said no. Then special resolution is passed. So that is the difference between special resolution, 3/4 consent. When both are same, all students came for meeting. Yes, 200 students came for meeting, and all students participated in the voting. Then how many votes should cast? Yes, 150. Then only special resolution will be passed. That's all. Both are same. So you have two alternatives. Either pass special resolution in meeting or take consent 3/4 members. To take consent from 3/4 of the members or 3/4 in value. Consent of 3/4, 75% of the issued shares of that class. Okay. Value number. This is very important. Always you confuse actually. Value number. So always will confuse. Value. Yes. Not in members. What is that? Number. Number is not required. What is required? Value is required. Who is holding 75% of shares? I don't need 75% members. I need the members who are holding 75% shares. I am holding 75%. You people are holding 25%. In number, I am only 1 person, but you 200 persons. Total, how many members are there? 201. I said yes. You all people said no. Then we can go for variation of shareholders' rights or not. Yes, actually, because I am holding how many shares? 75% shares I am holding. That's why I said yes means 70% consent given. Not in number, in value. Not in number, in value. Okay. Not in number, in value actually. Coordinator Milvaya. That is second point. Third point. Sir, what is the third point? About dissenting shareholders. About dissenting shareholders. Dissenting shareholders means who said no? Who said no? Sir, minority interest protection is the one of the objective of Companies Act 2013. Minority interest protection is one of the objective of Companies Act 2013. Then what about the shareholders who are not giving their consent, sir? Please keep in your mind, dissenting shareholders means who attends the meeting and who casted their vote and who said no. Sir, I didn't attend the meeting, sir. I am a dissenting shareholder. Silence is not an acceptance, sir. Can you consider like that? No. Dissenting shareholders, keep in your mind, dissenting shareholders means who attends the meeting, who casted their vote and they casted their vote as a no. That shareholders are called dissenting shareholders. For them only exit option will be given. But here no exit option. Please don't write the same provisions here. Section number 13 and 27 don't write here. Section number 48 is little bit different. Section number 13 is the more wider concept. And section number 27 is when compared to section number 13, little narrow concept. Now section number 48, too narrow concept. Only one class of shareholders' rights we are affecting. Object clause alteration means as a whole for company. Prospectus terms means only for one public offer we are altering. One class of shares rights means that is also too narrower concept. Okay. So that's why in this section number 48, for dissenting shareholder, what option is there? They have to make an application to tribunal. Sir, how many has to make an application to tribunal, sir? At least 10% shares are holding. The members who are holding at least 10% shares of that class, they can make an application within 21 days. Within how many days, 21 days. On these points only, 5 marks question has been asked in May 2024 exam. So what points you have to highlight? Authority matrix, 1 point, 1 mark you will get. And the second point, procedure for variation of the terms in variation of the shareholders' rights, and the third point is option available to the dissenting shareholders. These 3 points you are highlighting: 1 mark, 1.5 mark, 1.5 mark, and 1 mark for references and all provisions, stating provisions, you will get 5 marks. Please keep in your mind, law paper also stepwise marks are there. Like FMO cost accounting papers, law paper also stepwise marks will be there. Even though your conclusion is not correct, still, even though your conclusion is not correct, still you will be awarded with marks if you are stating the provisions, references, provisions, analysis. For that also you will get marks. Okay, stepwise marking will be there definitely. Even though you don't know the answer, please start the answer and write the provisions, related provisions, give the references and all. You will get maybe 2 marks out of 5. There is a possibility. Sir, answer I don't know, sir. This is a new practical question. I don't know the answer. No, don't worry. Related provisions, you know, na companies at 2013 related provisions, you know that. Okay, please write the provision, start the answer. Then you will get 1 or 2 marks. Give the conclusion whatever you are feeling actually. So maybe your conclusion is wrong. For that, maybe 1 mark or 2 marks will be allotted. Okay. So don't be just leave the question like that. Okay. Next. So 48 is completed. Now we are going to 49 and 50. Section number 49 and 50, I said calls in advance and calls in advance. That is also okay. Section number 51, we are not going to discuss. That is will be discussed in declaration and payment of dividend chapter. And section number 52. So I said it is very important, but so far they are not asking in the exam. That is what utilization of security premium. I am not going to explain the logics here now, like in our regular class. It is not possible. What is the security premium and why security premium to be accounted as a separate account, and what is the restrictions, what is the reason for imposing restrictions for security premium and all these things. Logics I am not going to explain here, but just to revise. So there are 3 sections in section number 52. 52 subsection 1, subsection 2, subsection 3. 52 subsection 1 says security premium cannot be utilized. Cannot be utilized. That is equal to paid up share capital. Security premium is equal to paid up share capital. You don't use the security premium. If you are using the security premium, it is reduction of paid up share capital. Like that they said section number 52 subsection 1. Then what is there in 52 subsection 2 ma? However, means notwithstanding anything contained in section number 52 subsection 1, notwithstanding anything contained in section number 52 subsection 1, you can utilize the security premium for 5 purposes. How many purposes? 5 purposes. And 52.3 is saying only for 3 purposes. So I said clearly to all the students in which case 5 purposes, in which case 3 purposes. Without any ambiguity, without any absurdity, I clearly given notes to you. The companies which are complying normal accounting standards and the companies which are complying Indian accounting standards. There are rules are there. Indian accounting standards rules 2015. All set of rules are notified in 2014. By default, what you are writing? Companies prospectus allotment of securities rules 2014 as amended from time to time. Company share capital and debenture rules 2014 as amended from time to time. Companies incorporation rules 2014 as amended from time to time. Or companies management administration rules 2014 as amended from time to time. Like that you are writing in your exam. If you want to refer the rules, that is what you have to write. If you want to refer the rules, you have to write that reference only. If you know rule number, okay, very good. If you don't know the rule number, please write the company share capital and debentures rules 2014 as amended from time to time. I said all clearly, all students I am giving, I am recommending to write the references as a first heading of your question. Reference, first heading of your question should be reference. Please try to habituate from your revision exams itself. Okay, reference, write all related sections or related rules in the reference heading. By looking at the reference itself, valuer will assess your knowledge. Okay, please, with my own experience, I am again stating you, please write the reference. For law exam especially, you are referring Companies Act chapters, sections of the Companies Act, or rules framed by the MCA, Executive Authority, or otherwise judiciary pronouncements, everything you should refer. There are 3 types of references: Act, rules, case laws. Case laws, maybe at CA Inter Company Law or LLP Act, hardly only 3 case laws are there. One is ultra-vires case law, indoor management case law, and constructive notice. Other than these 3 topics, you have no need to refer the case laws. Valuer is also not expecting to refer the case laws other than these 3 topics, because these are the only topics which are developed purely based on case laws, not is there in the companies. It is not there in the Companies Act. Don't refer Companies Act for doctrine of ultra-vires, please. As per Companies Act 2013 doctrine of ultra-vires you are writing, it's a blunder mistake. Valuer can give 0 marks, not only for that question, other questions also. He will think that you are unfit for CA Inter. Unfit to qualify as a CA Inter because you don't know distinction between Act, rules and case laws. Without knowing fundamentals, basic knowledge, you are writing CA Inter law subject. That's why don't do blunder mistakes. Don't write as usually as per Companies Act, as per company. What is as per Companies Act? As per means you have to write the bare act as it is. Can you write bare act as it is in your exam? Don't write as per with reference to Companies Act 2013. By throwing light in the provisions of the Companies Act 2013 in accordance with the Companies Act 2013, there are so many other phrases are available. Don't read always as per, sir. In material it is there, sir, as per. Yes, material. They are copy paste the bare act. Can you copy paste the same bare act in your exam? No. If it is not possible, don't write as per. Okay, write with reference or write reference. Reference, just put the heading reference. Multiple sections try to refer. Multiple sections are section 1, 2, 3, 4, not like that. Related sections. What is that? Related sections. If they are asking about voting rates, so 43 or 47 or 106, so like that you can. And they are asking anything about alteration of object class, then you can refer buyback provisions also. In section number 13, you can write buyback provisions also. What point you can write? But this is not a buyback, even though exit option given by the promoters and controlling shareholders to the dissenting shareholders, it is not a buyback. Section number 69, 77, 68, 69, 70 is not attracted in this case. Like that, you are writing a wonderful presentation. That presentation skills you have to develop to get 70 above marks in law subject. If you are targeting above 70 marks in your law subject, that much skills are required. Okay, not your writing skills and all. Presentation skills are required. Okay, not English grammar and vocabulary, that is also not required. Simple English is sufficient for us. Valuer also don't know that much English. He is also not English literature. He is also a chartered accountant only, and he is a traditional chartered accountant, and more than you, he is a very less knowledge in English. When compared to you people, he is having very less knowledge in English. He don't check your English grammar, English vocabulary, all these things. He is not English literature or English MS, no. He is only chartered accountant. He is also traditional chartered accountant who is having 10 years, 20 years experience person. Means long ago he completed his CA course. You know what is the level of knowledge in his English. You know, right? So he don't expect anything from you. English and all. Okay, just simple English. You just convey your concept to the valuer. Just convey your concept to the valuer. That is what required. Okay, next. So section number 51 we are not going to discuss. 52 security premium utilization. I said 52 to 52 3. I divide into two parts. 52 to 52 3. 52 2 is what, ma? The companies utilization of security premium by the companies which are complying normal accounting standards. You know very well because Indian accounting standards are there in your syllabus and normal accounting standards also there in your syllabus. You can distinguish in between Indian accounting standards and normal accounting standards. Indian accounting standards, Ind AS, is a convergence of IFRS, but not yet completed so far, and it is not applicable to all companies. Which companies has to follow IFRS means Ind AS. Which companies still they have to comply normal AS. It is prescribed in the Indian Accounting Standards Rules 2015. Where it is notified, ma? Indian Accounting Standards Rules 2015, which is not in your syllabus. No need to read in law subject, but for that knowledge is required to deviate here, means to differentiate which companies can utilize for 5 purposes and which companies can utilize for 3 purposes. The companies which has to comply in normal accounting standards, they can utilize for how many purposes, ma? 5. What are those 5 purposes? Can you please? Maybe there is a possibility to ask direct theory question. Security premium utilization, you will not ask practical question. There is no scope to ask practical question for utilization of security premium. Like issue of bonuses, section number 63, how he asked in May 2024 for 5 marks. That possibility is there to ask 5 marks direct theory question from utilization of security premium. Section number 52. Then you have to write a table. Better to write a table. 52 2, 52 3. 52 2 is normal companies which are complying Indian accounting standards. 52 3. Companies which are complying Indian accounting standards. 5 purposes, tell me. Yes, for issue of fully paid up bonus shares. Very good. Preliminary expenses written off. To To write off the discount issue expenses on issue of debentures, preference shares or equity securities. Okay, fourth one. For redemption of debentures or preference shares means to provide security premium. To write off the premium on redemption of preference shares or debentures. Fourth one. For buyback of securities, right? Then for Indian accounting standards companies only for three purposes. I am saying particularly 5 minus 3 is equal to 3. No. Mathematics also will teach us, sir. 5 minus 2 is equal to 3 only, but here out of 5 points they are not striking off 2 points. There is a difference of another points also. You please read these 5 points separately, those 3 points separately. Don't write those 5 points minus 2, 3 here. Okay, I said what is the reason also for Indian accounting standards 3 purposes and normal companies 5 purposes, and why they remove 2 points also I said with logic, and why they change remaining points also with logics we explained in our classroom, but here it is not possible. What are the 3 purposes for which you can use for Indian accounting standards? For issue of fully paid up bonus equity shares. Next, preliminary expenses written off is automatically is not there, it's read off. Second one, third one, to write off the discount or issue or expenses on issue of equity shares only. Don't write the same point here. There securities, but here only equity shares. And redemption of premium on preference shares debentures, it is removed already. Then buyback of shares or securities. Okay, that is what. So that is what you have to write. That is what utilization of security premium. Logics, no, it is not possible to explain here. And we are going to section number 53. Not much important. Issue of shares at discount is prohibited. Exemptions are sweat equity shares and debt restructuring schemes and all. Okay, and next 54 issue of sweat equity shares. What is that? My issue of sweat equity shares. Long ago one question has been asked for 5 marks. Question number 1A, they asked from sweat equity shares. Otherwise it is not that much important, but all of a sudden now it become a important. Before going to further discussion of sections, I want to give a small chart. What I said, increase of issued share capital, subscribed share capital, called up share capital, paid up share capital. How to increase issued share capital, subscribed share capital, called up share capital, paid up share capital? I said 8 ways. How many ways? 8 ways. First way is public offer. Through public offer you can increase. By offering your equity shares or preference shares to public, through public offer you can increase your issued share capital, subscribed share capital, or called up or paid up share capital. Okay, public offer is regulated by which sections? Section number 23 to 41 is regulated by section number 23 to 41. You want to increase your share capital through public offer, you should comply 23 to 41. Not only 23 to 41, you should comply what? SEBI, SCRA and Depositories Act also. What act? Depositories Act. And the next one is private placement. What is that? Private placement. Private placement, again it is divided into 2 parts. Normal private placement and preferential allotment. What is that? Preferential allotment. Sir, what is the difference in between normal private placement and a small thin line is there in between normal private placement and preferential private placement? Okay, private placement means you are selecting the persons and you are giving the offer letter, specific invitation. What is private placement? Specific, Mr. A, B, C, D, E. So I am inviting you people to purchase my equity shares. If you are okay, please make an application. Along with application money, I will allot the securities. I will file return of allotment with ROC. You pay not cash, only through bank. That is what. Within 60 days, I will allot. Otherwise, I will refund the application. That is what private placement. Very simple. So what is the difference between normal preferential? So if I am inviting existing equity shareholders or preference shareholders or employees, then it is called preferential allotment. What allotment? Preferential. I am selecting Mr. A, equity shareholder. So if you want, you can purchase the shares. Mr. B, preference shareholder. If you want, you can purchase the share. Mr. C, employee. If you want, you can purchase the shares. Yes. So selective invitation only. In selective invitation also, preferential invitation. What is that? Preference basis invitation. You know, invitation cards we are printing in different way. For VIP, separate invitation. For normal people, everyone will give blessings for you, but we will invite separately. For VIP, separate card will be there. For normal invitees, normal relatives, poor people, separate invitation will be there. So in our relatives also we are giving discrimination. Okay, VIP card, VVVIP card, like that we are going to there in invitation card. For VIPs they will give separate invitation. Along with invitation they will give gift also. For VVIPs they will give gold gift or silver gift. For normal people, they are all relatives only. And these VIPs and VVIPs are not at all relatives to us. They are all ministers, MLAs, politicians, or maybe officers who are the influencers. Okay, for them we are inviting separately, okay, to show you your overaction, build up. Anyhow, now come to the point. Private placement, two types. You are selective invitation only, but if any relation with the company, those people you are inviting, that is preferential allotment. And without any relation you are inviting, that is a normal private placement. Okay, so normal private placement, you should follow section number 42. What you have to follow, ma? Section number 42, and rules also there. I am not going to refer the rules here. Section number 42, and preferential allotment also section number 42, ma. Section number 42 and section number 62. Sir, what is there in section number 62? Only one extra point, ma. If you are inviting a equity shareholder, ma, not all equity shareholders, selectively we are inviting equity shareholders, preference shareholders, employees to subscribe the equity shares or preference shares or debentures, whatever it may be, you have to show the valuers report. Valuation report. On what basis share is valued? On what basis share is valued? Because there is a possibility of issuing shares to the concerned persons at very less cost. Market price is 100 rupees, but I am inviting one equity shareholder, Mr. A, please come. Mr. A, please come. I will offer you 100 equity shares at the rate of 50 each. Can you please subscribe? Okay, you can do. That is a preferential allotment, but you are doing preferential allotment, means preferential private placement, then valuers report to be attached. On what basis you already share at the rate of 50 rupees? Normally, what is the market price? 100. Same share if you want to offer to outsiders, how much, what is the price you are offering? 100. But you are selecting some shareholders and employees and preference shareholders, and you are offering only at 50 rupees. Now, then what is the basis for valuation of 50? That values report you have to attach. That is the only difference. That's all. Okay. Preferential allotment. What is that? Preferential allotment. So both are private placement only. Third one is what? Right shares. Right shares means section number 62. What is right shares? Right of preemption. What is right of preemption? So everyone has every equity shareholder has a right not to dilute his ownership. Okay, he has a right to protect his ownership. Right of preemption. First empty our stomach, then only can ask outsiders. If I said no, then only please ask money from outsiders. If I am not saying no, then please don't go to outsiders. Based on this right of preemption only, authority matrix is there. What is authority matrix? For example, one company, they want to offer securities to public equity shares. I want to offer equity shares to the public outsiders. I have to take the permission from the existing equity shareholders or not? Why? Why I have to take? My company requires money. That's why I am offering shares to outsiders. They are paying application money. I am taking. Why equity shareholders permission I have to take? Ownership will be diluted. Section number 62. Right of preemption. What is that? Right of preemption. If you want to issue equity shares, other shares no need of any permission. But equity shares are convertible preference shares or convertible debentures. You want to issue to outsiders. Outsiders means other than equity share, existing equity share, other than existing equity shareholders, you want to offer, then you have to take the permission from the existing equity shareholders by way of special resolution in general meeting. By way of special resolution in general meeting. That is nothing but right of preemption 62. In other words, before offering those equity shares to outsiders, offer to us. That is called right shares. Before offering these shares to outsiders, please offer to us. That is called what shares, ma? Right. Right means I have a right to subscribe. I have a right to subscribe. If I am not subscribing, then only please go to others. Ma general meeting special resolution is passed means what? They are not interested only. Na? We conducted a meeting, a general meeting. For what purpose we conducted a general meeting? We are issuing equity shares to outsiders. Are you okay? They said yes. So special resolution is passed. What it mean? They are not interested to subscribe. That means we have to offer right shares. Huh? No need. If they are saying no, then only we'll offer what? Ma? Right shares. If they are saying no in the meeting, then only we'll offer what? Right shares. Okay, boss, you are interested now. Please, I am inviting you people to subscribe the shares. Please subscribe. Right shares. Existing shareholders. You are offering to existing shareholders. Even though at large, existing shareholders means 10,000, 20,000 people are there, equity shareholders. You are offering to 20,000 existing equity shareholders also. You have no need to follow section number 26, contents of the prospectus. You have no need to follow what ma? Section number 26, contents of the prospectus. 23 to 41 is not applicable. 62 is applicable. What is applicable? 62 is applicable. Section number 62, very simple section. So you can reduce your issue expenses. You can reduce what ma? Issue expenses. You are procuring funds from the existing equity shareholders by way of issuing right shares. You can reduce what ma? Who will reduce? Company can reduce what ma? Issue expenses. Whatever the issue expenses are reduced by company, maybe few that some portion of that issue expenses will be offered to the shareholders itself. That's why right share price is less than the market price. Same equity share market price is 100 rupees, but we are offering right share to equity shareholders at 95 rupees. Why are 5 rupees less? Unnecessary why are company is taking loss 5 rupees? No, actually 10 rupees benefit for company. Flotation cost is 10%. We are saving that flotation cost by offering the shares to existing equity shareholders. So company is saving how much? 10 rupees. Out of that 10, 5 rupees is given to shareholder. So shareholder also happy, company also happy. Win-win concept in right shares. What is there? Win-win concept in section number 62. Okay, right shares. Next what ma? Bonus shares. Bonus shares in section number 63. Even though it is asked in your exam in May 2024 for 5 marks, direct theory question, I am not going to discuss in Marathon. You please refer because no discussion is required for bonus shares. You know very well. Bonus shares, issue of bonus shares, only fully paid up bonus shares can be issued by the company, and the company has to offer to all shareholders on uniform basis at a fixed ratio. Okay. And what sources you can utilize for issue of bonus shares? Nothing but capitalization of profits. Okay. What sources they can utilize? Everything. And one controversial topic is there. I am not going to discuss in Marathon class whether capital reserves can be utilized for issue of bonus shares or not. Capital reserves can be utilized for payment of dividend or not. That is a controversial topic. And I referred some resources also to you to come to a conclusion in our regular class. In Marathon, it is not possible by showing ICSA guidances and all. So it is not possible. So leave about it. They will not be asked in the exam. But as per Institute of Chartered Accountants of India suggested answers, capital reserve maybe cannot be utilized for issue of bonus shares based on the assumption it is not realized in cash, or maybe it is not authorized in the MOA and AOA. So like that, because of that assumption, maybe they are taking that stand. You can take another different stand also, that is okay. Okay, so for example, in your exam, capital reserve is also there in your bonus shares problem. Whether we can utilize the capital reserve or not means ignore the capital reserve. Don't utilize the capital reserve for issue of bonus shares as per your Institute of Chartered Accountants of India suggested answer for one question given in the previous examination. Okay. And no sir, I want to contradict the institute, sir. Okay, you can contradict, but based on some assumptions and references you can contradict, then valuer can understand. Okay, very good. Next, bonus shares is completed. Next, what is it? Sweat equity to employees, right? To employees, two types are there. What is that? To employees, two types, ma? One is sweat equity, one is what, ma? Sweat equity, other one is ESOP. Sweat equity, section number 54. 52 is the premium, right? Utilization of securities at premium. 53 is discount. 54 is nothing but sweat equity. Why are 54 they included there itself? Because issue of shares at discount, one of the exception is sweat equity. Section number 53, what lawmaker says? Issue of shares at discount is prohibited. But what is the exception to that? Sweat equity. So immediately lawmaker, he included section number 54, how to issue equity shares to employees through sweat equity option. That's all. That is what section number 54. And ESOP is covered in section number 62 itself. There is no separate section. ESOP is not that much important. Ignore it. Okay. It is important in your accounts maybe, not in your law. Okay. Accounts it is there, ESOP. One accounting standard number 15 is there. Employees benefits something. It is there in your syllabus or not? Yeah, that's called ESOP. What is the problem? Next. Now, next last one is convertible debentures. What is that, ma? Convertible debentures are loans. Convertible means today it is debenture, but tomorrow it is a equity share. So your issued share capital will increase. Your issued share capital will increase. So convertible debentures also monitored by section number 62. And section number 71. What is 71? Debentures. 71 is a debentures. These are 8 ways. If you count now, how many ways came? 8 ways. Each and every way is regulated by the Companies Act 2013 or rules thereof. So I said this is called Astadigbandhana. In no way company can procure the funds from the shareholders to increase their paid up share capital without any rules and regulations. It is not possible. Okay, some exceptions are there that we will see later. Out of our own interest, we discuss some exceptions. Two exceptions are there. That is not required for your means exam. Okay, it is not required for your exam. Next, now we are discussing sweat equity shares. What shares, ma? Sweat equity, section number 54. In this sweat equity shares, important points what you have to remember. Sweat equity shares, what points I have to remember are important points. Normally they asked limit. Sweat equity shares limit is, how much limit is sweat equity shares? At a time, how many shares you can issue? Sweat equity shares at a time, how many shares you can issue? What is sweat equity? First of all, you are issuing shares to employees at a discount. You are issuing equity shares to employees at discount. That is nothing but what, ma? Sweat equity. Face discount means less than face value. Don't think less than market value. Some students are there. Okay, they are thinking that sweat equity shares means less than. Discount means less than. No, not less than market value. Less than market value, company discretionary. They can issue. Less than face value. What is that? Less than face value. If you want to issue the shares, that is called issue of shares at discount, which is prohibited. But sweat equity can issue. Employees are actually they are working for the organization. Okay, they are working for the organization. For that purpose, for their sweat, we are issuing what, ma? Equity shares. They are converting. I said they are converting their blood into sweat to for the growth of the organization. They are converting their blood into sweat for the growth of the organization as a token of appreciation or gratitude or as a contribution for their contribution to the organization. We are issuing what shares, ma? Sweat equity shares. So you can issue even at zero price also. Free of cost also you can issue equity share. Discount means zero also discount only. 10 rupees face value are issuing at zero. That is also discount only. 1 rupee, 2 rupee, 3 rupee. That is also 100% discount. What discount, ma? 100% discount. Select any shop who is giving 100% discount. Okay, they will give 100% discount also. Board will be there 100% discount. So if you are going into shop, what will be there? 100% discount means purchase one shirt, another shirt is 100% discount, sir. This shirt cost includes that shirt cost also. You know, cost accounting, everything. Even though you know everything, cost accounting, financial management, still you are going to shop who is giving discount. That is the problem here. Who will give, if any customer will give, any supplier will give discount? No. Really no. Okay, but here company is giving really discount to employees. Why? Because employees are working for the organization, or to make them work for the organization, to develop the proprietary concern among the employees towards the organization, to develop the proprietary concern. If you are offering shares to employees, it is not the intention to procure funds. Normally company offering securities means what, ma? Intention to procure the funds. Company offering securities means what is the intention? Procurement of funds only, na? Why I am giving shares, na? For funds only. Why I am giving debentures? For funds. Shares to debentures, goods I have. Company is having goods of shares to debentures. I am selling my goods to you for what? For money. But company offering shares to employees means money is not the motto. What is the motto here? Other than money, qualitative benefits. What benefits, ma? Qualitative benefits. Not money actually, other than money. Means employees has to work for the organization, to develop that work culture towards dedication towards the organization. We are issuing equity share. That is what sweat equity or ESOP. There are two different options are there: sweat equity, ESOP. ESOP is an option. That option can be converted into shares in future. That is ESOP. Sweat equity direct shares, ma. There is no confusion in sweat equity. Sweat equity direct. Employee, you are joining in my organization. Okay, you are working for my organization. Okay, I will give 1000 shares to you. Sir, I have no money, sir. No, don't worry. No need of any money. I will give free of cost. Why, sir? Because you are working for an organization. Employee may bring an asset or may not bring an asset to the company, which can be recognized as an asset as per your accounting standards. She is bringing some intellectual property rights, IPR, which can be recognized as an asset in your accounting standard. In your accounting standard, yes, 29, I don't know what is accounting standard number. As per that accounting standard number, 29 intangible assets, 26 intangible assets. If that intellectual property rights can be recognized as an asset, yes, you can recognize an asset. Then it is called consideration other than cash. Then it is called what, ma? Consideration other than cash. Simple accounting entry, ma. I am giving 1000 shares. She is bringing one patent, copyright, trademark, or know-how, whatever it may be. She is bringing. Okay, so that is a consideration other than cash. Simple, sir. She is not bringing any assets, sir. She is working for organization, sir. Okay, it cannot be recognized as a asset, make it as a salary, employees cost. My accounting entry is required na. What is accounting entry? Tell me. If I am issuing 1 lakh equity shares at the rate of 10 each, 0 to her. Tell me what is accounting entry? You are going into accounts also. My set equity accounting treatment is also very important. In set equity shares, what is very important ma? Accounting treatment. Limit is also very important. What is the limit ma? At a time, how many shares you can issue ma? 15%. How many shares? 15% of existing equity share capital or 5 crores rupees, whichever is higher. That is what you can issue at a time. And overall limit how much ma? 25%. So if your paid up share capital is 1 lakh, maybe out of this 1 lakh 25,000 rupees you can offer to employees through sweat equity. All shares you are issuing to employees na, then how company will procure the funds? Sir, I have 1 lakh shares, sir. Total 1 lakh shares I issued to employees, sir. Then only employees are required for organization. Money is not required. Employee is not the only resource. My employee is the one of the resource. Yes, for that resource, how much you can spend? 25% you can spend. Maximum you can spend 25%. Aggregate how much ma? 25%. For startup companies, that limit has been extended how much ma? 50%. For how many years ma? 10 years. This concept has been asked in your May 2022 question number 1A 5 marks. For startup company, how many years? For 10 years. Why startup company? For startup company, employees also very important. Because company is not having any goodwill, brand name, creditworthiness, fast track record, nothing is there. So employees has to work committedly. That's why for startup company, sir, what is a startup company? Which is notified as a startup company by the Ministry of Department of Industrial Promotion, something is there. Don't worry about it. So which is notified as a startup company by the government, that's all. Some department, concerned department. Don't say my company is startup company, I just started, that's why startup company. You just started, it is not a startup company ma. Since you started, it will not become a startup company. You should get the status of startup company by making an application to concerned department. If you get the status, then only for 10 years, this limit has been extended to how much ma? 50%. Okay, that's all. Next, lock-in period, based on this also they ask ma, lock-in period means today I issued shares to her. Why? For what purpose? She will work for the organization with dedicated, means with proprietary consent she work. Because she is also a owner of the company. She also feels like that I am not employee, I am the owner. So to create that feeling, I just issued the shares to her. What she has done? Immediately after issuing shares to her, she sold the shares in the market. She got the money. Again that dedication gone. Again next day I have to issue shares. But continuously every day I have to issue shares to keep her motivated to work in the organization like that. Then here shares will be issued to employees. Then you have to change your object clause in memorandum of association. Here in this company, shares will be issued to the employees at free of cost. That is what our object, not doing business. Okay, that's why lock-in period. I issued shares to you, so you should not transfer the shares to some other person. Maximum lock-in period how many years ma? 3 years. Maximum 3 years you can kept. Without lock-in period also you can issue. That is your option. It is not mandatory. Maximum lock-in period. See, it is not very clear ma. Lock-in period maximum, minimum, it is not clear in the provisions. But in your institute question, it is clearly said maximum lock-in period is 3 years. Even though it is not given in the institute suggestion answer, you have to interpret the section. Lock-in period for what purpose? Lock-in period means not to transfer the shares by the employees. Okay, for that purpose we are keeping a lock-in period. Can I keep 100 years lock-in period? No, that's why 3 years is the maximum lock-in period. 3 years is the maximum lock-in period. So company at its discretion they can keep lock-in period. This is an exception to transferability of shares. Shares are freely transferable, something you are saying na. So for that feature this is an exception, lock-in period. For ESOP also lock-in period will be there. ESOP actually holding period will be there, lock-in period will be there. So that we will see later in ESOP. Okay, next all these things accounting treatment ma. Next point is accounting treatment. Accounting treatment is very simple ma. I am issuing shares, she is bringing some asset. Then what I will do? I will write an entry. What entry I will write? Asset account debit to paid up share capital credit. Finish. No, she is not bringing any asset, but still I am issuing shares. Then what I will do? Cash I am getting a no. Then what is debited? Tell me what to be debited. P&L account debit, employees expenses debit to paid up share capital account credit. Okay, that is what the accounting entry, accounting treatment, what you have to do. That is what sweat equity says, section number 54. Okay, then what about section number 55 is nothing but redemption of Issue and redemption of preference shares. This is also we are expecting a question, but they are not asking. Section number 55, we are expecting issue and redemption of preference shares. You know very well, preference shares only, redeemable preference shares only can be issued by the company. And for issue of preference shares, special resolution to be passed in general meeting. Then only you can issue the preference shares, because right of preemption section number 62 is applicable here also. So if you want to issue preference shares, what resolution to be passed, ma? Special resolution to be passed. Only redeemable preference shares only can be issued. Maximum redemption period how much, ma? 20 years. For infrastructure companies, how many years, ma? 30 years. If you are issuing 30 years preference shares, then every year you have to redeem from at the end of 21st year onwards, you have to redeem at least 10% every year. That is what the points what you have to remember for redemption issue of preference shares. Okay, that's all. What about redemption of preference shares, ma? Redemption of preference shares is very important because of utilization of security premium is linked to redemption of preference shares. What is that? I took an example in our regular class to make you understand what is the redemption of preference shares. Okay, I took an example, Chitragupta. So I took an example to understand, to make you understand what is that, ma? Redemption of preference shares. But we don't have that much time to explain the examples in Marathon. But what I can say, one chart is very important. That chart I will tell you. Please note down the chart, even though you are not my students, please. Okay. So what is that chart, ma? We provided. So redemption of utilization of security premium account for redemption of preference shares. Utilization of security premium for redemption of preference shares. That chart only we provided. Please. Utilization of security. The students who already wrote, please don't write once again. The students who are not there in our class, please, that students only can write. And for YouTube viewers also, maybe it is informative. That's why utilization of security premium for redemption of preferences. First of all, for redemption of preferences, why we have to utilize security premium? To redeem preferences, what is required? What is the meaning of redemption, first? You are taking money from preferences, na? Then after 10 years or 20 years, what you have to do? After 10 years or 20 years, what you have to do, ma? You have to pay back, na? That is called redemption. Okay? Sir, we are taking money from preferences, we are giving money to preferences. That's all finished, na, sir? Why, sir, unnecessary discussions here? Issue utilization of security premium for redemption of preferences. Cash is required. Profits are required. Cash is balance sheet asset side. Profits are balance sheet liability side. What is required? Tell me for redemption of preferences. Cash or profits? You need balance sheet asset side or balance sheet liability side? Both required. Why, sir? Tell me the accounting entry for redemption of preferences. You are all experts in accounting, na? I want to redeem 1 lakh preferences. How many shares, ma? 1 lakh preferences. I want to redeem. What is the face value? 100 rupees. What is the redemption value? 200 rupees. Face value 100 rupees. Redemption value 200 rupees. 1 lakh preferences. I want to redeem. First of all, if you want to redeem, preferences should be fully paid up. If you want to redeem, preferences should be fully paid up shares only can be redeemed. Okay. Partly paid up shares cannot be redeemed. First, they have to give money to us. Then only we will repay. Next, tell me the entries. What is the entry? 1 lakh preference shares at the rate of 100 rupees. Okay, for your calculations, I will reduce the number of preference shares. 10,000 preference shares at the rate of 100 rupees. But I am redeeming at what price? 200. This is called redemption at premium. This is called what? Redemption at premium. Tell me what is the entry? Okay, preference share capital account debit. 1000 into 100. How much? 10 lakhs to preference shareholders account. To preference share capital account debit 10 lakhs. Redemption premium on redemption of preference shares. Even your shortcut props. Props account debit. How much props account debit? 10 lakhs. To preference shareholders account 20 lakhs. So next entry preference shareholders account 20 lakhs to cash or bank account 20 lakhs. Okay, sir. Completed, sir. Cash paid, na? But what is left in the books, ma? Props. Props you have to write off, na? Props is now it is in debit side. Then you have to use the credit side profits to write off. Prop is an asset, Prop is an asset to keep in the balance sheet asset side. That is plant and machinery you are going to use. Props is a fictitious asset. What asset, ma? Fictitious asset. Why it is created? Because of redemption. Because of redemption, fictitious asset is created. That is not an asset. fictitious asset is created, balance sheet, asset side, props. Okay, what you have to do? You have to write it off. Asset side you want to reduce, what should be reduced? Liability side. Liability side, what you are going to reduce? Equity share capital. They will agree. Preference share capital. No. Then debentures. And then loans you are going to reduce. Then current liabilities you are going to reduce. And then what you are going to reduce? Profits. What is that? Profits. Which profits you have? General reserve, P&L account, capital redemption reserves also there, security premium account is there, revaluation reserves are there. These are all the profits. Okay. Normally profits who is having a right, ma? Equity shareholders only having right on the profits. Okay. But company equity shareholders both are same only. So equity shareholders, company is redeeming the preference shares. They utilize the money of the preference shares for their business, and after that you have to repay as agreed with the premium. As agreed with the premium, no doubt that you have to do. But to write off this 10 lakhs rupees, what you are going to use? To write off this 10 lakhs rupees, what you are going to use? P&L account, general reserve, revaluation reserve, capital redemption reserve, security premium. Security premium we can use. First priority will use CRR. CRR can be used. No, CRR only can be used for issue of fully paid up bonus share. CRR cannot be used. Security premium we can use. That is the point what I am asking here. Utilization of security premium for redemption of preference shares. Premium on redemption of preference shares. That is what I am going to give you. Okay. General reserve, P&L account you can use, no issue. Revaluation reserve you cannot use. That is not a actual reserve. Revaluation reserve you cannot use. You can use only general reserve, P&L account. These are all you can use. But security premium can be used or not. That is what the question here. So for that, please write one small chart. And not only that, ma, you have to transfer amount to CRR. You have to transfer amount to where, ma? CRR. How much amount you have to transfer to CRR for redemption of preference shares? Face value of the preference shares redeemed. How much face value? 10 lakhs. So for transfer to CRR also you need profits, na? So for two purposes you need what, ma? Profits. When you don't need profits for redemption of preference shares, can you please tell me? If I am asking a question in your question paper, when there is no need of profits, or otherwise I will ask questions like this: can a company redeem the profits, preference shares without any profits? Sir, without profits, how sir cash came balance sheet? No, Prashish and I am asking one more question. Without profits liability side, how cash came debit side? Without profits liability side, how cash came debit side? Maybe profits are capitalized by way of issue of bonus shares. We don't know. Profits are capitalized by issue of what shares, ma? Bonus shares. So profits are there, but profits are capitalized by issue of what shares? Bonus shares. So we don't know. So profits are not there. Sufficient profits are not there. But what is there? Cash is there. What is there? Cash is there. So we have a cash balance. Can we redeem the preference shares? Always not possible. When it is possible? When it is possible, without profits, can we redeem preference shares? I have cash. I have 20 lakhs cash with me, but I don't have 10 lakhs profits in the profit side of liability side. Can I redeem the preference shares or not? Possible or not possible? Possible. When it is possible? Two conditions you have to satisfy. You are issuing preference shares, you are redeeming preference shares at par. You are redeeming preference shares at par, and you are issuing new preference shares to new persons, not the same preference shareholders. You are issuing new preference shares to others. 10 lakhs preference shares you have to issue to outsiders. If these two conditions are satisfied, then profits are not required. But it is not possible to satisfy both the conditions always. That's why for redemption of preference shares, not only cash balance in asset side, but also what is required, ma? Profits liability side also. What profits it requires? General reserve, P&L account to security premium. Only some cases you can utilize. You know very well already Indian accounting standards companies, they cannot utilize. Normal accounting standards companies, they can utilize. Because normal accounting standards, one of the point is to write off the premium on redemption of preference shares, and accounting Indian accounting standards, that point is removed. Okay, so write a chart, ma, small chart. I am just dividing into two parts. Preference shares are issued before 1st April 2014. Why sir you took this date? Because section number 52 came into force on 1st April 2014. 52. What is 52? Utilization of security premium account. That is came into force from what date, ma? 1st April 2014. That's why. Until that we are following Companies Act 1956 only. Okay. For that particular point. Next, preference shares are issued. Sir, you are talking about redemption, issue, sir? Redemption. Then why sir you are writing issue, if you issue then only redeem na. Without issue you'll redeem, possible? No, not possible. Preference shares are issued before 1st April 2014. Again, I am classifying into two types. Redeemed after, before, redeemed also before 1st April 2014. Redeemed after 1st April 2014. Issued also before April. Redemption also before April. Companies Act 2013 is not there. No need to follow section number 50 to all these things. So, Companies Act 2013 is not applicable. We are not going to discuss that. Sir, issue before Companies Act 2013. Redemption after Companies Act 2013. Sir, then what we can do? We will take the stand of the issue date, not redemption date. What date? Issue date. At the time of issue, what act is there? Companies Act 1956 is there. At the time of redemption, even though Companies Act 2013 came, still we will follow what act? 1956. Yes, you can utilize. Yes. Yes. Yes means what? You can utilize the security premium account. Okay. For what purpose? For right of the redemption on premium and redemption of preference shares. Props. Preference shares issued after 1st April 2014. Here I am dividing into two parts. Redeemed before, redeemed after. Preference shares are issued after 1st April 2014. Again, we are dividing into two parts. What two parts we have to divide? Redeemed before 1st April, redeemed after 1st April. No. Normal accounting standards companies. In days. Normal accounting standards? Yes. In days? No. That's all. That is what the chart what requires for redemption of preference shares. By this, we end the topic of redemption of preference shares. Next topic is, sir, company is unable to redeem the preference shares. Company is unable to redeem the preference shares. Why company is unable to redeem the preference shares, Why company is unable to redeem the preference shares? Maybe there is no cash balance or maybe there is no profits. There is no cash, balance sheet asset side, no profits, balance sheet, liability side. Because of any reason, if company is not in a position to redeem the preference shares, what is the remedy available to the company? Company can issue further preference shares to the same preference shareholder to redeem the existing preference shares. I said hilariously, I will say one example actually. So 10 years back, I paid money to the company and company says I will give money after 10 years. And after 10 years, again I am asking money, they are giving one more share certificate. What I will do with that? Okay, for my children's education or marriage, I invested in my company's preference shares. They said after 10 years, I will redeem, or after 20 years, I will redeem at the rate of 200 rupees per preference shares. After 20 years, what company is saying? I don't have money, I cannot give the preference share, but I will give one new certificate. Old certificate they are taking, they are giving what? New preference share certificate they are giving. They are 10% interested, now 11% interested, that's all. They are 100 rupees face value, maybe here 100 rupees face value, but redemption value maybe they increased. Tenure may be decreased or increased. So you are postponing the payment of redemption of preference shares by another 20 years. So redeemable preference shares you are converting into irredeemable preference shares by using this section. Maybe this section may be a loophole. Loophole of the law. That's why lawmaker clearly says you want to go for this option, you have to take the approval from tribunal. You have to take approval from where? From tribunal. You have to take approval from tribunal. And you have to take the consent from the preference shareholders also. And the shareholders who are not giving the consent to them, you have to pay off the immediately. Sir, for them also we don't have money, sir. Then wind up the company. Simple. That is what the small point. Okay, that you have to remember. Maybe I am expecting. No, I am not expecting this time. Section number 55, they are not asking. Even from last 7 to 8 attempts also, there is no question from section number 55. And 56, 57, 58, 59 and 60. No, we are not going to discuss. Okay. This is transfer and transmission of securities. Even my regular class also, I didn't provide any running notes to students also. Because it is an outdated concept. Nowadays, all shares are in dematerialized form. All shares are securities are in which form? Dematerialized form. So every company has to issue securities only in dematerialized form, and if dematerialized form of securities, all these sections are not applicable. Then why unnecessarily you are wasting time? I didn't waste the time in regular class itself, so that I cannot waste even 1 minute also for in marathon section. Okay, And if any person is asking any question from these sections, he is a fool. He is a bloody fool. Okay, no doubt in that. If any question they are asking from section number 56, 57 and 58 and 59, 60 is of course it is not in our syllabus. So these sections they are asking still in CA Inter Law exam, then it is a foolishness actually. Sir, maybe because of his foolishness, we will become the victim now, sir. Okay, don't become the victim. I am not discussing in Marathon. I am not saying you please don't study. You please refer. Okay, I will not discuss in the Marathon section because I am not a fool. Okay, now come to the point. Next, section number 61. Ma, 61 very simple, ma. Now we are entering into second topic of share capital, alteration of share capital. What is that? Alteration of share capital. Alteration means increase, decrease. Both are alterations only. So, first, share capital, alteration of authorized share capital, alteration of issued, subscribed, called up and paid up share capital. Share capital I am dividing into two parts. I am dividing share capital into how many parts, ma? Two parts. Alteration of authorized share capital, one part. Alteration of issued, subscribed, called up, paid up share capital, one part. Why, sir? Authorized share capital alteration is not having any impact on books. And there is no impact on any other person. Outsiders will not be impacted if you are altering your authorized share capital. That is only book. Only in memorandum of association capital clause only it is there. In balance sheet it will not be affected, and any shareholder will not affect. Any creditor also will not affect. That's why alteration of authorized share capital is very simple. Section number 61. You can alter your capital class, you can increase, you can decrease, whatever you want you can do without touching issued, called up and subscribed or paid up share capital. So by passing ordinary resolution. What resolution? Ordinary. So 5 different types of alterations are there. One is increase, other one is decrease, other one is consolidation, or otherwise split off or conversion into stock. I am not going to waste the time for section number 61. You please refer in the material. For any process, ordinary resolution is sufficient. You have to inform the ROC. ROC will issue a certificate of change. That's all. Next, section number 62 is right shares. What is that? 62? Right shares. So right shares also not that much important. But I will see once section number 62, right of preemption. This section is having an effect on so many other sections. That's why it is important. Standalone section number 62 is not that much important, but 62 is very important because it is having effect on some other sections. Okay, because section number 42, section number 23 to 41, section number even 55 also, issue and redemption of preference shares, everywhere 62 is having its impact. 62 is having its impact because right of preemption. Don't simply say 62 is a right shares. No, 62 is a right of preemption. What is my right of further issue of share capital? They didn't say right shares. What is that? They said further issue of share capital. Company want to issue equity shares or preference shares to anyone, section number 62 is applicable. If company want to issue any equity shares or any preference shares to anyone, what is applicable, ma? 62 is applicable. Without taking the consent from the existing equity shareholders, you cannot offer any shares to anyone. That is very simple. Sir, how to take permission, sir? By passing special resolution in the general meeting. In other words, first offer the shares to them, then only can offer to others. So you are offering shares to the existing shareholders, that is called right shares. Only point what I can say, for right shares, one point you have to remember, right shares will be offered uniformly, not on selective basis. If you want to offer right shares, board of directors, they have to offer right shares uniformly to all the class. To all class, not for one student or two students, or one shareholder or two shareholders. Selective basis, no. Selective basis you are offering, that is called preferential allotment. What allotment, ma? Preferential. I am selecting one equity shareholder or two preference shareholders or three employees, that is called preferential allotment. What is that? Preferential allotment. That is secondary. That is private placement. Preferential allotment, section number 42 and section number 62, one small point is there. That is what applicable. But you are offering right shares. Right shares means to all existing equity shareholders. Class. For one class of shareholders, you can offer. All classes not required. For one class of equity shareholders, you have to offer uniform basis in a fixed ratio. You have to circulate the offer letter, and you have to give the time to them to take the decision. Minimum time 7 days, maximum time 30 days, and 3 days before you have to circulate the offer letter. And this time limits can be reduced for private company by taking consent from the members, 100% consent from the members. That is what right shares. Not the subscribers. Means members, they can decide themselves whether to subscribe or not. So if they are silent means it's a rejection. Silence is a rejection here. I am silent for 30 days time has been given to me to take the decision whether to make an application or not. I am not making an application means it is a rejection, or I am rejecting expressly. I am rejecting expressly. Anything can be done. Sir, what happens are rejected shares? Rejected shares directors can dispose of. Means dispose means they will not burn. Okay, means they can allot the shares to outsiders. Okay, which is beneficial to the company and which is beneficial to shareholders. That is what section number 62. And 62, one more point is there: convertible debentures and convertible loans. But that is not that much important. Even in your material also it is not there. We are moved to self study. Please read once: convertible debentures and convertible loans. Okay, convertible debentures, for issue of convertible debentures also you have to take the permission from the existing equity shareholders by way of special resolution. Not at the time of conversion. Not at the time of conversion. You have to take the permission from your parents when you are loving someone. Not at the time of marriage or after marriage. No. Okay. Like this, here also you have to take the permission from the existing equity shareholders. You have to take the permission from existing equity shareholders at the time of issue of convertible debentures or at the time of conversion. Issue of convertible debentures. Not conversion is mandatory. Conversion is mandatory, ma. Issue at the time of issue of debentures, you have to take the permission from the existing equity shareholders. Okay, convertible debentures requires permission from the existing equity shareholders. But compulsory conversion on small topic is there. What is that? I don't want to go into the topics, but I am dragging my leg actually. Now we'll go to section number. Next topic, ma. What is the next topic? Section number 66, 64, 65. Not in your syllabus. Don't worry. Now we are going to section number 66. Reduction of share capital. What is that, ma? Reduction of share capital. 66, 68, 69, 70. All these sections, 4 sections are dealing with decrease of issued share capital, subscribed share capital, called up share capital, paid up share capital. See, I provided a small chart to you how to increase. This is how to increase the issued share capital. Then how to decrease also you should learn. How to increase issued share capital, that is what the chart. Now we are discussing what, ma? How to decrease. How to decrease. Decrease, or you can say diminution, no, decrease of issued share capital, subscribed share capital, called up share capital, paid up share capital. There are 2 ways, ma. What is the 2 ways? One is reduction, other one is what, ma? Buyback. One is reduction, other one is what, ma? Buyback. Reduction or buyback. Sir, when reductions are, I said 2 points, either overcapitalization or undercapitalization. Overcapitalization or undercapitalization. I am not going to discuss what is overcapitalization, what is undercapitalization, why reduction is going for overcapitalization. Logics, no. Don't expect logics in Marathon section. Okay? For logics, you should come for what class, ma? Regular class. Everything I am discussing in Marathon, then no student will come to regular batch. Okay, so logics if you want, you come to regular batch only. Okay, not in Marathon. So buyback only in case of what capitalization, ma? Over capitalization, ma. Strictly speaking, even this content also we cannot provide to students online actually in YouTube. But anyhow, so some value addition should be there for the students who are watching this Marathon classes. That's why I'm just writing reduction in how many cases, ma? 2 cases. One is over capitalization, other one is under capitalization, and buyback only in case of over capitalization. Sir, reduction, what is the procedure, sir? But normally first you should know how many number of ways to reduce the issued share capital or subscribed share capital or called up or paid up share capital. There are 3 ways, ma. There are 3 ways. Simply to say, to make you understand, simply to say there are 3 ways. One is decrease in face value. Other one is decrease in paid up value. Other one is decrease in face value and paid up value. There are 3 ways. Simple. There are how many ways, ma? 3 ways. What are those 3 ways, ma? Decrease in face value. Second way, decrease in paid up value. Third way, decrease in face value and paid up value. So take an example, 1 lakh equity shares are there at the rate of 10 each, 5 rupees paid up. This is the example. Only fully paid up shares only can be reduced. There is no such concept. Fully paid up shares or partly paid up shares also can be reduced. You will come to know what is the difference between reduction and buyback later. After discussing reduction and buyback, better you will prepare a table at your own differences between reduction and buyback. If any differences they might have, they want to ask in your exam, this is the first preference I will give: reduction versus buyback. Okay. Sir, how to reduce? 3 ways you are saying, na? 1 lakh equity shares at the rate of 5 each fully paid up. I didn't touch paid up value. Paid up value same 5 rupees, 5 rupees. But what I have done ma? 10 rupees face value I reduced to what ma? 5 rupees. This is called extinguishment of right. What is that ma? Extinguishment of right. Okay. And the second case, what is second case ma? Reducing paid up value. 1 lakh equity shares at the rate of 10 each, 3 rupees paid up. 2 rupees I am paying back. 2 rupees I am paying back because I have more money. Sometimes 2 rupees they will sacrifice. Who will sacrifice? Equity shareholders will sacrifice. That is called undercapitalization. What is capitalization? Undercapitalization. Third case, 1 lakh equity shares at the rate of 10 each, not at the rate of 7 each, 3 rupees paid up. I am reducing face value as well as paid up value also. Face value as well as paid up value. Thus, there are 3 cases of reduction. And I am saying once again, these 2 cases are possible. These 2 cases are possible either in overcapitalization or undercapitalization. These 2 cases are possible. Maybe few students, for them this is entirely new. They are just by looking their faces na, I can understand, sir, what he is talking over capitalization, under capitalization, reduction. He is saying 3 ways. Okay, but please. So just for your understanding, so decreasing in paid up value or decreasing on face value and paid up value can possible in 2 cases. One is over capitalization, under capitalization. This is only possible in over capitalization. That's all. So strictly speaking, there are 5 ways to reduce. How many ways ma? 5 ways. Generally, I am saying 3 ways, but there are how many ways? 5 ways. In overcapitalization, there are 3 ways. Undercapitalization, 2 ways. So total how many ways ma? 5 ways. To make you understand simply, first type of reduction is reducing face value, decreasing face value. We are not touching paid up share capital. Only issued, subscribed, called up share capital only will be reduced. Okay. Second one, decreasing paid up value. Decreasing what value ma? Paid up value. Third case, decreasing face value and paid up value also. So this one can be done only in case of overcapitalization. This can be done in case of overcapitalization or undercapitalization. Overcapitalization means we have excess money. Undercapitalization means we don't have money. Okay, that's all. Overcapitalization means we are too much fat. Undercapitalization means too lean. That's all. That is what overcapitalization or undercapitalization. That's all. Okay. Now, what is the procedure for reduction of share capital, sir? If you observe, in all our examples, in all our different ways of reduction, we are not reducing number of shares. Number of shares are same only na 1 lakh, 1 lakh, 1 lakh, 1 lakh only. But what we are reducing ma? Only face value or paid. We are just playing with face value and paid value. We are not reducing number of shares. And partly paid up shares also can reduce. And there is no limit for reduction. You can reduce whatever you want. And reduction can be done in case of overcapitalization or undercapitalization also. And there is no time gap is required for one reduction to another reduction. Nothing. And what is the procedure for reduction ma? Special resolution, of course, it is okay. And you have to take approval from tribunal. You have to take approval from tribunal. Why approval from tribunal? Okay, logic is not required. You have to take approval from where ma? From tribunal. And no need to transfer the amount to CRR. No need to transfer the amount to, even though your paid up share capital is reducing, you have no need to transfer the amount to CRR because you are taking approval from where ma? Tribunal. Tribunal is a representative of all stakeholders of the company. Tribunal is a representative of all stakeholders of the company. That's why we have no need to transfer the amount to CRR. Okay, that is what the reduction of share capital. Next we are going to what ma? Buyback. Buyback is possible only in case of what ma? Over capitalization. We have excess money. We don't know. I am not talking strategical perspective. I am talking financial perspective. Only in case of over capitalization only, financial manager will go for a decision for buyback. Strategically, there are so many reasons. That is okay. That is I am not going to discuss. Okay. Sir, buyback, what is the process, sir? Buyback, important points are, there are actually 3 sections to deal with buyback. Section number 68, 69, 70. 66 is the reduction of share capital. Sir, what about section number 67, sir? 67 is company cannot provide any financial assistance to purchase its own securities. Why company is issuing securities? Why company will issue securities? Why? What purpose company is issuing securities? For funds only, na? Okay. So I am giving loan to her to purchase my own securities. Then how it will be? I am giving knife to kill me. That is how it will be. I am sharpening the knife and giving to her to kill myself. Or to stab me. Like that. Company, how company is issuing securities, ma? Why company is issuing securities? For money. For purchasing securities, money only giving by company. We need money, that's why we are offering securities. Okay, you are going to shop, you are purchasing a mobile. Shop owner itself will give money to purchase a mobile. Huh? Sir, they will give finance, sir. Finance also not related to that shop. Bajaj Finance or some other finance, so third party will be there. Shop owner requests money by selling mobiles. To purchase the mobile itself, shop owner will give money to ya? No. So company also cannot give loan to security holders to subscribe the securities. It is prohibited, but it is possible in two cases. When it is possible in two cases, ma? One is for employees, they can give finance. Because I said already, securities to employees is not for procurement of funds. That is not the object of the company. So if you want to issue securities to employees, employees want to purchase securities in the company, you can give the loans, ma. Collectively for trustee, you can give the loans, or individually also you can give the loans. Individually, some limit is there. What is the maximum limit, ma? You can give the loan to the employee individually. 6 months salary. 6 months salary you can give as a loan. Okay. And collectively there is no limit. Collectively there is no limit. That points just keep in your mind. That's section number 67. 68, 69, 70 all are related to what? Buyback only. Buyback, if I want to discuss only one point, I will discuss. Remaining thing you know very well. By reading material you will come to know. So time gap in between one buyback to another buyback, how much, ma? 1 year. So you have to complete one buyback. After that, after 1 year only you can go for another buyback. And one buyback resolution is passed. After that, you have to complete the buyback within 1 year. Within 1 year, you have to complete the buyback. Time gap in between one buyback to another buyback is 1 year. And cooling period is 6 months. What is cooling period? Same class of shares which has been bought back. Same class of shares you cannot issue for another 6 months. That is what the cooling period. These are all small MCQs they can ask. Okay. And only thing what I want to discuss with you to give the clarification in this session is buyback limits. What is that? Buyback limits. I said limits are two types. What is that, ma? Amount, shares, number of shares. So many students, they have some myths actually, and they misunderstood the limits of buyback. So I want to give the clarity for you. Buyback limits are two types. One is amount, another one is number of shares. Number of shares limit is how much, ma, maximum? 25% of that class. In that class, 1 lakh shares are there. You can buy back maximum 25% at a time. 25% at a time. I'm saying at a time. Slowly, after 1 year, you can buy back. But at a time, you can buy back only 25% at a time. So, of that particular class. That is what the limit on number of shares. And amount, again, there is two types. With the board of directors resolution, how much amount you can utilize? And with the general meeting special resolution, how much amount you can utilize? With the board of directors resolution, you can utilize how much amount, ma? 10%. With the general meeting special resolution, you can utilize how much, ma? 25%. 10% of what? Paid up share capital plus free reserves plus security premium. That's all. Very simple to say. And examples, you please refer my running notes once. It is not possible to calculate the examples in here. Okay. That's all. That is what buyback. And prohibition on buyback. What is that? Prohibition. Ma, here tribunal permission is required for buyback? No. We are reducing face value, paid up value. Huh? Buyback, we are reducing number of shares. We are reducing what shares, ma? 1 lakh equity shares are there. We are reducing 50,000 shares or 20,000 shares, 10,000 shares, like that. So we are reducing what? Not face value, paid up value. We are reducing what? Number of shares. Only fully paid up shares only can buy back. Please keep in your mind, buyback is a reverse process of public offer or private placement. Buyback is a reverse process of public offer or private placement. Ma, you can buy back the shares from the public, or you can buy back the shares from the private persons also, or you can buy back the shares from employees also. ESOP, sweat equity shares also you can buy back. From private persons also you can buy back. From public also you can buy back. Buyback is depend upon the shareholders, not depend upon the company. Ma, whether public offer is failed or success or depend upon the company or public. Public. Buyback also fail, success depend upon public. Shareholders, not on the company. Shareholders has to react. That's why company will offer higher price than the market price to the shareholders to attract them, to make it success. Buyback. Okay. Anyhow, logics we'll see later. Why buyback price? All these examples you'll see. You go for running notes once. Buyback. Okay. Prohibition on buyback is very important. Maybe they will ask MCQs. Prohibition on buyback. Like you know, ESDR, some points are there. Na? Do you know ESDR points? What is the ESDR points? How many points we discussed in ESDR? 4 points. What is the 4 points? One is preceding 3 financial years, there is no default in filing financial statements or annual returns, and there is no subsisting default in repayment of interest or interest on dividend, debentures or deposits, so repayment of debentures or deposits, so preference dividend, whatever it may be, and there is no default in payment of preference dividend or repayment of interest or loans from the public finance institutions, scheduled banks or any other institutions, or any employees statutory dues are transferred to IEPF. Any default is there, you have to rectify, and from the closing of that financial year in which you are rectified, you have to wait for how many years, ma? 5 years. Okay, and next point, not penalized from the last 3 years under any act. That's all. These are the 4 points for ESDR. Like that, buyback also prohibitions are there. So I am not going to discuss. Please read in your material. Okay. So what is a buyback, ma? Where it is buyback? Go to buyback quickly. This is the buyback. Declaration of solvency to be submitted by the directors, board of directors, and debt equity ratio, post debt equity ratio. How much, ma? 2:1. These are all the points, you know that. So those points you please write. And declaration of solvency, yes. And cooling period is there, and prohibition. This is the prohibition. Okay. What is the prohibition, ma? If you have any, you fail to repay the deposits or means interest on deposits, so or otherwise debentures, so payment of redemption of preference shares, so payment of dividend, whatever it may be, ma, please rectify the default and wait for how many years, ma? 3 years. Wait for how many years? 3 years. So please rectify the default first. After that, you have to wait for how many years? 3 years. Then you can go for again buyback of shares. And these defaults also there. Then you are not allowed to buyback. Financial statements, so annual returns, so declaration of dividend, all these things. Subsisting default. You can rectify immediately. You can go for buyback. No cooling period. No cooling period. You can rectify and you can go for immediately buyback. Okay. That is what the prohibition on buyback. So by this we completed share capital and debentures. But debentures is there. Section number 42. No, sorry. Section number 72. Last section. Section number 72 debentures. Don't think debentures are unimportant. Except September 2024. Except September 2024. So far they asked 3 times from debentures. Means May 2024, November 2023, May 2023. Repeatedly, for 3 attempts, repeatedly they asked 5 marks from Debentures chapter. So we don't know from January 2025 they will ask or not. We are discussing section number 43 to 71. Na? They are not asking any question from 43 to 71. They are asking from 72. Like, you know, from 23 to 41 they are discussing. Na? They are not asking from 23 to 41. They are asking from what, ma? 42. Saddest fellow. We can't do anything. So you should bear with the sadism until you clear your CA inter or CA final. You can't question actually. Okay. So debentures are any points, important points. Authority matrix. What is important point in debentures, ma? Authority matrix. I said authority matrix. I will provide to you comprehensive authority matrix. Comprehensive authority matrix I will provide. Okay. Immediately after break, please remind me. Comprehensive authority matrix I will provide, which will cover debentures, preference shares, ESOPs, equity, everything. Okay. Next important point for debentures, debenture trustees. What is the next important point, ma? Debenture trustees. Ma, security debentures, you can issue only redeemable security debentures only. Unsecured debentures, irredeemable, no issue. Okay, only secured debentures, if you want to issue, you can issue only redeemable. That is also what is the maximum redemption period, ma? 10 years. In case of infrastructure companies, how many years, ma? 30 years. Same thing, same. But preference shares 20 years. For debentures only 10 years. Debenture holders should not carry any voting rights. No. At any cost, debenture holders will not get any voting rights. No, it is not possible. They cannot get any voting rights. Debenture holders will not get any voting rights. Silent yes, no. Any voting rights, nothing. Okay. Next. So, debenture, convertible debentures, non-convertible debentures. This is also authority matrix only, question number 48. That we will see later. Convertible debentures, non-convertible debentures. What are the limits for issue of debentures? Convertible debentures, section number 62 is applicable. What is applicable? 62. Definitely have to take permission from existing shareholders by way of passing special resolution. Even though you want to issue one convertible debenture also, you have to take permission from the existing shareholder, because 62 is applicable. Non-convertible debenture, 62 is not applicable, but section number 181C is applicable. Sir, you are going to final syllabus also. I am not going, ma. They asked one question in your exam. That's why I said saddest fellow. 181C is CA inter syllabus or CA final syllabus? Final syllabus. 181C, what is there? Powers of board of directors. What is that? Powers of board of directors. Power to borrow. Board of directors, to what extent they can borrow without taking permission from the shareholders. Without taking permission from the shareholders, how much amount directors can borrow directly. That is what power to borrow section 181C. So that is also applicable here. So we'll see later. Okay. Next, debenture trustees. Debenture trustees, you please. I provided one table, debenture trustee versus deposit trustee. If it is possible, I will show you here. It is unable to write because I also don't remember. Let me admit the fact unnecessarily. Okay, so it is not possible to write ma. So who can become a debenture trustee? Who can become a deposit trustee? I provided a comprehensive table to you. I provided what table ma? Comprehensive table. With that table, maybe you will get 5 marks. How many marks? 5 marks. Straight away, they will ask who can be appointed as a debenture trustee, who can be appointed as a deposit trustee. Continuously, they are asking on trustees, but not the rights and duties of trustees and all. They are asking only one point: who can be appointed as a trustee or not. That's all. That table I will give you. Maybe I have to download somewhere where it is actually. During the break, I will download, or after break, I will show you that slide ma debenture trustee versus deposit trustee slide. By writing that slide, maybe you can cover 5 marks. Okay, that's all in the debentures. Debentures only points important is authority matrix. Authority matrix, I will give the table, and procedure for issue of secure debentures. What debentures ma? Secure debentures. Redemption period 10 years, major redemption period 30 years in case of some manufacturer companies, 10 years. Okay, that is what the debentures, and debentures cannot carry any voting rights and all. These are the secure debentures issue. And third point is debenture trustees. Only these 3 points only they will ask in the exam. So please concentrate on only these 3 points for debentures chapter. Debentures topic chapter, it's not chapter, it's only single section. Section number 72. Okay. Now we are going to next chapter. What is the next chapter ma? Acceptance of deposits. What is the next chapter? Acceptance of deposits. We are not wasting any time for this chapter. But 5 marks question they are asking ma. Sorry, was saying not wasting time, but they were saying 5 marks question. Ma, for acceptance of deposits, I will tell you what are the important points. That only please read. Okay. Actually, charges, deposits, debentures not to be covered in Marathon section. Okay. But for you, I am discussing that also. Deposits, acceptance of deposits, section number 73 to 76. 73 to 76 of the Companies Act 2013. Very powerful chapter. Small chapter, powerful. Like Sachin Tendulkar. Okay. So outdated. We know outdated for Sachin Tendulkar. He is forever. Now come to the point. Okay, don't touch that topic now. Not now. We'll see later. Okay. Now come to the point. So acceptance of deposits. First of all, in this acceptance of deposits chapter, very important is what is not a deposit. If they want to ask you any question, first priority will be given to what is not a deposit. I provided 24 or 25 points are there. What is not a deposit? What is not a deposit? 2 slides has been, 1 slide only, but into 2 parts actually. Okay, what is not a deposit? Repeatedly they are asking, if you are taking money from employees as a security deposit, deposit or not a deposit? Not a deposit when you are taking money 1 year salary and not bearing any interest, then it is called not a deposit. You are taking money from directors, deposit or not deposit? Not a deposit. You are taking money from relatives from directors. For public company, it is a deposit. For private company, it is a not a deposit. Whatever we are asking now, it is a 2 marks question in your exam. Okay, 2 marks question. Directly they are asking 2 marks question. Okay. So what is not a deposit? That is what very important. We are issuing debentures. Deposit or not a deposit? Not a deposit. Debentures is not a deposit. We are issuing shares. Deposit or not a deposit? Not a deposit. We are taking money from customers as an advance. Deposit or not a deposit? During the ordinary course of business, it is not a deposit. During the ordinary course of business, it is not a deposit. Okay. So like that, we are taking money from promoters. Unsecured loans from promoters. We are taking unsecured loans from promoters. Deposit or not a deposit? Provided promoters are giving that unsecured loans as a stipulation for taking loan from any bank or financial institutions. Bank or financial institution, they kept a condition that promoters has to give some unsecured loans to sanction the loan. Then only it is not a deposit. And application money is not refunded within 15 days. It is a deposit. See section number 42 and section number 39. Section number 39 and section number 42 also related here. What is section number 39? Allotment of securities. Within time prescribed by SEBI, how to allot the securities. Or otherwise, if you are not receiving minimum subscription, then you have to refund the application money within 15 days. And private placement within 60 days you have to allot. Otherwise, you have to refund application money within 15 days. Yes, there you have to pay interest 12% to 15%. Okay. In addition to interest, after expiry of 15 days, the amount is treated as a deposit. Then immediately, which chapter is applicable? 73 to 76, chapter number 5 is applicable, acceptance of deposits. That is also one more point. You are taking money from the shareholder, applicants, not shareholder, applicant. What is your duty? You have to allot the shares. Within how many days? 60 days, or maybe time prescribed SEBI in case of public offer. Okay. You are not allotting shares. You have to refund the application money within 15 days. You are not refunding, then you have to pay interest. Yes, sir. That is what I need. Shareholder also need that only. What is the problem here? If I am allotting shares, I have to file return of allotment with ROC. Then the information of these applicants will be filed with ROC, then black money cannot be invested. I have black money 10 lakhs rupees. No, this is only for example. I don't have any black money. Only black coat is there, not black money. Okay. So I have 10 lakhs rupees black money. I have how much? This black coat is also not belongs to me. Okay. This 10 lakhs rupees black money I have. That 10 lakh rupees black money I want to invest in a company, because if I am keeping that black money, anytime income tax department will come and they will take the money. So I want to invest in a company. I want to purchase shares. Yes, I am purchasing shares. What will happen? The company will file a return of allotment with ROC. Then immediately it will go to income tax department. Not only income tax, it is a TV9. Okay, directly. So ROC return of allotment filing means they will update in the system with Aadhaar card, PAN card, everything, even date of birth, everything. Okay. So everything. So it is not possible. What is the idea I got? I will make an application. I will pay the money. You please don't allot the shares. Keep with you. Company don't allot. If you are allotting, then only you have to file return of allotment. Na? Don't allot the shares. Keep the money with you. Okay. Very good, sir. As per companies, we have to allot the securities within 60 days, sir. Okay. What will happen if 60 days I am not allotting? Pay interest. Pay interest. That is what I need. Pay interest. Sometimes paying interest is not a punishment. Paying interest is a privilege. If I am thinking otherwise. But this paying interest and all to protect the applicants. But applicant is having modified intention, then it is not a punishment, it is a privilege. So, not to take the privilege of this interest and all, again they added in section number 73 and rule number 2, acceptance of deposits rules. What they said? If your company failed to refund the application money within 15 days, then that amount is treated as a deposit. Sir, what will happen, sir, if it is treated as a deposit? Then company has to file a return of deposits to ROC. Sir, I am not filing. 10 crores fine. Go to jail. Simple. That's why in deposit chapter is very powerful. Deposit is a residuary chapter. So nowhere it is covered in public offer, private placement, bonus shares, right shares, ESOP, sweat equity, debentures. Then it is covered in what amount? What chapter? Deposit chapter. If it is nowhere covered in anywhere, then it will cover in what chapter? Deposits. Deposit definition is very simple, wider definition. Any amount received by company is treated as a deposit. Any amount you are taking money, then it is called as what? Deposit. That is a residuary section. What section? Residuary. That's why they are giving exemptions. What is not a deposit? Because already it is regulated by some other provisions of the Companies Act, or regulated by some other acts, SEBI Act, SERA Act, or RBI Act, some other act is it is regulated. That's why no need to apply this chapter, section number 73 to 76. So what is not a deposit? Very important. Next important topics is limits on acceptance of deposits. What is the next important point? Limit on acceptance of deposits. I gave you a table. Limit on acceptance of deposits. Private company, specified private company, public company, government company, eligible public company, normal public company, government company. One table has been given. Please revise the table once. If possible, I will show you the table. Okay, if possible, I will show you the table for deposit chapter, that limits and deposit trustee versus debenture trustee. By that, we will close the deposit chapter. And one more point, very important in deposit chapter, acceptance of deposits from public. Acceptance of deposits from public. Eligibility criteria. What is criteria? Eligibility. Last exam they asked for 2 marks, and May 2024 also they asked for 2 marks. Eligibility criteria. Net worth and R. Either net worth or turnover. Turnover maximum how many crores will be? Turnover 500 crores. Or net worth 100 crores. Then you are eligible. And calculation of net worth also they will ask in the exam. I am not going to explain. You are very well expert in calculation of net worth and all because you are accountant kids. Okay, so don't worry. Net worth calculation, you please, you know very well, equity shareholders funds, net worth, equity, everything you know na. So you please calculate net worth and all. Accumulated losses you have to reduce, accumulated profits you have to add to equity shareholders funds. Okay, so that is what net worth. And the remaining 2 points of deposit chapter we'll discuss after break. Then we'll go to charges and management administration. By afternoon, by hook or crook, we have to complete what act, ma? Companies Act. Next only important topic is management and administration. Dividend accounts, very simple, we have to. My accounts of the companies, my part is very less, your part is more, because you should remember everything accounts of the companies. That now we are moving to registration of charges. Normally we will not revise registration of charges chapter, but I will spend maybe 10 minutes time. Registration of charges, very important points what you have to refer. If you observe last 4 attempts, there is a 5 marks question from registration of charges. Earlier we are recommending the students to leave this deposits, debentures, charges as a choice. But from last 4 exams trends, based on the previous 4 examination trends, we are suggesting the students, please don't leave these debentures, deposits and charges chapter. With less questions you will get 5 marks. With less questions you will get what, ma? 5 marks. So we are not suggesting to leave it as a choice. It is very important. It is very important. Okay, please don't leave debentures, deposits and charges as a choice. Selectively please study from debentures to deposits to charges. Charges, what is very important, ma? Very simple. Time limit for registration of charge. You know very well, within how many days the company has to register the charge, ma? Within 30 days by paying normal fees. 30 to 31 to 30, additional 60 means 90. 30 plus 60 how much, ma? 90. Additional 60 days by paying what fees? Additional. Another additional 60 days by paying ad valorem fees. So 0 to 30 days normal fees. 31 to 90, yeah? 60 only, na? 31 to 60 additional fees. 61 to 120 ad valorem fees. Okay, that is what you have to remember. That is what they repeatedly they are asking. And what is the consequence of non-registration of charge? If company is not registering the charge with ROC within 30 days or 60 days or 120 days, what is the consequence? This debt will be treated as a unsecured debt. Liquidator will treat this debt as a unsecured. That is a consequence. It is a debt valid only, charge is also created, but liquidator will treat it as a unsecured debt only. So who is the accrued party? Charge holder, not the company. Who is the accrued party? Charge holder. So charge holder has a remedy to inform to ROC if company fails to inform. So directly who can inform? Charge holder can inform to ROC if company fails to inform within 30 days. If company fails to inform to ROC within 30 days, then who can inform? Charge holder can inform. So the whatever the fees paid by the charge holder can be recovered from the company. That is also one more point you have to remember. And floating charge versus fixed charge, one table is there. Please read that floating charge versus fixed charge. Actually it is not important, but in May 2024 they asked for 5 marks. Floating charge versus fixed charge, they asked for 5 marks. Okay, and September 2024 they asked for 4 marks from registration of charges chapter. What question they asked, you know? What is the time limit for registration of charge? What is the time limit, ba? 30 days from date of creation of charge only, na? Please refer when you have a free time. September 2024 question, little bit difficult from registration of charges chapter. Little small point they added. You should have some common sense to write that question. What is the difference between sanction of loan, disbursal of loan? What is the sanction? What is the disbursal? Ma, today loan is sanctioned. Disbursed maybe after 1 month or 2 months. You have to create the charge from the sanction data, from disbursal data. From loan sanctioning data, from loan disbursal. That is what they asked. 30 days from the date of sanctioning of loan, from the date of disbursing of loan. Sanction of loan. From the date of creation of charge. From the date of creation of charge. Without creating mortgage, they will sanction the loan. No. Okay, so that you should write by using some common sense also. So everything cannot be covered in the classroom. Sometimes you should use your common sense. You should know what is the meaning of sanction, disbursal, utilization. Okay, all these things you should have some common sense. Okay, next That is what registration of charges. More than that, not required. Satisfaction of charge, modification of charge, not much important. But satisfaction of charge, how many days are required? 300 days. Normally 30 days you have to inform, but by paying additional fees, you can inform 300 days. That's all. And sometimes satisfaction of charge by some other person also, third person also can inform to ROC. Then ROC by sending notice to company and charge holder, they will ROC will register the same. That is what satisfaction of charge, what you have to remember. That's all. Other than that, nothing is required from registration of charges chapter. Okay, so we'll go to next chapter. What is the next chapter, ma? Management and administration. But before going to now we are going to management and administration chapter without any delay. What chapter, ma? Management and administration. Please, we will not use a notepad. In management and administration chapter, section number 88 to 122. No doubt they will ask 5 marks question from this. No doubt, without any doubt, they will ask 5 marks question. Sometimes they will ask 10 marks, sometimes 15 marks also. In May 2024, they asked for 10 marks. Only from one single topic, quorum. In September 2024, they asked for 10 marks. Only from one single concept, EGM. So I don't know, they are concentrating only one topic. From one topic only they are asking either quorum or EGM or proxy or due date of AGM or place of conducting AGM. All these things, whatever it may be, they are only concentrating one topic from last 2 examinations from management and administration chapter. Section number 88, 89, 90, 91. No, we are not going to discuss. Once again, same reason. Register of members. 88 to 89, 90, 91. Register of members, beneficiary shareholding, significant beneficial owner. All these things we are not going to discuss because of the same reason of transfer and transmission of shares. These are outdated topics. Nowadays, all securities are in dematerialized form. So that register of members are maintained by the NSDL or CDSL under Depositories Act. What act, ma? Depositories Act. Company is not going to maintain the register of members. They are just writing only NSDL, CDSL names there. But the beneficiary shareholders registers are maintained by the depository. So that this topic is outdated now. So outdated topics are not having importance in the examination. And the last 4 to 5 attempts also, they are not asking anything from these topics. But as a student, don't take any risk. Please refer material once. Especially significant beneficial owner. Even though I am not discussing in Marathon, you please refer what sections? Significant beneficial owner. For that only I provided running notes in your classroom. And closure of register of members. What is that? Closure of register of members. These 2 topics only important. Foreign registers, main registers, closure of foreign registers, merging with main registers, maintenance of foreign registers, maintenance of main register. All these things nowadays not important. Because no company is maintaining register of members now. Everyone is maintained by NSDL or CDSL under which act? Depositories Act. If you want to refer a significant beneficial owner versus beneficial owner, one table has been given. And closure of register of members. 45 days aggregate in a year and only at once 30 days. Do you know na? By giving notice in advertisement in newspaper and all, if you want to close the register of members, maximum 30 days at a time. And for aggregate in a year, how many days? 45 days. That is what closure of register of members. Significant beneficial owner means who is holding 10% of the shares directly plus indirectly or indirectly. Okay. I just provide an example who is SBO, who is not a SBO. 4 cases I said. In 4 cases I said who is SBO, who is not a SBO. Please look at that. Okay. Now we are going to section number 92. Before going to section number 92, I want to recap share capital and debentures chapter and register of charges and acceptance of deposit chapter. Whatever we discussed, 3 chapters are completed today from morning section onwards, right? Share capital chapter, what sections we discussed? Section number 43, types of shares, and ESDR with roll number 4. Okay, ESDR ordinary resolution limit 74% and prohibitions for issue of ESDR. That is what very important. And authorization in the articles of association. Next, Section number 44, we are not covered. Section number 45, we are not covered. 46, no. 47, what is 47, ma? Voting rights, yes, it is covered. Section number 48, variation of shareholders' right. Dissenting shareholders, 10% who are holding 10% shares, they can go to tribunal within 21 days, and tribunal order is final. Tribunal order is final. That's all. Don't write dissenting shareholders exit option, no. Okay, and you have to pass either special resolution or 3/4 consent from the members who are holding 3/4 shares. 3/4 shares value. What is that? Value. Okay, and section number 48. What is 48? Variation of shareholders' right. Section number 49 and 50. Calls in arrears, calls in advance. So maybe 49, 50 can refer. 51 not there. 52 utilization of security premium. So Ind AS, normal AS companies, 5 purposes, 3 purposes. 5 minus 3 is not equal to 2 here. Under section number 53, issue of shares at discount which is prohibited. Exception is sweat equity shares. And 54, sweat equity shares limit 15% or 5 crores whichever is higher at a time, and in aggregate 25%. For startup companies 50% for first 10 years. Lock-in period maximum 3 years. And what is the accounting treatment for issue of sweat equity shares? That is what we referred. And section number 55. What is the section number? Issue of and issue and redemption of preference shares. So issue of redeemable preference shares with redemption period of 20 years or 30 years, and redemption of preference shares, utilization of security premium for redemption of writing of the premium and redemption of preference shares. That is what we discussed in section number 55. What is 56? 56, 57, 58 to 59. Actually, we are not going to refer 60. 61, alteration of authorized share capital, either increase or decrease or consolidation or split off or conversion into stock. Ordinary resolution you have to inform to ROC. 62, right shares, further issue of share capital. In section number 62, we referred how to issue right shares. Notice period 3 days before you have to send a notice, and you have to give a time of 7 to 30 days. So, and which are not subscribed, that can be disposed by the board of directors at the benefit of the company, and you can renounce the shares also. Can be renounce the rights to subscribe also. Renunciation, right to renounce also. Okay, and the next one, convertible debentures and convertible loans. And 62 is very important for authority matrix. For what? Authority matrix. 63, issue of bonus shares. Procedure, you please just have a look. It is also important. 64, what is section number 64? That is okay. 64, 65. We are not going to concentrate. 66, what is the 66 month? Reduction of share capital. I said there are 3 different ways to reduce the share capital, and 2 different cases you can reduce the share capital. 3 plus 2, 5 cases are there. Almost how many cases are there? 5 cases. And what is the procedure? You have to take the approval from tribunal, and all resolution is required. Of course, you have to pass a resolution, and you have to take the approval from the tribunal and all, and there is no time limits, means limits or time limits, nothing is there for reduction of share capital. Okay, and no amount to be transferred to CRR, nothing is there. And what is the next one? 67, providing financial assistance to purchase the securities, which is prohibited actually, but 2 exceptions are there. 2 employees you can provide, but collectively or individually maximum 6 months salary you can pay the loan. Okay, and next one is 68 and 69, and 70 is nothing but buyback. Limits on buyback, procedure for buyback, cooling period of buyback, and as well as prohibition for buyback. This is what you have to refer. And 71 is debentures. 72 is power to nominate, not in your syllabus. That is what share capital and debentures chapter. Okay, next chapter is acceptance of deposits. 73 to 76. 73, acceptance of deposits from members. So procedure and limits, and as well as what is the deposit, what is not a deposit. That is what in rule number 2. That is what rule number 2. And section number 76 is acceptance of deposits from public. These are the only 2 sections which you have to read. 73 and 76. 76A, penalty is also important. Please revise the penalty one. 76A, penalty is there. Okay, next registration of charges. Normally 77 registration of charges, that is only verified. Okay, 77, 78, 79 only verified registration of charges. Now we are going to management administration chapter. 88, 89, 90, 91 we are not going to refer. 92, annual return. It is asked in November 2023 exam for 2 marks. No, not for 2 marks, 4 marks. What is that? Annual return. Filing of annual return. Section number 92 is having a cascading effect. As individually, section number 92 is not important, but now as a whole cascading effect is there for section number 92, because for alteration of name clause, for issue of ESDR, for buyback, for so many cases, issue of preference shares, you have no, even for limit on acceptance of deposits also, for specified private companies no limit na, To avail that exemption also, you don't have any default in filing financial statements or annual returns. Everywhere, this is a common point now. This financial statements only stated in section number 92, but this 92 is referred in maybe 10 times or 20 times in Companies Act 2013 because it is very important. Normally, it is a procedural compliance. Filing of annual return with ROC is a procedural compliance. Every year, you have to file an annual return to ROC. That's all. What is happening in your company? That information you have to provide to ROC. Not only quantitative information, but also qualitative. Quantitative information, you are going to file financial statements. You are going to file what? Financial statements, quantitative information. Qualitative information, annual return. Okay, promoters, change in promoters, so change in promoter shareholding pattern, how many electricity units are consumed by the company, okay, anti-pollution measures, or maybe whatever it may be, all qualitative information to be provided to ROC by way of annual return. So, what is important, sir, in annual return? Very simple, form of annual return. Which form you have to file the annual return, okay? For one person company, separate form is there, OPC and small company, and other than OPC and small company, separate form is there. And what is the time limit to file the annual return, ma? What is the time limit to file the annual return? Within how many days you have to file the annual? Again, LLP also I will ask. LLP also annual return is there, financial statements are there. More than company, LLP it is very important. Okay. What is the time limit to file the annual return, ma? Within how many months? Who knows, sir? So there are two cases actually. AGM held, AGM not held. AGM held. Then within 60 days from the date of holding AGM, you have to file the annual return. Sir, AGM not held. So within 60 days from the date of AGM ought to have been held, you have to file the annual return. Whether you are holding AGM or not holding AGM, that is not required for me. But you are holding AGM, very good. From the date of holding AGM, holding or concluding? Holding, concluding, any difference is there? Holding of AGM, concluding of AGM, any difference is there? Yes. Holding means, yes, you started AGM. Concluding means you have to complete the business stated in the notice of the AGM. Conclusion may be after 3 months or 4 months, or even it will take 2 years also to conclude the AGM. Because business is to be transacted. Na? Whatever the business stated in the notice, it should be completed. Then only AGM is concluded. AGM is concluded. I am not saying from the conclusion of AGM. I am saying from date of holding AGM. A copy of annual return shall be filed with ROC within 60 days from AGM date if AGM is conducted within due date. That's all. Conducted, not concluded. Conducted, not concluded. Holding, just I started AGM, that's all. Okay. From the date of holding AGM, you have to file annual return within how many days? 60 days. If you are not holding AGM within due date, then from the due date of AGM, you have to file annual return within 60 days. So there is no farak nahi padega. Okay. So you are not holding AGM or holding AGM, there is no difference. But you are holding AGM early, then you have to file annual return early. If you are not holding AGM, from the due date of AGM plus 60 days. This point they asked for 2 marks from November 2023 exam. Okay. Next one is, okay, what is the fine if you are not filing the annual return? This fine also they asked for 2 marks. I don't know. I will recommend the students not to remember fines and penalties in Companies Act and form numbers also. But they asked for 2 marks, then leave it to God. We can't do anything. For all these things, you can remember all the fines. Yes, you can remember, but you will become what mind? Answer. Yes, next, that is what annual return, that's all. Nothing more than that. Annual return. Filing of annual return with ROC. Filing of annual return with ROC. Okay, next, but anyhow, one more point is there. Signing of annual return. Who has to sign the annual return and who has to certify the annual return? That is also very important. Maybe sometimes they can ask, please refer one. Signing of annual return and certification of annual return. Certification means what? You are preparing tax return, but your tax return to be certified a chartered accountant. When I have to file my income tax return, I have to go to CA or not required to go to CA? Na? CA is not required to file income tax return. When CA is required? If I am subject to tax audit, I am subject to what? Tax audit. My turnover is about 2 crores or 4 crores, then only I am subject to what? Tax audit. Then only I have to go to CA. CA has to certify my return. CA has to certify the return. That is what certification of annual return. Certification of annual returns. Normally, certification is not required. When certification is required? Listed company, yes, certification is required. And company having paid up share capital of 10 crores or more or turnover of 50 crores or more, then you have to go for certification of annual return by independent company secretary in practice. Okay. independent company secretary in practice, you have to go and you have to take the certification from him. You have to pay fees to him, then only he will give the certification. Signing is different. Signing, okay, I am signing my income tax return. I am signing my income tax return. Na? Company also has to sign its annual return. On behalf of company, who will sign? Ma? Director, company secretary. Company secretary not there, then one director they will sign. That's all. Okay. Signing is different. Certification is different. Okay. Here CS means only employee. Employee of the company. Here CS means CS in practice. CS in practice. You please identify the difference. Okay. So far they didn't ask, but there is a scope to ask certification of annual return and signing of annual return. For annual return, what points you have to remember? Ma? In which form you have to file the annual return? What is the due date of filing annual return? Signing of annual return, certification of annual return, and penalty for not filing annual return. Why sir? All of a sudden annual return become this much important? Because they ask for 4 marks. What I will do? Okay. Otherwise, this question I will remove from this material. Next question. What is the next question, ma? AGM and EGM. Annual general meeting, extraordinary general. Before going to management, types of meetings, 3 types. What is that? Meetings of members, meetings of directors, meetings of others. We are not concentrating on meeting of directors and meetings of other shareholders, other class people. We are only concentrating on meeting of members. This is called general meeting. What meeting, ma? General meeting. General meeting again, it is divided into 2 types. One is AGM, other one is EGM. So first we will discuss about annual general meeting. What is that? Annual general meeting. In name itself it is very clear. Every year you have to conduct one meeting, that is called annual general meeting. As annual general meeting again it is divided into 2 parts. One is first AGM, subsequent AGM. Everyone know, all students they know what is the due date of conducting AGM. First AGM, what is the due date, ma? Within 9 months from the close of first financial year. What is the first financial year? Oh, financial year first to last, like this. Any definitions are there? Financial means April 1st to March 31st. But if company is incorporated on or after 1st January, then the financial year is the 31st March of the next year. 31st March of the next year. If I am not wrong, I provide a comprehensive example by covering all date of incorporation. Different scenarios has been given, and each and every scenario you have to calculate the date of due date of first AGM and due date of second AGM also. Due date of second AGM. Please refer that example once again before going to exam. Okay. So first AGM, what is the due date, ma? 9 months from the date of closure of first financial year. What is the second AGM due date, ma? AGM is mandatory or optional? AGM is mandatory or optional? Mandatory. So within what time you have to conduct the AGM, that is clearly prescribed in the Companies Act 2013. First AGM, after incorporation you are conducting AGM, it is called first AGM. So they are giving a facility to you 9 months time to conduct the first AGM after closing of first financial year. First financial year. On the second AGM there are 3 points. What is the 3 points, ma? There is a basic rule for AGM. Every year one calendar year, one AGM. This is a basic rule, fundamental rule. Please remember this rule forever. One calendar year. Calendar year means January 1st to December 31st. 1 year, one AGM. Because AGM itself it is called annual general meeting. Okay, 1 year, one AGM. That is a basic rule, fundamental rule. But one exception to this fundamental rule. What is that exception? You have no need to conduct the meeting in the year of incorporation if you are conducting first AGM within the due date. If you are conducting first AGM within the due date. Okay, so that is what only one exception. Only one exception. For example, I will take one example. Otherwise, you don't understand. Some students' faces are blank. Something you are talking, sir, we don't know. Okay. Date of incorporation is 1st January 2024. Tell me what is the first year financial year? Tell me what is the first financial year? 1st January 2024 to 31st March 2025. What is the financial year duration? 15 months. Don't think always financial year is 12 months. No. Sometimes maybe it is greater than 12 months. Sometimes it is less than 12 months also. Only first financial year may vary or last financial year may vary. Okay. What is the due date for first AGM? Tell me. What is the due date for first AGM? Tell me due date. I am not asking theory. I am asking practical now. Tell me date. 31st. 31st December 2025. Very good. I said basic condition, one calendar year, one AGM. Calendar year 2024-25. Any meeting is there? Calendar year 24, sorry. Calendar 24, any meeting is there? But which year company is incorporated? 2024 calendar year only, na? But that year any meeting is there? Directly we are conducting meeting in which year, ma? 2025, 31st December. Then what about 2024 year? Exception. Why exception? First AGM you are conducting within the due date, then no need to conduct the AGM in the year of incorporation. So there is an exception to basic rule. What is the exception, ma? What is the basic rule? 1 year, 1 AGM. Okay. Tell me subsequent AGM due dates. 1 year AGM, okay. 1 year, 1 AGM, this is a basic condition. Within 6 months from the date of closing of financial year, and maximum time gap in between one AGM to another AGM should not exceed 15 months. Or you can say within 15 months from the last date of AGM. Within 6 months from the date of closing of each financial year and within 15 months from the date of last AGM. That's all. That is what the two limits actually. So whichever is earlier. 1 year, 1 AGM, 1 year, 1 AGM and 6 months and 15 months. Whichever is earlier. Then you have to follow all the points. That is what subsequent AGM due date. My AGM you have to know 4 points. Day. Okay, first date, day, time, place. What you have to understand about AGM? Date, day, time, place. You are talking about date. This is what about date. Which date we have to conduct the AGM? Due date. What is that? Due date. Day. What is day? Which day you have to conduct the AGM? On which day you have to conduct the AGM? Sunday, Monday, Tuesday, Wednesday? Any day. But other than? But day, if you want to understand day, divide the companies into 3 types. One is normal company, Section 8 company, government company. Section 8 company, government company, there are exceptions are there. Okay. On which day? On which day normal companies they can conduct, ma? Other than national holiday. Sunday is a national holiday, Other than national holiday, you can conduct the annual general meeting. But one point you have to remember here, and it is asked for 2 marks in May 2023 exam. 2 marks. Sir, what is that point, sir? After sending notice of general meeting, if it is subsequently declared as a national holiday, then don't mind. So all of a sudden, President of India, okay, no, it is no. Okay, someone died and it is declared as a national holiday. So it is further. First we issued notice, or they issued as a holiday. We issued notice now. We arranged everything. Notice already issued 21 days before. We have to serve the notice, including postal days, 2 days, 23 days before we posted the notice, and we arranged the meeting, everything. After that, all of a sudden someone died, because of that we will postpone the meeting. No need, because it is a costly affair. So subsequently it is declared as a national holiday. No need to postpone the meeting. You can conduct the meeting on national holiday. National holiday means not a state holiday. This point also they asked for 2 marks. State holiday. Maharashtra government they declared as a holiday on the occasion of Holi. So on that day we can conduct AGM. Yes, you can conduct, because it is not a national holiday. It is a state holiday. Sir, which one is a national holiday? Which one is not a national holiday? They will give the information. You don't worry about it. In examination they will provide. Okay. But what is the national holidays list? August 15, January 26, Mahatma Gandhi, October. This you please keep in your mind. Okay. What happened? Next. Section 8 company, government company, they can conduct AGM any day, no issues. For that, the exemptions are there. Next, time. What is that, ma? Time. Sir, which time? What time, sir? Midnight 12 a.m. 12 a.m. 12 p.m. 12 p.m. 1 a.m. No, it is not possible. So, which time, ma? Business hours. Business during what hours, ma? Business hours. Business hours means 9 to 6. That is the business hours. You can start the AGM during business hours. Conclusion not in our hands. We start AGM only during business hours. Conclusion up to them only. Let them conclude whenever they want. But starting of the meeting is only 9 to 6. Section 8 company hours also not applicable. Okay. Place of the meeting. What is that? Place of the meeting. Maybe to some extent it is important. Place of the AGM. For that we are dividing companies into listed company, unlisted company, Section 8 company, government company, not required. No exemptions are there for government company. Anything is there? So listed company, where they have to maintain, where they have to helm? A registered office address or any place in the same city. Any place in the same city. That's all. Any place in the same city. I am not going to write. Unlisted company again. Unlisted company, they can conduct the meeting at registered office address or any other place within the same city. One more option is there. What is one more option? Any other place in India. Any other place in India. But if you want to conduct the meeting any other place in India, then you have to take the consent of members. 90% 100%? 90%? Few students they are writing 100% because 90% because 90% is applicable for what? Sir, you are saying like that 90% is applicable to so many. Huh? Short notice, short temper notice. And short notice. Okay. Short notice is 90%. Okay. Short notice is what, ma? 90%. Okay. Unlisted company, they can conduct the meeting even any place in India. Goa also they can conduct the meeting, no issue. Panama also they can conduct. Okay. Panama is India, na? We don't know, sir. What is Panama? You are saying Panama and that. Okay. Ma, you are in Andhra Pradesh registered office address, but you can conduct the meeting in Goa also, providing consent of all the members. 100% consent of all the members. Okay. Next, which company, ma? Section 8 company. They can conduct any place in India. They can conduct the meeting in any place in India. No issue. That is the place of AGM. Date, day, time, place of the meeting is very important. They will ask 2 marks MCQs or 2 marks short questions also in your examination. Next we are going to AGM. What we are going to, ma? EGM. What is that? EGM. Extraordinary General Meeting. So in the name itself it is very clear. Extraordinary means whenever it is required, then only will conduct the EGM. AGM is only once in a year, na? So it is not possible to take all the decisions once in a year. Maybe emergency basis also we have to take some decisions. That's why we are conducting what, ma? EGM. What is EGM? Extraordinary General Meeting. Okay. So EGM is divided into 3 parts. One is, okay, only 2 parts only. Held by board of directors and held by members. Held by tribunal is also there. Okay, if you want you can write. Ma, I am saying one point. Tribunal, if they want to call for AGM or EGM, companies have no need to follow. Day to day, time, place, quorum, chairman, proxy, voting, show of hands, all these things not at all required. Minutes of the meeting, nothing doing. Okay. Tribunal, however they want, they will conduct a meeting. So don't throw the ball in tribunal court. Okay. If any member is going and making an application to tribunal, then tribunal will take the action. So you are giving a chance to tribunal to take the action. Tribunal, whatever they want, they can do. So please don't give an opportunity to tribunal to conduct the meeting of AGM or EGM. Normally AGM, upon application by the member only, tribunal will conduct. Company has to conduct AGM every year. For example, company is not conducting AGM, what will happen? Fine only. Fine is okay, that is secondary. But what is the remedy available to the aggrieved parties? Who is the aggrieved party? Any member. Because I have a right to attend the meeting, ma. Any member, I have a right to attend the meeting. Company has to call for a meeting and company has to inform me what is happening in the company for every year. That is my right to know that facts. That's why I have a right to attend the meeting. Company is not conduct the meeting, that is a default. So I will go and make an application to tribunal. Single member also can go to tribunal, ma. Then tribunal will call for the meeting by themselves. So okay, that one member, please sit. Okay, what do you want? Sir, remove the chairman, sir. Okay, chairman removed. MD remove, sir. Removed. Sir, chairman, proxy, quorum, special voting by show of hands, voting by poll. Sir, so many things are there, na, sir? Nothing. Tribunal, they want to conduct a meeting, they will conduct a meeting in their court premises itself. Okay, with the persons who make an application, with them also they can conduct the meeting. No, nothing is required. Sir, he is holding only one share, sir. Okay. You are only giving an opportunity to him to come to the tribunal, na? Okay, that's all. Next, EGM. EGM held by board of directors, held by members. Board of directors, when they will held in 2 cases. One is suo moto. Suo moto means not China sumos. That is not that sumo. Suo moto means their own motion. Okay, their own discretion whenever they want. Suo moto. Or upon request by the members. Upon request by members. Sir, suo moto, they can held the meeting any place, any time, any day. Suo moto, board of directors, they want to conduct EGM any day, any time, any place, single hand. Ganesh. Okay. Ma, board of directors, if they want to conduct the meeting themselves, ma, whenever they want, they want to alter the name classes, they will call for EGM. They want to alter, they want to buy back, they will call for EGM. They want to reduce the share capital, they will call for EGM. They want to go for public offer or private placement or for anything. If it is emergency, then they will call for a meeting. Board of directors, they can call for a meeting at any point of time, any day, any time, any place. But only within India. Within India only they can conduct the EGM. But one exception is there for this. What is the exception, ma? Wholly owned subsidiary of a company incorporated outside India, they can hold EGM outside India. This point they asked for 5 marks in September 2024. One small exception, they asked for how many marks, ma? 5 marks in September 2024. Question number 6A. 6B also EGM, 6A internal choice also EGM only. Hilarious, comedy. September 2024 paper itself comedy. Okay, why sir comedy? 6A internal choice will be there, na? 6A 1, 6A 2 internal choice, ORR, right? Both questions from EGM only. One question is difficult, one question is simple. Students who write difficult question, simple question. Why you are asking difficult question, simple question, and you are giving internal choice? I don't know the paper who said that paper. Okay, actually I will give him on a very big garland actually. Okay, next. Now next. Ma, any day, any time, any place within India, but one exception is there. What is the exception, ma? Wholly owned subsidiary. Students are confusing this exception, so they are taking the advantage of that confusion. Wholly owned subsidiary means, I will give an example. Normally these points I will not discuss, but 5 marks question, na? Wholly owned subsidiary means we are in India. Can you please tell me any subsidiary in India, but holding by some other company? Kia Motors Limited. Tata is not a subsidiary of any company. Ma, Kia Motors Limited is incorporated in India. Only, but it is a subsidiary, wholly owned subsidiary of Kia Motors LLCO, Kia Motors WLO, somewhere in Korea. Kia Motors is Korean company only, na? Ma, there are 2 ways to do the business in India. Any company, foreign companies, means any person, if you want to do the business in India, there are 2 ways. Incorporate a company in India and do the business, or start a branch in India. If you want to incorporate a company in India, then Companies Act 2013 you have to follow. Incorporate a company, and the total shares you please purchase. Total shares are purchased by the Korean company, means that parent company, Korean company. And FEMA Act also applicable. Of course, FEMA Act is also applicable. It's a capital account transaction. Capital account transaction prohibited or permitted, that you have to see. And FEMA, subject to FEMA rules, you can start a company in India. Companies Act 2013 you have to follow. That is one thing. Or otherwise, you are doing business through branch or agency or something. If you are doing business through branch or agency, or maybe franchisee or whatever it may be, anything you are doing business, then you are a company incorporated outside India doing business in India. It is a foreign company. Which company, ma? Foreign company. Because my last chapter is company incorporated outside India only, na? Foreign company. So that foreign company, they have no need to follow entire Companies Act 2013. They will follow only chapter number 22. What do you have to follow, ma? Chapter number 22. So there are 2 options. Don't incorporate a company in India. Directly do the business from foreign country itself. But you are incorporated outside India doing business in India. That is called foreign company. Which company? Foreign company. Or otherwise you start a company in India. Kia Motors Limited is there. So many companies, they are Hindustan Unilever Limited. That is also foreign company only. Not a foreign company. It is an Indian company. But shares are held by foreigners. Apple also, they will start a company here. But Apple is our Indian company, huh? No, na? Shares are held by foreign, so foreign other companies. Okay, that is not Indian company. Don't think like that. Hindustan, for example, Hyundai Motors Limited is there in India. But it is not a, yes, it is an Indian company, but shares are held by Korean company, South Korea company. Not North Korea, ma. North Korean companies, they cannot incorporate any company in India, and they cannot invest in any business in India because it is prohibited in FEMA Act. North Korea, they cannot invest anything in India because it is prohibited because of financial sanctions by the other states actually. Okay, so India is also following the same financial sanctions. In FEMA Act it is there, capital account transactions, one point is there. North Korean people. People of Republic of Korea, something is there. Okay, that is called North Korea only. Now come to the point, ma. Sir, wholly owned subsidiary of a company incorporated outside India. Kia Motors Limited is a Indian company incorporated under which act, ma? Our company said it is a company. It is a company, but it is 100% shares are held by Kia Motors LLC or Kia Motors WLL or Kia Motors INC, whatever the name it may be. So Kia Motors LLC incorporated in Korea. Incorporated in Korea. Now this Kia Motors Limited, they want to conduct EGM, urgency basis. Who is the member, ma? Who will come to meeting? If Kia Motors Limited is conducting meeting, who will come to meeting? Kia Motors LLC or INCO. Where they are? In South Korea. So better, if it is emergency, please go and conduct the meeting in Korea itself. That is the exception. That is the exception. You please understand, don't confuse. You are reading question number 6A of September 2024, now definitely you will get the confusion. That's why I am giving the example. Exception to holding the EGM by board of directors outside India. Okay. Next, sir. Upon request by members, board of directors are holding the EGM. Then also, any day, anytime, any place, but within India. Sir, members, they are holding EGM by themselves, sir. When members, they will hold the EGM by themselves. When members, they will hold the EGM by themselves, ma. See, how many members they have to make a request for conducting EGM? At least holding 1/10 of the voting power. At least holding how much voting power, ma? 1/10 of the voting power. They can make a request to board of directors to conduct a EGM. Ma, we got an idea to remove managing director immediately. I want to remove MD immediately. Can I remove? No. To remove what resolution to be passed? Ordinary resolution. As per articles of Companies Act, what is there? Ordinary resolution. Okay, very good. First of all, to pass resolution, what to be conducted? Meeting to be conducted. Who has to arrange the meeting? Board of directors. Board of directors, they said, no, I don't have any mood to conduct the meeting. Oh, okay, very good. But I am making a request. I am making a request to conduct a meeting. Who are you to make a request? I am holding 1/10 shares. I have a right to make a request to conduct the EGM. I want to do one transaction. Ma, I am not in a position to pass ordinary resolution, but I am calling for a meeting. Let them decide. Not only me, other members also will come and they will decide whether to remove the MD or not. First, you have to conduct a meeting, na? No, board of directors, they will deny normally. I will remove you, conduct the meeting, they will conduct. Please conduct a meeting, I will remove you. No, they will not conduct. That's why Companies Act 2013 clearly says every member, not every member has a right, ma. At least the members who are holding 1/10 of the voting rights, 10% voting rights, they can make a request to the board of directors to conduct a EGM to do any transaction. So board of directors, they have to conduct a meeting within how many days, ma? 45 days from the date of notice. So if you want to conduct a meeting within 45 days from the date of request, you have to send a notice within 21 days from the date of request. Okay, I just provided a comprehensive example. If I don't know, students, they remember or not, 1st January is the date of request. 1st January 2024 is the date of request. Tell me, within how many days board of directors has to conduct a meeting? Tell me, don't waste your time. Tell me, within how many days? If you are wasting your time, I will end the section by 8 or 8:30 or 9 or today. Ma, I will not leave unless the chapter is total syllabus is completed. Okay. So there is no other alternative for me. I should complete all the chapters. So please be quick. 1st January 2024 is the date of request. Tell me, what is the last date to conduct the EGM by the board of directors? 15th February 2024. Correct? Within how many days they have to conduct the EGM? Within 45 days they have to conduct the extraordinary general meeting. Okay, within 45 days they have to conduct extraordinary general meeting. Very good. To conduct extraordinary general meeting within 45 days means on 15th February. Tell me by what date they have to send a notice to all the members. There are 100 members in the company. 10 members, they made a request to the board of directors to conduct the meeting. To conduct meeting, board of directors has to send a notice to remaining members also, na? All the members, right? 100 members. Okay. So, tell me by what date? How many days before you have to send a notice, ma? 21 days before the meeting. 21 clear days before the meeting. And if you are sending by post, 2 days. So, 23 days. Tell me 15th February, 23 days before. Don't count 15th February. 22nd January 2024. Please calculate from 22nd January to 15th February, how many days are there? Don't count 22nd and 15th. 23, 24, 25, 26, 27, 28, 29, 30, 31 plus 14. How many ma? 14 plus 9, how many? 23. That is what required to send the notice, na? That is the logic. Ma really board of directors, if they have intention to call for a meeting, they might have sent the notice to all the members by 22nd January 2024. If they are not sending notice by 22nd January 2024, it means board of directors, they don't have intention to call for a meeting within 45 days from the date of request. No need to wait until 15th February. Members will come to know the fact whether board of directors have intention or not. By what date, ma? 22nd itself. So by 22nd they are sending notice means yes, they have a intention to conduct the meeting within 45 days from the date of request. Okay. So if board of directors, they fail to send the notice, within 21 days from the date of request. 21 days only na, 1st January plus 22nd. How many days, ma? 21 days. So board of directors, they fail to send the notice within 21 days. Then what members can do, ma? Members can conduct the meeting by themselves. Within how many days they can conduct the meeting, ma? Within 3 months. 3 months from the date of what? Request. For everything, date of request only. Okay. Within how many months, ma? 3 months. 1st January for 3 months. 1st January for 3 months. 1st April 2024. By this date, they have to conduct a meeting. Okay. Sir, even members also, they are unable to conduct the meeting. Then they can go to tribunal. Then tribunal will come into action. That's all. This is what you have to remember in case of ECM. Okay. So next we are going to types of meeting is completed. What is completed, ma? Types of meeting. Now we are going to types of notice. Because for meeting, what you have to send, ma? You have to send notice. Notice are 2 types: ordinary notice, special notice. What is ordinary notice, ma? Board of directors are sending notice to members. It is called ordinary notice. And members are sending notice to board of directors. It is called special notice. Resolutions requiring special notice. Few resolutions, it requires notice from the members. Board of directors cannot include all transactions in the notice. It is not possible. Please understand clearly. To take a decision, what to be conducted? Meeting to be conducted. Because ordinary resolution or special resolution, you have to pass, na? For passing ordinary resolution or special resolution to transact the business, what to be conducted, ma? Meeting is to be conducted. What to be conducted? Meeting is to be conducted. For conducting the meeting, what you have to send? You have to send a notice. What should be there in the notice? Meeting is there, come. Meeting come. What? This is a telegram message. Earlier in old movies, telegram will be there, na? Urgent come. What urgent come? That's all. So like that, telegram, the matter is very simplified because we depend upon the number of letters they will charge. That's why telegram will be very brief. Father passed away, come. That's all. That is what telegram messages. You know, small paper slip will be given. Okay, telegram messages. Like that, you are also sending a notice of meeting, come. That's all. No. What will be there in the notice? Day, date, time, place, agenda of the meeting. What is the meeting? Agenda. For what purpose I have to come for the meeting? For what purpose I have to come for the meeting? What decisions you want to take? What discussions you want to made? Everything you have to clearly mention in the notice of the meeting. You please keep in your mind, without adding the point to agenda, you cannot discuss in meeting. If you want to discuss anything in the meeting, if you want to decide anything in the meeting, first that point to be added where, ma? In agenda. In agenda of the meeting. 1, 2, 3, 4, 5, 6, 7 like that. You have to add what, ma? Agenda. Not only agenda, but also you have to provide the information to the members. You have to provide what, ma? Information to members. Members. This is what the information what you requires. Okay, members, this is the information what you requires to take the decision. Okay, buyback come. What buyback come? For what purpose you want to buy back? How many shares you want to buy back? First of all, what is the need of buyback? What is the buyback price? How you are decided buyback price? What is the EPS before buyback? What is EPS after buyback? What is the dilution in the EPS? What is the reason for buyback? What resources you are using for buyback? From where you are going to buy back? Means from whom you are going to buy back the shares? What is the time limit to complete the buyback? What is the limit of buyback? Everything you have to tell. You are provide, that is called explanatory statement. What is that? explanatory statement. So you have to give the information to the members to take the decisions. You have to provide the information to take the decision. Informed decision making. Informed decision making. That is also in well advance, 21 days before the meeting. You have to send a notice. Notice contains date, time, place, date and time, place, and as well as agenda of the meeting. Not only agenda but also complete information what is required to transact the business by the members to take the decision. You have to provide. This is what the notice. This is called properly called. It is called what, ma? Properly called. Okay, properly called. Almost we are completing. Indirectly we are completing properly called. There are 3 points to cover in the general meeting: properly called, properly constituted, and properly conducted. 3 C's are there. What is that? Properly called, properly constituted, and properly conducted. Properly called is day to day, time and place of the meeting, as well as notice of the meeting. Notice of the meeting also we are covering now. 21 clear days before you have to send the notice. To whom you have to send the notice? To all the members who have a right to attend the meeting. Directors, auditors, members, debenture trustees, deposit trustees, they also have a right to attend the meeting. To all the persons who have a right to attend the meeting, you have to send a notice. Who has to send the notice, ma? Board of directors only has to send a notice. No others. Or the person authorized by the board of directors has to send a notice, and within 21 clear days before you have to send a notice. If you want to send the notice by post, 2 days extra. Postal days 2 days. Sir, whether post is received within 2 days or not, that is not required for us. We assume that post is received within 2 days. Actual delivery is not required for us. We deem it to be delivered within 2 days. Postal days only 2 days, and 21 days clear days. Clear days means don't count posting date as well as meeting date also. That you know all these things, all calculations. Again, I have no need to make notice of the meeting. But nowadays they are not asking all these questions, outdated questions, all these things. Notice, due date of notice, clear days. So question paper setter is searching for new areas, small points they are asking. Okay. Now board of directors, they want to conduct a AGMO, EGMO, whatever it may be. So who will send a notice, ma? Board of directors. Who will say, we will decide the agenda of the meeting? Board of directors only. They will write themselves, please come to meeting, decide whether I will be removed or not. No, na. They will not write, na. They will write the point, removal of director. They will write the point, no. Removal of auditor. Auditor is superior to board of directors. Board of directors cannot write that point in the notice. Please come to the meeting, we'll decide whether to remove the auditor or not. No, you don't have any right. Don't talk. Auditor is the superior to board of directors. He is a watchdog on board of directors. Okay, so he is a representative of members. So you cannot simply add the agenda in the notice of the meeting. You don't have a right. Who is not having right? Board of directors has no right to add this agenda in the notice. Sir, without adding agenda, you are saying cannot be discussed in meeting. You are saying first agenda to be fixed, then only you have to decide in the meeting. Sir, without agenda, how, sir? It is not possible. That's why special notice. Who will give the special notice, ma? Members will give the special notice to directors. When they will give special notice? Board of directors will give the notice to members. Within how many days before, ma? 21 days before. Board of directors will give notice to what? All members. All members. Okay. I got a notice. I am also shareholder of company. I got a notice of board of directors. After 21 days, please come for a meeting. Okay. 1, 2, 3, 4. 5 points are there. 5 points we will discuss. Okay. I want to add 6th point. What I will do? Board of directors, they added 5 points, but I want to add how many points, ma? 6th point. What I will do? I will make for a EGM, ma. For requesting EGM, how much voting power is required? 10%. But I am having only 1% voting power. Can I call for EGM? No. Only to transact my business. Can I call for EGM, ma? No. So what is another option? Already board of directors, they are conducting a meeting. Na? In that meeting, I will add one more point. For that, only 1% voting power is sufficient. 1% or 5 lakhs rupees, whichever is less. Whichever is less is sufficient. Sir, I am having 1% voting power. What I will do? I will add 10th point in the notice. Then that I will inform to whom? Board of directors within 14 days. Within how many days? 14 days. Only one member. Who is holding how much voting power, ma? 1% voting power. He is informing to whom? Board of directors. Then board of directors, what they will do? Again, they will send a revised notice to all members by adding 7th point within 7 days before the meeting. It is not possible. They will give advertisement. That's all. Maybe sometimes it is possible. Sometimes it is not possible. They will give advertisement. That is what the special notice. What notice, ma? Special notice. To give special notice, how much voting power is required? 1% or 5 lakhs rupees, whichever is less. 1 lakh, 1% of total voting power or 5 lakhs rupees paid up share capital, whichever is less. I can give you what notice, ma? Special notice. I am not requesting for a separate meeting. Board of directors only, they planned a meeting. In that meeting, I am adding a small point actually. Sometimes special notice is mandatory. When special notice is mandatory? When special notice is mandatory. If you want to remove the auditor or you want to remove the director, special notice is required. What is required? Special notice. Board of directors, they will not add the point suo moto. It is not possible. Okay. So someone has to give a notice to the board of directors. That is called what, ma? Special notice. Are a board of director conduct a meeting. For what purpose, sir? No, not for conducting a meeting. Whatever the meeting you are going to conduct, in that meeting you please add this point. Okay. What point you want me to add, sir? Remove. Your removal only. Huh? Okay. You have to add it. Let them decide in the meeting. Let them decide in the meeting. You have to add that point to the notice. Okay. And you have to send revised notice. You have to send what, ma? Revised notice. Okay. That's all. That is what the notice. Two types, ma. Notice are two types. Ordinary notice, special notice. Ordinary notice, who will send? Board of directors will send to members. How many days before you have to send? 21 clear days before. If you are sending through post, 2 days postal days. And how to send, ma? Through post or by hand or by email or by any other prescribed manner. By fax also, by courier also. By courier also. Section number 20. What is that? Section number 20. Service of documents. Here you have to discuss section number 20. Service of documents either by post or by hand or by courier or by fax or email or any other prescribed manner. Okay. Which is having, which is prescribed. That's all. That is what section number 20. If you are sending through post, notice of the meeting is deemed to be delivered within how many days, ma? 2 days. Other documents, no. Only for notice of the meeting is deemed to be delivered within how many days? 2 days. Only notice of the meeting is deemed to be delivered within 2 days. We don't mind about the actual postal delivery, actual delivery of the post. Okay. So we assume that 2 days it is delivered. That's all. So 23 days before, 23 clear days is required to post the notice. By hand, 21 clear days before. By mail or by hand, by fax, so 21 clear days before you can send the notice. Okay. To whom you have to send the notice? Who have a right to attend the meeting. Who have a right to attend the meeting. That's all. Sir, if I am not sending notice, what will happen before 21 days? If I am not sending notice before 21 days, what will happen? Meeting is not properly called. Any member can go to tribunal. Meeting is invalidated. All proceedings of the meetings will be invalidated. So the meeting is not valid. Simple. Sometimes you can send short notice. Sometimes you can send what notice, ma? Short notice. What is short notice? One paper, one page notice, huh? Huh? Short notice means one page notice, huh? And then what is the meaning of short notice? Less than 21 days notice you can send. When you can send less than 21 days notice? Somewhere material is there. Ma, section number question number 62 completed. AGM and all. Holding of AGM, first AGM, subsequent AGM, date, time and place of AGM, place, unlisted company, government company, section 8 company, EGM by directors, EGM by directors upon requested by members, and EGM by members themselves. Okay. Next, notice. That is what we are discussing. Notice. Issue of notice. So you can issue notice within 21 clear days. All these things. Contents of notice, yes, covered. Then short notice. This is what question number 67. What is that, ma? Short notice. Important. In May 2023, they asked for 2 marks. Sir, for asking 2 marks, it is you are saying important. Maybe they will ask MCQs also. They will ask what, ma? MCQs. Short notice. When you can give a short notice, ma? Table is given happily. So they provided a complete table, but you please understand in a sensible manner. Okay. It's very important. Ma, in case of AGM, you have to take consent of 95% of members in value in number. Number of value? Number. Ma, there are 100 members are there. Then you have to take consent from how many members, ma? Irrespective of their shareholding. Irrespective of their shareholding. If it is a regular class, now I will give an example and I will tell you all the scenarios to make you understand, but now it is not possible. See, not less than 95% members. You please remember in number. In number. Not in value. Number. How many members are there? 100 members are there. They are holding 1 share or 2 share or 3 shares or 10 shares. Don't mind about it. From that, you have to take consent from how many members, ma? 95 members for AGM. EGM. In case of EGM, other than EGM means EGM only, na? Why you are saying a nose like this, what is your nose, ra? This, this, this better, EGM better. EGM means EGM only. Any other meeting? Having share capital, not having share capital. Not having share capital, same case, first case only, EGM case only. Company is not having share capital means all members are having equal votes. Number, value both are same. Number and value both are same. If company not having share capital means 100 members are there, 100 votes will be there. Every member has only one vote. That's all. So member value both are same. Don't worry about this. Then you have to worry about what, ma? Company has a share capital and you have to give a short notice for EGM. For short notice for EGM. For extraordinary general meeting in which company having share capital, you want to give a short notice. What is the procedure? That is what little bit typical. Maybe they are not asking this example in your exam, but majority number of members. Very good. Next, we'll go to next point, ma. Now section by section, these are the general points. 5 points you have to keep in your mind to understand the general meeting chapter. What is the 5 points, ma? Type of meeting, AGM, EGM. Type of notice, ordinary notice, special notice. Type of business, ordinary business, special business. Type of voting, ordinary voting, voting by show of hands, voting by poll, poll again 2 types. And types of resolution, ordinary resolution, special resolution. When which resolution you have to pass specified in Companies Act, articles of association. Okay, which resolution is required for what business is specified in Companies Act or articles of association. But articles cannot contain inconsistent with the Companies Act. Companies Act requires ordinary, articles you can write special, but you cannot write vice versa. Companies Act requires ordinary. You can write in your articles what, ma? Special, but not vice versa. No, it is not possible. Vice versa, it is not possible. Okay, now come to the point. For meeting, we have to discuss 3 points. I said already, for a valid meeting, 3 points are very important. Properly called, properly constituted, and properly conducted. Properly called already almost we covered. What is the properly called, ma? Day, time, place, date of the meeting. Next, notice of the meeting. This is already completed. Next, properly constituted chairman, proxy or representative, quorum. This is very important. Adjournment, okay. Next, properly conducted voting, resolution and minutes of the meeting and report of AGM. So this second point is very important. Nowadays they are concentrating on second one. What is second one? Properly constituted. What is that? Chairman, proxy, representative, quorum. Chairman, without chairman, meeting is not properly constituted. Okay, how to select the chairman, sir? By show of hands among the members who attend the meeting. If no one is willing to act as a chairman, even other than member also can be selected as a chairman. No issue. Sir, if show of hands chairman is selected, if anyone is demanding poll, you have to conduct the poll immediately and you have to select the chairman. Until the chairman is selected by poll, chairman by show of hands will be act as a chairman, temporary chairman. Okay, pro tem speaker. Like here, temporary chairman. Pro tem speaker will be there. Na? Next, chairman powers. What is that, ma? Powers of the chairman. Chairman has a power to maintain the decorum of the meeting, and he has a not only power but duty to maintain the decorum of the meeting. He will decide who has to talk, to what extent he will talk. You please watch assembly meeting. So come to the point. Please don't waste time. Come to the point. Sir, chairman, powers of the chairman, he will decide, he will sign the minutes of the meeting. He will decide what to be included in the minutes of the meeting, and he can adjourn the meeting and he can conduct the poll on suo motu basis. He can conduct the poll and he has a casting vote. What word, ma? Casting vote. In case of equality of votes, for ordinary resolution, ma, casting vote, there is a scope to ask. This attempt, there is a scope to ask about casting vote of the chairman. Maybe if he is inspired by Salar movie, na, they will ask a question in the casting vote. Okay, casting vote. Chairman has a casting vote. Normally has a vote. He is also a member, but he has an additional vote also. Ma, casting vote only in case of voting by show of hands, not in poll. Only in case of show of hands, and is authorized in the articles of association, and only in case of equality of votes. That is also for ordinary resolution. 4 points you have to write for casting vote. What are the 4 points? Authorized in articles of association. Only in case of bias, show of hands, and in case of equality of votes for ordinary resolution. And one more point you can write, casting vote. There is no rule that chairman has to cast the vote in both the votes. Means original vote favor. Casting vote he can cast either favor or against also. There is no rule that all the votes he has to cast only for favor to the resolution. Original vote I said yes. Casting vote I said no. Yes, of course. I have a discretion. Chairman has a discretion to cast his vote, additional vote, either yes or no, irrespective of his original vote. That's all. This is what the casting vote. Chairman's powers, casting vote, signing of minutes of meeting, adjournment of meeting, and as well as any other things to maintain the law, decorum of the meeting, he can take any decision. Expulsion of member also can be expelled. Get out of the meeting, like that he can say. Okay, that is what the powers of the chairman. Now we'll come to the next one, quorum. What is that? Quorum. Before discussing quorum, we should discuss about what? Proxy, representative. Quorum, anyhow, they asked in May 2024 for 10 marks. Quorum, they asked for 10 marks in May 2024. Not internal choice. Originally 10 marks. Separate questions for 10 marks. 5 marks question. Same point. Slowly, CA inter law paper also is meeting the standards of CMA inter law paper. Okay, CMA inter law also same like that only. Directors chapter, they will ask the same disqualification of directors 2 times for 7 marks, 14 marks. Like that, CA inter law paper also. ECM 2 times 5, 10. Quorum 5, 10. The books of accounts, May 24, copy paste. Okay, variation of shareholders' rights, copy paste this time, next point. Okay, like that, calls in advance. 47 they asked, 48 they asked, after that 49, 50. Maybe next 51, 52, I don't know. May 2024, they asked 48. September 2024, they asked 49, 50. So now next January 2025, 51, 52. 51 anyhow, it is not there. 52 they will ask. That's why utilization of security premium account, 52 or 53. Okay, issue of shares at discount. Now, come to the point, sir. Proxy. Who is a proxy? Next, this attempt, based on this logic, maybe there is a scope of asking question from where? Proxy. There is a scope of asking question from where? Proxy. Sir, every question you are saying like that only, you are betraying us actually. No, not like that. Just like I want to you want to concentrate each and every topic. That is what my motive. Whether it will be asked in examination, I don't know. If I know everything, I will not be here, I said. So, Isha Foundation, Nisha Foundation, okay. Anyhow, now come to the point. Sir, who is a proxy, sir? If a member is unable to attend the meeting, he can appoint what? A proxy, a natural person, natural member. A natural person who is a member of the company is unable to attend the meeting on scheduled date, time, place, then he can appoint another person to attend the meeting on his behalf is called proxy. That proxy may be a member, may not be a member. That proxy may be a member, may not be. An outsider also can be appointed as a proxy. Okay, that's why proxy has no right to speak. Shut your mouth and sit. That's all. Because you are not a member of the company. You are an outsider. But anyhow, you are a proxy. You came on behalf of some other person. So you don't have any right to speak. Proxy has no right to speak. And proxy cannot raise his hands also. In case of voting by show of hands, proxy has no right to vote also. Because one member can appoint multiple proxies and one proxy can represent multiple members. Proxy, maximum how many members he can represent? 50 members. He can represent 50 members or 10% of voting power, whichever is less. 50 members or 10% of voting power, whichever is less. But for this 10%, there is an exception is there. If one member is holding more than 10%, I can appoint only one person as a proxy, but he cannot represent any other member. That is what one exception. Okay. So this is what proxy. That's why one person is representing so many members. So voting by show of hands, proxy is not allowed. Voting by show of hands, proxy is not allowed. Not only that, proxy, after appointing proxy, original member also can attend the meeting. By chance, I don't know. Maybe I have a doubt whether I will go for meeting or not. That's why I appointed her as a proxy. So she also attends a meeting and I also attends a meeting. Original member also attends a meeting and she also attends a meeting. Now both are present in the meeting for biryani. Okay, biryani you can eat, no issue. But by show of hands, she is also raising hand, I am also raising hand. Then 2 votes will be counted for one member. So it is not possible. That's why per proxy, by voting by show of hands, they will not give any vote. No right to speak because maybe outsider also can come. That's why no right to speak and is no right to vote in case of show of hands also. Okay, and the proxy is not to be counted for the purpose of quorum also. Proxy is not counted for the purpose of quorum. Okay, same logics you can apply. Proxy cannot be counted for the purpose of quorum. Quorum means minimum number of members personally present at the meeting. Minimum number of members personally present. Proxy is not a personal present. Minimum number of members personally present at the meeting within half an hour from the scheduled time of the meeting is nothing but quorum. So while counting the for quorum, proxy is not to be counted. Then what purpose proxy is going, sir? For eating biryani, eh? Proxy has a right to demand poll. Proxy has a right to demand poll, and proxy has a right to cast his vote in case of poll. And sometimes proxy can be appointed as a chairman if no other person is willing to act as a chairman. And proxy can be counted for the purpose of quorum in urgent meeting for the want of quorum. My one-time meeting is urgent because of want of quorum. In urgent meeting, want of quorum, in that meeting proxy can be counted as quorum also. That's why proxy is also important. Okay, so that is what proxy. And one more point what you have to understand in proxy: deposit of proxy form. Deposit of proxy form. Within how many hours before you have to deposit? 48 hours. Can we reduce it in articles of association? Yes. Up to what time? 24 hours. But you cannot increase. You cannot increase. You can reduce up to what hours? 24 hours. Because inspection of proxy forms will start from 24 hours from the scheduled time of the meeting. So maximum articles can reduce by 24 hours. So I can deposit the proxy form normally as per companies had 48 hours before the time of the meeting, but the articles can reduce up to 24 hours. So my proxy, on what basis proxy will be preferred? Ma FIFO na LIFO na? First in first out, last in first out. LIFO, latest proxy. Ma, can one member appoint more than one person as a proxy? Yes, but only one proxy is allowed. Which proxy is allowed? Who deposited his proxy form latest by the company. Who deposited his proxy form latest by the company. One practical question is there in your material. Please refer that practical question. One example is also given to you. That example also you please refer. Maybe this time I am expecting that example in your exam. Okay, proxy, because quorum is already covered. ECM also covered. ACM already covered in May 2023. So next attempt maybe they will concentrate on proxy. Other than that, no other important points in general meeting. Na? What is there? In general meeting, what is there? Proxy, quorum, notice, AGM, EGM, chairman, that's all. Minutes and all, no. Minutes report not important. Okay. Voting anyhow, electronic voting. They can ask from electronic voting or voting through postal ballot. Okay. Voting by poll. Voting by poll. Okay. Next. Next one, in case of any other additional points for proxy, deposit of proxy before 48 hours and maximum articles of association can reduce by 24 hours before the meeting. Inspection of proxy will start from 24 hours before the meeting. Yes, 24 hours before the meeting till the conclusion of the meeting. If you want to inspect the proxy forms, you have to give a notice to the company before 24 hours. 72 hours before the meeting, you have to give a notice to the company. I will come and inspect the proxy, not proxima, proxy forms. Not proxy. Okay. So you have no need to inspect the proxy. You are not a gatekeeper or watchman to inspect the proxy and all. So if you want to inspect proxy forms, what is that? What inspection of proxy forms? Whether proxy forms fake or original proxy, because there is a scope of submitting fake proxy forms also to pass the resolutions by the directors. I said so many examples. Proxy representatives, proxy services also will be provided by the companies. That is a very big mafia. Okay, we'll see later, not now. That is what proxy. Okay. Next, representative. What is representative? Artificial member can appoint a person to attend the meeting and is a representative. My representative have all the rights to, he can exercise all the rights of a natural member. Representative can exercise all the rights of a natural member. My representative can be counted for the purpose of quorum. Representative has a right to speak. Representative has a right to cast his vote in case of show of hands or in case of poll. He can demand the poll. Every rights, all rights representative is having. Representative, who can appoint representative? Only artificial member, means like President of India, Governor of State, or any other body corporate holding shares in the company, that they cannot come for meeting. They don't have any rights, hands and legs to come for meeting. That's why they will appoint what? A representative. There is no other alternative. It is unavoidable. They have to appoint only representative. Representative is nothing but member. Representative attends the meeting means who attends the meeting? Member attends the meeting. That you have to keep in your mind actually. So that is difference between representative and proxy. Okay. Next we are going to quorum. What is that, ma? Quorum. So quorum, what is the minimum number of members personally present at the meeting within half an hour from the scheduled time of the meeting? That is called nothing but quorum. For private company, what is the quorum, ma? 2 members are articles of association, whichever is higher. And public company, 7 to 1000, 5, 1001 to 5000, 15, 5001 and above 30 are articles of association, whichever is higher. You please remember this point. 5 marks, this point only they asked. Sir, I don't remember. What I will do? Sir, how to remember? I said write a number of times. Otherwise, I also don't remember. Okay. Now also I have a doubt. 7 to 1000, 1001 to 5000, 15, 5, 10. Okay. Maybe repeatedly you are writing, then automatically it will be habituated. Okay. Sir, even though writing I am unable to remember, sir, then explain to somebody like a faculty and student, explain to somebody. Then you will remember forever. Okay. Sir, then also I will not remember, sir. Please go. Where? Go to home. Okay. Next, ma, quorum within what time quorum should present, ma? Half an hour. One more question is there. Quorum should present throughout the meeting. Only first half an hour quorum should be there. After that quorum is not required. Ma, nothing is prescribed in the Companies Act. As per secretarial standard, maybe you want quorum should be present throughout the meeting. Quorum should present throughout. For each and every resolution, chairman has to check the quorum. But Companies Act 2013, nothing is specified. Articles you can write whatever you want. Okay, articles you want whatever you want. No, only quorum is required only at the beginning of the meeting. After that quorum is not required. Yes, of course. Okay, that is what one more question. And counting of quorum is very important. What is important, ma? Counting of quorum and consequences of lack of quorum. That is also very important. These 2 points if you complete, no, quorum is completed. What is that? Counting of quorum and consequences of almost general meeting is completed. Only quorum is done. So in management and administration chapter, from 88 to 122, out of that so far we covered 88, 89, 90, 91. You please read yourself. 92 is annual return. Yes, it is covered. And 93 also not in your syllabus. 94 place of keeping and inspection of registers and returns. General section, ma, normally we will keep the register of members. Everything is in the registered office address only, or any other place within the same city, that is okay. But if you want to maintain the register members or any other register some other place, yes, you can maintain by passing board of directors resolution where 1/10 of the members generally resides. That is also, maybe there is a possibility to ask MCQs. Please refer that also. And 95 is not in your syllabus. 96 annual general meeting, that is what we discussed. Day to day, time and place of annual general meeting, first AGM, subsequent AGM, everything we covered. 97 is power of tribunal to call annual general meeting. If company fails to conduct AGM within due date, any member can make an application to tribunal. Tribunal will call for the AGM. And what point you have to remember, tribunal without making an application, they will conduct any AGM. Suo moto, tribunal cannot conduct AGM, but tribunal cannot conduct EGM. Tribunal can conduct suo moto, EGM, extraordinary general meeting, tribunal can conduct. But AGM only upon making an application by any person, then only tribunal will call for a annual general meeting. That point you should identify the differences. Okay. Next, 100 calling of EGM by board of directors themselves, suo moto, or upon request by the 1/10 of the members, or EGM by the members themselves, EGM by the members. So 100 is very important nowadays. 10 marks they asked, less 0. Next, 101 is a notice of meeting. Notice of meeting already we covered. Length of notice, contents of notice, who has to send the notice, to whom the notice to be served, and short notice. What is that, ma? Short notice and contents of notice, everything. And next, 102 statement to be annexed to notice is nothing but explanatory statement. When explanatory statement is required, ma? For special business. For what business explanatory statement is required? For special business explanatory statement is required. Okay. For ordinary business explanatory statement is not required. Ordinary business, what are the ordinary business? The 4 transactions which are transacted in AGM is nothing but ordinary business. For that, no information to be provided in the notice. Because already in section number 129, circulation of financial statements are there. There we will see. So, separate information is provided under some other act of the Companies Act 2013. That's why under section 101, you have no need to provide the information. Under section 101, you have no need to provide the information. For ordinary business, you have no need to provide any information to the members in notice. Only for special business only, you have to provide the information to members by way of explanatory statement. By way of what, ma? Explanatory statement. Sir, what are the contents of explanatory statement, sir? Nothing. So, what are the information required for the members to take the decision? That information you have to provide. In general, you can write. Don't write specifically. Okay. Next, 103 quorum for meetings. That is what we are discussing. Section number 103. So, quorum is for private company. Minimum number of quorum personally present at the meeting. 2 are prescribed in the articles of association, whichever is higher. And public company for 7 to 1000 members, how many, ma? 5001 to 5000, 15, 5001 to and above 30 are prescribed in the articles of association, whichever is higher. Whichever is higher. What will happen if quorum is not present at the meeting? Consequence of no quorum. Consequence of no quorum. Within half an hour, if there is no quorum, then what is the consequence? Very simple. Meeting will be adjourned. Meeting will be adjourned for want of quorum. Meeting is adjourned for want of quorum. Sir, adjourned meeting also no quorum, sir. Then what you will do? For quorum only, you will wait for only 2 times, 2 chances only. First time, original meeting, no quorum. So, we adjourn the meeting. In adjourn meeting also, there is no quorum. Then what you will do? Whoever present, they can constitute a valid quorum. Whoever present in the meeting, they can constitute a valid quorum. Sir, original meeting, proxy came, will count or will not count? No. Joint shareholders came, will count or will not count? Will count as only 1 member. Representative will count or will not count? Yes. Representative will be counted as many members as he representing. As many members as he is representing, like that we will count. For example, one Mr. A is representing Governor of AP, Governor of Tamil Nadu, Governor of Telangana, Governor of Karnataka, Governor of Kerala. Then he will be counted as 4 persons. He will be counted as 4 persons. He is representing 4 persons. Na? And President of India, 5 persons. He will be counted as 5 persons. But one basic rule you please understand as per SS2, Secretarial Standard number 2. What is the basic rule, sir? 1 person cannot constitute a quorum at any case. In any case, 1 person cannot constitute a quorum. Fundamental rule. What is the fundamental rule, ma? In any case, 1 natural person cannot constitute quorum. Meeting means at least 2 persons. At least 2 persons. At least 2 heads. 2 heads are required for quorum. You will count proxy or representative or joint shareholders, I don't mind. Whether you are counting as him as 5 persons or 10 persons, I don't mind. But what is the fundamental rule, ma? Quorum means at least 2 heads. How many heads, ma? 2 heads should be there. Okay. Sir, original meeting, private company, original meeting, 2 joint shareholders came. Original meeting of a private company, 2 giant shareholders came. Quorum, no quorum? No quorum, because they are counted as only 1. 2 heads are there, but we are counting as a 1. Even adjourned meeting also same 2 giant shareholders came. Count as 2 valid quorum. Original meeting, 1 proxy and 1 representative representing 5 persons. 1 proxy and 1 representative representing 5 persons came. Okay, 5 members. He is representing how many members, ma? 5 members of a public company having minimum number of members 1000. 1000 members private public company. Original meeting. Who came up for original meeting? 1 proxy and 1 representative. Representative is representing how many members, ma? 5 members. Tell me, quorum is there or not there? Quorum is not there because proxy is not to be counted for the purpose of quorum. Proxy get out. Okay. Now how many persons are there? Only one representative. But representing how many members? 5. Yes, sir, 5 only in a requirement. But what is the basic rule? At least 2 heads. You are not counting proxy in original meeting, so only 1 head is there. Okay, 5 members came. 5 members through representative they present, but heads count. Head count 2 heads will be there now, only 1 head na, so no quorum. Same persons they came for urgent meeting also. Same proxy, same representative came for urgent meeting also. Proxy counted as a quorum and heads also 2 heads are there. Okay, 6. Both are satisfied. So you please be careful while counting the quorum, urgent meeting, original meeting. Urgent meeting for want of quorum. Sir, urgent meeting also there is no quorum. Then members personally present at the meeting can constitute a valid quorum. Only one person came then? No. One person came, so it is not possible. So okay. So other than one person, maybe 2 person, at least 2 heads, either giant shareholders, proxy, anyone who has a right to attend the meeting. If they attend the meeting, 2 heads then can constitute a valid quorum. These are the about the quorum. Okay. And one more point, sir, if EGM is requested by members, EGM, who is requesting EGM? Members are requested EGM. For that EGM, if quorum is not present, then you don't adjourn the meeting, cancel the meeting. Okay. So what is the consequences of no quorum? Consequence of no quorum. You please consequence of no quorum. You divide into 2 parts. Meeting held by board of directors. Meeting requested by meeting board of directors by suo moto. By suo moto, board of, either AGM or EGM, whatever it may be. But meeting requested by members. Meeting requested by members. If members requested for EGM, because of that board of directors are conducting a meeting. In that meeting, quorum is not present means that meeting you have to cancel the meeting. Okay. So in this case, meeting cancel. In this case, please adjourn the meeting once again. Adjourn the meeting once again. For what purpose you are adjourning? Adjournment of for want of quorum. Adjournment of meeting for want of quorum. Okay. So adjourn meeting also there is no quorum. Whoever present, they can constitute a valid quorum. But what is the fundamental rule? At least 2 heads. Okay. So maybe you might be confused in the exam if he is asking this particular case in November 2023. November 2023 they asked from quorum one question. In that question May 2024 I think. So in that question paper what they asked, so meeting has been held, original meeting, quorum is also present. Who present ma? Quorum also present. Meeting is urgent because of some other reason. Meeting is urgent because of some other reason. For example, transactions are not completed. Business is not completed. Because of that, meeting is urgent. Meeting is urgent. In urgent meeting, there is no quorum. What we will do? Urgent meeting, there is no quorum. Then what we will do? Urgent meeting, only 3 persons came. Normally, how many required? 5. Public company, but only 3. We will see these 3 persons will constitute a valid quorum. No. You have to adjourn the meeting once again for want of quorum. For quorum, how many times you have to wait? 2 times. That you have to keep in your mind. First time no quorum, then adjourn the meeting for second time. Second time also no quorum, then only you can adjust with the attended persons. Okay, that you have to remember in your mind. Okay, that is what about quorum. And next we are going to voting. Voting is already voting by poll, voting by show of hands, and electronic voting is also completed. So only thing is postal ballot resolution. Postal ballot. Resolution through what? Postal ballot. For buyback, for alteration of object class. Okay. So for prospectus, variation of terms of prospectus. So many sections of the Companies Act 2013, they specify you have to pass a resolution through postal ballot. Postal ballot, what I said? Remote voting without meeting. Without meeting means there is no chairman, no quorum, no proxy, no representative, no venue, no place, nothing. Just you be in your home and cast your vote. That's all. No need to attend the meeting. There is no meeting at all. You just be in your home and cast your vote, and based upon the votes casted by the members from their place themselves, we will count the votes and they will declare whether the resolution is passed or not. That is what resolution through postal ballot. Resolution through postal ballot. Resolution through postal ballot I divided into 3 types. One is when it is mandatory. When it is mandatory. When it is voluntary, when it is prohibited. We are dividing this resolution through postal ballot into how many types, ma? 3 types. When it is mandatory, so there is no other option, you have to pass resolution only through postal ballot. So there are some points are there in your material, for example, for alteration of object class, for buyback of shares, okay, and variation of terms in prospectus, everything you have to pass resolution through what, ma? Postal ballot. List is there, please refer the list once, okay. I am not going to write the list, it is not possible to write entire list, ma. So resolution requiring special notice, this is already completed, ma. Who can give a special notice, ma? Who can give a special notice? Who is holding 1% voting power or 5 lakhs rupees paid up share capital, whichever is less. For what purpose they are giving special notice? To add some items to the agenda of the notice which is issued by the board of directors for the proposed meeting. For the proposed meeting, okay. So for what items special notice is mandatory? Only 2 items, removal of director, removal of auditor. For these 2 items, board of directors they cannot add in the agenda. Someone has to give a notice. So special notice is required for 2 items, mandatory. What is the 2 items? Removal of director, removal of auditor. Other items also you can give a special notice. Okay, for example, you got an idea to buy back the shares. You are not a director. You are just a member holding 1% voting power. You are just holding 1% voting power. You got an idea. Why don't we go for buyback of shares? Sir, what can I do, sir? Resolution to be passed. Okay. So for resolution, you have to conduct a general meeting. Can you conduct a general meeting? No, na? Can you send a notice to all the members? It is not. You don't know who are all the members of the company also. Sir, I will take register of members. I will send. That is not a simple task. I will conduct a meeting. No, that is also possible. But when it is possible, you have to make a request for EGM. Board of directors fail to conduct the EGM within 45 days. Then members can themselves they can conduct the EGM by taking register of members from the board of directors. That is okay. That is secondary. I am holding only 1% voting power, but I got an idea to buy back the shares. I got an idea to buy back the shares. Only idea. Whether resolution will be passed or not, I don't know. I got an idea. Why don't we go for buyback? Or I got an idea. Why don't we change the name of the company? Only board of directors only will get idea, na? No, members also maybe they are getting different ideas. Okay. Very good, sir. 1% voting power. Can we request for EGM? No. Then what you have to do? You have to wait until the board of directors will conduct a meeting. Let them send a notice of the meeting to you. Then you please send a notice to board of directors. Please add this item also. For my purpose, you don't conduct any meeting because I am holding only 1% voting power. It is not possible. If that is possible, then everyone who is holding 1%, they will go and request a meeting for board of directors. Then object class of MOA will be changed. What should be changed, ma? Here meetings will be conducted every day. That's all. That is the object class of memorandum of association of a company. So it is not possible to make a request for EGM. You should hold at least 1/10 voting power. For sending a special notice only 1% voting power. Even though you are having 1% voting power, you have a right to send a special notice to board of directors to add your agenda to the existing meeting notice. You are not requesting a new meeting. Existing meeting notice only you are requesting to add a additional item. That is what special notice. But the special notice is mandatory in which case, ma? Removal of auditor, removal of director. Okay. Other cases, okay, your wish. You can send a notice and board of directors will add that point. Again, they will reserve the notice to all the members and they will conduct the meeting and they will discuss in the meeting. If resolution is passed, okay. If resolution is not passed, then business is not transacted. Simple. Okay. That is what special notice, ma. Next, restriction on voting rights already I completed. Next, applicability of voting through electronic means, ma. Listed company and the companies which are having more than 1000 members, they will go for electronic voting. Okay, they have to provide the electronic voting facility to their members. They have to provide electronic voting facility to their members. And poll is already, I said poll can be demanded by 10% voting power or 5 lakhs rupees paid up capital, whichever is less. Poll can be demanded either before resolution or after resolution by show of hands. And you can withdraw the poll also at any point of time, no issue. Only to give warning only I am demanding poll. Okay, to just to remember you, I am the major shareholder. If I am demanding a poll, then they will conduct the voting by poll and resolution may be changed. Only for giving warning also can demand a poll. And proxies also can demand a poll. Proxy voting power also can be counted for demanding the poll. Okay. Next, if poll is demanded, immediately they have to conduct the poll for 2 cases. One is selection of chairman and adjournment of meeting. Other matters they can conduct the poll within how many hours, 48 hours. That's all. That is what you have to understand. This is what postal ballot. This is what postal ballot. This is what list. Where is the list? List is not there. Maybe your regular material list will be there. You please refer the list. In which cases postal ballot resolution is mandatory. Resolution through postal ballot is mandatory. In which cases you please refer. Okay. Now voluntarily, yes. You are voluntarily, you are providing facility to the members now, then you are always welcome. Voluntarily also you can pass a resolution through postal ballot, but except what business ma? Any business. Voluntarily you can do any business, but prohibited business is ordinary. Ordinary business only in meeting. Ordinary business only in meeting ma, not through postal ballot, not through postal ballot. Dividend declaration, auditor appointment or reappointment, or otherwise director's appointment or reappointment, adoption of financial statements, these are all things postal ballot, no. If it is allowed na, then without meeting they will pass all resolutions through postal ballot. Without meeting they will pass all resolutions through what ma? Postal ballot. At least yearly once you have to meet. AGM is mandatory, in that you have to carry out the business. So ordinary business you cannot carry out through postal ballot. Not only that ma, representation. So for some resolutions there is a right to represent. You know very well, in auditing chapter it will come. The retiring auditor. Which auditor ma? Retiring auditor. He has a right to make representation in the general meeting, or his representation to be circulated to the members of the general meeting. Okay. So if any special notice is received by the board of directors from a requisite number of members to remove the existing auditor, then the existing auditor has a right to represent himself. So you have to conduct a meeting and you have to give an opportunity to the auditor. So auditor has to give the representation. After listening to his representation only, members has to participate in the voting whether to remove the auditor or not. Okay, that you know na. So this type of transactions you cannot do through postal ballot. You have to conduct a meeting only. This is what prohibited transactions. What transactions ma? Prohibited. Except prohibited transactions, any other transaction you can pass through special resolution through postal ballot. That is what voluntary. Okay, but for this mandatory, some exceptions are there. In some cases it is mandatory na, but for this mandatory cases also exceptions are there. In which case postal resolution through postal ballot, mandatory cases also exceptions are there. What is that ma? OPC anyhow, no meeting, nothing. Okay. For the companies having only how many members ma? 200 members. So only less than 200 members, no resolution through postal ballot, they can come for meeting ma. Unnecessary postal ballot resolution is not required. Okay. So 200 members only there, then no resolution through postal ballot is required. And one more exception is there, electronic voting facility. What facility ma? Electronic voting facility. Why? What is the resolution through postal ballot speciality? What is the difference between resolution in meeting and resolution through postal ballot? What is the difference between resolution through meeting and resolution in postal ballot? Resolution in meeting, maybe retail shareholders, they will not participate. I purchased 10 shares in TCS Limited. I got a notice from TCS to attend the meeting in Delhi or in Maharashtra. I will go to Maharashtra to attend the meeting. In Andhra Pradesh also I will not attend. For 10 shares, I purchased only 10 shares. For the 10 shares, I will go and attend in Maharashtra. It is not possible. Even though I am interested to attend the meeting, because of this meeting venue, where meeting will be conducted at registered office address or any other place in the city of the registered office address only. That is in Maharashtra. They will conduct the meeting in Maharashtra only. I will go to Maharashtra to attend the meeting of TCS, to raise my hand. There are maybe 1 crore shareholders are there. I am holding only 10 shares. Maybe 0.00001%, I don't know. For that purpose, I will go to TCS Limited general meeting to raise my hand. No. Even though I am interested, but I am not unable to attend the meeting because it is somewhere it is happened. To increase the participation. Your general elections is the best example. Your general elections are resolution through postal ballot only. Recently, general elections are conducted. So that is resolution through postal ballot. You went to Delhi to cast your vote? No, na. In Delhi parade grounds, they conduct a meeting. Raise your hands, Prime Minister Narendra Modi, who says yes, and Rahul Gandhi, who says yes, you are raising your hands. Then what? Speaker will, election commissioner, he will count the hands. How many hands for Narendra Modi, how many hands for Rahul Gandhi, like that, he will count the hands. No. So, voting by poll. Poll also remote voting. You are not going to Delhi parade grounds, you are just casting your vote from your home, means nearby polling booth only. So that is what resolution through postal ballot. You have no need to attend the meeting. You have no need to attend the meeting. That much facility also provided by election commissioner. You are not casting your vote. If everyone has to go to Delhi na, then no one will cast vote. Go, let them go, no issue. Only Delhi people only will go and cast the vote, maybe. Okay. So to increase the participation in the meeting, lawmaker is making these provisions to make an obligation for companies to pass resolution through postal ballot, which will affect the individual rights of shareholders. So which resolutions will affect the individual rights of shareholders? For those resolutions, lawmaker is insisting company to pass a resolution through postal ballot to increase the participation. To increase what? Participation. Because exit option is only to dissenting shareholders. Dissenting means who participated in the meeting and casted his vote for no. They are only dissenting shareholders. So our meeting is conducted in Maharashtra. That's why I didn't attend the meeting. I am not a dissenting shareholder. Even though I want to say no, but I didn't attend the meeting. No exit option to me. So to avoid this type of situations, lawmaker made a small provision by special resolution through postal ballot. Send postal means postal vote. So electronic voting, whatever it may be, remote voting. Either postal voting or electronic voting or remote voting. From their place itself, they have to cast their vote. That's all. That is what resolution through postal ballot. Only 200 members are there. For that, resolution through postal ballot is required. No. And company is already providing facility of electronic voting with meeting. What is that? Electronic voting with meeting. My electronic voting facility means happily you can cast your vote from your home itself. After that, if you want to attend the meeting, otherwise don't attend meeting. That is your wish. Okay, that is what electronic voting facility. So if any company is providing electronic voting facility to its members, no need to pass resolution through postal ballot. They can conduct the meeting and let the members will come to the meeting, or otherwise who are not attending the meeting, they can cast their vote electronically. Same facilities only, na? Okay, that's all. That is what the postal ballot very important. And next one is if any concept is left to discuss in general meeting, report on AGM, you please refer once within how many days within how many days you have to submit the report on AGM 30 days only for listed company only for listed company. This is only for listed company. That's why it is not that much important, but I have a doubt that maybe they will ask MCQs for 2 marks and all. So within 30 days from the conclusion of AGM, please. Here you have to note down the point. Within 30 days from the conclusion of AGM, after concluding, AGM was convened, held and conducted as per the provisions of the Act. This is conclusion of AGM. What is that? Conclusion. So clearly it is said, time period, report on AGM shall be filed with ROC within 30 days from the conclusion. Annual return. Annual return. Within 60 days from the date of holding of AGM. But report on AGM. Conclusion. AGM report means AGM has to conclude. Na? What is happened in the AGM, everything you have to give report. Na? So for that, after conclusion of AGM only, you have to prepare a report. Within 30 days, you have to file with the ROC. If not, what is the fine and all, that is there. Okay. That's all. Now we'll go into next chapter. Before going to next chapter, let us see the Bear Act, whether we covered all the sections or not. Okay. 103 quorum for meetings. Yes, it is covered. And 104 chairman of the meetings. How to select the chairman. And what are the powers of the chairman. Everything we covered. And 105 proxy. In proxy, what are the important points, ma? What are the important points? Proxy may be a member, may not be a member. Maximum you can represent 50 members or 10% of voting power. If one member is holding 10% voting power, he can appoint one person as a proxy and he cannot represent any other member. And one member can appoint multiple proxies, but the company will allow only one proxy based upon the LIFO method. LIFO method is applicable for depositing of proxy form. Depositing of proxy. Who is depositing the proxy form by latest date? He will be allowed to the meeting, but proxy form to be deposited before 48 hours before the scheduled time of the meeting, but articles can reduce the time up to 24 hours. That is what proxies. And inspection of proxies, if any member he want to inspect the proxy forms, he has to give a notice 72 hours before, and he can start the inspection from 24 hours before the meeting till conclusion of meeting, only during business hours, only during business. Midnight 12 I will go and I will inspect the proxy forms. It is not possible. Okay. Only during what business hours. Maybe a small questions they can ask on this inspection of proxy forms also. Next one is restriction on voting rights 106. Yes, of course. Read with section number 47. 106. Articles of association may impose restrictions on voting rights of the shareholders based on the grounds. What grounds? Call scenarios or right of lien is exercised on the shares. Other than these two grounds, no other ground is permissible to impose the restrictions. Okay. Next, section number 107, voting by show of hands. It is a default method, no discrimination, one member, one vote. And 108, voting through electronic means. Only for listed companies, and companies are having 1,000 or more members, they have to provide the electronic voting facility to their members. Okay. Detailed rules you please read. Don't ignore. I am saying once again. Please read the detailed rules of electronic voting. Next, demand for poll. Yes, 10% voting power or 5 lakhs rupees paid up share capital, whichever is less, they can demand for poll even after resolution or before passing a resolution, and they can withdraw the poll also. And poll, once it is demanded, it should be conducted within 48 hours, except in 2 cases, selection of chairman or adjournment of the meeting. Okay. And next, postal ballot. That is what we discussed. Postal ballot, when it is mandatory, when it is voluntary, and when it is prohibited. For mandatory, again exceptions are there, 3 points. OPC, 1-person company. For 1-person company, entire management administration chapter is not applicable except register of members and all, and filing of annual return and all. Only small sections only applicable to 1-person company. AGM, EGM, quorum, chairman, proxy, these are all not applicable for 1-person company. Only one person is there. What meeting he will held, I don't know. Okay. Next, circulation of members resolution not there. 112, representation. Yes, representation 112 plus 113, representation of the artificial members. They can appoint representative, and representative is having all the rights. I asked 2 questions, whether representative can appoint a representative, whether a representative can appoint another representative or not. Representative can appoint another representative or not? No. Representative can appoint a proxy. President of India, he appointed me as a representative to attend a general meeting. Yes. Can I appoint another person as a proxy? Yes, I can appoint another person as a proxy to attend the meeting, because I have all the powers of a member. I have all the powers of a natural member. What member? Natural member. President of India is an artificial person. Don't think President of India is only designation, artificial person. They cannot attend the meeting. That's why they are appointing me as a representative. I am a representative. I can appoint proxy, but I cannot appoint a representative. Representative who can appoint? Only artificial member. Representative can appoint only artificial member. Natural member can appoint only proxy. I am a natural person. That's why I can appoint only proxy, not representative. Okay. Next, 114, ordinary and special resolutions, as it is covered, and 115, resolutions requiring special notice. I am expecting question from 115 this time. And 116, resolutions passed at adjourned meeting. So meeting may be adjourned by chairman. Okay. So maybe the business is not transacted in the meeting, then chairman will adjourn the meeting. Quorum is not there, chairman will adjourn the meeting. Due to any other reason also, chairman can adjourn the meeting, and adjournment can be demanded by the members also. For that also, poll will be conducted or show of hands, whatever it may be. Adjourn meeting is only continuation of original meeting. It is not a separate meeting. Adjourn meeting is a continuation of original meeting. It is not a separate meeting. Sir, for adjournment, automatically meeting will be adjourned to next day, same day, next week. Same day, next week, same time, same place, but next week. But board of directors, they want to adjourn in some other day, then they have to give a advertisement in newspaper 3 days before. Okay. That is what the adjournment of the meeting. And what are all the resolutions passed at the adjourned meeting? From that date only it is effective. From that date only it is effective, not from the original meeting date. Original meeting held on 30th September, and adjourned meeting is held on 31st December. Any resolution, managing director is appointed in adjourned meeting. From what date his appointment is effective? 30th September or 31st December? 31st December only. Sir, you said the original adjourned meeting is a continuation of original meeting. Continuation of original meeting only, but any resolution is passed in the adjourned meeting, those are effective only from the date of passing resolution only, not from the original meeting date. You please don't interpret in that way. Okay. Next, 117 is not required. My resolution should filed with ROC and all. 118, 119 and 120 and 122, of course it is not required. 121, report and annual meeting we covered. Minutes of the meeting we are not going to discuss. You please refer once. Minutes of the meeting, you want to remember anything, signing of minutes of meeting is very important. Who has to sign the minutes of meeting? Normally who will sign the minutes of meeting? Chairman of the meeting. Okay. So if chairman is unable to sign, then this is general meeting, not board meeting. Board meeting means next meeting chairman will sign, but general meeting who will sign? Any other person authorized by the board in this behalf, they will sign the minutes of the meeting. Simple. Okay. That's all. That is what. And Who has a power to decide what to be included in the minutes, what not to be included in the minutes? Chairman. If chairman thinks that is a defamatory or otherwise unnecessary advertisement or unparliamentary, whatever it may be, then chairman will remove from the records of the minutes of the meeting. He has a solo discretion to decide whether to include in the minutes or not. Okay. And minutes of the meeting you have to prepare. No need to file with ROC, and no one has a right to inspect the minutes. Member has a right to inspect the minutes of meeting, but outsiders cannot inspect the minutes of meeting. That you have to remember. Okay, that's all. Next we are going to next chapter. What is the chapter number? Chapter number 8. What is chapter number 8? Chapter number 8. Declaration and payment of dividend. Declaration and payment of dividend. In this chapter, you should remember only 3 points. No doubt, they will ask for 5 marks. From this chapter, they will ask how many marks, 5 marks. There is no doubt in that. So, dividend is 2 types. Interim dividend. Dividend definition. Dividend includes interim dividend. That is wonderful definition given in the Companies Act. Dividend includes what, interim dividend. So, what are all the provisions applicable to dividend? Is a visa or mutatis applicable to interim dividend also. What dividend, interim dividend also. So, interim dividend to final dividend, what is the difference, sir? Final dividend is declared by the members in general meeting, and interim dividend is declared by the board of directors. In between one AGM to another AGM, whatever the dividend is declared is called interim dividend. In interim dividend, what you have to understand, what are the sources of interim dividend? Sources of interim dividend is previous year profits, current year profits, and to the date last quarter up to the means on what date you are declaring interim dividend, up to that what are all the profits are there, up to last quarter what are all the profits are there, that you can use, no issues. But only thing what you have to remember, if up to last quarter any loss is there, cumulative loss, quarter 1, quarter 2, quarter 3, cumulative loss is there, then interim dividend there is a condition. The rate of interim dividend should not exceed average rate of dividend of the preceding 3 years. This point they asked for 5 marks in your September 2024. 5 marks, small question. Okay, they are giving the full data, they are giving full data, and the last 5 years rate of dividend they are giving, and they are asking there is a loss for the last quarter. Board of directors, they want to declare interim dividend for this financial year, but anyhow the quarter is loss, last quarter is loss. So how much dividend they can declare? Very simple. Last 3 years average rate of dividend, you have to write that. How many marks you will get, 5 marks. Simple. That is what interim dividend. You please remember that point for interim dividend. Okay. Next, final dividend. Final dividend actually sources of dividend. That is also very important. What is that? Sources of dividend. Dividend can be paid out of current year profits, previous year profits. Means accumulated profits. What is that? Accumulated profits. Accumulated profits, again it is divided into 2 types. Transfer to reserves, not transferred to reserves. I am saying once again, sources of dividend, current year profits and accumulated profits, previous year accumulated profits. Previous year accumulated profits are transferred to divided into 2 types. Transferred to reserve, not transferred to reserve. Simply in your accounting language, balance sheet, liability side, general reserve, P&L account. P&L account is also accumulated profit only. General reserve is also accumulated profits only. But general reserve means they are transferred to general reserve. They transferred to general reserve. That's all. So until unless you transfer to general reserve, no conditions are applicable. You are keeping your profits in P&L account, no issues. Happily you can issue to, means you can pay dividend out of it. Sir, for payment of dividend, cash is required, profits are required. What are you talking, sir? Sources of dividend means cash only, na? You are paying cash to equity shareholders only, na? Again, why you are asking, sir, profits and all? Can you please tell me what is the entry for dividend? Huh? Dividend account. Tell me what is the entry for dividend? We are paying dividend to whom? Shareholders only, na? We are paying dividend to whom? Shareholders. Then what you have to do? Huh? Equity shareholders account to cash account. P&L account. So you don't know accounting entry for payment of dividend also? Huh? Maybe you are writing an entry, one is credit, one is debit, okay, cash is credit, no issue. Then what to be debited? P&L account, dividend, dividend payable account, huh? Once dividend is declared, you have to create a liability. Once dividend is declared by the board of directors or declared by the members in the general meeting, you have to create a liability, dividend payable account of some other heading, whatever it may be, you have to create a liability. Okay, we are creating liability. Out of what you are creating liability? General reserve account, P&L account, or maybe CRR we can use, no. Security premium we can use, no. It is not possible. Capital reserve we can use, capital reserve, whether we can use capital reserve or not, that is a $1 million question. Please leave it about it. Okay, so general reserve, P&L account, dividend equalization reserve that you can use. Okay, you cannot use revaluation reserves, debenture redemption reserve. These are all the things you cannot use. Only general reserve, P&L account, or maybe dividend equalization reserves account debit to dividend payable account credit. After the dividend payable account debit to cash account credit. That is what the entry you have to pass. For that, not only cash, what you request, profits, double entry accounting system. Okay, if you are crediting something, you have to debit something, na. So profits are required for distribution of dividend. Technically, profits are required. Accounting point of view also, profits are required. Balance sheet, liability side, what are required? Profits. Current year profit, previous year profits, that is secondary. Okay, so which profits you can utilize for distribution of dividend? That is what the question here. Current year profits, happily you can utilize. Sir, we don't have current year profits, sir, but still I want to declare a dividend. Okay, from the previous year profits you can declare. Previous year profits again two types: transfer to reserve, general reserve, P&L account, credit balance. Okay, sir, P&L account credit balance you can utilize without any conditions. P&L account credit balance you can utilize without any conditions. But if you want to use the general reserve, then only there are 4 points you have to consider. On these 4 points in May 2024, they asked 5 marks. May 2024, they asked for 5 marks from this question. This question only they asked 5 marks. September 2024, they simply asked the same question. Effect of current period loss. Point number 5, they asked for 5 marks. Okay. Sir, if you want to declare a dividend out of previous year profits, which is transferred to reserves, then what are all the conditions to be satisfied? You have to calculate, actually, literally you have to calculate here. Theory you are writing, no, it is not possible. You have to calculate. Maybe it is covered in your accounts also. Covered in accounts, CA foundation accounts, CA inter accounts itself. Then I think I have no need to discuss about the calculations and all. Okay, but points you please refer. First point, what is first point? Rate of dividend. Rate of dividend, you cannot pay dividend exceeding average rate of dividend of the preceding 3 years. Here problem is, sir, last 3 years also there is no dividend is declared, sir. Then no need to follow this condition. Sir, last 2 years only we declared, sir. Take average of 2 years. Average of 2 years divided by 3 or divided by 2. So many students are there. You said average na, sir, 3 years na, sir. Even though third year dividend is not declared, we will take 20 plus 0 divided by 3. Don't do that, ma. Okay, 20 plus 20 divided by 2 only. Please don't do all these things. Sir, just no company incorporated, sir. Then what to do? Are just no company incorporated? Where is the previous year losses, sir? Sir, this year only company incorporated, sir. This year only we want to declare the dividend, sir. This year only you want to declare the dividend. Then you have to declare the dividend only out of current year profits only. How you will get previous year profits? I don't know. Sir, this is second year of incorporation, sir. Very good. Second financial year. First financial year, how much dividend you declared? 0, sir. Then this condition is not applicable. Sir, this is the third financial year, sir. Okay. What is the first year, second year? 0, sir. Then not 0. Don't say 0. Dividend is not declared. Dividend is not declared. Okay. Sir, I declared first year 1%, sir. Second year also 1%, sir. Then what is the average, sir? 1%, sir. This year also how much you can declare, sir? Only 1%, sir. Okay. That's all. So that is what the first condition. Second condition. What is second condition? How much amount you can withdraw for declaration of dividend from general reserves? Maximum. How much amount you can withdraw? Maximum. 10% of paid up share capital and free reserves. Don't include security premium here. 10% of paid up share capital plus free reserves only you can withdraw from the general reserve to pay the dividend, to pay the dividend. And first that withdrawal amount you have to utilize to set off the current year losses. That is the third point. And after that, after withdrawal, the reserve balance should not fall below 15% of paid up share capital. All four, not four, actually 3 points only. So 3 points, you please calculate the rate of dividend, means limits. You have to calculate the limits and take whichever is less. Take whichever is less. That's all. That is what you have to do. That is what practical questions also I said to the students. So don't confuse in between. First, average rate of dividend, 3 years, take the rate of dividend. And the next one is how much amount you can withdraw and set off the losses, and what is the net amount is available to distribute as a dividend. And the last point, 15% of the reserves. Okay, you please keep there, and remaining amount you please take here. Whichever is less you have to take. That's all. Okay. Next point, important in declaration of dividend. That is what procedure ma. Procedure only. I said point by point I explained ma, by taking one date. Dividend declaration date. This is 1st January is the dividend declaration date. Within how many days company has to deposit in a separate bank account ma? Once dividend is declared, whether it is interim dividend or final dividend, so don't mind about the type of dividend, whether it is interim or final dividend. Once dividend is declared by board of directors or shareholders, okay, any case, the amount to be deposited in a separate bank account within how many days? 5 days. Within how many days you have to pay the dividend? 30 days. Everything is from date of declaration only. 30 days from the date of declaration. If dividend is not claimed by the shareholders within 30 days, then what you have to do? Transfer to separate account. What account ma? Unpaid dividend account. Within how many days ma? 7 days. After 7 years also it is not claimed by the shareholders, then you have to transfer to IEPF. Okay. And not only transferring the unclaimed dividend, unpaid dividend to separate account, but also you have to publish the details of the unclaimed dividend or unpaid dividend within 90 days, I think. Within how many days ma? 90 days from the date of transfer. From the date of transfer. You please be particular about the calculation of dates. Directly declaration payment of dividend, they will not ask question, but general classes they will ask these questions. Because calculation of date is there na? Calculation of time dates is there na? General class act. So they will ask these questions. 1st January is the date of declaration. Tell me what is the last date to pay the dividend? 1st January is the date of declaration. Tell me within how many days you have to transfer? 5 days na? What is the last date to transfer to bank account ma? 6th January. What is the last date to pay to the shareholders? 31st January. What is the last date to transfer to unpaid dividend account? 7th January. What is the last date to publish the details of unpaid dividend account on the website of the company? What is the last date to publish the details of the unclaimed dividend account or unpaid dividend account on website of the company? Within 90 days from the date of transfer. What is the date of transfer? What is the date of transfer? We don't know. 7th February only na? 7th February plus 90 days. Calculate. Okay, within how many days you have to transfer to IEPF fund? 7th February plus 7 years. 7th February plus 7 years. That is what the dates you have to calculate. Okay. And not only that, some small points we discussed in declaration payment of dividend chapter. So board of directors will recommend the dividend and the shareholders will declare the dividend in the general meeting by way of passing ordinary resolution. I asked a small question, can shareholders increase the rate of dividend or not? They can decrease the rate of dividend, but they cannot increase as per the model articles. As per the model articles, nowhere nothing is specified in the Companies Act. Please don't refer Companies Act. As per the model articles, they cannot increase, but in your own articles, framed articles, yes, you can write the provisions, then that time you can increase. And the dividend is to be paid on face value, paid up value. Normally as per model articles, face value, but in your own articles, if you want, you can write dividend can be paid on paid up value also. Dividend can be paid pro rata basis, proportionately. For example, I purchased shares in the middle of the year. So for total 1 year they will pay dividend, for only 6 months they will pay dividend. Normally for 1 month they will pay dividend, but your model articles, if you are framed articles, you can write pro rata basis. What basis ma? Pro rata. Depend upon the number of days I hold my shares, based on that they will calculate the dividend. And one more small topic, dividend kept in abeyance. What is that? Dividend kept in abeyance. Not that much important, otherwise I will discuss here. Not important ma, dividend kept in abeyance. That is ex dividend, cum dividend basis. One small chart has been provided. If anyone is interested, you can refer that chart. Okay. Dividend kept in abeyance. And See, these points are very important. Within 30 days, company has to pay the dividend to shareholders. They have to deposit in a separate bank account within 5 days. And within 30 days from the date of declaration, they have to pay dividend to shareholders. Only in cash. Once dividend is declared, you have to pay in cash. So many students, they are asking the same doubt. Sir, bonus shares, dividend in kind you are saying. Once dividend is declared, can we pay bonus shares? Can we issue bonus shares? No, bonus shares are different. Dividend is different. Yes, bonus shares, I do agree it is dividend in kind. But once dividend is declared, you have to pay only in cash. Cash means cash or check or bank transfer, anything. Okay. But bonus shares you are declaring, okay, you can issue bonus shares. But you are declaring dividend, then you have to pay only in cash. Instead of dividend, you can go for bonus shares. That is okay. That is your decision. But after taking decision, you cannot withdraw the decision. No, it is not possible. Once it is a resolution is passed, it is final. You have to pay dividend in cash. Once resolution is passed, dividend is a liability to the company. Resolution is not passed, there is no liability. There is no obligation to the company to pay the dividend. Once resolution is passed, it is an obligation to the company. In accounts, immediately you have to create a liability. Immediately you have to create a liability out of the profits, available profits. If no profits, nothing, okay, please keep quiet. Who asked you to declare the dividend? Equity shareholders dividend is optional or mandatory? Optional. Once you are declaring, then it is a mandatory. It is an obligation to the company. Okay. So last point is also very important. Sometimes company is not in a position to pay the dividend within 30 days because of out of hands reason. Whatever the information provided members is not correct, bank accounts closed, maybe bank names are not matched, or members are not available, whatever it may be, not due to the default of the company is unable to pay dividend within 30 days. Then what we will do, sir? Then company is not liable, no need to pay any interest and all. Okay. Normally company has to pay dividend within how many days? 30 days. Nowadays, all account transfers only. Bank account details are there. No one is issuing dividend warrants and all. Nothing. Only account transfers only. If account is closed or maybe shareholders bank account is inoperative or maybe shareholder married and bank account name is changed, we don't know. Updated details we don't have. Because of that, our whatever the transfer has been denied. Transfer is rejected. That information you have to provide to members. That is the responsibility of the company. One small point they will ask 2 marks question. Okay, account is closed. Okay, due to some reason which is not in the hands of company, dividend unable to pay. That information you have to share with whom? From member. Then your duty is fixed. Finished. You are failed to inform to the member, then still you are liable. Still you are liable. You are subject to penalty and all, and you have to pay interest also. You have to pay interest also. That's why. See, this is what the reasons, unavoidable reasons due to which the company failed to pay the dividend to members. In these cases, company is now a liable actually for non-payment of dividend. They will transfer the amount to which account? Unclaimed dividend account they will transfer. Okay, that's what. And we are go to accounts of the companies. So declaration and payment of dividend chapter, you should concentrate on procedure also. You have to concentrate on procedure also. Procedure also very important for declaration payment of dividend. What is the procedure? Step by step procedure I explained to you. Declaration of dividend either by board of directors or by shareholders in general meeting, and transfer to bank account within 5 days, and payment of dividend within 30 days, or otherwise transferred to unpaid dividend account within 7 days after expiry of 30 days from the date of declaration, or transferred to EPF after expiry of 7 years from the date of transfer to unclaimed dividend account. Okay, and you have to publish the details of unclaimed dividend account within 90 days from the date of transfer. And these are all you have to remember. Procedural compliance also very important. Declaration of payment of dividend chapter. And interim dividend, sources of interim dividend. In case of any current quarter loss, then what is the effect? Only average rate of dividend, interim dividend should not exceed last 3 years average. That's all. And dividend you want to pay out of the accumulated profits which are transferred to reserves, then 3 conditions you have to comply. These are all you have to remember in declaration payment of dividend. Other than that, remaining questions not much important. Okay. Now 123 declaration of dividend. So from which sources you have to declare the dividend? That is what 123. 124 unpaid dividend account, that you have to transfer to unpaid dividend account within 7 days, which is not to be paid to shareholders. And investor education protection fund IEPF. Debits to credits are there for IEPF, not that much important. Okay. Next, rights to dividend. This is kept in abeyance. 126 is the kept in abeyance, and 127 punishment for failure to distribute dividend. So only 123, 124. You please concentrate on 123 and 124. Okay. Next we are going to accounts of the companies. See, 128 now. Nowadays, red book, green book, some books are coming now. This is in red book. Now, section number 128. You please highlight with your color pencil, sketch whatever you want, because May 2024 they asked for 5 marks. Question number 1A. September 2024 also they asked for 5 marks. Question number 1A. This books of accounts is a waste topic. Residuary topic actually. Books of accounts, how to maintain the books of accounts, double entry, mercantile accounting system, accrued based accounting system, for how many years ma? For 8 years. Where to keep the books of accounts ma? At registered office address or any other place determined by the board of directors. No permission from anyone. You can keep the books of accounts any other place also. That board of directors may decide. Okay, that's all. Who can inspect the books of accounts? Any director. Members, they cannot inspect the books of. Please don't write members have a right to inspect the books of accounts. Then your object class should be changed. You are giving right to the members to inspect the books of accounts now. Then you have to change your object class. What object class you have to change Here only verification of books of accounts can be done. I will purchase 1 share in TCS and I will go to TCS corporate office and I will ask to verify the books of accounts. Okay, 10 days or 20 days. Then again one more member come. He will start. Then another member will come. He will start. Books of accounts means everything na. Books of accounts means maybe your general entries, ledgers, trial balance, balance sheet, P&L account, no. Okay. And your vouchers, documents, everything is included in the books of accounts. So Companies Act is giving power to inspect the books of accounts by the members na. Then listed company, public companies, daily one member will come. And he will sit in the register office address. He don't have any work. That's why he will say, I will inspect the books of it. Sorry, accounts also meaning he don't know. What is the meaning of accounts also he don't know, but he want to inspect the books of accounts. It is not possible. Members has no right to inspect the books of accounts. Who has a right to inspect the books of accounts ma? Directors. Representative also no. Directors directly can inspect the books of accounts. Alright? Directors Oh. I don't know American English ma. I am a British English only. Okay. American English maybe you please try it out, but I am habituated to British English. British, yes, actually there is a difference of pronunciation, everything. Okay. Now this is not the time to discuss. Next. Go ahead ma. See. Section number 128. Important points. I said accounts of the companies, my efforts are very less. Your efforts are very high. Because accounts of the companies, always you have to remember. Limits. Okay. Everything you have to remember. My efforts are very less. Conceptual clarity is very less. In accounts of the companies, no conceptual clarity is required. But you please revise n number of times accounts of the companies. 5 marks question guarantee. Payment of dividend, accounts, audit and auditors. Audit and auditors, I don't know. Last attempt only 2 marks. But normally 5 marks. So 15 marks you will get from these 3 chapters. Okay. That's why I said category A chapters. Which chapters ma? Category A chapters. Accounts of the companies, especially books of accounts, where to keep ma? So at the register office address or any other place in India. What about branches books of accounts? Branches, they can keep their books of accounts in their branch office itself. But quarterly once what they have to provide ma? They have to provide a summary. They have to provide what ma? Summary. This point they ask for 5 marks. What I will do? Quarterly once the branches has to send the summary to the head office, the books of accounts, summary of the books of accounts. This point they ask for how many marks ma? 5 marks. So intentionally I kept here quarterly. See? Normally it is in rules somewhere. Somewhere it is in additional concepts for self-study. Somewhere it is quarterly. Periodical intervals. What is there? Periodical intervals. But intentionally I removed that periodical intervals. I mentioned what ma? Quarterly. They ask for 5 marks. So I don't have any other alternative. Quarterly once branches has to send the summary of the books of accounts to head office. That point they are asking for how many marks ma? 5 marks. So what I can say? Stupidism. We are seeing accounts of the company very seriously. We discussed consolidation of financial statements, corporate social responsibility, internal audit, filing of financial statements. All these important points we are discussing hours and hours. They are asking simply branches they have to send the books of accounts quarterly to the head office for 5 marks. Then what is the use of discussing all these questions? Unnecessary na? Unnecessary, but we cannot take any risk. That is the problem. And this time, what they are going to ask, we don't know. Again, books of accounts only, they asked inspection of books of accounts. Who can inspect the books of accounts? Board of directors. No agents can be appointed. Representatives cannot be appointed. Directly, board of directors, they can inspect it. Subsidiary company books. Inspection of books of accounts. In India, director can inspect, no issues. But if it is outside India, maybe we have a branch outside India, branch also maintaining books of accounts outside India. That books of accounts you want to inspect, don't go to branch. Okay, you please make a request what information you need. That information will be provided by company within 15 days. That's all. That is what books of inspection of books of account, 3 types. One is books of accounts in India, maintained in India, books of accounts outside India, and books of accounts of subsidiary company, books of accounts of subsidiary. Okay, in India, books of accounts are there. Yes, you can go and inspect. Who can go? Directors can go and inspect directly. No, they cannot appoint any representative, agent, anything. My friend is there, is a chartered accountant. I will appoint him to inspect the books of accounts. No, you please go and inspect. If you have a knowledge, otherwise please keep quiet. Okay, sir. Outside India, don't go to outside India, sir. Because of this reason, please don't spend the company money, sir. Bank account branch is there, sir. I will go and inspect the books of. I know which books of accounts you are going to inspect. Okay, that's why. So please don't go there. You make a request. What information you read? What information you need? We will send the information. We will send the information. That's all. That is what the inspection of books of accounts of branch office outside India. Okay, sir. Inspection of books of accounts of subsidiary. What is that? Subsidiary. So you have no right. Board of directors will authorize only one person. That person only can inspect the books of accounts of subsidiary. All directors, they don't have a right. The person who is authorized by the board of directors, the director who is authorized by the board of directors resolution, they only have a right to inspect the books of accounts of subsidiary. This is what inspection of books of accounts and maintenance of books of accounts. How many years you have to maintain? 8 years. If central government investigation is ordered, then until investigation is completed, you have to maintain the books of accounts, even though more than 8 years also, that financial year. Okay, that is what maintenance. Once, please refer once. Okay, electronic form also, yes, you can maintain the books of accounts in electronic form. Nowadays, all e-books, e-accounts, e-meetings, e-minutes, everything. Okay, electronic manner only. Next, inspection of books of accounts. That is what we discuss now. Inspection of books of accounts. This is outside the country. You made a request. What information you need, they will send within 15 days. That's all. And inspection in respect of subsidiary company. Who can inspect? The director who is authorized by the board of directors, he can only inspect. And this reopening of books of accounts and recasting of books of accounts. There are 2 points: reopening, recasting, revising, revision of financial statements, recasting of books of accounts. 2 points are there. In November 2023, they asked for 5 marks. Okay, what is that? Reopening of books of accounts, revising financial statements, revising financial statements. Please identify the difference in between these 2 concepts. That is what required. So I referred, I think, so as far as my experience, so many students, they are confusing in between this revision of, means recasting or reopening of books of accounts or revision of financial statements. Books of accounts are different, financial statements are different. Books of accounts means, you know very well, journal entries, so ledgers, so vouchers, so books, so papers, everything. Trial balance, this is called books of accounts. Okay. Financial statements means only balance sheet, P&L account, cash flow statements, or any notes forming part of financial statements. Statement of changes in equity, so CO, something is there. Okay. Okay, whatever it may be. These are all what? Financial statements. Okay. Financial statements, you have to prepare only once in a year. Once in a year, you have to prepare the financial statements. That financial statements you have to circulate to all the members, and you have to conduct an annual general meeting. In that meeting, they will adopt the financial statement. That financial statements you have to file with the ROC. That is what the procedure for financial statements. Okay. So financial statements preparation is a separate task, and books of accounts maintenance is separate task. And who is liable for maintenance of books of accounts? That is also important. And who is liable for maintenance of preparation of financial statements? That is also a separate question. Signing of financial statements, preparation of financial statements, and if company failed to prepare financial statements as per the section number 129 and section number 133, means accounting standard, then who is liable? That is also separate. Okay. Circulation of financial statements, filing of financial statements with ROC, revision of financial statements, revision of financial statements. These are all separate. Books of accounts, reopening of books of accounts. What is it? Reopening. So what is reopening, sir? Go to accounts department and reopen the books of, open the books of accounts. That is what reopening. It's not reopening of books of accounts. Once a trial balance is prepared, once books of accounts is closed, financial statements are also prepared and already published to the public and filed with ROC and adopted by the members. Everything is done. Now you want to reopen the books of accounts. Means you want to cancel one entry or you want to change one entry. This is not allowed actually. Board of directors, they can't do. Company, they can't do. Then who can do, sir? Maybe income tax authority or maybe a SEBI or maybe RBI or MCA. Someone has to make an application to tribunal. They also cannot pass an order directly. They have to make an application to tribunal. Then tribunal will conduct the inquiry. What is the need of reopening books of accounts, and really it is need. Then tribunal will send a notice to all the affected persons. Tribunal will send a notice to all the affected persons. For example, central government made an application to tribunal to reopen the books of accounts of a company. Then tribunal, what they will do? Tribunal will send the notice to all the affected persons. Already these books of accounts are filed with income tax authorities. Yes, indirect tax authorities also same books of accounts, and for public also we filed same books of accounts. ROC also we filed the same books of accounts, means financial statements and all based on books of accounts only. Na books of accounts change means what will change? Everything will change. Books of accounts is change means everything will change. So tribunal has to give notices to all the affected persons, and after considering all the information, all the inputs from all these affected persons, then only tribunal will pass a order. Yes, tribunal passed an order, you can reopen the books of accounts. But maximum how many years books of accounts you can reopen? Means preceding 8 years books of accounts only you can open, because remaining years not there to open. I want to open the books of accounts of 2020, 2001 financial year. Very good. Go to where it is. Books of accounts. Already we sold these books of accounts for this chicky. For chicky and so for chicky and we already sold these books of accounts for chickies and all. No. I want to verify books of accounts now for the year related to 2001. Okay, sir. As per Companies Act 2013, how many years books of accounts I have to maintain? Only 8 years. That 8 years you want to open, close. No issues. How many times you want to open it, close it. No issue. I don't mind. Tribunal is passing order. Okay, sir. Books of accounts are not there in the company. Then you want to open the books of accounts. Then what is the use? Okay. So you have to react within time. Income tax authorities all of a sudden today they are making an application to tribunal. I want to reopen the books of accounts of this company related to 2001 year. One fraud happens. Okay. Which year? 2001. This is what year? 2024-25. After 24 years you are coming to tribunal. There is some fraud occurs in that year. I have to reopen the books of accounts. Go and open in the dust yard. Okay. Now, but one more point is there. Because of investigation ordered by the central government, still we are maintaining the books of accounts of 10th year or 12th year books of accounts also. Still we are maintaining that books of accounts you can open. What are all the available books of accounts you can open? That's all. Okay. Next, revision of financial statements. What is that? Revision of financial statements suo motu by board of directors. At the time of preparation of financial statements, maybe they are not complied with section number 129 or 133. Deviation from accounting standards or schedule 3 format they are not followed. Okay. So further they want to revise books of accounts finalized. Trial balances, they are not touching trial balance. Trial balance is final. But while preparing and presenting financial statements, maybe some compliance requirements. Schedule 3 you have to follow. Accounting standards you have to comply. Okay. Instead of straight line method of depreciation, you provided double DV method. Books of accounts are same. Any change in entries? Nothing. No entries will be changed. Trial balance also will not be changed. But you want to, by mistake, you followed some other method. Or maybe disclosure requirements. Some disclosures you didn't made in the financial statements. Or notes forming part of financial statements, you have to provide some notes, but you didn't provide the notes actually. So this type of mistakes has been done by the board of directors. Then board of directors will make an application to tribunal to revise the financial statements. Only last 3 years financial statements only you can revise. And also one financial year financial statements you can revise only once. Please don't misunderstand. You can revise only one financial year financial statements only once. If you have done any mistake, I will give opportunity to rectify the mistake only once. Sir, already it is revised, sir. Once again I want to revise, sir. Okay. You are all small kids actually, don't need any mobiles right now. Okay. Now come to the point, revision of financial statements. Ma director suo moto, they can revise the financial statements. Ma preceding 3 financial years financial statements, they can revise. They have to make an application to tribunal. Tribunal will pass an order, then only they can revise. Okay. And one financial year they can revise only once. That is what the points you have to remember for revision of financial statements. Okay. Next came CSR. May 22, November 22, and even previous attempts also, regularly they are asking 5 marks question from CSR. Up to May 23. November 23, May 24, September 24, all of a sudden CSR disappears from the examination paper. We don't know, from January 25 again they will start CSR. That's why it is important. Okay, that is the reason why it is important. CSR, corporate social responsibility. Okay, sir, CSR, what are all the points we have to remember? CSR committee. First point, what you have to remember, ma? CSR committee. Who has to form a CSR committee? For which company CSR provisions are applicable? CSR provisions applicability is different, CSR committee is different. Okay, even though CSR provisions are applicable to you, maybe sometimes you have no need to provide CSR committee. And even though CSR provisions are not applicable, still you have to form a CSR committee. Sir, we don't understand, sir. CSR provisions are different, CSR committee is different. First we will discuss about CSR provisions. Okay, sir, this CSR provisions, for which companies it is applicable, sir? For which company CSR provisions are applicable, ma? Ma, CSR you have to check every financial year. Every year you have to check CSR actually, but once CSR is applicable, it is applicable for 3 years. It is applicable for 3 years. Once again after 3 years you have to check. Okay, tell me, for which company CSR is applicable? Applicability of the CSR. What is applicability of CSR? This is the criteria that mandate constitution of CSR committee. 3 points you have to remember. What is the 3 points, ma? Net worth 500 crores or more, or turnover 1000 crores or more, or net profit 5 crores or more. Don't ask me what is turnover, what is net profit, what is net worth. Okay, and there is a question in May 2023 for calculation of net worth also. Out of 100, 90 students they calculated net worth wrong. Okay, they calculated net worth wrong only. So net worth calculation also you don't know. That is the position. Okay, while calculating net worth, you have to reduce accumulated losses and you have to add accumulated profits. That is what net worth calculation. Equity share capital plus general reserves plus security premium, everything you have to add, and revaluation reserves and all you should not add, minus accumulated losses if any, then you have to deduct. That is what net worth calculation. For that also in your regular material information is provided for your understanding. You please read once if you don't know how to calculate the net worth. Turnover, they will not ask you to calculate the turnover and all. Turnover as per the P&L account. The last preceding financial year P&L account, what is the turnover? Turnover 1000 crores or 500 crores, 1000 crores or more. Net worth 500 crores or more. Net profit 5 crores or more. Then CSR provisions are applicable. This year CSR provisions applicable or not applicable? If you want to check, this year CSR provisions are applicable or not applicable? If you want to check, what you have to do? Preceding financial year data you have to check, that's all. Okay, every day no need to check, ma. Yearly once only we are going to check. Yearly once. This year, starting of this year, we'll check whether CSR provisions are applicable or not. Previous financial data, if it is available, you please check the previous financial data, then come to a conclusion CSR provisions are applicable or not applicable. That is what the applicability of the CSR provisions. Once CSR provisions are applicable, then you have to form a CSR committee. You have to form what committee, ma? CSR committee. But one exception is there. If your amount to be spent for CSR is less than 50 lakhs, then no CSR committee is required. How much amount do you have to spend for CSR, ma? 2% of average net profits. 2% of average net profits of 3 preceding financial years. 3 preceding financial years, what is the net profit? On that you have to do average. On average you have to take how much percentage, ma? 2% of average of the net profits of the preceding 3 financial years. You have to spend that amount for CSR, for society, not for profit motive. Company incorporated for profit motive only, but as a social responsibility you have to spend the amount of profits, 2% of average net profits of the preceding 3 financial years for the society. That is what CSR. Society means what activities, sir? Schedule number 7 is there. What is there? Schedule number 7, they clearly mention what are the CSR activities, and rules also they clearly determine what is not a CSR activity, even though it is covered in schedule number 7. Even though it is covered in schedule number 7, still it is not treated as a CSR activity in rules. That is also very important. What is a CSR activity? What is not a CSR activity? That is important. CSR provisions applicability important. CSR committee formation important. Okay, and unspent CSR amount is also important. These are all the 4 points what you have to highlight in the CSR provisions. Okay, CSR provisions applicability is completed. CSR committee, when you have to form a CSR committee, ma? CSR provisions are applicable. Okay, but one exception. What is the exception? If amount spent for CSR is not exceeding 50 lakhs, CSR committee is not required. Some cases, even though CSR provisions are not applicable, but still you have to form a CSR committee. Why, sir? Last year CSR provisions are applicable. That's why we formed a CSR committee. But this year CSR provisions are not applicable. Committee required? Not required. But unspent CSR amount is there. What is the amount is there? Unspent. Last year amount we didn't spend. We transferred a separate account. Unspent CSR account. 1 crore is there in that account. To spend that, committee is required. Na? Ma CSR committee only required to spend the amount for CSR activities. To spend the amount for CSR activities. Which companies they have to spend for CSR activities? That is what the criteria. Net worth, turnover, net profit. Okay. Last year, I am subject to CSR provisions. I have to spend 1 crore rupees. How much amount I have to spend? Ma? 1 crore. Okay. 1 crore I have to spend. But I spent only 40 lakhs. Remaining 60 lakhs, what I will do? 60 lakhs. You have 2 options. Transfer to unspent CSR account. One account you have to open, and account name is unspent CSR account. To that account you have to transfer, and that amount you have to spend in the next 3 years. You have to spend in the next 3 years. Or otherwise, transfer the 60 lakhs to central government fund. Central government fund. They will spend for the society. They know how to spend for society. Okay. So that's why transfer the 60 lakhs amounts to central government fund. CSR fund is there. So transfer to that fund. That's all. 2 options. Sir, I go for first option. Transfer to unspent CSR account for ongoing project. For what project, ma? Ongoing project. Okay. Now, next year CSR provisions are not applicable. But still, how much amount is pending? 60 lakhs. For that, what I have to form? CSR committee. That you have to keep in your mind. That's all. This is a new point, ma. This is a new point. That's why I'm stressing this point. Okay. CSR committee is required even though CSR provisions are not applicable. But unspent CSR account. What is there? Unspent CSR account is there. Then you have to form a CSR committee. That's all. Okay. And sometimes even though CSR provisions are applicable, CSR committee is not required. When, ma? Your amount to spend for CSR is not exceeding 50 lakhs. See here that point is there. Okay, please. And formation of committee. This is what important. Formation of committee. Repeatedly they will ask questions from formation of committee. Just refer. This foreign company and all, don't worry about it. One is only private company. How many directors, ma? 2 directors. Independent director is not required. And other companies, 3 or more directors, out of which at least 1 shall be independent director. So 3 directors and 1 should be independent director. Okay. Independent director is not required. Then 2 directors. That's all. All companies no need to appoint independent director. Don't ask me who is independent director now. Okay, which companies to appoint independent director, and all these things are not CA inter syllabus, CA final syllabus. Okay, so they will not ask you in examination also which companies has to appoint independent director, small director, women director. Okay, all these things we will see later. There are 15 types of directors are there. That's why maximum number of directors in the company is how much, 15. Okay, there are 15 types of directors are there. You please don't drag my leg into directors chapter now. Okay, that is an version. Now we'll go to that is a version, of course, no doubt. That is our CA final 60% syllabus at that time. CA final, when I am doing CA final, 60% syllabus only related to which chapter, 3 chapters. Directors, board of directors meetings, and remuneration. These 3 chapters constitute 60% syllabus of companies at in CA final. That time, not now. But CMA inter law syllabus, that is only for one small chapter, Total 3 chapters of companies at 2013, they just consolidated into 6 questions. That is the beauty of the CMA inter. Okay, beauty of the CMA inter. Total entire, I spend 120 hours at CA final. For CA final, 120 hours subject. So they just compress it to 6 hours in CMA inter. 120 hours they compressed to how many hours? 6 hours. I don't know what extent they compressed. Okay. So come to the point. So for constitution of CSR committee, one independent director is required. If company has an obligation to appoint independent director. If no independent director, only 2 directors. Okay, only 2 directors. That's all. Next, 89. Sir, amount to be spent for CSR. How much amount you have to spend? 2% of average net profits of the company preceding 3 financial years. Okay, and administrative overhead should not exceed 5% of the total amount. Some fellows they will apply the techniques. Always company want to avoid the spending of amount for society, because companies always profit motive only na. If any in return, if any coming, then only they will spend the money. Otherwise they will not spend the money. So always they are resisting the CSR provisions. They want to avoid the CSR provisions if it is possible to some extent. That's why this many rules and regulations, which is a CSR activity, which is not a CSR activity, how much amount you have to spend. If you are not spending the amount, what is the consequence? And you have to transfer that amount to fund, or you have to transfer to unspent CSR account, and you have to spend next 3 years like that. Okay, sir, I spend extra amount. Normally I have to spend only 1 crore, but I spend how much? 2 crores. Over action fellow. Then what we will do? Yes, you can set off in the next year's responsibility. Yes, sir, next year one more crore na. 1 crore, 2 crores, so from you can set off. Next 3 years you can set off. No issues. Okay. Same like deficit, surplus. Surplus or deficit available for how many years? 3 years. Surplus also, yes, you can set off for next 3 years. Deficit also. Deficit means you have to transfer the amount. You have to transfer the amount, but spending maybe next 3 years for ongoing projects. Okay, that's all. That is what the CSR. And administration overhead. You are in your cost accounting, you are allocating administration overheads na. Like that, maximum how much administration overheads you can allocate to CSR account? Only 5%. Okay, that is what you should understand. One new point has been added, actually, impact study. What study Impact. But not there. Yes, it is not there in your material. Please refer impact study also once in your CSR provisions. This unspent account, please. You have 2 options. One is transfer to unspent CSR account, or transfer to fund specified in schedule number 7. So this amount you can utilize within how many years? 3 years. Unspent CSR account you are transferring, you can utilize within how many years? 3 years. You have to spend, not utilize. You have to spend that amount within 3 years. Sir, I don't know how to spend all these things. Okay, you have one more option. This year I have to spend 1 crore rupees. This year how much amount I have to spend? 1 crore. This 1 crore, I don't know, sir, how to spend all these things. Transfer to Section 8 company. Transfer to which company? Section 8 company. Related to your group. Maybe your group company is having some Section 8 company. Infosys Foundation, Reliance Foundation, Disha Foundation, Isha Foundation, Isha Foundation are there. Na? Yes. What you will do? So what you will do? You can transfer this amount to Section 8 company. They will spend for the society. Or maybe any trust, charitable trust, having a recognition of income tax. Income tax recognized Section 8 company or any trust, that only you have to transfer. Okay. So outsiders, outside Section 8 company or outside trust you want to transfer, it should be recognized by the income tax authorities. Your own Section 8 company, no issue. Sir, I have my own Section 8 company, sir. Okay. And out of your CSR amount, you cannot create any assets. No, CSR amount expenditure only for revenue expenditure only, not a capital expenditure. You cannot create any assets on your company name from the CSR amount. No. Okay. So Reliance Foundation, Reliance Group of Industries, they want to spend 10 crores amount for CSR as per the obligation. That's not voluntary. It is a mandatory 10 crores. What they have done? They purchased buses, actually 10 buses to provide transportation facilities to the students. Okay. Very good. 10 crores. They provide transportation for 1 year. Second year onwards, they want to use the bus. Bus. They can use that? They can use No. You cannot create any assets. You saw Arunachala movie, na? Arunachala movie, Rajinikanth. Big Rajinikanth, what condition you will keep, You need 3,000 crores, na? You have to spend 30 crores, 100 crores, 30 crores in 30 days. 30 crores in 30 days. Conditions are there. No capital expenditure. No assets will be created. No donations. No gifts, no donations. No assets will be created. Only revenue expenditure. What expenditure, Revenue expenditure. Like that, CSR also, company has to spend only revenue expenditure. Yes, you can create assets, but not in your name. You can create assets, but not in the company's name. Some Section 8 company or trust or otherwise public representative companies. For APSRTC, please purchase the buses, no issues. They will provide the transportation facility. Okay. In your name, you cannot create any assets out of CSR amount. Out of CSR amount, you cannot create any assets. And one more point is very important for CSR. What is a CSR activity? What is not a CSR activity? That's all. This is our first point. Activities undertaken in pursuance of normal course of business. Normal course of business means one pharmaceutical company, they conducted medical camps in the rural areas. CSR activity. Yeah? No, that is actually advertisement. Okay, one mineral water company, they provided free mineral water to the villagers. That is not CSR activity. Okay, it's not a CSR activity. During the normal course of business, you are spending any amount, it is not a CSR. One company provided accommodation to their employees. CSR. Oh, one company, they paid gratuity or provident fund, all these things employees. CSR. No, sir. No, this is your obligation. That is your obligations. Your obligations, your ordinary course of business transactions you are doing, that is not a CSR account. CSR account, no, it will not be counted. Okay. And any activity undertaken by the company outside India, first spend in India, then we will go for outside India. Okay. India requires more money and our society requires more development. That's why you please spend money in India only. But exception is there. What is the exception? You are giving training to the state or union territory, national, international sports persons. You are giving training, na? Yes, you can give training outside India for Indian sports persons, not for the outside India sports persons. For Indian sports persons, you can give training outside India. That is an exception. Next, third one is so political party contribution is not a CSR. To that extent, we will appreciate the lawmaker. Okay, we will appreciate the lawmaker. Political party donation is not a CSR. If this point is not there, then every company will give what? Political donation. You know, electoral trust, electoral bonds. Nowadays, very big issue, electoral bonds. So, court has been given a judgment that electoral bonds information also to be published on RT Information Technology Act is applicable. Not in RT Act is applicable to electoral bonds also. Okay, which company is purchasing how many electoral bonds? Then that should be published by the political parties. Okay, next. Then statutory obligations like Gratuity Act, Bonus Act, Code on Wages, so Factories Act, some obligations are there. That obligations to fulfill is not a CSR amount. That is your obligation. Okay, na? And any sponsorship, advertisement, Paytm, okay, this phone pay, these are all giving some sponsorships, na? That is not a CSR activity. That is nothing but advertisement. That is nothing but what, advertisement. And statutory obligations is also not a CSR activity. So these 6 points, please remember. This time I am expecting these 6 points. Or maybe CSR committee formation. Or when CSR committee is not required, even though CSR provisions are applicable. Okay, that points you please remember. Then we are going to consolidation. What is that, ma? Consolidation. See, filing of financial statements with ROC. Statements, you know very well. If any company is having subsidiary or associate company, then they have to prepare consolidated financial statements. Even though you are not having a subsidiary, you are having only associate company, still you have to prepare what, ma? Consolidated financial statements. CFS you have to prepare. And in which case CFS is no need to prepare, ma? I said 3 conditions. In which case consolidated financial statements no need to prepare. I said 3 conditions. What are the 3 conditions? It is not a listed company. It is not a listed company. And there is a ultimate holding company is preparing the consolidated financial statements. Ultimate holding company is preparing what, ma? Consolidated financial statements. And the members, they are giving their consent for not preparation of consolidated financial statements. These 3 conditions are satisfied. Then no need to prepare the CFS. Only that point is important in CFS. You please refer once. Okay, with example I said TCS Limited. One example I took. What is a ultimate holding company, intermediate holding company, okay, and what is a holding company, subsidiary company. When you have no need to prepare CFS. Even though you are having a subsidiary, you have no need to prepare the CFS. When? That is what 3 conditions you have to satisfy, ma. You please refer that conditions. Ma, this is filing of financial statements. You please read once. It's not a very big issue. Within how many days you have to file the financial statements, ma? Within 30 days. Within 30 days from the date of AGM. If AGM is not conducted, from the due date of AGM within 30 days. Ma, financial statements, even though it is adopted, unadopted. Ma, if it is adopted, okay. Adopted financial statements you have to file with ROC. Unadopted financial statements also you have to file with ROC within 30 days. And once again you have to file once it is adopted. Whether it is adopted or not adopted. Even though it is adopted or not adopted, you have to file financial statements with ROC within 30 days from the date of holding AGM. Sir, unadopted financial statements, yes, you have to file unadopted. After that, you have to file adopted also. Okay, and which form you have to file the financial statements, that is what very important. Maybe MCQs they can ask which form. You please read this table. In this I have no need to explain anything. You please read the table and understand and remember. Okay, which form. So NBFC complying Indian accounting standards are specified companies, other companies, every company covered under section 135 and CSR provisions are applicable. That is a table. Specified companies, these are the specified companies. Companies listed with stock exchange and their Indian subsidiaries. Listed company and its subsidiaries also, they are called what companies? Specified companies. These are all the limits you have to read and remember. I don't have any other option. You don't have any other option. I can't do anything. Okay. Internal audit. 2 times it is asked. 2 times it is asked internal audit. Just remember the limits. Listed companies, yes, it is mandatory. Unlisted public company, this is the parameters. And private company, these are the parameters. Okay. Don't ignore this internal audit. And who can be appointed as internal auditor? Any person can be appointed as a internal auditor. Very simple. Any person. Even a watchman also can be appointed as internal auditor. We don't mind that. Okay. Board of directors, they can appoint any person as a internal auditor. Whether he is a secretary, auditor, accountant, clerk, puna, we don't mind. Okay. Any person can be appointed as a internal auditor. That is what you should. This point also very important. Who can be appointed as an internal auditor, and these limits you have to remember. No other alternative. Okay. So we have one more chapter, chapter number 22. What is chapter number 22? Companies incorporated outside India. In September 2024, they asked 5 marks from the companies incorporated outside India. One small question: applicability of the Companies Act 2013 to companies incorporated outside India. I divided into 3 parts. If you remember, I divided this companies incorporated outside India into how many parts? 3 parts. Okay. Companies incorporated outside India is divided into 3 parts. One is incorporated outside India, no place of business in India. No place of business in India. There is no place of business. They incorporated somewhere out of India, but there is no place of business in India. That is okay. And second one is having place of incorporated outside India, but having place of business in India. Incorporated outside India, but having place of business. Place of business may be electronic place of business also, place of business only. Place of business in India. Again, it is divided into 2 parts. One is majority of the shares. Majority of shares held by Indians. Majority of the shares held by other than Indians. Indians means either natural persons or artificial persons. These are the 3 types of companies which are incorporated outside India. Having place of business in India, not having place of business in India. If having place of business in India, that is called foreign company. Which company? Foreign company. All companies incorporated outside India is not a foreign company. All companies incorporated outside India is not a foreign company. Only which is having a place of business in India, then only it is called foreign company. KFC, yes, foreign company. McDonald's, yes, it is a foreign company. Okay. KFC, nowhere it is incorporated in India. KFC is incorporated somewhere, but it is having franchises or maybe branches or maybe outlets or departments, whatever it may be, agents, franchises, or otherwise departments, distributors, anyone, through any person you are doing business in India, in any manner, it is having a place of business. Electronic manner also you are doing business in India, then it is a foreign company. It is a what company, ma? Foreign company. Flipkart, maybe there is no company incorporated in India, but still it is a foreign company. Amazon, now India is also company incorporated. They incorporated company in India also. I said already there are two ways to do business in India. Incorporate outside India and only through branches, so through agents, so through franchisee, or through departments, so you can start business in India, you can do business. But one other way is you incorporate a company in India. As per Companies Act 2013, incorporate a company in India and shares held by the outsiders. That is also two ways are possible. First, they will came to India in the first way. What is the first way, ma? They will start some branches. If it is okay, then only they will start a new company in India as per Companies Act 2013. Okay. So nowadays, almost majority of the companies, majority of the foreigners, so foreign companies, so means companies incorporated outside India, they are doing business in India by way of incorporating a company in India. They are incorporating a company in India. Okay. But few still some companies, they are not starting any company in India. They are doing business only through branches, so agents, so departments, so franchises, so or otherwise distributors, so dealers, so electronic manner, physical manner, they are doing. For that only this chapter is applicable. For that only this chapter is applicable. Sir, in ES one company is incorporated, sir, will apply our Companies Act. They will hit with slipper. Okay. Sir, ES one company is incorporated, will apply our Companies Act. Array one person actually, Canada government and Indian government, there is a very big issue actually going on. What is the issue, ma, in between Canada and India? What is the Canadian government and Indian government one issue? One Canadian killed by the Indian government. That is what their allegation. We don't know what is the fact actually. So that is a Khalistan terrorist. Khalistan is a terrorism group in India. That Khalistan terrorist group leader is killed in Canada. Actually, he escaped from India. And he went to Canada. He is a Canada citizen also. And he is killed by the some Indian agents there, like movie. Indian agents are killed. Canadian citizen who is a terrorist in India is killed by the Indian agents. That is what the allegation raised by the Canada president or prime minister. Because of that, now it is increasing day by day. Because of that small point, now Canadian diplomats are withdrawn by India, and Indian diplomats are withdrawn by the Canadian government. Only for Pakistan only we have that situation. Only in Pakistan only we don't have Indian diplomats. Now Canada also. Canada, there is no war, there is no enemy actually. Canada is not an enemy to us, but still, because of that Canada president, Canada prime minister, who is that fellow, his name? Trudeau. Who is that fellow? Trudeau. Because of the Trudeau. Okay. His name is only true, but he is always saying lies only. His name is only true, but he is untrue fellow. Okay. Now come to the point, ma. See, sir, company incorporated outside India, but there is no place of business in India. Please don't apply our Companies Act. You cannot apply. Our law of land is applicable to our land only. Don't try to apply our law to other land. You are trying to apply our law to other land means it is a war. It is a war only. You are trying to apply our law to others' land is it is a war. Maybe some treaties should be there. Without any treaties, any agreements, any MOUs, you want to apply our law, our Companies Act to out of our India, then no, it is a war only. Okay, you are declaring a war on that country, right? Anyhow, sir, for this, then why, sir, unnecessarily we are discussing all these things? Not required, na, incorporated outside India, not having place of business in India. We are nowhere related, na, sir. We are nowhere related. Still, some sections are applicable to this type of companies. Still, some sections are applicable to this type of companies. What sections are applicable to this type of companies? See here, list of sections are provided. In this list actually, where is 387, 88, 89? 387, 88, 89, 90, 91. Yes. These sections are applicable to companies incorporated outside India, and even though there is no place of business in India. Which sections, ma? 387, 388, 389, 390, 391. Sir, you said you cannot apply. Now you are saying you can apply 387, 88, 89, 90, 91 of the Companies Act 2013 to companies incorporated outside India, not having a place of business, no way connected to India. Then how can you apply our Companies Act, sir? They are coming to India to procure funds. They are coming to India for what purpose, ma? For procurement of funds. So that case they will apply what, ma? 387, 88, 89, 90, 91. Company incorporated outside India, but they are coming to India, not coming to India. They are procuring funds from Indian shareholders, Indian investors. Then they will apply these sections. This applicability they asked purely for 5 marks. I am saying September 2024 they asked 5 marks applicability of the chapter number 22 for companies incorporated outside India. Then you have to write this chart for getting 5 marks. Okay. Next, sir, for this it is a company incorporated outside India having a place of business in India. It is called foreign company. Which company? Foreign company. And in that shares are held by other than Indians. For that you can apply entire chapter number 22. Entire chapter number 22 from which section to which section? 379 to 393A. 379 to 393A. 379 to 393A is applicable to foreign company in which shares are held by other than Indians. Sir, what about this company, sir? That is a company incorporated outside India and they are doing business in India, and in that company majority of the shares are held by Indians. So this is a propaganda actually to escape Companies Act only. They are doing all these things. Or if I want to do business in India, I can start company in India only. Na? I am an Indian. I want to do business in India. What I can do? I will start a company in India only. Na? But instead of that, what I am doing? I am starting company in UAE, Dubai. And I only purchasing shares in the Dubai company. Now that Dubai company is doing business in India. Why unnecessarily I am doing this practice? To avoid which act, ma? Companies Act. How many sections are there in Companies Act? 470. Dubai Companies Act only 4 sections. Only for example I am saying, right? Okay. There is no Companies Act also there. So you can start a company, no issue. Okay. So there is no Companies Act. That's why I have no need to comply any provisions. That's why I started a company in Dubai. I only purchase shares. I am Indian. I only purchase shares in Dubai company. Now that company is doing business in India. So that you can apply only how many sections, ma? 379 to 393 AM only. I have no need to comply 470. Na? That is my idea. That's why lawmaker says, if this is the case, then not only 379 to 393A will apply other provisions of Companies Act also, like an Indian company. Simple. Will apply other provisions also. Other provisions of Companies Act 2013. Like what company, ma? Like any other Indian company. Like any other Indian company. That's all. This is what you have to understand. First of all, applicability of the chapter number 22. Chapter number 22 is applicable to foreign companies. Foreign company means company incorporated outside India having a place of business in India. Example, KFC. Can take KFC example. KFC is a company incorporated outside India but doing business in India through franchises or through branches or departments or whatever it may be. Banks also there. So there are so many banks who are doing business in India through branches. They are not incorporated in India. This is not Indian company. So it is called foreign company. Which company, ma? Foreign company. You can apply what chapter, ma? 379 to 393A. Sir, if any company incorporated outside India not doing any business in India, then don't apply any act. But if they are procuring funds from Indian investors, then you can apply 379, 380, 387, 88, 89, 90, 91. Third case is there. It is a company incorporated outside India doing business in India, but in that company who is holding shares, ma? Indians are holding majority of the shares. Then it is like Indian company only. Indirectly, you are taking the advantage of the separate legal entity concept. So we will disregard the separate legal entity concept. So investors, shareholders, company both are same. Even though it is incorporated outside India, we will deem it as a Indian company. We will apply all the provisions of Companies Act. That is what the 3 cases that you have to remember. Other than that, this company is incorporated outside India is very simple. Okay. Next important question in company incorporated outside India is documents to be filed with ROC. If you want to start a business in India, what documents you have to file with ROC. That is what very important. Question number 94 is very important. What documents you want to file with ROC? You have to file. Okay. So you want to start a business in India. Okay, after starting business only you have to file with ROC. Within how many days you have to file with ROC? Within 30 days of establishment of place of business. These are all the documents you please read and remember. Okay, to which ROC you have to submit the documents, ma? KFC is having branches throughout India. Then which ROC they have to submit all these documents, ma? To the Mumbai ROC, yeah? Delhi ROC, yeah? Delhi ROC, yeah? Anywhere it is mentioned ROC Delhi? Yes, see here it is mentioned ma ROC Delhi. Where it is ROC Delhi? Third point, yes, ROC New Delhi. Irrespective of the place of business started by the foreign company, you have to submit all these documents to which ROC, ma? ROC New Delhi. Within how many days? Within 30 days you have to submit to ROC New Delhi. Okay, sir, which documents you have to submit, sir? This list you please write. Charter means what is the constitution of the company. Constitutional documents of the company you have to submit with the ROC. And who is the person taking the responsibility in India? Authorized person means who is the authorized person in India. That person details also you have to inform to ROC. And address of that particular person, and permanent address means registered office address of the company. All those details you have to provide to ROC, principal place of the business, and as well as directors, secretary of the company. These are all you please read. There is a possibility to ask 5 marks question. Information to be provided to ROC by the foreign companies as per section number 380. What is that, ma? Section number 380. Okay. Next, any important point you want to refer in companies incorporated outside India? Experts report. What is that, ma? Experts. See, company incorporated outside India or foreign companies, both can procure funds from India. FEMA rules and regulations are there, that is okay. But Companies Act only we are going to discuss here, not FEMA Act in this regard. Okay. So, both companies incorporated outside India and foreign company, they can procure funds from Indian investors. There are different ways are available to procure funds from Indian investors. Foreign direct investment, that is okay. That is reverse case. You are procuring funds from the foreigners. That is what we are not talking. Here, foreign companies and company incorporated outside India, they want to procure funds from the Indian investors. Normally, Indians only procuring from outsiders. Na? Any company will come to procure funds from India. Na? There is a possibility is there because one day biryani is equal to 1000 crores, I said. Okay, 10,000 crores. One day biryani you sacrifice, na? Then you can invest 10,000 crores. India can invest 10,000 crores in a company. All Indians, they are sacrificing one day biryani. They can invest how many crores, ma? 10,000 crores in a public offer. Okay, so that capacity is there for India now. So maybe very soon, even foreign companies also, they will start procuring funds from India. No issues. Even US, UK companies also will come to India for procurement of funds. Reverse case also is possible nowadays. Okay, everything is reverse, ma. Everything is reverse actually. So expert, they have to give his consent. Same section number 26, whatever we discussed, ma. He has to give his consent and is not withdrawn his consent, and expert is an independent person, is not withdrawn his consent, and the consent is filed with the ROC. The same information is filed in the prospectus. Whatever the report given by the expert, for that he given his consent, and the consent is not withdrawn. Same points. Prospectus chapter, what are the points we discuss? Same points are applicable here. No special points. Accounts of the companies also same points only. Okay, you have to file the accounts of the foreign company with ROC. You have to file accounts of the company with ROC, same points. So you have no need to read special points. If you want to read out of your own interest, sir, in foreign companies I will read some more questions. Better read accounts of the companies also. Means what accounts foreign companies has to file with the ROC. Additional points are there. What points are there? Additional points. Please focus on those additional points which are applicable only for foreign companies. Which information they have to file with ROC. That only you have to concentrate. Okay. Accounts of the companies, prospectus, information to be provided with ROC within 30 days. And what information to be provided, and as well as applicability of the Companies Act to the foreign companies. That is what you have to highlight in this particular chapter. Okay. By this we completed what act, ma? Companies Act 2013. Okay. Not complete. Law is not completed. Only company law is completed. What is completed, ma? company law. Now we are going to which act ma? LLP Act. Okay, so LLP Act will start. Very important because last attempt they asked for 16 marks. Normally 14 marks only, but they asked for 16 marks in the September 2024 LLP. Very simple questions. Okay, ma, you can spend your quality time for LLP Act. You can spend your quality time for what act ma? LLP Act. Without any doubt you can spend ma, because 14 marks you will get. And easy to understand also because in your CA foundation also it is there, CA inter also it is there, and very less sections ma, very less sections in LLP Act when compared to Companies Act. Total entire LLP Act discussion is not equal to general meeting discussion also. Total entire LLP Act discussion does not take time more than the general meeting chapter discussion also. That much easy chapter LLP Act. So you please concentrate on the LLP Act, including each and every question. Ma, please don't stick to marathon material for LLP Act. I strictly recommend all the students to read each and okay, each and every question of LLP Act you please refer once. Okay, LLP Act, but I am discussing only few questions ma. LLP Act, why LLP is also important question. Started sir? Okay, why la? Okay, how la? Okay, very good. Ma, LLP is a alternative commercial vehicle. That question also they asked. LLP is a alternative commercial vehicle in between company and partnership firm. That question also they asked. For that I discussed demerits of partnership firm and demerits of company and how these demerits are overcome by the LLP. Everything we discussed hours and hours that time. Okay, please you can write the answer. LLP is a alternative commercial vehicle. Question number 1 in your LLP Act. That also they are asking direct theory question. Please, that is a general question. Nowhere it is there in the LLP Act. Okay, second one, don't deviate. LLP Act is important, don't deviate. Okay, today there is no deviation until we complete total law subject. Okay, you need break break I think not required. Why break ma? Are happily sitting in AC room and you need break for that only break is required okay. Anyhow ma, come to the LLP Act. Introduction I am not going to spend any time for LLP Act. Short title, extend to commencement applicability of the LLP Act, that is also not that much important. Applicability of the LLP Act. LLP Act is applicable to LLP and other body corporates also if it is notified by the central government. Definition of body corporate includes LLP incorporated outside India and company, but does not include that is what ma, cooperative society. Okay, logics I am not going to explain now. Why cooperative society is excluded from the definition of body corporate, why LLP incorporated outside India is included in the definition of body corporate, you know very well. So next we are going to definitions. In definitions, normally definition of partner, definition of designated partner, definition of body corporate, like that whenever it is required we will refer the definitions. Like Companies Act, there is no specific definitions to read here in the LLP Act. If you want me to refer the definitions in the LLP Act, I can refer partner, designated partner, body corporate, financial year. What is that one? Financial year definition from the LLP Act. Okay, next chapter number 2, nature of limited liability partnership. Ma, chapter number 2, 3 and 4 is very important. They can ask question from only from this chapter 2, 3, 4 and chapter number 7, financial disclosures. That's all. Okay, so you please concentrate on these chapters. First chapter number 2, nature of LLP. Limited liability partnership to be body corporate. General section ma, LLP is a body corporate, separate legal entity, perpetual succession, having capacity to enter into contract and they can sue and can be sued actually. This is what section number 3. Okay, not that much important. Section number 4, non-applicability of the Indian Partnership Act. That is okay. Maybe people may confuse in between LLP and partnership firm. LLP is separate, partnership form is separate. Maybe by mistake you will apply partnership act provisions to LLP. Don't apply like that. Lawmaker is giving clarification because LLP is the first time it is introduced in the year of 2008. Yes, but it came into force from 2009 actually. What is the roll number of LLP Act, ma? What is the roll number of LLP Act? Forget, what is the roll number of Companies Act? 18 of 2013. Okay, now come to the point. Section number 5, partners. In this section number 5, they clearly specifies who can become a partner. No, who cannot become a partner. Disqualifications. What is that? Disqualifications. Who cannot become a partner, ma? Who cannot become a partner in section number 5? Who cannot become a partner? Amma? Who cannot become a partner, ma? As per section number 5. Unsound mind person can become a? No. Insolvent person? No. Applied for insolvency also? No. Any other person? Minor. That is not there in section number 5. Please don't add your own points. Okay. In section number 5, they said only unsound mind are declared as a insolvent or make an application for insolvency. Only those persons cannot become a partner in LLP. Minor can become a partner or not. That is in Indian Contract Act only. Nothing is there in the LLP Act. Minor, of course, he can become a partner in LLP for his benefits. For his benefits, no doubt for that. Who can become a partner is section number 5. And minimum number of partners, section number 6. How many minimum number of partners, ma? Minimum number of partners for LLP? 2. And what is the consequence of reduction in minimum number of partners? Then LLP, the remaining partner who is aware of the fact, he has to increase the partners to 2 within how many days, ma? 6 months. Otherwise, the partner is liability is unlimited for the contracts entered by the LLP after expiry of 6 months. That is what section number 6, minimum number of partners. And section number 7, designated. Very, very important. Very frequently they will ask questions from section number 7, designated partners. Minimum number of designated partners 2 for LLP. This is not a time to explain the logics why designated partners and all. Okay. Minimum number of designated partners 2, and there should be natural persons or artificial persons. Natural persons, Indian citizens other than Indian citizens. We don't know about citizenship, but one designated partner should be resident in India. Who is resident? Who is not a resident? The person who stayed in India for 120 days during the financial year. They didn't say preceding, but as an interpretation will go for preceding financial year only. Okay, so that year if anyone is stayed for 120 days at least, then he is a resident of India. I said 2 bakras are required and 1 bakra is readily available in India to take the punishment. Why designated partners are required? Because designated partners are liable for the contraventions of the LLP of LLP Act. Of LLP Act, any contraventions has been made, then designated partners are liable for that. Okay. So within how many days you have to appoint designated partners? Within 30 days you have to appoint designated partners and you have to inform to ROC along with their consent. And every designated partner should have a designated partner identification number. Designated partner identification number, there are no provisions in LLP Act. You have to follow Companies Act provisions only for application of DPIN number. Okay, that is what section number 7, designated partners. Along with the consent of the designated partner, you have to file with ROC. How to become a partner in LLP? At the time of incorporation, after incorporation. At the time of incorporation, by signing LLP incorporation document. After LLP incorporation, as per the LLP agreement. As per what agreement, ma? LLP agreement. Like MOA and AOA, for LLP also there are 2 documents. One is incorporation document. Other one is LLP agreement. One is incorporation document. Other one is what, ma? LLP agreement. Like MOA incorporation document and articles is LLP agreement. Model agreement is also available in schedule number 1. If you don't know how to write LLP agreement, you can adopt the agreement from schedule number 1 of the LLP Act. Okay. Sir, I know, sir, how to write. Okay, you write yourself. No issues. Okay. Anything. Either model agreement, LLP agreement or your own framed LLP agreement. Same concept what we discussed in the Companies Act, you can apply here. Model articles versus framed articles, model LLP agreement versus framed LLP agreement you can apply, but that much depth is not required in LLP Act. LLP Act is only Just knowledge is required. That rules are not there in your syllabus for LLP Act. Only sections are there. Next, section number 8. What is section number 8? Liabilities of designated partners. Designated partners are liable for the contraventions of the LLP under which act? LLP Act. And section number 9, changes in designated partner. If any designated partners are changed, then you have to appoint a new designated partner. Within 30 days, you have to inform the ROC along with the consent. That's all. Then section number 10, punishment for contravention of section number 7 and section number 9. I clearly divide into 10.1, 10.2, 10.3. 10.1 is applicable for 7.1. 10.2 is applicable for 7.4 and 10.3 is applicable for 7.5 and 9. So something you are saying we don't know. You know, but others don't know. Section number 10, there are 3 subsections. 10.1, 10.2, 10.3. 10.1 is applicable if you are contravening the provisions of section number 7, subsection 1. 10 subsection 2 is applicable contravention of section number 7, subsection 4. And 10.3 is applicable for contravention of section number 7, subsection 5 and section number 9. To that extent, you have no need to write in the exam. Okay, just for your information. And what is the penalty under 10.1, 10.2? Who is liable under 10.1? LLP and partners. 10.2 LLP and designated partners. 10.3 LLP and partners. 10.1, what is the liability? 100 rupees per day of default. Minimum how much? 10,000. Maximum 1 lakh for LLP and for designated partners 50,000. 10.4 for partners. 10.4 100 rupees per day of default. Minimum how much? 5,000. Maximum 50,000 for LLP and 25,000 for designated partners. 10.3 100 rupees per day of default. Minimum 10,000. Maximum 1 lakh for LLP and 50,000 for partners of LLP. 10.1, 10.3 fine is same. And even liable persons also same. Only 10.2 is only different. What is 7.4? 7 subsection 4. You have to file the consent with ROC within 30 days. That is what 7.4. And 7.1 is designated partners. At least 2 designated partners are required and 1 designated partner should be resident in India. That is 7.1. And 7.5 is requirements to appoint as a designated partner. Okay, designated partner identification number, all these things. Okay, that is what section number 10. So you please expect a question from section number 6 or section number 5 or section number 10, section number 7. Very simple topics, my LLP Act. Okay, but they will ask 5 marks question. Either section number 6, minimum number of partners. Already 2 times it is asked. Section number 6, it is asked in May 2024 and September 24 also. Even I don't know whether you will remember or not. I said section number 6 they will ask in the exam. No doubt. And practical question also I explained to you section number 6. Section number 6 is very important. 7 also equally important. Designated partners. Who can be appointed as a designated partner? Who cannot be appointed as a designated partner? How to become a designated partner and requirements of designated partners. Indian citizen or even other than Indian citizen also can become a designated partner. Non-residents of India can become a partner, sir. Non-residents are divided into 3 types. What is that? 3 types, non-residents of India, NRI. Next, overseas citizen of India. Next, foreign national. Overseas citizen of India and NRIs, they can become a partner in LLP on non-repatriation basis without FEMA rules and regulations. And repatriation basis means you have to follow FEMA rules and regulations. What is repatriation, non-repatriation, everything we explained. Now it is okay. Please leave about it. That is not out of your syllabus, not required. Okay. Now come to the point. Next section, next chapter number 3. What is chapter number 3? Incorporation document. Like MOA in Companies Act section number 4 is there, like that in LLP Act what is there? Section number 11, incorporation document. There are 3 steps for incorporation of LLP. Very simple steps. Step number 1, reservation of name. Step number 2, filing of incorporation document. What form you have to use? Philip. What is that? Philip. There spice plus INC 32 here. Philip. Third step, what is that? Filing of LLP agreement. One is before incorporation, one is during incorporation, other one is after incorporation. Before incorporation, you have to reserve the name. Okay, that we will see later. And the second one is filing of incorporation document. Philip. What is that? Philip form. And the next one is filing of LLP agreement within 30 days from the date of incorporation. That's all. That is what incorporation. Document contains name of the LLP, address of LLP, all these things. Okay. Partners, designate partners, name, address, business. These are the details what you have to provide in the incorporation document. They are not that much concentrating. There is no formats also. You please prepare your incorporation document. You please file with the ROC for incorporation. Okay. After filing incorporation document along with the declaration. Declaration is also required, ma'am. What is required? Declaration is also required. Who has to give a declaration? Professional has to give a declaration. What declaration he has to give? Professional. All rules and regulations has been complied with. Okay, for incorporation of LLP. Then only ROC will give a certificate of incorporation. Okay, that is common. In Companies Act also it is common. LLP Act also it is common. For incorporation of LLP also CA or cost accountant or company secretary or advocate is required for giving a declaration to ROC that all rules and regulations have been complied with in relation to incorporation of LLP, precedental or incidental to incorporation of LLP. That is common. Okay, incorporation document. Next one is incorporation by registration. That is what I am discussing here. Incorporation by registration. So you have to file incorporation document with ROC and you have to file a declaration of the professional also. Then ROC will issue what, ma? Certificate of incorporation and he will allot LLP identification number, LLP IN. What is that? LLP IN. How many digits in LLP IN, ma? 4 digits. Very good. Okay. Next. Section number 13. What is the section number 13, ma? Registered office. Ma, in Companies Act, section number 12 is registered office. Here, section number 13 is the registered office. Registered office, yes, there are. Ma, LLP has an option to maintain 2 office addresses. One is registered office address, other one is address for correspondence. Yes. Okay. You can address for correspondence is optional, but registered office address is mandatory. You have to inform registered office address to ROC and you can change your registered office address also, no issue. Okay, that also you have to refer once, not that much important. And section number 14, effect of registration. Section number 3, section number 14, both are same only. Once LLP is incorporated, LLP is a separate legal entity, LLP is a body corporate. Okay, they can do business in its name, they can hold the properties and all. That is what section number 14. And section number 15 is name. What should not be the name of the LLP? What should not be the name of the LLP? That is what section number 15. What should not be the name of the LLP? What should be the name of LLP? Nothing is prescribed. Only at the end of LLP name you have to add a suffix of LLP. That's all. But what should not be the name of the LLP? Yes, it is clearly mentioned. What should not be the name of LLP? Identical with existing company or LLP or trademark. Registered trademark. Resembles too nearly with a company, LLP or registered trademark, or undesirable in the opinion of the central government. That's all. That is what should not be the name of the LLP. And reservation of name. Reservation of name, like Companies Act also, existing LLP, new LLP. New LLP can register the name by using this Philip form or run form. Philip or run. In company, only one form is available for reservation. Spice plus INC 32. For LLP, there are 2 forms are available. One is Philip or run. Okay. And existing LLP, they can reserve the name only with run only. Name will be reserved for 3 months. Not for 20 days, 60 days like companies. Here LLP name will be reserved for how many months, ma? 3 months. Name will be reserved for 3 months. Nothing is mentioned about extension of name in case of LLP Act. Companies Act only they said extension of reservation of name. Okay. So name will be reserved for how many months, ma? 3 months. And which form you have to use? Philip for new LLP or run. Okay. Existing LLP, if they want to change the name, new name they can reserve under run. Under what, ma? Run. That's very important. Reservation of name. Next, section number 17. Change of name is nothing but rectification of name. What is that, ma? Rectification. If LLP, section number 17 is nothing but rectification of name. Heading is different but content is same. Rectification of name. If LLP is incorporated in contravention of section number 15. What is 15? What is 15, ma? Name of LLP. So if any LLP is incorporated or changed its name in contravention of section number 15, then so section number 15, then upon application by the aggrieved party, upon application by Aggrieved party. Aggrieved party is divided into two types. Body corporate, other than body corporate, means company LLP or registered trademark owner. For company or LLP is aggrieved party, there is no time limit to make an application. We took so many examples for this. Tata Reliance LLP I started what LLP ma? Tata Reliance LLP. Then who is the aggrieved party? Tata group of companies or Reliance group of companies. They can make an application to central government at any time. Even after 50 years of incorporation of my LLP also, they can make an application. There is no time limit to make an application to central government by the aggrieved party if aggrieved party is a company. If aggrieved party is not a company, Pullareddy Sweets LLP I started. What I started? Pullareddy Sweets LLP. Then who is the aggrieved party? A registered trademark owner of Pullareddy Sweets. If he is not having a trademark, then he has no right to make an application. If he is having a registered trademark on Pullareddy Sweets, in the name of Pullareddy Sweets, then only he can make a application. If I started Pullareddy Sweets LLP, what is the time limit for him to make an application to central government? Only 3 years. Only 3 years only. Only how many years, ma? 3 years. From what date you have to count these 3 years? From what date you have to count these 3 years, ma? From the date of incorporation of Pullareddy Sweets LLP. Okay, right. Application is received by the central government. What central government will do? Central government, after conducting inquiry, then central government issue a direction to LLP to change its name. Within how many months, ma? Within 3 months. By passing ordinary resolution, don't write here. That is in Companies Act. Okay, as usual, don't do copy paste here. You said similar saw section number 16, section number 17, same both. No, it is not same, similar. Okay, so within 3 months LLP has to change its name. How to change the name is not in LLP Act, LLP agreement. How is mentioned in LLP agreement. So LLP Act is not that much rigid when compared to Companies Act. LLP Act is very small act, and majority of the sections of the LLP Act is prescribing what is the nature of LLP, how to incorporate LLP, and winding up amalgamations, conversions, this only. They are not concentrating on the internal rules and regulations of LLP like Companies Act. Companies Act prescribes everything. How to conduct a meeting, notice of the meeting, quorum, chairman, everything they are saying. Even for alteration of name clause, everything is there in Companies Act, but LLP Act, nothing is there. You follow your LLP agreement. That's why LLP is flexible. LLP is flexible, not rigid. Okay, less compliance, less regulation. That is also one of the reason why you people are incorporating LLP other than company. Okay, so LLP, if you want to, means after giving direction by the central government, LLP has to change its name within how many months, ma? 3 months. If 3 months LLP failed to change its name, then what central government will do? Central government will allot a new name to the LLP. Rule number 19A. There, what is the rule number? 33A. But here rule number 19A. I am expecting either rule number 33A or rule number 19A. Okay na? Indra last bench pan parak dinna indra. ఇవి కూడా నేర్చుకున్నారా మీరు? ఈయన పొట్లం చించావు నోట్లో పోసుకుంటున్నా. ప్లీజ్ కీప్ అబౌట్ అవుట్ సైడ్ ద క్లాస్. పాన్ పరాక్, పాన్ ఆల్ ఆర్ స్ట్రిక్ట్లీ ప్రొహిబిటెడ్ ఇన్ ద క్లాస్. ఓకే, ప్లీజ్ మేబీ. ఓకే, నౌ గుట్కా, పాన్, ఎవ్రీథింగ్ ఈస్ ప్రొహిబిటెడ్. ఓకే, నౌ ఏంట్రా? Oh, no comments. Now come to the point. Okay. Please don't deviate me. You are making an application. Are pan parak fellow. Please don't eat. Okay. Now, after making an application, central government will issue a direction. You have to change your name within 3 months. Otherwise, Central government will allot a new name. What is the new name? ORDNC, serial number, year, LLP, identification number. Don't write CA number. LLP, identification number. If you are changing your name by yourself, you have to inform the ROC within 30 days and ROC will issue a fresh certificate of incorporation. That's all. That is what section number 17. Very important. Section number 17 is very important. Section number 6, section number 7, section number 17 also important. Now 18 is not there, they omitted. 19, change of registered name. This is voluntary change. This is voluntary change of name of the LLP. At any point of time you can change your name, no issue. Just inform to ROC. ROC will issue a new certificate of incorporation. That's all. No procedure is prescribed here. Approval from central government, everything is not there here in section number 19. And 20, that is not in your syllabus. 21 is also not in your syllabus. Don't worry about it. And we are going to chapter number 3 of the 4 of the LLP Act. What is the chapter number 4? Partners and their relations. Partners are agents of LLP but not agents in between themselves. In between, the partners are not an agent of other partners. Only partner is agent of LLP only. LLP is liable for the contracts entered by the partners. That is what section number. Eligibility to be partners. Who can become a partner? How to become a partner? That is how to become a partner in section number 22. Already I said before incorporation means at the time of incorporation, after incorporation. At the time of incorporation, if you want to become a partner, you have to subscribe. For marathon classes, I will not I will not eat food also. Okay, eating food now the voice will change. 8 hours continuously you want to speak 8.5 hours, you cannot eat any food. Okay, only fruit juice or fruits, so that's all. Okay, that okay, we'll see. Night I will eat biryani, no issues. Okay, don't worry, I am like a camel. 3 days also I am not eating, 4th day I will eat full of my stomach, no issue. Okay, now come to the point. See, how to become a partner at the time of incorporation? By subscribing incorporation document. You have to sign incorporation document as a partner, then you will become a partner. Subscribers. Before incorporation you are called subscribers. After incorporation you will become what? Partners. You will become what? Partners. And after incorporation, as per the LLP agreement, you can become a partner. As per the LLP agreement, you can become a partner. That's all. That is what section number 22. And section number 23, relationship of partners. Partners are agents of LLP. LLP business is managed by partners only, and partners can enter into the contracts on behalf of the LLP as per the LLP agreement and within the powers provided by the LLP agreement. And whatever are the contracts entered by the partners, who is liable? LLP is liable. You should have a knowledge of contract of agency here to understand this relationship of partners. Same relation, principal and agent relation is there in between partners and LLP. So what are all the contracts entered by the partners? Then who is liable for that contracts? LLP is liable, not other partners. Not other partners. In between one partner and another partner, one wall is there. That wall is nothing but what? LLP. That wall is nothing but what? LLP. And partners liability limited or unlimited? Partners liability is limited. So if any one partner is doing any wrongful acts, then entire partners are not taking liability. Only LLP will take the liability. LLP is the wall protecting other partners from the other partners. Okay, in between the partners, what is there? LLP wall is there. That is the one of the advantage of LLP partners. That is one of the advantage of LLP partners. Okay, next, cessation of partnership interest. Cessation of partnership interest. Yes, okay. So any partner can leave the LLP, no issue, by giving 30 days notice. By giving 30 days notice or as per the LLP agreement. Or as per the LLP agreement. If nothing is provided in the LLP agreement, by giving 30 days notice, by giving 30 days notice, you can leave the LLP. But here, the important points, what you have to remember, examination point of view, rights and duties of retiring partner, farmer partner. What is that? Rights and duties of farmer partner. Okay, once you left the LLP, so there is no rights and no duties. No, rights are there. What is the right of retiring partner, farmer partner, ex-partner? What are the rights of ex-partner or farmer partner or retiring partner? He has a right to receive his contribution and as well as share in the accumulated profits minus share in the accumulated losses. And he has no right to interfere in the management of the LLP. That's all. Then what is the liabilities of retiring partner, ma? Even though he left LLP, still he is liable for the contracts entered by the LLP during his partnership. Means when he was a partner, what are all the contracts entered by LLP? For those contracts, still he is liable. Normally, what is the liability? Limited only, limited to the extent of contribution and accumulated profits. But sometimes unlimited also. When the partner's liability is unlimited, in case of fraud, if partners or LLP, they are committing any fraud, partners on behalf of the LLP, with the knowledge of LLP, within the authority given by the LLP, if any partner is doing any fraud, then partner's liability will become what, ma? Unlimited. Partner's liability will become what? Unlimited. So retiring partner, even though he left LLP, still he is liable for the contracts entered by LLP when he was a partner. You cannot escape from that liability even though you left the LLP. That is common. Okay. So even though you left your LLP, still the former partner is liable for the contracts entered by LLP or for any frauds committed by LLP when he was a partner. Sometimes maybe it is limited, sometimes maybe it is a unlimited. Okay. So the cessation of partnership you have to inform to who? I want to leave the LLP. To whom I have to inform? To LLP only. I want to leave the LLP, then I have to inform to LLP 30 days. Then LLP has to inform to whom? LLP has to inform to ROC. If LLP is not informing to ROC, direct partner also can inform to ROC. Even though I retired, still I am deemed as a partner. When retiring partner is deemed as a partner, still when the former partner is deemed as a partner, still two cases, third party believes that still you are a partner, or your information, means your resignation, your retirement is not informed to ROC. Still incorporation document your name is there. Okay. So in two cases, either of the case, retiring partner is treated as a partner. In which cases, still third party believes that you are a partner, or it is not informed to ROC. Better you give a public notice and inform to ROC if LLP fails to inform. I took an example of Ratan Tata. If you observe, if you remember, I took example of what, Mr. Ratan Tata. Of course, is no more now, but anyhow, I took an example of Mr. Ratan Tata, one of my means what role model, one of the role model. Not to marriage, that is okay. That is not for role model actually. So always in my class, I will take the examples. For good examples, I will take Tata Group, and for bad examples, I will take other group companies. Okay. So for good examples, I will take always Tata Group of companies only, and I will explain the students clearly what is the speciality of the Tata Group, how the Tata Group has been structured in such a way, what are all the profits earned by Tata Group of companies they are spending for public only, once again through Tata Trust and all. That is what I explain. I will explain each and every batch clearly by showing the shareholding pattern of Tata Sons Private Limited also. Tata Sons Private Limited, how it has been established. Even though Ratan Tata is not there, even the JRD Tata is not there, but still the Tata Group of companies profits will be spent for society only through Tata Trust. Maybe one more person will come, but is not, he will work like Ratan Tata or not, we don't know. Okay. Now come to the point. So Mr. Ratan Tata is a partner in your LLP, but he came to know the fact that something is happening in the LLP. That's why he want to leave from the LLP. Yes, he gave a notice, 30 days notice to the LLP, he left. But you are not informing to ROC intentionally. Sir, fines are 100 rupees above. 100 rupees fine per day if you are not informing to ROC about cessation of partnership interest per day. Maximum fine 10,000 rupees, something will be there. Okay. So that is not a big thing, but still Mr. Ratan Tata name is there in our LLP incorporation document as a partner, and still third party believes that he is a partner of LLP. By that we can make use of that belief. Okay. And LLP can defraud the customers. So to avoid that, what Mr. Ratan Tata can do, he can directly inform to ROC, sir, I already left the LLP, but LLP intentionally they are not informing to ROC. Then what ROC will do? ROC will give a notice to LLP, and LLP has to respond. If LLP is not responding and silence also, ROC will register the cessation of partnership interest. From that date, Ratan Tata is not a partner in your LLP. That's all. That is what the remedy available to the retiring partner if LLP fails to inform to ROC about cessation of partnership interest. That is what section number 24 and 25 registration of changes in partners, that is okay, common section. So ROC will register the changes in the partners. If a new partner is admitted or any existing partner left the organization, ROC will change. Okay, means ROC will register the changes in partners. Okay, next chapter, extent and limitation of liability of LLP and partners. LLP liability is unlimited, no doubt in that, but partners liabilities limited. LLP liabilities are unlimited. LLP is responsible to pay off each and every rupee of the debt. LLP is responsible to pay off each and every rupee of the funds borrowed from by the in the name of LLP. LLP liability is unlimited, but partners liability is limited to the extent of only capital contribution as they agreed. Okay, whatever agreed as per the LLP agreement, whatever the contribution they agreed, to that extent only partners are liable. That is what the this chapter ma 26 partner is an agent. Yes, partners are agents of LLP. Yes, they are entering into contracts on behalf of the LLP. Third party is LLP is liable. Even though partner is doing any frauds or any misconduct with the third parties during the within the authority, still LLP is liable. Who is liable? LLP is liable. Okay. For that, you should understand what is the relationship of principal and agent. I explained with an examples of motor mechanic or maybe purchase selling of bike by the mechanic and all. Okay, you appointed a mechanic as an agent and he is misrepresenting, means maybe he is saying to third parties that this bike is having a 60 kilometers mileage, like that. Maybe is misrepresenting the fact, by that he is entering into contract with a third party. For that also you are liable. Your agent doing any fraud, principal is liable. Your agent is doing any fraud, who is liable, ma? Principal is liable within the authority. You only provided authority to your agent to sell the bike, right? So he is your agent. Your agent is doing any fraud, then you are liable for that fraud. So if any partner is doing any fraud, LLP has to take the liability. Okay, if partner is entering into contract within the authority, then LLP has to take the liability, no doubt in that. And 27 extent of liability of LLP, that is what I discussed now. Partners, even though they are doing any frauds, still for that who has to take the liability, ma? LLP has to take the liability for the third parties. And 28 extent of liability of partners. Partners are only liable, limited liability, ma. What is the liability, ma? Limited liability. Partners liability is limited to the extent of contribution as agreed as per the LLP agreement. And 29 holding out. Partner by holding out is not important. Partner by holding out estoppel or otherwise partner by ostensible authority, all are in contract act. You please refer once. And 30 unlimited liability in case of fraud. Yes, this is what very important, ma. Section number 30, unlimited liability in case of fraud. If LLP committed any fraud, or any partner of LLP with the knowledge of LLP they committed any fraud, then all partners liability will become what, ma? Unlimited. All partners liability will become what? Unlimited. Okay, so this is an exception to limited liability of the partners. Next, whistleblowing. They asked in May 2024, ma, for 4 marks whistleblowing. They asked, whistleblowing means if anything happening wrong in the LLP, someone has to give the information to central government, then maybe they will protect, the court will protect, so they will reduce the penalties, so or they extinguish the punishment and all. That is what whistleblowing. And you will be protected from LLP also. LLP cannot harass that person or demotivate or demote the person, or maybe harass the person, or left the means they cannot take any action against that particular person who is providing information about any fraud is going to be committed or already committed fraud. Information means our LLP is partners liability is unlimited, sir. LLP end of the name LLP suffix will this information everyone knows, sir. Not this information. What information you are giving to central government? You are giving information to central government about maybe any fraud to be committed by LLP or already committed by LLP. Some sensitive information you are giving to central government in relation to any fraud. In relation to any fraud, then only you are a whistleblower. You are a whistleblower, and then only protection is applicable to you. What protection is applicable? You are also form part of fraud, but still you are also form part of fraud. Still, court will give you means some relaxations. They will reduce the penalty, or they will extinguish the imprisonment and all, whatever it may be. That type of penalty will get, or you will be protected from LLP also. Okay, you are an accountant or cashier working as accountant of LLP. You just provide information to central government about the fraud committed in the LLP. You are also form part of the fraud. Then you are a covert now. Covert whistleblower is a covert also. Spy, covert. I said two types of whistleblowers. One is covert, other one is spy. Who is covert? Covert means approver. Is covert means what ma? Approver. So he is also form part of the fraud only, but after that he is surrendering himself to the department, central government, police department, or maybe MCA, no, ROC, no, sir, I will give all the information, sir, who is involved in this fraud, sir, please protect me. So many movies it is there. Okay. Next, spy. Spy means he is not form part of fraud, but he will provide the information to central government what is happening in the LLP. Okay. In both ways, you are a whistleblower and you will be protected by the section number 31. Okay. Next, section number 32 is contribution. This form of contribution, either in cash or in kind, you can contribute tangible or intangible, or otherwise movable or immovable assets. In any form you can contribute. As per the LLP agreement, you can contribute. Okay, that is your obligation to contribute as per the LLP agreement. That is not a big issue. And obligation to contribute. If you are failed to contribute, even third party also can file a suit on the partners if they fail to contribute the amount as agreed in the LLP agreement. Okay, that is what section number 32, 33, not that much important, you please ignore about it. And 30, chapter number 7, what is it, ma? Financial disclosures. Yes, little bit important. Section number 34, maintenance of books of accounts. LLP has to maintain the books of accounts on single entry or double entry. Maintenance of books of accounts, single entry or double entry. Double entry based accounting system, cash based or accrued based? Don't say both, ma. Either cash or accrual. Don't say both. How it is possible? Both cash, accrual, both they will maintain. What, one set of books on cash based, one set of books on accrued based? No. Either cash basis or accrual basis, LLP can maintain the books of accounts, but in double entry accounting system, not in single entry. How many years the LLP has to maintain the books of accounts, ma? Nowhere in the LLP Act. We are applying Companies Act 8 years only. How many years, ma? 8 years. Okay, very good. And financial statements also. Don't say financial statements. In LLP, language is different. Statement of accountant solvency. Not financial statements. What is that? Statement of accountant solvency. Okay, SOAS. You can say SOS. You like SOS, SOS, na? Here also SOS. What is that SOS, ma? SOAS. Statement of accountant solvency. You have to file with what, ma? ROC. For every financial year, you have to file statement of accountant solvency with ROC. Okay. So, what is the due date for filing financial statements with ROC as per LLP Act section number 34? What is the due date? Variety. 6 months, 30 days. What is the due date, ma? 6 months, 30 days. From what date 6 months, 30 days? From the closing date of a financial year. From the closing date of financial year, 6 months, 30 days, you have to file what, ma? Financial statements with ROC. Otherwise, fine will be there. You please refer the fine ones. Okay. So, and not only statement of accountant solvency, you have to do audit of LLP also. But for which LLP audit is not required? Small LLP. For which LLP audit is not required, ma? Small LLP. What is a small LLP? What is a small LLP? Same criteria. Same criteria. What is the criteria? Turnover. Don't say paid up share capital here. Contribution. What is that? Contribution. Turnover does not exceed 40 lakhs. Contribution does not exceed 25 lakhs. And ara. And. Don't say ara. Both conditions to be satisfied. Turnover does not exceed 40 lakhs for the preceding financial year, and paid up contribution does not exceed 25 lakhs as on the last day of the preceding financial year. Then that LLP is called what LLP, ma? Small LLP. Small LLP, next time definitely they will ask. Small LLP, no need to conduct the audit of LLP. Okay. Next one is accounting and auditing standards. You don't worry about it. And annual return, section number 35. What is that, ma? Annual return. Every LLP has to prepare a annual return and to be filed with the ROC. What is the last date to file annual return, ma? 60 days from the date of closing of financial year. What is the financial year in LLP Act? April 1st to 31st March only. But what is the first financial year of LLP? Companies Act, what is the first financial year? First financial year also April to March only. But if company incorporated after on or after 1st January, then the next financial year, next March only, na? LLP Act after 30th September. After 30th September. On or after 1st October. On or after 1st October, if LLP is incorporated, I will give you the example because financial year I am expecting. Please, if LLP is incorporated on 30th September 2023, not 23 na, now 24 came na. 30th September 2024 and 1st October 2024. Tell me, what is the first financial year of LLP? Tell me, what is the first financial year of LLP? Here, 30th September 2024 to 31st March 2025. Here in this case, 1st October 2024 to 31st March 2026. 5. Here the financial year is how many months ma? 6 months 1 day. Here financial year is 18 months. Minimum 6 months 1 day, maximum 18 months for LLP first financial year. For company 3 months 1 day minimum, maximum 15 months. Okay, this was the financial year for LLP ma. Next, for every financial year you have to prepare statement of accountant solvency as well as you have to prepare annual return. Statement of accountant solvency you have to file with ROC within how many days ma? 6 months 30 days. Can you please tell me the due date for filing financial statements? Same example. Tell me what is the due date for this? Due date of financial statements, due date of annual return. Quick, tell me. Due date of financial statements and due date of annual return. Due date of financial statements. What is the financial closing date? 31st March 25. From that 6 months 30 days. Tell me. 6 months means 30th September. From that 30 days means October. 30th October 2025. Here 30th October 2026. Next, annual return filing 60 days. 31st March plus 60 days. April 30, May 30. What is the last date? 30th May 2025. Here 30th May 2026. They will ask you have to calculate. And examination you have to write actually. And not only that, you have to calculate the penalty also. For example, 10 days delay. I filed financial statements or annual returns with 10 days delay. How much fine LLP has to pay? Designated partners has to pay. That also you have to write. So refer the penalties and fines also. LLP Act I am saying. Remember the LLP forms. Philippa, Ranna, all forms you have to remember. Not only that, designated partner consent you have to file with ROC and you have to take the consent of designated partner. Every form you have to remember and every penalty and fine also you have to remember. Only in section number 9 only, 10 only there is a penalty. And section number 13 also there is a penalty I think. And LLP agreement is also there. There are also penalties there. So only 5 or 6 sections are there in LLP Act where there is stating penalties and all. Okay. You please remember the penalties also. Last September 2024 they asked penalty for not filing financial statements or annual returns. Okay. Not only that, they are asking questions combination of annual return and winding up of LLP. So continuously for how many years you are not filing financial statements, annual returns, you will go for compulsory winding up ma? Tell me 1 year, 2 year, 3 year, 4 year, 5 year, tell me whatever you want. Compulsory winding up section number 63. What is it ma? Section number 63. Okay, we'll see no issue. Inspection of documents kept by register, that is okay. Penalty for false statement, it is very important ma. Section number 37 is important. Penalty for false statement. You are giving any wrong information to ROC or you are concealment of fact or misstatement of fact. Then what is the punishment? Don't write 447. That is in Companies Act. In LLP Act there is no 447. Total how many sections are there in LLP Act? Only 80 minus 1. 81 minus 1, 80 only. Don't write 447 of the Companies Act 2013. I will apply for misstatement or concealment of fact with ROC. No. Sir, Companies Act is applicable to body corporate also na sir. You cannot notify. Who will notify? Central government will notify. You have no power to notify which sections are applicable to LLP. No, who will notify ma? Central government. So not 447 in section number 37 only it is clearly mentioned. How many years of imprisonment ma maximum? 2 years of imprisonment. Fine how much ma? 5 lakhs. Okay, that also you have to remember. Clearly you have to write in the exam. Next. 38 power of register not required, 39 not required, 40 not required, 41 is also not required. Now chapter number 8, assignment and transfer of partnership rights. Only one section is there. This section they ask for 4 marks in September 2024. What is that? My partners transferable interest. Assignment, transfer, both are different. Assignment means only I am assigning the benefits arising out of the partnership interest in the LLP. I am a partner in LLP. My name only will be there in the LLP as a partner, but I am assigning the benefits arising out of this partnership interest in LLP to some other person. So you can take the benefits. You are not a partner. What are all the benefits I am arising out of the LLP? That benefits you can enjoy. I am just assigning it to you. You are assigning, I am assigner. You are no way, you are not a partner. You cannot interfere in the management of the LLP. You cannot ask any information from the LLP. You just enjoy the benefits, that's all. Okay, any profit sharing is there, they will tell you the profit and you take the profit, that's all. That is what assigning. Transfer means, okay, I am transferring my partnership to you and my name will be removed from the incorporation document. Your name will be included in the incorporation document as a partner. You have all the rights as a partner. The same small difference is there that you have to identify and you have to write in the exam. That point only they asked in the exam September 2024. Okay, actually this section is unimportant, that is what we will say, but they ask for 4 marks. Okay, now it become important. So investigation not required. Conversion, of course, schedule 3, 4, 5 are there. Schedule 2, 3, 4 are there. You please refer schedule 2. Schedule 2 is applicable for what conversion, ma? Conversion of partnership form into LLP. Schedule 3, conversion of private company into LLP. Schedule 4, conversion of unlisted public company into LLP. Once it is converted, same liabilities, assets, everything is no change. Means all assets and liabilities of the company or partnership form will be transferred to LLP. No, nothing will be affected. Partners of partnership firm will become partners of LLP. Members of company will become partners of LLP. That is what section number conversion ma 55, 56 and 57 and 58. Not that much important plus, but nothing is there to discuss there also. 55 they are referring schedule number 2, 56 they are referring schedule number 3 and 57 they are referring schedule number 4. That's all. Sir, what is there in schedule number 2, 3, 4? Not in our syllabus. Don't worry. That's all. Next. So foreign limited liability partnerships are not there. Compromise arrangements are not important. So finally we are going for winding up and dissolution. My LLP Act is very simple. That's why I am saying don't ignore the LLP Act. You can count the sections. LLP Act sections are important sections. Section number 5, section number 6, section number 7, section number 10, section number 10 and section number 11, section number 12. 13 is not important. 14 is also not. 13 also you can refer once, no issue. 14 is not important because what is the effect of registration is not a big issue. And section number 15 name is very important. 16 is important. 17 is important and 19 is not that much important. 20, 21 is not in your syllabus. 22, 23, 24, 25, yes, if you want you can refer once. Okay, and again what are the important provisions? Cessation of partnership interest is very important. After that financial statement of account and solvency, audit of LLP, annual return of LLP, and as well as section number 37, that is what providing wrong information to ROC and all, that is also important. Effect of whistleblowing is also important. Fraud is also important. 30, 31 is also very important. 30, 31 is also very important. Whistleblowing, fraud. Okay, now 63 winding up. What is that? 63 winding up. Winding up is 2 types. Voluntary winding up, compulsory winding up. When compulsory winding up, voluntary winding up, as per LLP agreement, they can wind up the LLP at any point of time. Partners, LLP can make an application to tribunal for voluntary winding up. That is okay. But what is the compulsory winding up? When? I said how many cases, ma? What are those 4 cases? Contravention of section number 6. Contravention of section number 34, 34, 35. Not 34, 35. Contravention of section number 34, 35. For how many years? 5 years. That is what asked in last exam for 4 marks. For 5 years continuously you are not filing statement of account and solvency or annual returns, then tribunal may pass an order of winding up. For 5 years you have to count clearly. Last September attempt they are asking how to count. You should count the financial years. 5 financial years you have to count clearly. 5th year also there is a default, then only compulsory winding up. Only 4 years only they are defaulted. 5th year no default because still there is no due date, na? Okay, So maybe that time, September 2024, 6 months, 30 days time is there na, to make a filing financial statement. That you have to keep in your mind while counting the default, how many years the LLP made a default for filing financial statements or statement of account and solvency or annual returns. Okay. So next point is maybe against the integrity or sovereignty of India. Okay. Next one is any other, in any other reasonable ground, in the opinion of the tribunal, any other reasonable ground. That's all. This is what compulsory winding up. Especially they are concentrating on first point, section number 6, section number 34 and 35. Contravention of section number 34 and 35. These 2 points are very important. That another 2 points are general points. They will not ask you. You don't know what is sovereignty, integrity of India and any other reasonable ground of the tribunal. I don't know, you don't know. Okay. The Supreme Court also don't know. There are so many cases are there against integrity and sovereignty of India. In Telugu it is said Rajadroham. What is that? Rajadroham. What is Rajadroham? What is not Rajadroham? We don't know. Even Supreme Court also is not in a position to decide what is the against integrity or sovereignty of India. Padesam at baka. Okay. Next. So that is what from LLP. Please once again, LLP Act, section number 1, section number 2, not that much important. Section number 3 is only a general section. Section number 4 is also not required. Section number 5. What is section number 5? What is section number 5? Partners. What is section number 5, ma? Partners. Who can become a partner? Who cannot become a partner? Section number 6, minimum number of partners and consequence of reduction in minimum number of partners. Section number 7, designated partners. How many designated partners? Who can become a designated partner? And consent of the designated partner identification number, filing of consent, taking consent from DP number, everything. Section number 7. And section number 8, liabilities of designated partners. Section number 9, changes in designated partners. If any change, if any designated partner died, then new designated partner to be appointed within how many days? 30 days, and you have to inform to ROC. Otherwise, LLP and partners are liable. That is what in section number 10. In section number 10 actually, liabilities in contravention of section number 7 and section number 9. Okay, 10.1, 10.2, 10.3. This is also important. Including fine also you have to remember. Who is liable, how much fine, everything you have to label. For what purpose the liability will attract, everything you have to remember. Then section number 11, incorporation document. 12, incorporation by registration. 13, registered office address. Section number 14 is a general section. Leave about it. 15 is the name. 16 is the reservation of name. 17 is rectification of name. 18 not there. 19 voluntary change of name. 20, 21 don't worry about 20, 21. And again next section number 22. Okay, 22 not eligibility actually, how to become a partner. What is that? How to become a partner. If you see eligibility to be partner, section number 22, what they are saying, how to become a partner. At the time of incorporation, by subscribing incorporation document. After incorporation, by as per the LLP agreement, you can become a partner. And next one is relationship of partners. By LLP agreement, how the relationship of partners is decided as per the LLP agreement. LLP agreement, I said two types, framed agreement, model agreement. Okay, so you have to file LLP agreement with ROC within how many days? Within 30 days. Within 30 days from the date of incorporation, you have to file LLP agreement with ROC. Otherwise, fine will be there. That fine also you have to remember. See here, section number 23, fine is there. Okay, you please remember the fine also. As may be prescribed, that the rules are there, fine. You please refer once. Okay, next 24, cessation of partnership interest, very important. Okay, rights and duties of the retiring partner and how to retire from the partnership and still is treated as a partner in what cases, and what are the remedy available to the retiring partner when LLP fails to inform to ROC. All these points are very important. Cessation of partnership interest, section number 24. 25 is not that much important, and this chapter is also not important. Partner as an agent, extent of LLP, extent of liability. Only 30, 31 is important. What is important? 30, 31. 30 is whistleblowing and 31. 30 is fraud, 31 is whistleblowing. Please refer section number 30, 31. And contributions not that much important. Financial disclosures are important. 34, 35, 37. 34, 35, 37. And small LLP definition, financial definition, that is also important. Please refer once. Okay, next importance is this one, winding up. What is that, winding up, section number 63. What is that? 63 and 64, 65. Okay, all are same, only compulsory winding up and voluntary winding up. This is what your LLP Act. Please don't leave LLP Act as a choice. Even single question also. Each and every question you please read in your material. Read in your material each and every question, including form numbers, section numbers, fines also. Fines also you should remember and you have to write in your exam. Easily you will get out of 14 marks you will get 12 marks. Out of 14 you can get how many marks? 12 marks. 12 marks you are getting from LLP Act means your confidence level will be increased in the examination. Okay. So next, by this we completed part number 1. What is part number 1, ma? Corporate loss. For how many marks, ma? 70 marks. Including choice, maybe 78 marks or 80 marks. They can ask for 80 marks. So we completed 70 to 80 marks corporate loss. Now we are entering into which section, ma? Part 2. What is part 2? Other loss. In other loss, first we will start with what act? FEMA Act. Very, very important. Foreign Exchange Management Act 1999. Bata price. What ra? Foreign Exchange Management Act. This marathon material may be provided to you. Okay. Maybe. I don't know. I'm not sure about that. But don't worry, marathon material, your regular material, both are same. But you please identify what questions we discussed in the marathon section. That questions you can give more importance while you are revising. Means 2 times, 3 times you please revise all these questions. Same questions can be given as a guest questions to you. Same questions can be given as a guest questions document also. Guest questions means it doesn't mean that the same questions will be asked in the examination. No, please don't misunderstand whatever we are providing. You please concentrate on these questions. There is a possibility to get means to attempt 50 to 60 marks in your exam. By that you can clear your law exam. More concentration. You have to concentrate more on the guest questions and less concentration to other questions. You please revise entire law subject, but guest questions you have to give more priority. That's all. Okay. So no other intention for giving guest questions and all. And don't file a shoot on us. So guest questions not asked. Okay. Don't file any shoot on us. Okay. Next. Foreign Exchange Management Act 1999. There is no possibility to discuss the background of FEMA Act now. I discussed a lot actually. Foreign exchange. Why Foreign Exchange Management Act is required. All these things we discussed with an example also. And now not required, but FEMA is having very good scope, not only in your CA inter exam, but also in your practice also. If you want to start a practice, FEMA is having very good scope. Please concentrate on FEMA. FEMA is like a ocean. We are just taking one drop from the ocean in CA inter syllabus. Okay, not only FEMA Act, FEMA regulations are there. FEMA regulations are there, and FEMA regulations are not covered in your syllabus. And only schedules, 1 or 2 schedules are covered in your syllabus. FEMA Act also entirely not covered in your syllabus. Just you are tasting, that's all. One small, means one piece of rice only, that's all. It's not a biryani, not full biryani. Only one rice piece. Not leg piece also. Okay, you are just testing the food, biryani you are just testing whether it is cooked or not, that's all. Okay, that is like the Foreign Exchange Management Act. See, examination point of view, if I want to tell you FEMA which question is important, all questions are important. If you observe marathon material also, I didn't leave even one single question also in your marathon material. I have a very good means I have a narrow targets to prepare the marathon material. So I have to compress the material and all. 1000 pages of material is compressed into 100 pages. Okay, but still if you observe FEMA Act, I didn't leave even one single question also. Maybe capital account transactions, one small question is there, that only I left. I made a small mistake in the previous batch, not your batch, previous batch. What a small mistake I made. Capital account transactions are not that much important. They will focus only current account transactions only. Like that I just send a message to the students, but I regret actually for that. Because in September 2024, they asked they asked 5 marks question from capital account transactions, not from the current account transactions. So what I decided, FEMA Act, I will say to students, each and every question is important. I will strictly recommend all the students, please read the each and every question of FEMA Act and write the each and every question. Write. If you don't understand, by heart it. I don't mind. Okay, by heart. I am strictly against the by heart in the questions and all. But for FEMA Act, I will recommend the students by heart all the questions, rewrite all the questions. Around 10 questions are there. How many questions are there? But concept is only 10 questions. Conceptually, how many questions, 10 questions only. Sir, I can say simply questions what you have to concentrate. Person resident in India, persons resident outside India. That is what you have to concentrate. One is person resident in India, person resident outside India. If you know who is PROI, then you know who is PRII. So you have to consider only PROI, person resident in India. PRII, person resident in India. Then you know who is a PROI. Foreign Exchange Management Act is only to regulate the transactions in between PROI and PRII. And I will tell you the means I can explain. Person residential status is not as per your income tax here. The main difference in between Income Tax Act and Foreign Exchange Management Act residential status is Income Tax Act we are identifying the residence only once in a year. FEMA Act is not like that. FEMA Act every day you have to check the residence status. Whether you are a resident or not a resident. Whether you are a resident or not a resident. What is the basic condition to be satisfied to become a person resident in India as per FEMA Act? The person who resided in India for more than 182 days, not staying in India. Who is residing in India, he has some address and he has some purpose to reside in India, not staying, not shelter in India. He is taking shelter in India, he is not a person resident in India, he is residing in India for more than, don't try to 182 days, no, greater than 182 days. Greater than 182 means at least how many days, 183 days. At least 183 days. At least 183 days he should reside in India for the preceding financial year. As on 1st April 2024, please listen carefully. One question, guarantee from person resident in India. As on 1st April 2024, you have to check whether I am a PRII or PROI as per the Foreign Exchange Management Act. Okay. For the 1st April 2024, you have to check previous financial year. Sir, previous financial year, where you are, sir? I am in India for how many days, sir? 183 days. Yes, you are a resident in India on 1st April 2024. Oh, for 2nd April also I am a PRII. May or may not be. 3rd April also, we don't know. Every day, your residential status may be changed. On 1st April, I am a PRII. 1st April, I am a PRII. 2nd April, I left India. I went to Dubai. Oh, okay, very good, sir. So, by going to Dubai, your residential status will change. No, for what purpose you are living India? For what purpose you are going to Dubai? That is what very important. Sir, I am going to Dubai on 2nd April for visit, sir. For 10 days visit. For 3 months visit. No, for 6 months visit I am going. For 1 year visit I am going. What is your problem? 1st April I am a PRII because I stayed in India for how many days, 180 days, 183 days during the preceding financial year. So on 1st April I am a PRII, person resident in India. Okay, 2nd April I left India to Dubai for 1 year. 1 year visit. Then I will be PRII, PROI. Next year you have to decide. Then you have to see 183 days you are in India or not. No, you are in Dubai for 183 days. Then you are a PROA for next year. This year I am a person resident in India, but I went to Dubai for employment. for business or profession or for a uncertain period, for a uncertain period, then I am a immediately on 2nd April I will become what ma? Person resident outside India. Ma, yes, I am a PRII on 1st April 2024 because I resided in India for more than 180 days during the preceding finance, but the same status will not continue for the entire year. Like Income Tax Act, no. In FEMA, residential status may change from one day to another day. If I left India on 2nd April 2024 to Dubai for employment or for business or for any other uncertain period, then immediately I will become what ma? Person resident outside India. On 3rd April again I came to India. Sir, you don't have any work? Going Dubai, coming to India, this is the only work? You are doing smuggling or what? Sir, on 3rd April again I came to India for what purpose? For visit, 10 days visit. I am a PROI, PRII. PROI only. But on 3rd April, I resigned from job. One day I resigned there. Because I came to know the fact that working in Dubai is actually harder than, difficult than working in India. So within one day I resigned from job in Dubai, and on 3rd April again I came back to India. Tell me, I am a PRII, PROI? PRII. See, in 3 days, 3 times status is changed. 1st April I am a PRII. 2nd April, PROI. 3rd April, PRI. WhatsApp status, huh? He said currently it is like a WhatsApp status, it is keep on changing, ma. That is what the problem in FEMA. Why, sir, every day? Because my income tax act you are calculating yearly once only. But foreign exchange transactions daily you are entering, na. So whenever you are entering into a transaction, you have to check your status whether you are PRII or PROI. Any transaction between PRII and PROI is to be regulated by the FEMA Act. Only through authorized person only can enter into the transaction. Directly cannot enter. Only through authorized person only can enter into the transaction. That is what the problem here. Okay. Sir, opposite side also is there. What is opposite side, ma? I am a PRII on 1st April 2024 and I left India for some other purposes. 3 purposes I left India. That's why I become what, ma? PROI. My reverse side also will be there, na? What is the reverse side? You are living in some other country, US. You are all US citizens, green card holders. Okay. You are always trying to get the green card from US, na? Not ration card from Indian government. You are asking green card from the US. Okay. Green card from US. Okay. US green card is nothing but ration card in India. Ra? Both are same only. At least India they will give ration. They will not give ration also there in US. No ration also on green card. Card only in green. Nothing is there. Okay. Now come to the point. Ma, she is residing in US. Preceding financial year total 365 days she is in USA only. On 1st April she is a PRII or PROI? PROI. No doubt. 2nd April she came to India. For what purpose? For employment purpose she came to India. Then immediately she will become what, ma? PRII. By the time syllabus is completing, Josh is coming. From morning silent. Now evening violent. Okay, now come to the point. But anyhow, I am also satisfied with your Marathon section. Now come to the FEMA. When compared to earlier Marathon sections, this section is satisfied. Time is also managed very, very well manner. Okay. Now come to the point. Don't waste your time. Okay. This is not a regular batch. This is a Marathon. So you should remind me. You should remind me, sir, this is a Marathon. This is a Marathon. Okay. Come on. See, now come to the point. Ma, even though it is Marathon, with the, even 8 hours, 9 hours also with same, means with same dedication and with same inspiration, we listen to the Marathon classes. Okay. Now come to the point. See, PROI, again I am saying, even though you are not staying 183 days in the during preceding financial year, still there is a scope of becoming PRII. All of a sudden you came to India. You nowhere related to India, but all of a sudden you came to India for what purpose, ma? For employment or for business or for uncertain period, then you will become what, ma? PRII from that date itself. Again you are going to years back by terminating the employment here. Then you will become what, ma? PROI. 5 marks question. Whatever we discussed so far, how many marks ma? 5 marks. May 2024 they asked for 5 marks. January 2025 also, mark my words, they will ask for how many marks ma? 5 marks. If they are not asking, please sir, don't ask me. Next. Next topic which is very important in FEMA Act is transactions in between PRII and PROI is divided into two types. Current account transaction, capital account transaction. Current account transactions, we have to discuss 3 points. Prohibited current account transactions, permitted current account transactions, permitted by the departments, permission required from RBI. That is what the 3 points what you have to remember. And for artificial persons, what are the permissible current account transactions? Total 4 questions. Under what transactions? Current account transactions. For capital account transactions, of course, prohibited, permitted. Only 2 points we have to discuss for capital account transactions, and one more question for LRS scheme. Liberalized remittance scheme. One more question, last question. By this, we will complete what act? Foreign Exchange Management Act. Please cooperate. After that, if time permits, we will go for GCA and IPS. Okay? GCA, IPS only half an hour. Just only to satisfy you. GCA, IPS also covered in what section? Marathon section. GCA, IPS actually, please concentrate on the previous examination questions. Repeatedly, they are asking the same questions. Please concentrate on that. Okay? Right. Now, sir, first of all, you should differentiate in between current account transactions and capital account transactions. Very important, but not examination point of view, conceptual point of view. You should know what is the difference between current account transaction and capital account transaction. Don't link with revenue expenditure, capital expenditure, revenue receipts and capital receipts. No. Don't apply your accounting knowledge here. Here accounting knowledge is not required to classify the transactions into current and capital. Capital account transactions, I can say clearly, which alters the assets and liabilities of PRII outside India and PROI in India. Once again I am saying, what is a capital account transaction? What is a capital account transaction? Other than capital account transaction is a current account transaction. Very simple. Capital account transaction. Capital account transaction. What is capital account, sir? PRII. If PRII is entering into any contract due to which any transaction, due to which his assets or liabilities are altered. His liabilities are altered outside India. Theory is very good. If I am asking examples, then only problem will come. Okay. So, a person resident in India is entering into such transactions due to which the assets or liabilities of such PRII outside India will be altered. Maybe assets are increased or liabilities are decreased or vice versa, whatever it may be. Next one, PROI is entering into transactions because of which his assets or liabilities in India will be altered. In India will be altered. I am a PRII. No doubt. Previous financial year I resided India only and I didn't leave India so far. So I am a person resident in India. As on today I am a person resident in India. Okay, very good. So I purchased a vehicle. Tara. For purchasing Thar you have to go to US, UK, not required. Normally from US and EAE you are purchasing vehicles, it is not permissible here to use. Actually you have to change the steering and all. It's not possible. Waste of purchasing vehicles from US and EAE. If you want to purchase from vehicles, you can purchase from European countries. Russia, European country, Okay, European country and Asian also. Both are there, Russia. That is a speciality of Russia. I am saying vehicles, You want to purchase vehicles, then you can purchase from, okay? Okay, now come to the point. If you want to purchase vehicles, I want to purchase a vehicle from UK. I want to purchase a vehicle from what, UK. General Motors company, one company is a GM. Company name is GM. General Motors company vehicles are familiar in European Union means European countries, or otherwise Land Rover, Range Rover, whatever it may be. I want to purchase a car from UK because price is very less. Okay, you purchase the vehicle there from UK supplier, or UK company, you purchase the vehicle. Tell me, current account transaction, capital account transaction. I purchased a vehicle from UK supplier. In UK only, I purchased a vehicle in UK from UK supplier only on cash basis. What basis, ma? Cash. They will not give any credit for me. Okay, yes, I purchased a vehicle and I brought the vehicle to India and I paid money to the UK supplier. Paying money in rupees or dollars? Euros? Euros, or maybe that UK pound only. Okay, right. Great Britain pounds, GBP. What is that, ma? GBP. Great Britain pounds I have to pay. Okay, I have Great Britain pounds in my pocket. I have only rupees in my bank account. So how can I pay Great Britain pounds to the British supplier, ma? UK supplier? I will give rupees to Hyderabad old basti, Pata basti. I will go to Hyderabad Pata basti. I will give rupees to one person and he will give dollars. That is called what, ma? Hawala. It is not permissible, prohibited. Ma, you can enter into transactions, that is not prohibited, but if you want to pay the pounds to the British supplier, then you have to convert your rupees into pounds through authorized person only, through authorized person. Reserve Bank of India permission. So Reserve Bank of India, they will give permission to some authorized persons, through bank, for example, through RBI, or through money dealers, or maybe money exchangers. So some fellows will be there. Through them only we have to convert the dollars. Okay, I went to, for example, State Bank of India, Guntur Treasury branch is there. Okay, I went to State Bank of India Treasury branch to take dollars, to take what, ma? Pounds or dollars, by giving what? Rupees. I have rupees, or maybe I have bank balance in rupees only. I have bank balance in rupees. I went to State Bank of India to take pounds to pay to the British supplier. Okay, very good. What State Bank of India will print pounds and give a wait, printing machine. Just now we are getting printing machine. What do you need? Pounds? SRI, bring pounds printing machine. I print pounds. How many pounds you required? Okay. Okay. State Bank of India cannot print. Okay. Reserve Bank of India will print pounds. Yes, you can print whatever you want, but they will not take. British supplier, he will take only pounds printed by the British bank. British Reserve Bank or some, maybe I don't know what is the name of the bank, like Reserve Bank of India. In British also, one bank will be there. So that British Reserve Bank only, they have to print the pounds. That pounds only they will accept, not our pounds. And our Indian rupees also they will not accept. That is waste paper for them. Tissue paper also they will not use. Okay. So it is not recognized in UK. Our currency notes are only recognized in India because it is signed by Reserve Bank of India governor, and Indian Currency Act is there, Reserve Bank of India Act is there, Banking Regulation Act is there. That's why we are recognizing that waste paper as a 2000 rupees or 500 rupees. Otherwise there is no recognition for that currency, right? Okay. Our Indian currency notes they will accept? No. Our rupees balance they will accept? No. They are asking only their pounds. Either digital currency or physical currency, whatever it may be. You have to convert your physical currency into electronic currency only, na? Okay, pounds. Pounds are printed by what, ma? British bank only, British Reserve Bank only. So for this transaction, what will happen? I am requesting Reserve Bank of India to give pounds, but Reserve Bank of India is not printing pounds, na? To give pounds, Reserve Bank of India has to purchase the pounds from British Reserve Bank. To give pounds to me for purchase of vehicle from the British UK. So to settle the transaction, I have to pay British pounds only. What is the end? What is the effect? At the end means Reserve Bank of India has to purchase the dollars, pounds from British Reserve Bank. So Reserve Bank of India has to sell the rupees, and Reserve Bank of India has to purchase the pounds from the British Reserve Bank. So that demand is created for the pounds and supply is increased for the rupees. By that, rupee value will be decreased and pound value will be increased. And moreover, for example, British Reserve Bank, they denied to purchase the rupees. They don't want rupees. They said, no, I don't want any rupees. I will not give any pounds. Then what Reserve Bank of India will do? Are you don't purchase any vehicle, like that Reserve Bank of India will say, na? Then I will say government down. So Reserve Bank of India has to take care of the foreign exchange requirements of their citizens. Foreign exchange vehicle okay, I am purchasing petrol, importing petrol na? Not I am. Government companies, Indian oil companies are there na. So Hindustan Petroleum Limited or Indian oil companies or maybe Bharat Oil Petroleum companies. So these are all importing crude oil from the US, UK, no, Russia, no, or UAE, no, okay na. They are taking our rupees, no, we have to pay dollars only. No, we have to pay what ma? Dollars. Settlement system is only in dollars. Only with Russia only we can settle with rupees actually. Only with Russia. Now we are entering into agreement to settle with what ma? Rupees. By that our foreign exchange reserves will not be depleted. Okay, in 1995, I think 1995 year, our foreign exchange reserves almost zero. Fully depleted because of Foreign Exchange Regulation Act, FEMA Act. FEMA Act, what they say is everything is prohibited. No, unless otherwise it is permitted. Everything is prohibited unless otherwise permitted. FEMA Act, everything is permitted unless otherwise prohibited. That is what the difference between FEMA and FERA. They are opening doors actually to outsiders to do the business with India by increasing what ma? Foreign exchange currency reserves actually by PV Narasimha Rao. Our pride actually, right? So pride of nation of course, but pride of our Telugu people also, PV Narasimha Rao. Because of him only now we are in a comfortable situation to maintain the foreign exchange currency reserves, even though in spite of so many restrictions outside India, means throughout the world so many restrictions are there, still our India is strengthened with foreign currency reserves and gold reserves. Okay, ma only thing which will be protected ma foreign currency reserves only and gold reserves. Whenever you want foreign currency, you can pledge your gold and you can take loan from the international banks. You can pledge your gold and you can take loans from the international banks. By that you are increasing what ma? Foreign currency reserves. That one option is available. And Reserve Bank of India, if they want to print currency notes in Indian rupees as per IMF rules and regulations, either you have gold reserves or you have foreign currency reserves. Ma, you are printing Reserve Bank of India is printing currency notes now. That is a liability to Reserve Bank of India. Reserve Bank of India is printing currency notes means liability to Reserve Bank of India balance sheet. Then what is asset? Gold reserves, so foreign currency reserves. So your liability and assets both will be same. That is what IMF rules and regulations, simple rules and regulations. So everything is interlinked. We are not going to discuss at macro level. Please come to our foreign exchange management. This I said Foreign Exchange Management Act is a version. I also don't know, only 2-3 drops only I know. Okay, remaining thing you please try to learn Foreign Exchange Management Act completely. At CA final I left this chapter as choice. When I was doing CA final, I left FEMA Act as a choice. That's why I am feeling now unnecessarily I left this chapter as a choice. Otherwise maybe there is also one of the best scope of practice. Anyhow, I am not into practice. Now come to the point. I am purchasing I am purchasing vehicle from UK. I am purchasing vehicle from UK. Current account transaction, capital account transaction. Current capital. It is a current account transaction. It will not alter any assets or liabilities outside India. Ma, I am purchasing vehicle, I am bringing to India, na, I am keeping there itself. Bringing to India. So any asset is created outside India? No. Okay, liability is created. No, I am paying money to supplier. No liability, na, nothing. So that is a capital current account transaction. What transaction, ma? Current account transactions. I am taking loan from British Reserve Bank or US Federal Bank. Tell me, current account or capital account? I am taking loan means liability is altered. Liability is created there, na? Okay. Or I am purchasing asset in US or UK. Capital account transactions. Okay. I am purchasing plant and machinery. Current account transaction. Plant and machinery for cash only. For credit also 3 months, 6 months, okay. Maximum 6 months credit is not a capital account transaction. It is only a current account transaction. I am paying interest on loan. I already took a loan, but I am paying interest on loan. Current account or capital account? Current account transaction. I am paying interest on loan is a current account. Very simple, ma. Today the transaction will be settled. It is a current account transaction. But because of this transaction, foreign currency reserves will be affected in future. That is a capital account transactions. So you have to concentrate foreign exchange reserves. Reserve Bank of India, why they are framing this Foreign Exchange Management Act? They have to manage the foreign exchange currency reserves. Okay. You are entering into a transaction due to which today reserves only will be affected. Now that is a current account transaction. Maybe in future the reserves will be affected. Now that is a capital account transaction. I am taking loan from a bank. from a international bank in dollars, not in rupees, in dollars. I have to repay in dollars or rupees? Dollars only. So for that, because of taking loan from foreign bank in dollars, future currency reserves will be affected. So RBI has to plan accordingly. My current okay, but future plans also will be there na. So because of your current today transaction, future foreign exchange currency will be affected. That's why Reserve Bank of India will keep more restrictions on capital account transaction. Current account transactions, normally there are no restrictions. Everything is permitted unless it is prohibited. All current account transactions are permitted unless it is prohibited. But all capital account transactions are prohibited unless it is permitted, because capital account transactions will having a future impact. Like investment in long-term assets, investment in short-term assets. In our financial management, what is there? Investment in short-term assets, current assets and current liabilities. Long-term assets is having huge impact. Short-term assets are having huge impact. Long-term assets. For that only we are explaining capital budgeting, investment decisions, so many topics. So like that, Reserve Bank of India is also concerned about the long-term impact, not in the short-term impact. So the transaction which will impact in the long term, it is a capital account transaction. Only in this year, that is a current transaction. Very simple to say. Okay. Now that is a conceptual knowledge. Even though you don't understand what is current account, what is capital account, they will not ask in the exam. Don't worry about it. But I want to convey you the real concept about current account and capital account. Now come to the current account transactions. Current account transactions, three types. First one is prohibited. What is first one, ma? Prohibited. From this question onwards, my efforts are very less. Why, sir? Because you have to read the list and you have to remind. Don't expect the logics to explain here now. Okay. So you have to remind. Means you have to read and you have to remember. That's all. Very simple. Current account transactions are three types. What are that, ma? Prohibit. Ma, this question number 113 is just explaining what are the current account transactions. These are only inclusive in nature. Just giving examples. Don't think these are only current account transactions. Okay. What are all the current account transactions, ma, here? Payment in the ordinary course of foreign trade. I am purchasing goods from the foreign suppliers. Yes, current account transaction. Other services such as short-term banking, credit facilities. I am taking temporary loans, bank overdrafts. Are all current account transactions only. And payment in the form of interest on loans or income from making investment is a capital account transaction. But taking income from investment is a current account transaction. Okay, that's all. Then remittances for living expenses of parents, spouse, children living abroad. These are all current account transactions. No asset has been created. Now I am just sending university fees or maybe accommodation expenses for my parents or for my children's or spouse. Then it is a current account. Gifts are also current account transaction only. Gifts, donations, everything is current account transactions only. Okay, everything is current account transactions only. Okay. Now next, expenses in connection with foreign travel, education, or maybe foreign hospital. Okay, you want to take the treatment from foreign hospitals under, everything is a current account transaction. These are only examples, no need to concentrate on these examples. Okay, to make you understand what is a current account transaction. This question is very important. What is important question, ma? Prohibited current account transactions. Very, very important. Straight away they will ask theory question or practical questions. Small points they are asking practical questions for 5 marks. Prohibited current account transactions. Please refer all these list. Remittance out of lottery winning. Some lottery you can win, no issue. In India you can win the lottery, that is not prohibited. But whatever the amount you win out of lottery, that amount you cannot remit to outside India. Okay, here also you are not paying, means you are not producing any goods, you are not providing any services. Without producing any goods, without providing any services, you win the amount. Even the lottery winnings, you are making any efforts? Nothing. You are converting raw material into finished goods. You are providing services, nothing. Any production, any agriculture, any construction, anything, nothing is there. But you are getting money. You are getting money out of what? Lottery winnings. That money, okay, you can get, no issue. That is your luck. That is your luck. You got money. But that money you want to send to out of country, then Reserve Bank of India do the hard work. Without doing anything in India, you are getting money. That money you want to send to outside India, that is the problem to Reserve Bank of India. What is the problem? If you want to send that money to outside India, then Reserve Bank of India has to sell the Indian rupees and they have to purchase the dollars. So that is the problem. Foreign exchange reserves will be depleted because of your unnecessary income in the India. That amount you cannot send out of India. Yes, you can win in India and you can spend in India. You can win in India and you can spend in India only. You cannot send out of India. That is what the problem. Okay. Next, remittance of income from racing, riding, etc. or any other hobby. That's all. Same. Both points are similar logic. Next one, remittance for purchase of. For purchase of, you want to purchase lottery tickets outside India, you cannot send the amount. Or for purchase of banned or prescribed magazines. Magazines means uh, magazines means is ammunition. Swati magazines are. What are you talking about? Not that weekly magazines, ma. Magazines you are using for pistols and all, na. That is what the magazines. Okay. Next, ma. Football pools. Football pools is also like gambling and all. Football pools, sweepstakes. Okay. Clubs. These are all foreign gambling games are there. In that also, you cannot send money to invest in football pools, so sweepstakes, so all these things. Sweepstakes or maybe, ma. This is I think E point, ma. Please. Sweepstakes. And the next point is fourth point. This is fourth point. Payment of commission on exports made towards equity investment in joint ventures or wholly owned subsidiaries abroad of Indian companies. So, are very big points, sir. How can we understand? Okay, I can explain the logic, but it will take time. Sir, payment of commission on exports made towards equity investment in joint ventures. Normally, I am in India. I want to export to other country. Seller is in India, buyer is in ES, for example, ES. For us, foreign means ES only, na? Okay. Seller in India and buyer is in US. Normally, seller, buyer in different countries, different law is applicable to these people. So, they are entering into an agreement to supply the goods and he has to pay the money. But what is the guarantee that he will pay the money after supply of goods? We don't know. And what is the guarantee that I will supply the goods after he is paying money? That is also not possible. Okay. That's why no one will believe. Supplier, customer will not believe each other. That's why commission agent is required. Who is required? Agent is required. So I will approach a agent abroad to enter into a contract with the customer of the abroad customer. I want to enter into a contract. I will approach what, my agent. He will believe the agent. He will believe the agent and I will also believe the agent. That's why agents are required for import and exports. Initially, once you are established and you know very well to all the persons throughout the world, then okay, agents are not required. But the agents are required for import or exports of goods. So I appointed a agent. I appointed what, ma? Agent. Okay. Agent you have to pay what? Commission, na? Agent you have to pay what, ma? Commission. Agent is in India, na? Outside India, na? Okay. For import of goods, for export of goods, okay. You are exporting goods, you are earning foreign currency. You are earning what, ma? Foreign currency. Great. And you are paying 20%, 30% commission to agent means, ma, commission is very much high, ma. For import and export agents, you have to pay high commissions because he is taking more risk. Na? 20%, 30%, 10% commissions also you have to pay out of the proceeds. For example, 1 lakh you are earning foreign exchange, na 20,000 you have to pay commission to the agent. Okay, you are earning 20,000, 1 lakh foreign currency, na? That's why you can pay commission to agent. I am not restricting you. I am not prohibiting you. Payment of commission to agent is a current account transaction. Payment of commission to agent is a current account transaction. But what is prohibited? I started a company in US, subsidiary company. I am in India and I am starting a company in ES, my subsidiary, wholly owned subsidiary. What subsidiary, ma? Wholly owned subsidiary. 100% shareholding by me only, my company only. Wholly owned subsidiary. Subsidiary means I have to purchase shares, na? For shares I have to pay money, na? For purchase of shares I have to pay money, na? Instead of paying money, I am supplying goods to that company. Consideration other than cash. What is that? Consideration other than. Please try to understand. In less time I want to give an example to make you understand this point. Okay. So for example, A Limited is a Indian company. Which company? Indian company. Now ABC LLC or INC. ABC INC I incorporated in ES. I incorporated in ES. Wholly owned subsidiary. Okay. So I want to invest in this ABC INC because I have to purchase shares, na equity shares I have to purchase, na. For that I am purchasing equity shares. For purchase of equity shares, I am sending goods. I am sending what, ma? Goods. Towards equity investment, I am sending goods. Towards equity investment, I am sending what, ma? Goods. I am exporting goods to ABC INC. For what, ma? Towards equity investment. You know very well, equity shares are redeemable. And dividend will be paid on equity shares. We don't know. Ma, you are sending goods to ABC INC. Towards what, ma? Equity investment, and we don't know whether the equity investment will come back or not. Okay, very good, sir. Goods only I am sending, na, sir, not foreign currency, na, sir. What is the problem with RBI, sir? I am sending only goods only, na. No problem to RBI, na. Then what is the no problem to RBI? But For exporting those goods to ABC INC, I am taking the help of what? Agent. For that agent, I am paying what? Commission. For that commission, I have to pay dollars. Unnecessary. You are not getting anything back, but you are paying what? Commission to agent abroad. That is what prohibited. Do you understand? Even though you don't understand, no problem for me and for you also. You please by heart the question, by heart the point. That's all. They will not ask anything. They will write. They will ask this point whether it is prohibited or not. That you have to write in the exam. Even though my conceptual understanding of FEMA Act is, I said it is a version. Please. Okay, even though you don't understand, please don't worry about it. Please by heart all these 8 points. How many points, ma? 8 points are there. So only 7 points, na? This is 8 point, ma. 4th, this is 5th, 6th, 7th, 8. 8 points, please by heart and reproduce and rewrite. That's all. Okay. 5th point. What is 5th point, ma? Remittance of dividend by any company to which requirement of dividend balancing is applicable. So there is an agreement in between companies, ma. Dividend balancing agreements are there. Okay. So you please remember like that. It's not possible to explain the logics for all the questions here. Dividend balancing applicable is there, then you cannot pay dividend. You cannot pay dividend to the foreign shareholders. Foreigners are invested in your company. Foreigners are invested in your company. For that, what you have to pay? You have to pay dividend. But what they agreed at the time of investment, dividends not to be paid to the foreign shareholders. Non-repatriation basis. What basis? Non-repatriation basis. Only you pay the you invest in equity shares, but I will not pay any dividend. That based on that agreement, if they are investing in your company, you cannot pay the dividend. Paying of dividend is a current account transaction, but it is prohibited in case dividend balancing is applicable. Okay. Next, payment of commission on exports under rupee state credit route. With Russia, we have an agreement. Rupee state credit route means you are exporting any goods to Russia. You are exporting any goods to Russia. No need to pay commission in Russian rupees. Russian currency. You can pay commission only in Indian rupees. That agreement is there already with Russian government. Okay. So even though agreement is there, still you are paying commission in Russian currency. It is not required. It is prohibited. It is prohibited. But for these two goods, you can pay commission in Russian currency. No issue. What is that? Tea and tobacco. Because tea and tobacco is produced by India in large quantities, so we have to export to other countries. For that, you can pay the commission also even to Russia. Means rupee state credit route scheme is there. What scheme? Rupee state credit route scheme is there. Under that scheme, you are exporting. No need to pay commission in other currency. You can pay commission in rupees itself. Okay. But tea and tobacco you can pay in other currency. That is what. This point also very important. Next, payment related to callback services of telephones. This is a very big scam. So converting a ISO call into STD call. Okay. Earlier, not now. Now all WhatsApp video calls, everything is there. Callback services means trunk call. What is that, ma? Trunk call. Trunk call means actually ISO. What call, ma? ISO. You want to call with ES, na? Definitely you will be charged with 10 rupees per minute. Now also 10 rupees, 7 rupees, 8 rupees. Earlier maybe 20 rupees, 30 rupees per minute. Very costly. Okay. Husband is in US. Wife is in India. So they want to talk each other for half an hour or 1 hour. Then 1 month salary they have to bear. Per day they want to talk for 1 hour. Per day they want to talk for 1 hour. 30 days, 30 hours. 30 hours into 60 minutes. 1,800 into 20. 36,000 rupees is salary, husband salary here. Gone. That's why instead of paying 36,000 rupees for this telephone charges, there is one small facility is provided by the some hackers, callback services facility. They will convert this international call into domestic call through VPN. You know very well, na? Okay. Why unnecessarily? I have to explain to you. Nowadays it is called VPN. That time it is called callback services. What is that, ma? Callback services. Okay. That is TRAI, Telephone Regulation Authority of India. They don't know. TRAI is there. TRAI, na? Telephone Regulation Authority of India is there, na? They don't know how to stop this type of transactions. So because of that, they added one point in Foreign Exchange Management Act. Okay, if anyone is paying any money for this callback services hackers, for using VPN, you have to pay some fees, na? Free VPNs are there, but you have to pay fees for VPN services, na? That services is prohibited. Payment of that services in foreign currency is prohibited. But they don't know how to control these transactions. That's why they added one point in Foreign Exchange Management Act. You cannot pay any money for callback service providers. Okay. Nowadays it is not relevant, ma. Please. This point is not having any relevance nowadays. Okay. Next, remittance of interest income on funds held in non-resident special rupee scheme account. This NRSRS is one small agreement, ma, in between means Atiti Devo Bhava scheme. Guest is God for us, na. If any US citizen is coming to India for visit purpose, na, what he will do? He is having dollars. He is having what, ma? Dollars. That dollars he will kept in a separate account is called NRSRS account. Which account, ma? NRSRS account. Nowadays it is prohibited. Now they cannot open any NRSRS account. Okay, earlier the facilities provided NRSRS account. In that account they are depositing any money. On that money you cannot pay any interest. You cannot pay any interest. Only during the visit only they will use that account. Only during the visit only they will use that particular account. That is only for safety purpose only that account has been provided. You cannot pay. Any bank no need to pay. No bank will pay interest on NRSRS account. Okay. If you are paying interest means you have to pay in dollars. You have to pay in dollars. Unnecessary foreign exchange reserves. You are providing facilities to the guest. Okay. For providing facilities to the guest, you cannot sleep on road, na. For your home guest came, okay. You have to provide the accommodation to the guest. It is a culture, our tradition. Atiti Devo Bhava. Okay, very good. So for providing accommodation to guest, you will sleep on road, sir. Only one bed is available, sir. So let them accommodate, sir, and I will go and I will sleep on road with mosquitoes and all. Okay, no, na. Right. That's all. That is what 7th point. Now, total 8 points. Please by heart. Total 8 points you have to by heart. My time is very less. Please continue. Next, question number 115. I have nothing to do with this. You please by heart all the points. What is the points, ma? When current account transactions requires approval from the different departments. When current account transactions requires approval from different departments of the central government. Sir, for which transaction, which department approval is required? I have nothing to do with this. You please read and remember. That's all. Okay. If you have any doubt in this, means the words used in this table, that only I will explain. Cultural tools, cultural tools, na. Okay. Maybe cinema shooting or maybe any cultural event. So you want to conduct outside country. For that purpose, you want to withdraw any foreign currency. For which department you have to take permission, ma? Ministry of Human Resource Development, Department of Education and Culture. As it is, you have to write in your exam. Otherwise, marks will not be awarded. As it is, Ministry of HR. Don't write HR department. No. Okay. Ministry of Human Resource Development. And in brackets, you have to write what, ma? Department of Education and Culture. That clearly you have to write. Then only you will get 2 marks. Otherwise, you will get half mark only. Next, sir, advertisement by central government or public sector undertakings outside India. Our AP is conducting industrial summits. Telangana government is also conducting industrial summits outside India to attract outside investors. Okay, yes, you can create an advertisement. For tourism also we are creating what, ma? Advertisements. But when permission is required, ma? Department of Economic Affairs permission. If they are for printing foreign print media for the purposes other than promotion of tourism and foreign investments and international bidding. For these 3 purposes, no need of permission. Other than these 3 purposes, they want to give any advertisement. For example, in Amaravati, they want to take the help of the Singapore engineers. For construction of Amaravati city, Chandrababu Naidu is taking help of Singapore engineers only. Singapore consultant services only. They are providing design and all of Amaravati city. Na. For that, they are paying consultancy remuneration. You have to pay a consultancy fees. Okay. So you are giving advertisement in Singapore to accept the bidding. That is foreign bidding. What is that, ma? Foreign bidding. Yes, it is eligible. No need of any department permission. It is a foreign bidding. Or to develop the Andhra Pradesh tourism, you are giving advertisement in Singapore, EAO, UKO, ESO, then also it is allowed. But other than these purposes, you are giving any advertisement in the foreign print media, then you have to take the permission of Department of Economic Affairs. If it is exceeding US dollars, 10,000. Everything you have to remember. I can't do anything. That's all. I also don't remember. That's why I am referring material. Normally, I will not refer any material now for discussion of any chapters. But why I am referring material now? Because I don't remember each and every point. That's all. That is the problem. Choice. That time choice. For you, no choice. Okay. Ma remittance of foreign freight of vessel. Vessel means what? Ship, voyage. Transportation through sea. Okay. Remittance of freight of vessel chartered by public sector undertaking. You want to pay freight of any vessel, then you have to take permission from Ministry of Surface Transport Chartering Wing. What is chartering wing? I don't know. Okay. One wing is there in that ministry. From that wing you have to take the permission. That's all. Wing means one department. That's all. Okay. Very good. Now, payment of import through ocean transport by government department. Please read all the points. Remittance of hiring charges of transponders. Transponders means satellites. Satellite rights you are hiring. You know Tata Play. Life Jingalala. That Tata Play, actually why Tata Play broadcasting services are quality when compared to other dish services, because Tata Play is hiring foreign satellites, not Indian satellites. Okay, they are hiring what foreign exclusive satellites they are hiring to broadcast the channels to their customers, actually to their subscribers. For hiring, for example, Tesla fellow is there. He has a satellite services also. He has a satellite services also. Who is that fellow? Musk. Melon Musk. Melon Musk, Elon Musk. Okay. Musk Melon not a Musk Melon. Elon Musk. Okay. That Elon Musk is having a own satellite. Not only satellite, he has a international space center also. Okay. So international space center also is having. So that Elon Musk, you are using the satellite of Elon Musk to provide the broadcasting services in India. For that you have to pay rent. That rent you have to pay not in rupees. He will not accept. He will pay in dollars only. Yes, you can pay in dollars, but you have to take permission from where? Ministry of Information and Broadcasting, Ministry of Communication and Information Technology. I don't know. Okay. Remittance of container detention charges. Container detention charges means in customs, container they will detain. Demurrage. What will say, demurrage charges. So within 20 days or 21 days, you have to clear the goods. You are importing. You are not clearing the goods imported within the prescribed time. Then they will levy additional charges. They will levy what? Additional charges. That is what container detention charges. For that you have to take the permission of surface transport. And international, national, state level sports bodies making remittance of prize money. Okay, you conduct the competitions in India and pay the prize money, no issue. But you are conducting events outside India and you are paying money in dollars and all other foreign currency exceeding $1 lakh US, you have to take from permission from where? Ministry of Human Resource Department. Remittance for membership of P&I Club. P&I Club means Protection and Indemnity Club. Okay, that is nothing but insurance company. Which company? Insurance company. Ship insurance company. For ships they will give insurance. Okay, what ra? Devara. This P&I Club. Okay, next. Next one. What are the transactions which requires RBI approval? Whose approval, RBI approval. So these are all the transactions, but within 2,50,000 RBI approval is not required. Exceeding US dollars 2,50,000 only, you have to take the approval from Reserve Bank of India, because LRS, liberalized remittance scheme, is there for these transactions. LRS is not applicable to Schedule 1 and Schedule 2. Schedule 1 what? Prohibited current account transactions. Schedule 2, permission from government departments. Permission from government departments. For that LRS is not applicable. LRS is applicable only to Schedule 3 transactions only. And other than Schedule 1, Schedule 2, Schedule 3, all current account transactions are not there in Schedule 1, 2 and 3. These are only means specific points. Okay. Sir, I am purchasing vehicle from UK supplier. That is a current account transaction, but it is not, nowhere it is covered in Schedule 1, Schedule 2 or Schedule 3. So it is freely permissible. It is freely permissible. No permissions are required from any person. For that LRS is also not required. LRS is applicable only for Schedule 3 transactions of current account transactions. Schedule 3 of current account transactions. And capital account transactions also Schedule 2. Okay. Only for that purpose only you can use what ma? LRS. What is LRS? Every person, he can utilize, he can withdraw 2,50,000 US dollars per year. Per year how much ma? Per year or for financial year? Huh? So for every financial year, you can withdraw how much ma? 2,50,000 US dollars per person. And this 2,50,000 US dollars, he has no need to take any permission. Directly from authorized person, he can withdraw. For what purpose he can withdraw ma? For Schedule 3 transactions in current account transactions and Schedule 2 maybe capital account transactions. Okay? Not for Schedule 1 and Schedule 2. Only for Schedule 3. What is Schedule 3 transactions ma? Private visit to any country. Nepal, Bhutan, actually you have no need to take the Nepal and Bhutan currency ma. They will accept Indian rupees. Because for them Indian rupees are precious like dollars to us. Okay? So some countries are there who will give value to Indian rupees actually. For Nepal and Bhutan you have no need to convert the currency because they will accept the Indian rupees. So any other country, private visit any other country, you can withdraw the foreign currency. Gift or donation, yes, you can give any gift or donation. That is also current account transaction. Up to 2,50,000 no permission. Beyond 2,50,000 you have to take the permission from Reserve Bank of India. And going abroad for employment. So for employment you are going, then why are unnecessary you are taking a foreign currency? For 1 month or 2 months you have to stay there na. Salary will come only after 1 or 2 months only. And for visa purposes and all, you have to spend money and all. Okay, for that you can withdraw the foreign currency up to 2,50,000 no permission. Beyond 2,50,000 RBI approval. And immigration you want to relocate from India to some other country. For that immigration requirements are there. Okay, so for that immigration you are spending any money. That money, yes, you can withdraw up to 2,50,000 US dollars. Okay, next, maintenance of close relatives abroad. One more point I forgot actually, one PRII and PROI. If any students are going abroad for pursuing studies, they are treated as PROI. Why sir? Normally they are going for 1 year, not uncertain period. 2 years, 3 years MS only. Not for employment, not for business, not for uncertain period. But in reality they are going to abroad and they are staying there itself. That's why Reserve Bank of India circular is there. If any person is going abroad for pursuing higher studies, he is treated as a PROI, even though he is not leaving India for 3 purposes stated in the Foreign Exchange Management Act. Okay, that point is also very important. I am expecting that this time that question only. Reserve Bank of India circular. Okay. And one more case law is there. One air hostess actually, she is staying in India for more than 182 days in a financial year. So can she treated as a person resident in India? Na? No, staying is different. Residing is different. Between the break from one journey to another journey, one flight to another flight, during the break she is take the shelter in India, so that she is not a PR person resident in India. No, not at all. That is what one case law is there. Please refer that also. Now come to the point. This expenses in connection with medical treatment abroad, studies abroad, any other current account transaction. See, any other current account transaction generalizing. They are generalizing. Okay. Now when RBI approval is required, the set limit is means 2,50,000 exceeding, then only RBI approval is required. For this medical treatment abroad and as well as studies abroad. What is that ma? Studies abroad, D, comma, G, comma, H. What is D ma? Immigration. So for this point number 4, point number 6 and point number 7, 2,50,000 limit is not applicable. You can withdraw how much amount you want based upon the estimation from the university or estimation from the hospital or estimation from the immigration authority. You can withdraw how much you want without any approval from Reserve Bank of India. That is what you have to highlight. Okay. Next. This point also you please see once more. If any person is coming from Pakistan, he cannot remit any currency outside India. He came to India for work. Yes, he came to India for work. He is a person resident in India. But the LRS scheme and all, everything is not applicable to him. He cannot even send 1 rupee also out of India. No. Okay. And other than Pakistan, if anyone is coming to India, citizens of foreign state other than Pakistan or a citizen of India who is on deputation to the office or branch. So maybe from ESO, UK no. ESO, UK no, they came to India for deputation for 6 months or 1 month. Yes, for employment only, for a temporary period. For employment only. Employment means he is a PRII. He can remit the currency out of India, but only salary only can remit. His salary only he can remit. That is what the third point ma, you please. Next, this is for artificial persons. What persons ma? Current account transactions for what persons? artificial. Natural persons schedule 1, 2, 3. For artificial persons, this is what the points you have to remember. In September 2024, these points only they asked for 5 marks or 4 marks. Artificial person, they can give donations, but not exceeding how much, ma? 1% of their foreign exchange earnings during the previous 3 financial years are 50 lakhs US dollars, whichever is less. This is what very important. Go and refer your September 2024 examination question paper, ma. In that it is clearly mentioned. They are giving details of last 3 years foreign exchange currency earned by the company, and they are asking how much donation they can give to the outside India. For what purpose, ma? Which is less. For the purpose of creation of chairs. Creation of chairs means purchasing chairs, No, for paying donation. For seats you are giving donation, na? No, for that purpose you cannot pay. Yes, you can pay, but you have to take approval from Reserve Bank of India. If it is exceeding 1% of foreign exchange or maybe 50 lakhs, whichever is less, and the contribution of funds not being investment fund promoted by education, you are contributing to fund of educational institutes or maybe any research activity, any technical institution related to your discipline, means your business. Okay, for that purpose you want to give any donation. The donation, if it is not exceeding 1%, okay. If it is exceeding 1%, then you have to take the approval from Reserve Bank of India. The same point they asked for 4 marks, ma, in last exam. Okay. Next, commission per transaction. Ma, you please read all the points as it is. Nothing is there to explain you, to make you understand. Nothing is there. You please read all the points as it is. Ma, you are paying any commission per transaction to agents abroad for sale of residential flats or commercial flats in India. So you started a venture in India and you want to purchase, sell these flats to other than Indians, outside Indians you want to purchase. For that you are approaching agents. You are approaching what, ma? Agents. Yes, you can pay commission to agents, but commission should not exceed how much, ma? 25,000 or 5% of the inward remittance. If you want to pay more commission, then you have to take approval from Reserve Bank of India. Next, remittances exceeding what is this, 1 crore? 1 crore per project for any consultancy services in respect of infrastructure projects, and 10 lakhs per project for other consultancy service procured from outside. Consultancy services, any consultancy service you are procuring from outside India, so per project how much, ma, you can pay? 10 lakhs for other than consultancy, means other than construction. For a construction infrastructure projects you can pay 1 crore US dollars. Singapore project is also one of the example. You are procuring Singapore consultancy services for Amaravati project, na? For that you are paying what, ma? Singapore dollars, na? Yes, you are paying Singapore dollars for Singapore consultancy services for infrastructure projects. Amaravati is infrastructure projects, na? To what extent it is allowed, ma? 1 crore US dollars you can pay. More than 1 crore US dollars you want to pay, you have to take the approval from Reserve Bank of India. That's all. The remittances by entity India by way of reimbursement of pre-incorporation expenses. Someone is helped out you, so to incorporate a company in India, for that you want to pay any incorporation expenses, pre-incorporation expenses. Maximum how much you can incorporate, ma? Means you can pay 5% of investment brought into India. He helped you to procure the investment. He helped you to procure the investment, to procure the funds outside India. You can pay commission maximum how much, ma? 5%. That's all. Or US dollars 1 lakh, whichever is higher. That's all. That's what you have to understand. And the LRS scheme, okay. LRS scheme is only for natural persons, ma, not for artificial persons. Please don't apply LRS scheme to artificial persons. LRS scheme is only applicable to natural. If LRS is applicable to artificial, na, I will incorporate 100 companies. Each company can withdraw 250 US dollars, na, then every year I can do Hawala transactions of 250,000 into 100. No, it is not possible for artificial persons. And this resident foreign currency account and EFC account. Resident foreign currency means I am a resident in India, but I am earning foreign currency. I am earning what, ma? Foreign currency. I have a house in UAE. I constructed a house or I purchased a house in UAE. Every month I am getting rent. I am getting what, ma? Rent. Rent they will pay in rupees or otherwise in dirhams. Dirhams only. Yes, I am earning foreign currency. I am earning what, ma? Foreign currency. That foreign currency I can keep in a separate account, is called resident foreign currency account, RFC account. What account, ma? RFC account. I am a resident in India, but I am earning foreign currency. That account you can keep in RFC account or exchange earners commission account. I am just providing commissioner agent services. For that I am earning what, ma? Commission. For that you can deposit in a separate account, exchange earners currency account. Okay. So from that account, see, I only earned foreign currency, na? I am not keeping any burden for our Reserve Bank of India. I am only earned that currency. So that currency I kept in my account separately in dollars only, not in rupees, in dollars only. I kept separately in India RFC account. Okay. From that account you want to use, you can use without any permission. No permission. But prohibited transaction you cannot use. And department permission also no. Only schedule 3 transactions if you want to use, yes. You can use without any limit. For EFC again, one point is there. What is that EFC ma? Exemption is not available for what transactions ma? P&A club it is not available, and commission to agents and all not ma. This RFC or EFC account, even artificial persons or natural persons, they can open this RFC account or EFC account. Okay, you are acting as an agent in India. Okay, and you are earning commission. You are earning what ma? Commission. And you can open a EFC account here and you can keep that money in dollars in India itself. That foreign you only earned that foreign currency. You can spend that foreign currency however you want, except what transactions ma? Prohibited transactions. Except what transactions? Prohibited. Except prohibited transactions, for any purpose you can utilize. For that no approvals are required. But EFC account, again there are some restrictions. You cannot pay P&A club insurance, and for these two transactions again same RBI approval is required. Okay, that's all. That is what current account transactions. Now we are entering into what transactions ma? Capital account current account transactions. Each and every question is important. Once again I am saying, even though you don't understand the logics about the current account transactions, okay, please by heart the questions and reproduce in the examination. That's all. That is the only option you have for foreign exchange management act. Okay, try to understand the logics. Okay, you are not understanding the logics, don't worry about it. Even though you are not understanding, please leave it as a choice. You please by heart the question and recover and reproduce. Okay, next sir, capital account transactions. I said already what is a capital account transaction. Capital account transactions are prohibited unless it is permitted. All capital account transactions are prohibited unless it is permitted. So we have to concentrate on the permissible capital account transactions. What you have to concentrate ma? Permissible capital account transactions. Some debt instruments, non-debt instruments, there are two types ma. So debt instruments and non-debt instruments. Okay, so debt instruments actually who will regulate my debt instrument? Reserve Bank of India. Non-debt instruments are regulated by central government. So they have a power to regulate. This is not a very big point, but please keep in your mind. Maybe MCQ they will ask. Debt instruments who will regulate ma? Reserve Bank of India will frame the regulations in consultation with the CG, and for non-debt instruments CG will frame the regulations in consultation with RBI. I don't know what is a tie-up agreement in between central government and Reserve Bank of India. Debt instruments means debt instruments, debentures, bonds. These are all debt instruments. Equity instruments, equity share capital. Preference share capital is also a debt instrument nowadays. Earlier it is a equity instrument, but now it is a debt instrument. Okay, anyhow. So in this capital account transaction, what we have to remember is this one. Restriction on PRII. A PRII may hold, own, transfer or invest in foreign currency, foreign security or any immovable property situated outside India if such currency, security or property was acquired, held or owned by such person when he was PROI. For example, I went to Dubai, I worked for 5 years. During that 5 years, I purchased a property in Dubai. And I came back to India. Can I hold that property? Yeah. Yes, happily can hold. And not only that, I can sell that property. I can hold that property. And if any rent I am acquiring, means I am taking rent from that property, from that rent, again I can purchase one more property outside EI. No issues. Even though not an RFC account, still you can purchase. No issue. Capital account transactions are not prohibited. It's not a prohibited capital account transaction. When I was a PROI, today I am a PRII, but that time I am a person resident outside India. Person resident outside India, they can enter into transactions outside India. There is no restrictions. FEMA Act is applicable. Not applicable. That's why I purchased a property in Dubai. After that I came to India. Now I am a PRII. Since I am a PRII, I cannot hold that property. Yes, I can hold. I cannot sell that property. You can sell the property. And I cannot take the income from that property. You can take the income, and from that income again you can purchase any other asset there. No issues. And property is inherited. What is that? Inherited property. Okay, someone, maybe your relatives, so your spouse, your parents, so they earned there and they purchase properties there, and you are inherited from that property from there, then there is no restrictions. Okay, you cannot say property cannot be inherited. No. Okay, that is what one point. And this point only they ask for 5 marks in September 2024 exam. How many marks 5 marks. They asked only this point. PRII, they can hold any currency when he was PROI or when he is inherited from person who was PROI. That is what. Okay. And restrictions on persons resident in India, a resident outside India, PROI. Same reverse case also. Some person came to India. He is a PRII for employment, and he purchased a property in India that time, and now he went to outside India. Then he will become what ma? PROI. Still he can hold the property na. Or reverse case also possible na. If I am purchasing property in Dubai, how I can hold that property after becoming PRII? In the same way, a PROA also can hold the property in India if it is acquired when he was a PRII or inherited. What is that? Inherited. For example, you went to a ES for higher studies and you got the job there itself. So you are a PRII, PROI. You are a PROI. But your parents' property is inherited to you. Your parents are in India only, na? Parents' property is also in India, but your parents' property is inherited to you. It is prohibited, huh? No, it is not prohibited. You can property may be inherited to you. It is not prohibited. That is what point number 4 and point number 5. Okay, that is what you have to understand. And next, this table, please by heart the table. Which transactions are permissible? Which transactions are permissible for PRII and PROI? This table just you have to by heart. Okay, simple. That is what your capital account transactions. Ma, this is prohibited, specifically prohibited capital account transactions. Ma, please have a look. Not that much important, but just have a look. We don't have that much time to explain. My LRS scheme, liberalized remittance scheme, I already said. LRS scheme, $250,000 US. You can withdraw. Each person can withdraw how much, ma? $250,000 US. Each and every person can withdraw. Okay. So $250,000 US every person can withdraw, and that amount they can utilize for Schedule 3 current account transactions and Schedule 2 current account capital account transactions. Freely permissible current account transactions, no need to use LRS because no approvals are required. Na? No need of LRS scheme. Prohibited current account transactions, anyhow you cannot use LRS. Government department approval, you cannot use LRS. So only for what purpose you can use LRS scheme? Schedule 3 current account transactions, you can use LRS scheme, and permissible capital account transactions also you can use what? LRS scheme. Prohibited transactions you cannot use. Simple. So together current account to capital account for whatever the purpose you are using. So only maximum you can use only 250,000 in a year for a person. Sir, we have 4 family members, sir, in our family. So 4 persons into 250,000, how much, sir? 10 lakhs US we are withdrawing, sir, for purchasing a property outside India, sir. Possible. Purchasing a property outside India is not a prohibited capital account transaction. It is permitted only, but you have to take approval from Reserve Bank of India. Okay. Sir, without approval, can I purchase? Yes, you can purchase, but the 10 lakhs rupees property, dollars property, whatever you are purchasing, you have to purchase in 4 names, joint names. All 4 persons' names you are purchasing a property, then okay, you can purchase. But, sir, I will purchase in the name of my father, sir. Our father is Karta for our family, sir. Hindu undivided family, Karta, sir. Okay. So, in Karta name only we are purchasing property outside India, sir. But all family members, every person can withdraw how much amount, sir? 250. We have 10 family members, sir. 10 into 250, 25 lakhs US we are withdrawing under LRS scheme, sir. Without taking any approval, we are purchasing property in the name of our father, sir. It is not possible, sir. You can purchase your property, but in joint name, sir. What name, sir? Joint name, sir. No issues, sir. That is what one point you have to remember in what scheme? LRS scheme. Okay, that is what last point. In case of minor, okay, minor also can be withdraw US, but who has to countersign? Natural guardian can countersign. Okay, so for any permissible current account transactions or capital account transactions or combination of both, sir, in year aggregate, in a year aggregate, sir, I sent already 50,000 rupees donation, sir. $50,000 donation I sent. Okay, again I want $50,000 for sending abroad to my children's living abroad. Okay, yes, so 50 plus 50, how much, 1 lakh. Like that you have to count. 250,000 is the aggregate limit, not for each transaction. It is a aggregate limit per person per year, per person. How many dollars you can withdraw? 250 without taking any permission. See, 100 crores Indians are there. If all 100 crores Indians they are withdrawing 250,000 US per year, how much foreign currency reserves Reserve Bank of India has to maintain? See, that much facility they are providing. That is called Foreign Exchange Management Act. Okay. Anyhow, by this we completed what, FEMA Act also. Okay. Now we are going to what act, General Clauses Act. Okay. I'm not going to discuss any GC Act, don't worry. But just I will start GC and IPS. Okay. Ma General Clauses Act, you have to concentrate on preamble. This is clearly explained even at the introduction of the LLP Act and Companies Act also. And even our class also explained with examples what is the importance of preamble, purpose of the act. To know the intention of the lawmaker, you have to know the preamble. Sometimes preamble is also will help you to understand the intention of the lawmaker. Okay, but there is a conflict in between preamble and act. Which will prevail? Act will prevail, not preamble. That is what the points you have to write for preamble. Very simple. And means includes. Means exhaustive definition. Includes means inclusive definition. Means and includes also exhaustive definition only. And this question they asked for 4 marks last September 2024 attempt. 4 marks. Means and includes and means and includes. That's all. And apply to and include. That also inclusive definition only. That also inclusive definition. 4 combinations are there. Means exhaustive definition, includes inclusive definition, means and includes exhaustive definition, and to apply to include inclusive definition. Okay, that's all. That is what you have to write. Shall, may. Shall means mandatory, may means directory, but sometimes shall may be interpreted as may and may should be interpreted as shall. Okay, that's all. And good faith, no definition. Good faith also they asked for 2 marks. Last September 2024 attempt they asked 2 marks. They are not asking definition of good faith, but whether he is acting in good faith or not, that question they are asked. Whether he is acting in good faith or not, that question only they ask. Good faith means what not negligent. Whether he is acting negligently or not, that is okay. That is not good faith, but he should act transparently, truly. Okay, that is what. Diligently, whether he is acted or not, that is not good faith. Whether he is acted diligently or not, that is not a good faith. So honestly, what is that? Honestly, whether he is entering into act honestly or not, that is what good faith. Honestly, not diligent is not required. What is required? Honesty, nijaiti. Okay. Next, not telivitetalu, nijaiti. Next, GCA important definition. What immovable property. You know the definition very well. Immovable property, land attached to the earth. Okay. Trees are immovable property. Timber is a movable property. Okay. Next is this question also they asked in September 2024 for 4 marks. When legislation will come into force, normally the date notified in the official gazette, or otherwise when the consent of the president came. That's all. Okay na? So this is what when the act will come into force. That also please read. This question also they asked for 3 marks or 4 marks in September 2024 attempt. Effect of repeal. Okay, please by heart all these 5 points and reproduce. I explained with all examples, but now it is not possible. Okay, now commencement and termination of time. This is asked in May 2024 for 2 marks. Commencement and termination of time. What is that commencement from? From means from date not to be counted. Only you have to count what? To date only. From means only from date not to be counted. You have to count only to date. They will ask practical questions for this particular point. Okay, next computation of time. Time also same thing only. From date means and the last day is not a working day, then you have to calculate the next working day. For example, time is to file the appeals in the tribunals, courts. Okay, 30 days. Within 30 days you have to make an appeal. 30 days means okay, 30th day court is not working, then next working day you can make an appeal. That is what this question number 131. And how to measure distances with horizontal plane. Take one plane and go. Okay, like that only how to calculate the distances. One place to another place. How to count the distance with Google Maps? No, horizontal plane. This is what. And duty to be taken pro rata in enactment. Pro rata means proportionately how to calculate. Next, gender and number. In May 2024 they asked for 4 marks. Gender, female, male gender includes what female gender, and singular includes plural. Okay, that is what you have to write here, and with examples you have to write plenty of examples I said in Companies Act. And now powers and function is power to include. He has a power to suspend also, power to dismiss also. This point is very important. Power to appoint include power to appoint ex officio, and power to appoint includes power to suspend or dismiss. Okay, I have a power to appoint means I have a power to dismiss also. Next, power to add, power to frame the rules means power to delete the rules, power to alter the existing rules, anything you can do. That is what next point. Important provisions. Provision as to offense, punishable under 2 acts for one same offense. No. Okay, if you made only one contravention, you cannot punish under 2 acts. It is not possible. This question also they asked in September 2024 for 2 marks. Punishable under two acts actually for the same offense. No, you cannot punish. Okay. Next, meaning of service by post. Post means you have to properly addressing, prepaying and posting by register post. Whether it is delivered or not, we don't mind. Okay, that is what GCA. Then we'll go to what ma IPS, interpretation of, see how are that is called that is called marathon. Okay. Now we are going to what ma IPS, interpretation of statutes. Total interpretation of statutes only one small point ma, literal construction versus logical interpretation. Literal interpretation versus logical. Literal interpretation is the primary rule. What rule ma? Primary rule actually. That is a primary rule and cardinal rule of construction. First you should go with the lawmaker's words only. Okay, if lawmaker words are very clear, go with the words only. Don't please try to interpret in some other way. That is what literal interpretation. Okay, very simple to say. What is a logical interpretation? If literal interpretation is a ambiguity, absurdity or creates any repugnancy, then you will go for what ma? Logical interpretation. So many examples I explained in Companies Act, LLP Act, logical interpretation versus literal interpretation. Okay, when you have to go for logical interpretation, when literal interpretation is vagueness or maybe ambiguity or maybe absurdity or injustice or not upholding the intention of the lawmaker, then only you will go for what interpretation ma? Logical interpretation. Don't apply your own logics always. For logical interpretation there are so many rules. To what extent you can deviate? Logical interpretation means you are deviating from the lawmaker's words. To what extent you can deviate? That is what the rules they are saying. In that rules, very important rule is reasonable construction, logical interpretation, everything is same. Okay, very important rule is, what is important rule ma? Ma, notwithstanding I said cheetah, okay, tiger, lion, dinosaur, 4 is there na? You please refer that notwithstanding. And after that I said Hayden's case. I said one case la, you know, street abusing, Street Offenders Act. That is what the Hayden's case or mischief rule. To suppress the mischief and advance the remedy. I don't remember that case. Okay. Next. Sir, you are saying you said, I said, but we don't remember everything. Ma, rule of egisdim generis. Very important rule. Rule of egisdim generis. Taking color from the words, previous words actually. So, egisdim generis, these rules you please refer once ma. Examples, you please refer the examples to make you understand rule of egisdim generis. And noster associs, taking color from the associate words. Taking color from the associate words. This example is very important. Please refer that example. Next, doctrine of contemporaneous expositio means ma, you have to interpret the act when the offense has been convicted, means when the contravention has been committed. That time what law is there, according to that only you have to do the prosecution and all. That is called rule of contemporaneous expositio. So please refer once. Next, definitions. Okay, proviso, you please refer proviso. And where is harmonious construction rule? Ma, harmonious construction is very important. Definitely they will ask 4 marks from this harmonious construction rule. In this so many points are there. Ma, this point is also very important. Where is that point? When there is a conflict between ma, fifth point. Fifth point. Next, this point ma, specific rule different from the general rule contained in the order. Which will prevail ma? Specific or general? Specific. Later or earlier? Later. Okay. So this is 1 rule, 1 4 marks question ma. Okay. Please read that. So by this we completed